Tesla moving to Texas. A Delaware judge struck down Musk's compensation, or $55.8 billion CEO pay package.
Elon Musk is the inventor of our age, and he is also our Renaissance man.
70% of the value of Tesla is Musk. Okay, so Musk is Tesla, Tesla is Musk.
One common criticism of Tesla is that they've been talking about robotaxis for a long time, and the question is, okay, well, where is it?
You are putting all your eggs in that robotaxi basket.
Elon Musk has won the Tesla shareholder battle to keep his record-breaking pay.
That's the challenge with Tesla, right?
Here's a guy who's made a lot of money for shareholders over the years. I think it's interesting that the individual investors are the ones that kind of carried this over the line.
Cybertruck is way out there, kind of hearkening to this sort of Blade Runner-esque dystopian sort of future-looking kind of hard edges.
I think it's just sort of typical Elon character. I think a visionary is typically going to be very stubborn about what they believe the future is.
Tesla CEO Elon Musk threatening he needs more control of Tesla if the company's AI ambitions are going to be met. Tweeting today, he said, "I am uncomfortable growing Tesla to be a leader in AI robotics without having 25% voting control, enough to be influential, but not so much that I can't be overturned." Let's see how investors are taking this news. Ross Gerber, CEO and president of Gerber Kawasaki Wealth and Investment Management, joins us now. Ross, it is always good to see you. So let me get your take on this, Ross. Elon Musk has taken this fight public. What do you think?
I think he should buy the stock. I think he should use his money and buy 3% of Tesla for, $25 or $30 billion like the rest of us. I think the idea that shareholders should just give him $30 billion of stock so that he'll do his actual fiduciary duty to the company, which is building the AI robotics company he sold us all on. I'm very confused by all this. His job as CEO is actually to build this AI robotics Tesla company that he's being paid already $50 billion to do. So I don't know. I think this is absurd. Elon's friends and relatives are on the board of directors of Tesla. Nobody has any influence over Tesla except Elon. And so I don't know what he's talking about.
Ross, tell us how you really feel. And great to talk with you, by the way. It's Madison. I'm curious.
Hi.
What is this really about? Is this about this philosophical AI? What is that going to do for our society? Or is it about more control of the company? Or is it about a salary issue? What is this about here?
Well, when you have $200 billion and you don't even care about living in a regular house and sleeping in a regular bed, it's not about money. Okay, so this is about the fact that I tweeted that Grok is not owned by Tesla. And to put Gronk, or whatever this thing is called, on Tesla is a conflict of interest. And that Tesla should have an LLM model already on their cars, because if you talk to your Tesla, it's like worse than Siri. So the fact that I can already talk to my computer through chat and Microsoft products and have an incredible, AI assistant already with Microsoft products, but Tesla hasn't put anything on the car, I should be able to talk to my Tesla and tell it what to do right now, is a total failure, not only in the board and making sure that Tesla's focused on Tesla, but the CEO of Tesla is actually focused on Tesla. So, to me, this is really troubling.
And Ross, I'm just interested in this this threat that Musk is basically making here. He's saying, listen, give me 25% voting control, or I may take my AI and robotics products someplace else. You're in Tesla. How much of a risk really do you see that?
Well, I see this as a fundamental change in the story of Tesla, and it started 2 years ago. It's taken me about a year to fully grasp the fundamental change in the story in Tesla, but now it's been solidified exactly what I feared, which is Elon has full control of XAI, and he wants to build his best products and services under his full control and not for Tesla shareholders, even though he owns and controls the company. I think he wants to own 100% of this. So, it's just so many conflicts of interest. It's never existed in business history. And I think shareholders of Tesla, which I am one, have to consider this in their valuation and in their modeling of where this should be in your portfolio, which we have. And you can see that in my fund, GK, that Tesla's not only dropped in its weighting overall because it's underperformed, but also we've cut our position back in our fund over the last several months, as you've seen.
Ross, from the perspective of retail investors specifically, is more control for Elon Musk at Tesla bullish or bearish?
Hold on. What do you mean by more control? Okay, nobody controls Tesla but Elon. The board is his brother.
But in terms of the voting, Josh, that
Voting.
he's talking about.
Listen, index funds own 30% of Tesla. They don't vote anything. Elon owns 13%. Okay, you see what I'm saying? Like, there's nobody that can take control of Tesla. There's nobody. You would need hundreds and hundreds of billions of dollars of cash to buy the stock. So the notion that he doesn't control Tesla's the closest thing to a private company that's a public company. Okay, it's not run like regular public companies. Come on. I mean, it's just this whole thing is, we've entered this reality distortion effect like 5x now. And it's just, the X Twitter world is not the real world. And that's the world Elon lives in. And it's just not the world the rest of us live in. And so I think we're just seeing this full-fledged.
And Ross, you mentioned, listen, you're still in Tesla stock. You might have trimmed, but you're still in there. Looking ahead now in 2024, what are the catalysts as a Tesla investor, Ross, you're looking for that you think can move this stock higher?
So it's all about earnings for me. It doesn't matter what stock you have. If earnings aren't going up, it's very hard for a stock to go up, and especially one with a 60 forward price earnings. So earnings have to go up, and earnings estimates continue to go down as they discount car prices. And now we're at $375 a share for this year. So you can see that this has been a massive decline in the earnings potential of the company. So I think the question is, what will help them beat these estimates? And obviously the best thing would be is if they could hold pricing on the cars constant and margins wouldn't continue to shrink and volumes would increase. That would be bullish. And if they are able to launch and really ramp the Cybertruck, which I fear is going to be much more difficult and expensive than they, assume. So if we get Cybertruck out in real volumes and keep pricing on the Model Y constant, Tesla has some upside. But I think right now, Tesla's a mature company looking at a lot of, challenges looking in front of them with an unfocused CEO. And I think at its current multiple, represents a certain level of risk in the stock that didn't exist before. And I think investors should pay heed and look at their portfolio. I love the company and I love Tesla's mission, but I, also have to look at the reality of the challenges the company faces.
So talk to me about those challenges, Ross. What's the single biggest one you anticipate for this year?
Well, the single biggest one I see is really around full self-driving, the fact that it still doesn't work. And, year after year, this is supposed to happen. When you think about technology and AI, it's an AI application. That car can drive itself. That's what they've been promising. They call it full self-driving. And the fact that we're not still, in version 12 or some version that's completed, it's a risk for Tesla long term. Like, what happens if they can't, it's plateaued, they can't get better from where they are today? And so, I think that's a big risk for the company. Other than that, I think Tesla needs to advertise and it needs to move away from the identity of Elon Musk to really defining its own identity and developing new demand from new customers, because 90% of people still don't own an EV and probably would want one. So we need to address those markets. So Tesla has some challenges, but it also has a lot of potential upside if the company's managed correctly.
Tesla has plans to start production on a new mass market EV dubbed Redwood, according to an exclusive from Reuters. Let's bring in Yahoo Finance's Pras Subramanian to get some more of the details on this. Pras, what do we know?
Yeah, so this is a big scoop here by Reuters on the day of earnings, right? This reporting of this mass production of this cheaper $25,000 EV, possibly their Gen 2 car they had mentioned in the past, like a codenamed Project Redwood internally. Production, of course, potentially starting mid-2025, which is pretty aggressive. Kind of have to get that tooling in place for that a big rollout. And they want to do, I think, around, the sources told Reuters, around 10,000 units a week. So that's a pretty big mover, and it would start production potentially at Austin. Now, my understanding is that could this be a car that's also the Robotaxi? Would it be a second car, two different cars? The sources told Reuters it could be two different or multiple cars with the platform. So we'll see where that goes. But I think the question is, can that timeline be reached? Right? Tesla's been known to basically overshoot their deadline. So Reuters sources told them 2026 is probably a more likely timeline for production to begin.
Yeah, because that would be a very, very close turnaround, right? We're talking about mid-2025. All right, Pras, let's talk about something that's going to be happening in just a few hours from now. You're going to be tracking the results that we're getting here from Tesla. Where does the street stand ahead of these results? And I guess, do you think we're going to see, in terms of what we hear from Tesla, maybe what we're getting here from Musk, just about the fact that do you expect, ease some of the concern that we have been talking about with lackluster EV demand?
Yeah, and this is the big thing that people want to hear about. They want to hear about pricing versus product profitability, and then also what's going to be their new 2024 production target, right? So the street is looking for around 2.1 to 2.2 million vehicles a year for this year, which is only a 20% or so gain from last year, which is not that aggressive. But at the same token, can they actually improve profitability? There might be actually a sequential improvement in gross margin to 18.1%. That's the street kind of viewpoint on that, which would be a positive. But the question is, can we get more guidance on, are they going to cut more price-wise next year when they already did in China and Germany this year alone?
Yeah, certainly. Well, we will be closely watching for these results, and they break in just a few hours after the close. Pras, thanks so much.
Move on, Tesla, another big name out with its fourth quarter report. The EV maker missing estimates on the top and bottom line. And then in 2024, here's a headline. Tesla is expecting its vehicle volume growth rate to potentially be notably lower. We're here to dig into the latest results. We have RBC Capital Markets lead equity analyst on global autos. That's Tom Narayan. Tom, it's good to see you, at least initially here. Some disappointment with these numbers from the street, from investors in the after hours. You've had time to look over the report. What do you make of it?
Yeah, I mean, I don't know if I'd qualify it as a miss, really. It looks pretty in line to me. These guys we all benefit from having the production numbers and the delivery numbers. We know that for Q4. But the real story is what they didn't say for 2024 guidance, right? As you pointed out, not a lot of information there, right? Just that growth will slow. But we knew that, right? The consensus numbers already has growth of 16% in 2024 for deliveries after it was up 40% in 2023. So is that already in expectations, And so it's really tough to tell, as is always the case. We're going to have to listen to that earnings call. Anything can happen there. Recall what happened last quarter, right? With that earnings call, the stock was down $180 billion of market cap. And guess what? In the past 3 weeks, it's been down $180 billion worth of market cap. So I do wonder how much of this is really already priced in, the negativity. But we have to see what they say on the call ultimately. We don't have anything about gross margins for 2024. Someone will definitely ask about that. What is the volume number really? What is it? Is it 2.1 million where a consensus is? Is it lower than that? Is it higher than that? So unfortunately, not a lot to go on with this. We really just need to wait for that call.
And so what's your number one question then during for the call today?
Number one question is, will automotive gross margins be up in 24 or down? As you pointed out, there's been price cutting, right, in a Model Y in Europe and China. So the consensus is, again, ourselves are baking in margins going up by about 100 basis points. If it comes down, that's concerning, because then that means, oh boy, do we have a profitability problem? But let's all put all this in context, and I'm sure we'll get this on the call too. These are all near-term dynamics. As you know, this stock is not about the car business in 2024. It's about autonomy in 2035 and 2040, right? And that's probably how the company thinks about the business. So we're all getting bogged down in this, and it totally makes sense that we do. But I do think we'll get some big picture views. We'll also ask about what is going on with that, $25,000 car. Are those press discussions correct that it's 500,000 unit run rate for an annual rate in 2025? That's important, because that's how we sell more FSD with the Tesla fleet, which achieves that autonomy thesis. So lots of questions on that, but really about gross margins in 2024. Are those going to be okay? Are those coming down? I think a lot of folks will want to know what's going on with with profitability, given all those price cuts.
Yeah, I'm interested, Tom. You talk about the big picture questions. You know, another one folks certainly have, if you're invested in this space, is kind of what seems to be waning demand for EVs, at least in North America, right?
Yeah, absolutely. I know a lot of folks are really negative on Tesla, especially because of this EV slowdown, which is very real. It's definitely happening, especially in the US. And yeah, I mean, I'm sure we'll hear more about it on the call. The one thing I will say is, remember, it's nuanced. Tesla does have the best margins on EVs. It can cut costs, whereas competitors may not. And also the IRA, remember, some competitors lost the IRA credit, like the Mach-E and others. And, you know, GM pushed out its EV rollout. So that kind of benefits Tesla. The Model Y kept the IRA credit. So I do think that even though there is a slowdown definitely happening, the fact that competitors are retrenching in the US, that does benefit Tesla. And all they need to do is get 2.1 million units. That's just 16% growth. They did 485,000 in Q4. All they need to do is a clip to be 525,000 per quarter, and they hit where consensus is. So I get it. EV slowdown is real, but these guys are 51% of the EV market. The next biggest guy is like 5-6%, right? They're the lion's share of the market. I tend to think they can gain market share from these other guys as the EV slowdown happens as well. So it's not the best scenario to be, definitely, but I don't think it's as bad as the market's seriously implying. 22% down on the stock in 3 weeks.
Well, I want to dig into that a little bit, Tom, because like Tesla is one of these stocks that is as much a faith and hype stock, an Elon Musk stock, right, as it is like people buying in or selling because of what the company actually does. I think it's fair to say. So the fact that it is down so much, what does that tell you? And how difficult is it to switch sentiment back on when we've seen it switched off in such dramatic fashion?
Yeah, I mean, I think you're absolutely right? This is largely a retail stock, which owns the stock because of things that happen in 2040 and, robotaxis and autonomy, right? I'm a big believer in that. And so, I get it. Sentiment got soured after the comments from the 3Q about the delayed of that $25,000 car, and Cybertruck comments from the CEO, and the stock sold off $180 billion, and now it's down again after it gapped up, and it gobbled up all of those the gains after that, and it's down the same amount again because of an expectation of this earnings that we're going to have today, of some negativity about EV slowdown and all of these things. But I do wonder if that negative news, now we know, what else could happen on this call besides what we see here that's already happened in the stock, And I think retail investors will come in and support the stock and believe in that 10, 15 year out, again, and the stock will get support again, as it usually does. And maybe we get comments on the call about these big picture things that gets people excited. The news today about a potential, acceleration of the lower priced car, that could be a catalyst for people to get excited again, because that was what everyone was worried about on the Q3 call. So, but not a lot of detail on this release. Maybe we get it on the call. That, I think, will determine what happens tonight.
And Tom, I just want to get you out of here on one last question, really just competition question. As you kind of look across the landscape here, Tom, do you think the big three, do they ever catch up with Tesla in this EV fight?
I don't think that's even, it's apples and oranges. I don't think the big three are in that fight. I don't think that's their goal, right? I mean, Ford has Ford Pro. That's not really an EV strategy necessarily. And, GM is very aggressively going into EVs, but the ICE business is very important, right? Pickup trucks are not going to be full electric for many, many years. They also have a professional category. And then Stellantis, it's Jeep and Ram. So I don't think that's the goal here. I mean, they're definitely going to electrify the D3 more, but it's not necessary for them to have the same market share, certainly, as Tesla. And I don't think that's ultimately what will happen anyway.
Tom, always love having you on the show. Thanks for coming and breaking down these results.
Got it.
All right, let's get to one of our biggest trending tickers of the day, and that is Tesla. Shares selling off ahead of the open on worries about lackluster demand and also the weak results that we got out after the bell yesterday. Well, on the earnings call last night, CEO Elon Musk blaming higher rates for those sluggish sales. Let's take a listen.
It's not that people don't want. We have tons of. We have lots of people who want to buy our car, but simply cannot afford it. As interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward.
So we're looking at shares under pressure here ahead of the open. Year to date, this is a stock that's already been under pressure, off just about 16%. So what's ahead? Let's talk about it. We've got two analysts, I should say, to break all this down for you. We want to bring in Tasha Keeney, ARK Invest Director of Investment Analysis and Institutional Strategies. We've also got Dan Ives, Wedbush Managing Director, also Senior Equity Research Analyst. Great to have both of you. Dan, let me start with you because your reaction, the note that you sent out here this morning, caught our attention in terms of some of the issues that you are raising on the heels of these results. And you were talking about the fact that you wrongly expected that adults were going to be in the room on the call. You took issue with some of the things that were said during the call. How has maybe what you've heard over the last 12 hours changed your short-term outlook here on Tesla?
Look, you need communication. What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that was a conference call. You're going to see pressure on the stock. The long-term story doesn't change, and Tasha, I'm sure you'll agree. But in the near term, the bears win.
I'll put this question to both of you, Dan, just because you brought this up a moment ago, and we mentioned this in the intro. Is it as simple as interest rates not being in Tesla's favor, or is there something else at play within the broader EV demand landscape? I'll go to you, Dan, first, and then I'll get your thoughts, Tasha.
Look, demand overall has actually been pretty strong relative to, if you think about how bad it could have been, 35% plus growth, call it 18, 20% this year for 24. The reason the stock's down, it's because of margins. And I think 80% of the reason the stock's down is communication, 20% results.
Tasha, I want to get your thoughts on that as well. And I'll layer on perhaps this additive. A new model, is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate. One analyst thinks it's over 10% a year. And they said they see further opportunity for cost reduction. So, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, we should be talking about robotaxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. General purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
Tesla, a massive disappointment for the market this week. Shares, they got hammered after the company reported weak results and warned of notably lower volume growth. The sell-off, it comes following a lot of hype surrounding Tesla's AI ambitions. Valuing the name as a tech company, and CEO Elon Musk was asked about Tesla's AI efforts on the company's earnings call this week. Here's what he had to say.
Think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability.
We've got an expert panel here to break down Tesla's results on three fronts: AI ambitions, EV demand, and whether or not Tesla is a buy for your portfolio. We've got Greg Migliore, who is the Autoblog editor-in-chief, Will McDonough, Corestone Capital Chairman and CEO, and Daniel Kolar, who is the Intralink head of Automotive and Mobility Practice. Great to have all of you here with us this morning. Greg, I want to begin with you. You know, we've been talking Tesla for a while now, and we're trying to wrap our heads around this narrative that Tesla is continuing to put into the market right now, but not just the market of investors, but those of potential buyers. What most notably on the demand front should everyone be remembering now that kind of sets the tone for the rest of this year?
Hey, good morning, Brad. Good morning, Shauna. Tesla's in I think, an interesting position right now. The EV market is likely going to rise, but perhaps not as aggressively as we had originally thought. So Tesla is still well positioned to capitalize on that. But as you can see by the earnings call, they're not immune to the many challenges that automakers face, that traditional automakers face. They've seen pressure on margins. There's always going to be demand for Teslas, but what we're seeing now is many of their products are actually starting to get dated. They need to do refreshes. So in some ways, some of the shine has come off Tesla, perhaps from maybe 2-3 years ago, 4 years ago. They were truly a disruptor. Now I think they're very, sort of a standard car company. We saw that in the earnings call this week.
And when it comes to the stock price here, especially when you take into account the sell-off that we have seen this year, Matt Maley over at Miller Tabak pointing out that, hey, maybe Tesla is becoming a bit oversold. Will, I'm curious how you're evaluating the recent moves that we've seen in Tesla from an investment standpoint and whether or not this could be a good buying opportunity here for investors.
I think it is a good buying opportunity. I think Tesla's on sale and people should be paying attention. I don't think Tesla plays the same game as traditional car companies, and people have a hard time valuing Tesla because they don't know, should I value it as a tech company? They have AI, they have self-driving tech, they are innovating, their supply chain and their manufacturing processes, or should I value it based on how many cars were sold last quarter? What their revenues were. When I look at Tesla, they grew revenue in Q4 20%, they grew volume 20%, and revenue only grew 1%. Well, the street might panic when they see that, but the reality of it is that's by design. They're trying to push volume into the market. They're trying to become the ubiquitous player in the EV marketplace, and they're trying to make their processes most efficient so that they can spit out chassis as fast as demand warrants.
And so all that considered, when we think about what this means for investors going forward, there is the consideration of what margins will look like as they've initiated this broader pricing strategy, and a pricing war has essentially ensued as well here. When we think about, Will, ultimately how that translates through to what investors should expect and the kind of appetite or propensity for investors who this week have seen shares move lower, and some of them saying for an environment where buy on the dip is once again kind of rearing its head as a theme again, is that the case for Tesla?
I don't believe so. I think people should be buying this dip. I think that people should look at owning Tesla as owning the most efficient car company of the next decade. I think there could be a world in our future where F-150 Lightnings are built with Tesla batteries or on Tesla chassis. I think there could be a future where Tesla is the mainline provider of all EV technology to many others, regardless of what the badge on the hood is. And when you look at Tesla, if you are to look at it as a multiple of revenue, if you are to judge them that way, you're not going to like what you see. But if you look at their growth, if you look at how fast they're able to make cars, and you look at how cheaply they're able to produce vehicles, which means they can sell them cheaper, which means they can still make a profit to a larger demographic of our population. I think all of those things are good for Tesla to continue to be a cornerstone player in this EV world that we're all leading ourselves into.
Daniel, let's talk about AI, because Adam Jonas over at Morgan Stanley is saying that there were no real AI rabbits pulled out of Tesla's hat here during the quarter. When you stack up what's realistic versus some of the ambitions that we've heard from Elon Musk, do you think some of this hype is a bit overdone?
I wouldn't say that. You take what you've been hearing him talk about on the AI front and also the Chinese front, and I think that these go hand in hand right now. He sees the Chinese OEMs like BYD, Geely, NIO, XPeng, they're his main rivals down the road. So these companies, they're not just gunning to be top dogs in EV, they're aiming to be native, smart EV companies. So beyond batteries, they're putting a serious effort into cutting edge ADAS systems, infotainment, control systems. All of this is going to be based upon AI. So, Eon's clocked their rise in China. He knows they're eyeing Europe, maybe even the US. And so to keep up, he understands that they need to stay at the forefront of AI.
And at the forefront of AI, how much spending do you think Tesla still needs to do in order to really get its hands around what AI not just could be for its business, but the resources that really need to be layered in at this juncture in order to get that kind of long-term ambition right, Dan?
Well, I mean, again, he's looking at his main competition down the road, and they're throwing money at this, hand over fist. So he's got to keep up as much as possible, and he's not just going up against other OEMs like he would in the U.S. or Europe. He's going after the entire industrial policy of the Chinese state.
Greg, bringing back here to what this really tells us about demand for EVs, because that's also at the crux of this issue when we talk about the fact that the guidance or really lack thereof leaving investors with a lot of question marks. Is there something going on here that might be out of Tesla's control in terms of the fact that EV demand, when you take a look at the automakers across the board, hasn't exactly lived up to those initial expectations? And then what that tells us about names like GM, Ford, Toyota, the list goes on.
Yeah, I think basically we've seen the EV market chill a little bit. I think people have, many of the early adopters who have wanted their EVs have been able to get them. There's a great sort of catalog of EVs out there right now from Tesla, from Volkswagen, Mercedes, General Motors, you name it. And the number of nameplates I think is expected to rise perhaps around 50 or 60 this year. So the choices are going to get even better. What's I think frustrating Tesla and other automakers is, the incentives that come from the government, as well as just the never-ending sort of infrastructure question. Now, Tesla got out ahead of the game with its supercharger network, so they're well positioned, and other automakers are trying to join that as well. So that's sort of one part of the equation. But right now, I think there is a bit of a reality check as, the general population tries to figure out, hey, I'm interested in an electric car, but maybe a plug-in electric or just a traditional hybrid actually fits my my lifestyle better.
Greg, Will, Daniel, it's great to have all three of you here breaking down what has been one of the biggest stories driving the markets here this week with Tesla's disappointing report. We appreciate you taking the time. Have a great weekend.
Elon Musk back in the spotlight. A Delaware judge ruling that the Tesla founder is not entitled to his $55.8 billion pay package from 2018, calling it not entirely fair. Let's bring in Yahoo Finance's Alexis Keeney to give us the details here. Alexis, what have we found here?
Yeah, so not entirely fair, and this is a special standard that the Delaware Chancery Court is able to apply. It's a heightened standard that shifts the burden and puts it onto the board of directors at Tesla to show that they did go through a fair process with regard to the price of Musk's compensation, as well as the process for how they got there. So this was a derivative suit. It was brought by Tesla shareholders in Delaware Chancery Court. They allege that the board of directors breached their fiduciary duty when they came up with this compensation package by okaying what they said was excessive performance-based compensation. That, of course, was all in the form of equity, still unexercised, undistributed to Elon Musk. The judge said that the board didn't meet this burden and wrote that the members of the compensation committee at Tesla, that they testified to a lack of negotiation over arriving at these figures. The judge also applied, like I said, this heightened standard for transactions. And these are when the transactions between the board and an executive, that they are talking with an executive with a controlling stake in the company. So that's what brings this heightened standard into play here. The judge also noted here that Musk's personal relationships with board members and the general counsel were not fully disclosed to shareholders when they voted on this package. And it's important here to note that the Chancery Court, it's a special court. It's a court of equity, and it has really broad discretion in order to remedy what they see as breaches of fiduciary duty. duties. So it's going to get a lot of attention in corporate circles here because this is one of the first times, if not the first time, that the Delaware court is establishing that there's such a thing called excessive compensation, or putting a lot of guardrails around what that really means. Also, in response to this decision, Musk tweeting out that he recommends not even incorporating in Delaware and instead going to Nevada or to Texas, where he's already established relationship with his various companies. Guys?
He clearly communicated his frustrations on X. No surprise there. Alexis Keeney, thanks so much for breaking that down for us.
Elon Musk is saying that he'll be moving Tesla's incorporation to Texas after holding a poll on X. This comes after a Delaware judge shot down his $56 billion pay package on Wednesday, calling into question Musk's relationships with the board. Let's bring in Yahoo Finance's Alexis Keeney to give us the details here. Hey, Alexis.
Hey, yeah. So in a post today, actually in the early morning hours of February 1st, Musk had posted to Twitter saying that the vote is unequivocally in favor of going to Texas, and saying that he will move for a shareholder vote to transfer Tesla's incorporation state. So he'll first need to vote on that. He can't just do it unilaterally. Now, this Delaware decision at the heart of this matter, it invalidated that $56 billion compensation package for Musk. It's based on Delaware law, and that's important here because those laws require directors and officers to regard certain fiduciary duties. The judge in this case said that Tesla's board failed in their fiduciary duty, but the decision may have been a lot different had this case come down in Texas, in Nevada, where these places where Musk has other dealings with his other companies already, in addition to Tesla's physical presence. Now, go back all the way to 1987, you have Nevada changing its laws to allow companies to waive all three of these directors and officers' duties: the duty of care, the duty of loyalty, the duty of operating in good faith. Now, the goal then was to entice companies away from incorporating in Delaware, come to Nevada, where they think business would be more liability-free. It even led to a satirical piece in The Onion back in 2002. See, I can't even say it anymore. That said that Nevada was going law-free, calling it a liability-free state. But then Delaware did, in part, follow suit. Delaware did away with one of those duties, and they permitted companies to go ahead and waive directors and officers' duty of care. Now, that didn't save Musk in this case with this particular judge in Chancery Court, but also you have to look at Texas. Texas has a more case law-based structure for these duties. They still, though, impose all of those duties, duty of care, loyalty, and good faith. So whether or not this is the best place for Musk, that is a question at this point.
Alexis, thanks so much for continuing to track this. We'll see if they successfully incorporate in Texas. We know you'll be tracking it as well here.
Still got a ways to go.
Yeah, indeed. Our own Alexis Keeney.
A tricky day at Tesla as multiple headlines are weighing on that stock in today's trade. Piper Sandler lowering its price target on that stock. SAP, the German software firm, saying it is ditching all Tesla company cars. And the Wall Street Journal reporting that CEO Elon Musk has created a culture of drug taking with certain members of the board. Praz Sumarain is here with the very latest. That's a lot of headlines, Praz.
Yeah, a lot to go through there, but a lot of people talking about this journal story. Really well-sourced article here alleging more drug use than we originally thought with Elon Musk, a portfolio of different drugs that he's been taking, right? But the big story here is the board sort of knew about more of these things and didn't investigate these matters further. In fact, in some cases, felt pressured to actually take drugs with Musk in order to kind of curry favor with them. So, I looked at this story and I think of it as more of a board sort of not fully competent, not fully out for what shareholders, their best interests. And Josh, I got to ask you, you've been around the Valley. Have you ever heard anything like this before with tech companies?
Well, I mean, a common criticism across all kinds of sectors and industries is that CEOs are often too close to the board. That's not, unusual. You'll hear that about a lot of companies. And so I don't know if you would just ding them on that. I guess the question with this story in particular, and to emphasize, these are allegations, right? That's all. That's what we have. Certainly we have seen Elon Musk smoke marijuana with Joe Rogan. He's talked about publicly as a prescription for ketamine. But yeah, to your point, I think the broader story, Praz, is what it means for the board, and are they as responsible as they should be?
Right. When this comes on the heels, of course, as well, of a Delaware court slapping down his pay package and implying that the board was not doing its due diligence and its duty. And I think that drugs are salacious, the drug allegations are salacious and all that. But as we're talking about, really it comes to the core of, is this a board that has enabled bad, erratic, whatever you want to call it, behavior on the part of Elon Musk? And is that indeed best for shareholders? And obviously it's a lot easier to ask these questions, Pras, when the stock is down as much as it is down. It's down something like 40% from its highs last year. And I think it's down something like 27% thus far this year.
Yeah, I mean, a quarter of the value kind of gone in the last month. And the big thing you mentioned is that case, a Delaware case about how the judge there said that the process to determine Musk's pay was, quote, deeply flawed. The judge said that Chair Robin Denholm was lackadaisical in her approach to oversight with Musk and everything sort of going on with that company. And I think that...
Although isn't it also true, Pras, just a minute,
yeah.
that, and correct me if I'm wrong, Tesla investors saw that plan and voted on it, right? And then Musk hit his targets. I mean, we should note that. It's not as though it was under the radar.
Well, the allegation is that they were not transparent enough when they set the targets and that they were sort of low-hanging fruit for him to hit. Isn't that the sort of
But they saw the plan, that's
here?
my point. I mean, I just want to make it clear to the audience, it's not as though this is just on the board. Tesla shareholders saw that plan, approved it, and he did hit his targets. Now, some of them are apparently arguing, well, I didn't have all the information I should have 10 years ago. I mean, a lot of people, we can also skip ahead and say I didn't have the information I had 10 years when I should have. I just want to make it clear to the audience, they did see the plan, correct?
It's interesting because these targets are really audacious, right? And somehow he hit them and he made a lot of money.
In 2018, people didn't even know if Tesla was going to be around.
Right.
Right.
But it makes you wonder, sort of Musk has been sort of, I don't want to say cagey with the truth, but basically kind of audacious about what the goals can be for the company to hit. FSD is one big sort of factor here. Did he sort of make some promises that weren't necessarily going to be true in order to hit these big audacious goals? I'm just alleging that because he really hit some. If you're a shareholder, you look at these goals, they're pretty very, very, very out there. You wouldn't necessarily think they would hit all of them, but they did from a stock price point of view. And then he got the big awards. What does that make you think about what he says about the company going forward? I'm not sure, but the board should be more on top of these things, I think. And then I think you're right, Julie, about that. What are you disclosing about what this package is exactly to the actual shareholders?
Right, and what are the relationships between the board members and Musk himself? It seems like some of them have relationships with his privately held companies as well. Also, as the Journal points out, they are unusually well paid versus board members across corporate America.
Right, exactly.
So that's part of it too.
Massive payments. There's one quick thing I'm kind of curious about this. In the Valley, at least, right, you have a lot of people who are on boards, who are executives, who own bits and pieces of other companies. Was it more so the case with Tesla than other tech companies, for instance, like the PayPal Mafia, people like that? Like, is that sort of the norm out there in the Valley? I'm not sure.
Well, I'm sure any number of directors, probably there is a sense of a kind of live and let live, right? Where you feel like, listen, this guy, when he goes to Burning Man, what he's doing on his own time, as long as it's not affecting the business, maybe the feeling is I'm not going to step in at this point, right? Now, this journal article raises a host of new questions, but I think you kind of nailed it. That's sort of what's really being debated here is that relationship.
Yeah, and then long-term value for stockholders, right?
Mm-hmm.
Yes, most definitely.
Yeah.
All right, thanks, Pras. Appreciate it. Let's talk about Tesla once again. Those shares sliding today, and top trending ticker on Yahoo Finance. German software firm SAP reportedly will no longer get electric cars from the automaker. Piper Sandler cutting its stock price target on lower delivery expectations this year. And really, there is the backdrop here and sort of the changing sentiment around Tesla. The stock is down more than 20%, really more than 25% to start the year, with issues and questions around Elon Musk's leadership. For more on the future of Tesla and its CEO, we're bringing in Colin Rush, Oppenheimer Managing Director and Senior Research Analyst. Colin, we've had this discussion before, and here we are again as we get more press. Last week, of course, a Delaware court throwing out Musk's pay package. Stories in the Wall Street Journal over the weekend questioning the independence of the board and the pressure that they reportedly feel to do drugs with Elon Musk. I mean, as somebody who follows this stock, what do you even make of all of that?
We try not to make too much of it. There's been a lot of noise about Elon's personal life, and we really try to focus on what's happening with the company from a technology perspective, a product perspective, and the broader market. And the backdrop that you referred to, I think, is challenging. We have higher rates, persisting here, and we saw that sentiment today, coupled with some noise around some of the fundamentals on EVs. And I think the disruption of the auto market is going through the difficult phase. It's easy to get through some early adopters, and get some real momentum. But now we're like fundamentally changing from internal combustion engines into electrified powertrains, and that's a much harder process to go through. And we think this is just natural growing pains of a end market that's very much in transition.
And let me get your take, Colin. Listen, I get it. As a financial analyst, you're focused on the business, and you know this business, and you know this C-suite as well as anybody. One question I did have, though, regarding these headlines that drop on Elon Musk, and I do, I think it's a question investors have, is there is this view out there, Colin, that Tesla is Musk and Musk is Tesla, that he is simply just, unlike a lot of CEOs, that he is just foundational to where this company is and where it is headed. What's your take on that?
Yeah, I think there's a lot of truth to that. I mean, one of the things that he's brought to the table for this organization is just ambition and and vision, and that still, I think, remains the case. But the bench strength of the organization is exceptional. We continue to see this as an organization that's attracting the top talent from a technology perspective, and really working on some of the most challenging and interesting problems in the world for engineers. And I think that's a compelling value proposition for a lot of executives and a lot of engineers that are coming out of school or want a new challenge in their careers. And so that I think is an important piece of this, is that this is not a single person driving this organization, but he does set the agenda, and he does have the authority to push people very, very hard to move towards doing difficult things and changing markets and changing the technology landscape. So he is an important figure, not only for the organization, but for these end markets. And I think his viability as a CEO is important. And so these pay packages, I think, are ultimately pretty critical to keep him engaged and keep the organization focused on the things that shareholders want and having his buy-in to that.
Do you think that the board of Tesla is independent enough?
That's hard to say. In all honesty, the board has been very much bought into Elon as a leader, and how they keep that buy-in for him on a personal basis is a little unclear to me. These reports, in various papers around what happens in his personal life and how those relationships get managed. It's hard to double check the truth on those things, and they could be hearsay, they could be one-offs. And there's also just a lot of noise around Elon himself, just as a personality. And so that independence, I think, has been a very gentle line that everyone's watching here. But I think, keeping his attention and buy into the organization is something that's critical. Colin, and how they do that is a little unsure.
What's the difference between buy-in and blackmail? Where's the line between... You know what I mean? You're competing. He's got all these different business entities. Oh, we have to give him this enormous pay package so he doesn't take his attention to something else, or take some of the technology from Tesla to something else. I mean, I don't know. Does that make...
blackmail is a pretty aggressive term here, right? I mean, leverage and negotiations and relationship management are something, my clear sense is that this organization is his baby and is his core focus, and is critical to all the things that he does. And so for him to wander off from an attention perspective seems unrealistic to me. I think the pay package and the alignment of interest remains I think critical. But I think if Elon stepped away from Tesla, it would be as damaging to him as it would be to the organization.
Colin, I want to get you out of here on this. Right now, you rate the stock at perform. Colin, what would you need to see to get more bullish on Tesla?
We really need to see margins bottom out here. We need to see them, slow down any sort of price declines so that the margins start moving higher. And what we've seen in other markets, whether it's solar, LEDs, even in batteries, is that going through the rationalization and the disruption of those markets can be really challenging from a price perspective and a margin perspective. And I think, as we see the competitive landscape evolve, what I want to see, with Tesla is really some real stable gross margins, so we can see growth from there. The second thing that we really want to see is an evolution of the FSD technology and real adoption. We're still going through a pretty fluid environment around the regulatory backdrop. And as we get clarity on that, I think we'll have a better sense of how well this technology performs and their ability to monetize it. What we heard from them last quarter is that they went through a full re-architecture of the software, which is substantial, and that will take time to settle in, and what the benefits of that will be, will become clear over the next several quarters or a couple of years. But we want to see all that technology get implemented and really a more stable subscription base for the company to really drive some net recurring.
Colin, it's great to catch up with you as always on Tesla. Thank you. Appreciate it.
Thank you.
Shares of Tesla, tanking to start 2024. They're down more than 25% now. And some analysts getting a bit nervous. The latest, the team at Daiwa Capital Markets downgrading Tesla to neutral with issues surrounding CEO Elon Musk piling up. Our next guest just says he's lightened his Tesla position substantially over the last 6 months. Joining us now is Ross Gerber at Kawasaki Wealth and Investment Management CEO. Ross, it is always good to see you. So maybe I'll start there, Ross. The team at Daiwa, as we mentioned, they downgrade Tesla to neutral, Ross, and they're telling their clients corporate governance concerns aggravating already tough financial conditions in 2024. So they're getting a bit cautious. What do you think of that take, Ross? You agree with it?
Yeah, I mean, there's just a list of concerns that's just one of them, and probably one of the least important of the concerns, considering the rapidly declining earning estimates and the lack of any transparency of what Tesla sales will be this year. And so, Tesla went from a very fast-growing company with lots of potential to now basically, sort of almost like stalling and, really stuck, almost desperately trying to sell their vehicles now. And, it's really problematic because I think it's all self-inflicted. Tesla's a great company with a CEO who is, severely conflicted is the nicest way to put it.
So Ross, you guys have lightened your load in terms of how many shares you own, but you still own a lot of shares. So I'm just, what keeps the faith when you're looking at Tesla here? What keeps you in this stock? There's a big universe of stocks out there. So what keeps you in this one?
Well, you have to look at our situation. We bought Tesla at $3 a share. So for us, it's all profit. So every time I sell Tesla, for many of my clients, there's a tax consequence of up to 30% of that profit. So, that's something we have to really consider when we're selling the stock. Now, many of our clients do have it in retirement accounts like IRA accounts, which gives us a lot more flexibility. But it's really about what allocation is right for our clients. And Tesla was our largest holding for a very long time. But when, it really started with the anti-Semitic comments and we had clients calling to sell their Tesla stock who are now very happy because they sold more like at $250 a share. And, we continued to believe that Elon is eroding the value of the brand. And so we continued to sell the stock where appropriate to get it down to an allocation where we're at now, which is around 3% in our ETF GK, and for clients around 3 to 4%, depending on their situation. Now we do have some, Tesla fanatic clients that, don't want to give up their stock, but it's hurting people a lot this year. And finally, the cost of Elon's behavior is really hurting shareholders. And it's really unfortunate because the reason we're holding the stock is the long-term potential of Tesla is immense. So, it's this catch-22.
And Ross, when you say that Elon Musk is eroding the brand, I'm just interested because a lot of people, Ross, when they think of Tesla, they think Musk. And when they think Musk, they think Tesla. I mean, they think of him as just foundational. Are you suggesting you'd like him to sort of exit stage right here?
No, I mean, really, it's just to shut up. I mean, he spends his weekend just railing on immigrants and the immigration issue, and he himself being an immigrant, and the perception of somebody who's intelligent who can get an H-1B visa, saying that people who don't have educations don't deserve to be in this country is really not a way to sell cars, especially in a state like California, its biggest market, where Tesla sales are down year over year. One must finally accept the reality that Elon's, white supremacist motivations is absolutely damaging the brand because he is equated to Tesla. But to pretend that he's not damaging the brand at this point is simply ignorant.
So, Ross, how do you fix it, right? Because, there have been suggestions. I know you yourself had sort of a short-lived run for the board at Tesla. There have been suggestions that the board is too close for him, that they're not sort of keeping him in check. But is there any realistic expectation that there could actually be independent or more independent board members added at Tesla?
Well, I think this is the pickle, and one of the reasons we've sold, a big chunk of stock was because I don't see how this works. Because, when I ran for the board, I realized very quickly that there was actually no desire for independence or any retail investment, representation on the board at all. I was like, this is definitely not a welcome wagon, And so, I got out of it, and now I've decided to sell some of my stock because I think that's what investors have to do when the company and the board isn't going to behave in the best interest of its shareholders, which it's really behaving in the best interest of one of its shareholders and not the other 87%. So I think this is a real problem for Tesla. I don't see how the board can move forward in its current makeup because anything they do will be sued because essentially Delaware has ruled that it's not an independent board. And it's a requirement, that it is an independent board. So if they get new board members that are truly independent of Elon, this isn't going to work very well for Elon. And I'm sure he doesn't want that. And, I want to make it very clear. It's not my goal to be on the board of Tesla. I'm done with that. I have no desire at all. And nor is it my goal to see Elon leave Tesla. My goal is for Elon to leave Twitter and to go back to Tesla. He needs to get off Twitter and stop making his outrageous opinions known to the public on a daily basis and go back to his job as CEO of Tesla. And that's really what needs to happen. And so, if that doesn't happen, I think Tesla's drifting, in a place where I don't know where it goes until there's somebody on the board that actually wants to confront Elon and expects Tesla to get better results.
But Ross, you kind of know, though, when you invest with Elon Musk, he is a different kind of CEO, right? I mean, you know that when you commit capital to his companies, Elon isn't, Jamie Dimon, right? He's a different kind of guy. He's going to make his opinions known. I mean, you have to know that as an investor before you move in, right?
Well, I've been doing this for 10 years with Elon and Tesla. And, it's interesting when he needed money and Tesla was on the verge of bankruptcy, he was very nice to me and everybody else who was giving him money that supported Tesla. Everybody thinks it's only Elon, and Elon obviously is the innovator of our time. But there were many investors like myself and my firm and several other firms that stepped up when nobody else would. And Elon was a different guy back then. So now that he's successful and he's the richest man in the world, he decides to use his capital to buy a social media app so that he can express, outrageous opinions on a daily basis. This is just not a good development for the company. It's just like Napoleon. Napoleon started off really well as well and had a pretty good run until he got involved with Russia. So Twitter is like Elon's Russia, and he's going to end up on Elba if he keeps this up. So I'd love somebody to try to talk some sense into this guy. He's certainly not listening to me.
Ross Gerber, maybe he'll watch this interview. We'll see. and he'll listen.
He probably will, for sure.
Ross, thanks a lot. Good to see you. Appreciate your perspective. Tesla is set to resume operations at its Berlin factory after production was halted due to ongoing trade disruptions in the Red Sea. Yahoo Finance's Tasha and has more. So what's changed here?
So it seems like operations are back to normal there in Giga Berlin. A German publication spoke to a plant manager there, and he said, quote, "The supply chains are intact again. Tesla has the necessary security that all necessary production parts are available in sufficient quantities to be able to fully restart." So at the end of January or so, they had to shut down production of the Model Y because they didn't have the right parts that couldn't get through that Red Sea, Suez Canal area because of the Houthi military strike. So it seems like they've gotten the parts back. They probably have to go around the Cape of Good Hope and think other kind of extreme ways to get these parts, but they have enough in sufficient quantity to build these parts. So like I said, it was down since the end of January. The plant was making at peak around 6,000 units a week of Model Y cars. So maybe lost anywhere from 10 to 20,000 units for that run, which isn't much considering the fact that Tesla made 1.8 million cars next year. But nonetheless, good news for a company that has seen its stock sort of get hammered recently for other various pieces of bad news.
Yeah, I meant to ask you about that because Dan Ives over at Wedbush, Prezi put out a note today saying, and obviously Ives, big Tesla bull, outperform on the stock, but he was saying, and he's covered the name for a long time, and just said the Tesla narrative, the Tesla story, he said, in his opinion, it's like the most negative he has now seen in years.
Yeah, and he had, I think it was a call for 3 things he needs to change.
The board wants to,
Yeah, the board should do, right? So authorize a move to Texas, a new comp package, a couple other things to kind of get the narrative back and to get kind of the investors back on board. I mean, a big part of that is and he's calling for Musk to get that 25% back in shares. I mean, I don't know if that's going to be the reason that's going to make the stock go up because of the fact that Musk has more shares.
But was that Praz kind of a reason though we saw things get negative? I mean, yes, it was the print and the call and the worries about the EV market, but how much was that? Because Musk then said, listen, you give me 25% or I pick up my marbles and I go someplace else. My AI, robotics products, I'll go someplace else. I mean, that was part of it, right? That got people nervous.
Right, the possibility of maybe not him leaving, but taking that piece out and make it a private kind of which he has various private companies outside of Tesla. So the fear was that leaving that AI stuff, the Dojo stuff, all going, they want to keep that in the company.
Yeah. All right, we'll keep following it.
Yeah.
I think we're gonna keep talking about it.
Yeah.
Thank you, Praz. Appreciate it.
Can investors still look at Tesla as something to look at long term, as perhaps some of their competitive edge starting to wean away when you look at what's happening with EV demand?
Oh my gosh, I mean, BYD's already overtaken them, right? So the competitive edge is being severely eroded. There's a hopes and dreams stock, right? People, don't really look as much at the fact that, it's really about the cars, the people that are long this and trying to accumulate shares, even though it's going down, are looking at AI and robotics, but, his robots are state of the art for 2014, right? And, AI, Musk is threatening to put it in another company. So I just, I have a hard time with the stock. I think there's a lot of exciting things going on in EVs, and Musk deserves tremendous credit for basically creating the market. There was a lot of pushback from others. But the trajectory here is tricky for Tesla. It needs as much attention from Mr. Musk as possible. He is a highly talented executive, and I wholeheartedly agree with him pushing back on the SEC, trying to delete days off his calendar when he needs that time.
Certainly. Eric, would love to bring you back in here. As you think about the legal aspects of all the different arguments that Elon Musk has to make in any of these appearances or in any of his defenses, what is perhaps the most pressing one that he will need to make to ensure that he's still able to balance time between X and Twitter and balance time over at Tesla, as Craig was talking about earlier?
Well, a couple things. First of all, I think the antics about Elon Musk deciding when it's appropriate for him to come in front of the SEC and when it's not, that has actually proven to be more of a distraction than another 4 hours worth of a deposition. And quite frankly, this opinion never would have occurred had Elon Musk followed through with his entire team's plans to show up on September 15th, at which point they just decided to not show up. And so I think part of the challenge for Musk is just making sure that these are pretty simple rules of the road to play by. I know that he believes himself to be somewhat exceptional within them, but this is not going to be a very large issue, probably still won't be a very large issue. I think Tesla is the more interesting issue by a long shot. And it's not just a car company, remember, it's also a solar roof company, and it's also a battery company, and it's also a technology company. And there's a big question about where that next growth area is going to be. Part of the reason for the large compensation package, at least ostensibly, was to keep Mr. Musk on task and creative and putting all new growth opportunities inside Tesla. Is that going to change now depending on the outcome of this case? Does that bring about more possible litigation if Mr. Musk is perceived as funneling new ideas out of Tesla and into some of his other companies?
So, Craig, to Eric's point there, when you think of Musk and his leadership, obviously impossible to separate it from Tesla here, but even some Musk fans and some Tesla bulls really starting to get frustrated here. Do you see ever a position where Tesla would do better without having him as CEO?
No, I think Musk is essential. He's essential for the valuation. He's essential for the equity following of retail investors. And he's been the visionary. You talk to, senior executives out of Tesla, senior engineers out of Tesla, and they say Musk is absolutely impossible to please. He is unstoppable. He will not take no for an answer. And that's how he's getting these tremendous results, years faster than anyone else in the industry. He is a very demanding CEO and extremely intelligent about the way he looks at some of these fundamental problems that people just assume are unsolvable or that the conventional solution is the right solution. Musk is Tesla. That is the challenge here over the next many years. How do you backfill him? I think if Musk was gone for Tesla, the valuation would change radically in a very short period of time.
Well, Elon Musk is taking on the state of Delaware. The CEO moving the corporate home of his brain implant company Neuralink from Delaware to Nevada. This after another proposal to move Tesla's incorporation to Texas. The move comes after a Delaware judge struck down Musk's compensation, or $55.8 billion CEO pay package. How likely is a move for Tesla's incorporation from Delaware to Texas? Let's bring in Yahoo Finance legal reporter Alexis Keeney. And Alexis, of course, it's not just Tesla. I mean, so many companies have been incorporated in Delaware for many, many years because of the more business-friendly environment.
Yeah, many years, Akiko. And in fact, it was New Jersey that used to be the top spot for business and corporations, but it was dethroned back in 1913 to Delaware's dominance, which has proceeded ever since. So a lot of questions have been swirling about whether Delaware could lose that dominant position as a place to incorporate, particularly for public companies, and also whether Tesla moving to Texas will really become a real thing. That's ever since Musk had questioned that invalidation by a Delaware judge in Chancery Court of that $56 billion pay package that he earned in that performance-based compensation for the company. Now, to talk about those questions, I've been asking a lot of questions of corporate legal experts, and what they say is that they don't see Delaware being dethroned anytime in the near future, though a move for Tesla could become a real thing. But look, it's up to the shareholders if they want to do that. Tesla would have to call, if they want to do this before its annual meeting that takes usually place later in the summer, they would have to ask for a special meeting. They'd have to inform shareholders, let them know when they would want to do this, and particularly why they would want to do a move to Texas, and that'll become important. Now, you mentioned there some of the reasons that Delaware has been so popular. One, it's easy to file for incorporation in the state. Also, it's business-friendly corporate laws, super important. Texas, for its part, it tends to follow Delaware's law, so Musk might not get that much of a different result in Texas if the same case were to go before judges there. Also, though, the business-friendly court in Delaware, that is of uber importance, and that could be really important to Tesla shareholders because shareholders, they like the predictability that Delaware has, this over a century's worth of court cases, so they kind of know what they're getting there. So that could be a significant hurdle for shareholders to vote yes to go to Texas. Ultimately, it's going to be up to their vote. Now, if shareholders also, if they think that it's not in the best interest of the company, and if they think the move is for a reason other than for the benefit of the company, they could also challenge going to Texas even after a shareholder vote has happened. So there's a lot of hurdles that really have to take place. But whether or not it will happen, we don't know yet. We have not seen the company move for this move to Texas, though Elon Musk did post to Twitter in his criticisms of this court decision that he would be doing this immediately. Akiko?
Oh, you can imagine so many other states watching this closely, looking to really go in and recruit some of these companies. What are some other states that companies could potentially move to if they're not in Delaware?
Yeah, so we covered Texas a little bit there. It follows Delaware laws. Texas, though, has made some inroads to establish a business court, much like what Delaware has. Now, of course, that would take some time, and there might be some concerns about home court advantage for businesses that are incorporated there, that are headquartered there, as Tesla is. It has its physical headquarters there. But they are working to establish a court, and maybe someday they might be able to have that kind of influence that the Delaware courts have. You also have Georgia, Wyoming, and Utah also setting up these types of business courts, though not gaining too much traction as of yet. Then you have New Jersey, New York, Illinois, and North Carolina. Those are states where there are special dockets in court for business decisions. But once again, they have not gained the kind of popularity that Delaware has. And one real special outlier is Nevada. Now, Nevada did something very striking strikingly different. About a decade ago, the state passed in its legislature new laws that really relaxes the liability for directors and officers and executives of public corporations. They can choose to waive fiduciary duties, all three of the fiduciary duties for directors. So that's one place where companies have been seeking out. And there's actually a case right now that's pending in Delaware Chancery Court where the controlling shareholder of TripAdvisor and its parent company has a litigation where shareholders challenged a move of that company from Delaware to Nevada. So we'll be keeping an eye on the result of that case.
A lot of potential moving pieces there. Alexis Keenan, as always, thanks so much.
Move your company out of Delaware before they lock the doors. That's what Elon Musk posted to his social media platform X. This comes as a Tesla CEO continues his campaign to reincorporate Tesla in Texas instead of Delaware. Now, 2 weeks ago, a Delaware judge invalidated the $56 billion compensation package that Musk earned as CEO of the EV company. Now, Musk then vowed to move immediately to hold a shareholder vote on Texas incorporation. The vote hasn't been scheduled, but if it is, what do Tesla investors need to know? Well, joining us now on this is John Coffey, Columbia Law School professor and director of the Center on Corporate Governance, and our very own legal reporter, Alexis Keenan. Big welcome to you here, John. So first, for people who are trying to get up to speed here, what is it that shareholders need to know when they're being asked about reincorporating in Texas?
Well, they need to know, first of all, that the CEO or the controlling shareholder may have interests different than their own, and Delaware will put them under some degree of scrutiny. Other jurisdictions like Nevada are advertising that there'll be very little judicial oversight, and that's what some CEOs want. Institutional investors, however, often hold the majority of the stock. The cases where we're seeing this kind of migration to the new jurisdiction are cases in which the controlling shareholder has the vote locked up. Either he owns 50% or he has de facto control because many shareholders do not vote, and a 40% block is actually a de facto controlling shareholder.
John, now there's a broader issue here, though, at play in that a controlling shareholder, if you argue that Musk is, in fact, a controlling shareholder in this instance, that they are electing the independent board members and therefore can, whether it's Delaware's court, whether it's another business court in another state, can those independent directors really protect the minority shareholders?
Well, I think the more that the directors are selected by the CEO, the lesser the likelihood that you'll get true independent scrutiny. Normally, we want an independent nominating committee of truly independent directors selecting the new members of the board. That's what you'll see in the large public corporations. But companies like Tesla and Twitter, well, they're used to having one charismatic controlling shareholder, and the shareholders may come in expecting that they are betting on the success of that shareholder. So there is less desire for independence.
And so, John, Delaware is, of course, the legal home to just over 2/3 of the Fortune 500 companies, and that's been increasing over the past 5 years. But when you look at the sort of protections that are offered in Delaware versus some of these special business courts in Nevada and Texas, what should people be aware of in terms of sort of how they're leaning towards some of these officers and directors in some states versus in Delaware?
Well, from the perspective of an independent person, what you know is companies often want Delaware because they can eliminate juries in any trial. All cases in Delaware involving corporations are going to be heard by judges only in the so-called Court of Chancery. That means you don't have the risk factor of a runaway juries. Juries can get the bit in their teeth and decide to make rulings that look against the weight of the evidence to others. All right. The new business courts may or may not be able to escape juries. That depends on what the state constitution says. But that does give you one residual advantage. And even if you set up a business court, they don't come to it with the century of jurisprudence history, the case law, and the answers to all questions already in their decided decisions. As Delaware gives you an elaborate body of law where you can predict the outcome based on the facts. That's not true if you establish a business court tomorrow, because in some states you may have less than a couple of dozen decisions about corporate law. The Delaware judiciary in this area is specialized in hearing corporation cases and not much else, but it makes them very expert in their field.
John, we're learning now through Reuters that both the parties, the shareholders in the pay dispute case and Tesla and its directors and Musk, that they are going to agree on doing a pause, a stay of the decision of the Delaware chancellor until this case is appealed to the Delaware Supreme Court. So can you just walk us through what that means for timeline for resolving that matter and what really has to happen next?
Well, the Delaware Supreme Court can move quickly. You see this in many takeover battles where it goes from the Chancery Court to the Supreme Court for an injunction and is resolved in a matter of weeks. This is not a case that has a background merger that's being delayed, so I don't think they'll rush quite as expeditiously. But you'll go up to the Delaware Supreme Court, which I think is going to be leaning in the direction of the chancellor. She wrote a very fact-specific 200-page decision making all kinds of findings of fact, and appellate courts generally don't like to reverse findings of fact because they weren't there, they didn't hear the trial, they didn't see the credibility of the witnesses, and thus some deference is given to an experienced trial judge. And the chancellor is the sort of senior member of the Chancery Court and is really respected within the nation's corporate law bar. So I think the odds on reversal are, at best, it's an outside shot. There may be a 20% chance that they would reverse the chancellor. They may change some of the language, however, and suggest they're a little bit more friendly towards executives and their compensation. But I would not predict that they would overturn the chancellor, and this could be resolved easily by the summer.
John Coffey and Alexis Keenan, thank you so much for taking the time here with this conversation. We're going to continue to track the developments as it plays out. We appreciate it.
Okay, thank you.
I guess we can't have a conversation these days without talking about Tesla, it feels like. So I got to ask you about Tesla. Do you think that the company should be, would you as a shareholder vote for Tesla switching its domicile from Delaware to Texas?
We're very supportive of that. What happened in Delaware, the judge ruling and basically taking the vote away from us, the shareholder, we voted for that pay package, 73% of shareholders did, and to have the judge kind of thinking that she is reading the minds of directors and independents, dependents, whatever. I just think, as I said in a post on X, I think it's un-American, it's anti-investor, and it's an insult to the board of directors of Tesla. So totally supportive of that move.
Are you supportive of Elon Musk's requests or demands or whatever you want to call it to get more voting shares? Or as he says, he'll take some of his technology elsewhere? Or do you feel as though Tesla's sort of being held hostage to that demand?
I do not feel that. Being involved in disruptive innovation and only disruptive innovation, we know that we need visionary leaders who will stand up to short-term oriented shareholders and be able to execute their vision with the right technologies at the right time. And Elon Musk is the inventor of our age, and he is also our Renaissance man. So I'm always surprised at the pushback he receives. And I do think that 25, he's not asking for any more economic interest, it's voting interest. And for many of our companies, we are supportive of super voting rights because we know the visionary leaders, we go through periods of volatility and they just need to be able to execute upon their vision, not be thrown off by boards of directors who are listening to short-term oriented shareholders and swayed by them.
Elon Musk increasing his ownership in Tesla to just over 20% from his last reported stake of 13% in May, getting him closer, much closer to his goal of owning a quarter of the company. While he's come under fire for wanting more control, Musk is getting support from ARK Invest CEO Cathie Wood. Here's what she told us last week.
Elon Musk is the inventor of our age, and he is also our Renaissance man. So I'm always surprised at the pushback he receives. And I do think that 25, he's not asking for any more economic interest, it's voting interest. And for many of our companies, we are supportive of super voting rights because we know the visionary leaders, we go through periods of volatility and they just need to be able to execute upon their vision, not be thrown off by boards of directors who are listening to short-term oriented shareholders and swayed by them.
And joining us now is a former Tesla board member, former state controller of California, and now founder and managing partner of the Wesley Group, Steve Wesley. Steve, it is good to have you on the show. And maybe I'll just start, Steve, with what you just heard Cathie Wood say. She's describing Elon Musk, Steve, as a Renaissance man, inventor of our age. What do you think, Steve? You agree with that? Is that a fair description in your opinion?
Well, look, there's no doubt he's built one of the transformational companies of the age, and he's done it twice with SpaceX. But there still needs to be appropriate board governance. What's interesting to me is Tesla's just had this extraordinary year. I call it the tale of two cities, where they produced $97 billion in revenue in 2023. They sold 1.8 million cars. That's more EVs than anybody, including BYD, last year. They dominate the U.S. market, 55% market share, more than everybody else combined, but growth slowing. And everybody can see it. And they need to figure out how quickly they can get to the next growth curve. Right now, it looks like they need that $25,000 car up and out into the market as soon as possible. That's going to be Elon Musk's best big test. We'll see whether he can meet it.
Well, and we know historically that he has a lot of balls in the air at once, typically, whether it's posting on X or dealing with all of his other companies or whatever other side battles he's choosing to fight at any given moment. Right now, this struggle to maybe move the company to try to get more voting rights, is that a distraction at a time when, to your point, growth is slowing?
Look, I think Tesla and Elon need to focus on one thing and only one thing. I think 2024 is going to be rough. They need to scramble to find the next growth wave. $25,000 car, at least 18 months out. That may be a game changer, might get them back to 30 or 40% growth. What are you going to do in the next 18 months? And I think they got 3 shots on goal. They've got the self-driving vehicle with robotaxis, probably still 3 to 5 years out. They've got an energy division, which most people don't even think about, and that is doing $6 billion last year, on the way to maybe $8 or $9 billion this year, going 50%. That could be a $20 billion division. And then they've got the global charging network, because everybody has basically thrown up the white flag, if you will, signed a deal with Tesla to be able to use their global charging network. They've got to make one of these 3 things work to get the growth cycle back. That's what Elon should be evaluated on. That's what the board should be setting his comp on. In my opinion, it always needs to be performance-based.
And Steve, I want to ask you, switching gears here a bit, a different question. Musk's SpaceX wants to convert its business incorporation to Texas from Delaware. Wants to do the same thing with Tesla. Does that move make sense to you, Steve?
Look, I have no comment on whether they should be in Delaware or Texas. They should be focused on one thing: moving faster, getting new product into the market that is lower cost, that can compete with BYD, which is clearly far and away, full stop, their number one competitor. All the legal issues, the tax issues, the control issues. But generally speaking, you want to be focused on making a great product at a lower price and doing it faster than anybody else. Every minute you waste on other stuff, I think, is suboptimal. They've got their work cut out for them, and the Chinese are coming, and they're coming quickly.
This is the Tesla Roadster. It was unveiled in 2017, and the company promised it would be the fastest car ever made, but it never made it to production until now, it seems. After 6 years, CEO Elon Musk saying the long-delayed electric sports car will begin shipments next year. Praz Subramanian has the details.
I can't help laugh my way through that intro. It's coming now. It's coming now, Praz. Really? Is it really coming? That's a little credulous.
He says it is, but just to rewind a little bit, 2017, right? This is what, 5 years ago. We saw this thing roll out at an event, and then haven't heard much since until 2022 when Musk said at the Giga Rodeo when they opened up the Austin factory that it's coming. It's going to come in 2023, right? And they reopened reservations, and we'll talk about that. But basically now we see Musk tweeting late last night. It is coming. They basically production design is complete. They're going to unveil the car later this year, like you said, Josh, and then planning for sales next year. Now, says again, a 0 to 60 time less than a second, kind of insane stuff here. But again, we heard this 2 years ago, we heard it 5 years ago. Is it actually going to come out? Deposit holders, some have put down $50,000 with no interest, right? That's refundable. I'm sorry, $5,000 refundable. Other people have put down $250,000 for the Foundation Series to get that car. So.
Well, I hope they get it eventually, right? I mean, this reminds me of the Cybertruck a little bit as well, which did well. It sort of come out.
Yeah.
Right?
And
I mean,
eventually, right.
Yeah. It's interesting timing because, of course, BYD came out with its own supercar earlier this week. Is that a coincidence that we're now getting an update on the Roadster?
I wrote a piece on it's going to come out just in the next few moments, but basically, yes, I kind of allude to the fact that it's interesting that these tweets came out late last night. We talked about BYD's U9 supercar, right? It's going to cost $230,000, around the same price as potentially the Tesla Roadster. Scissor doors, 4 motors, all these pretty cool stats. But only a couple months ago, NIO also said that their EP9 hypercar is going to cost $3 million US, 1,000 horsepower, interchangeable batteries, all this sort of stuff. The Chinese supercar makers are sort of coming on strong here, and it seems like maybe Musk kind of had to cough up more details because he felt the need to, because these cars are going to come on the road later this year, the Chinese cars. So in China, but not necessarily in the US, but still competition nonetheless.
Right. If you're a Chinese buyer, are you going to wait for the Tesla Roadster? Or are you going to buy one of these other ones?
I want to quickly just say something real quick. Yes, it is a $5,000 deposit, not a $50,000 deposit for.
Oh, that's a lot lower.
Yeah.
But still.
Just wanted to correct
that.
It's
not nothing.
I mean, it's interesting probably because, listen, I think that's a beautiful car. The lines on that car are beautiful to me. But I would say, like, $200,000, when you find yourself competing with, like, a Lamborghini or Ferrari, that's a small market. I mean, ultimately, that doesn't move the needle for Tesla or the EV market, right? I mean, what have we talked about so much on the show? What's one way to reignite growth here? It's not the $200,000 car, and again, gorgeous car, but ultimately you need lower priced EVs, right?
Yeah, I think these are just halo cars that bring people in. Like, they have the Optimus robot in some stores to kind of bring people in. Same with the Cybertruck. It's in a lot of the marquee Tesla stores to bring people in. So that's like some of the thing that kind of draws you in. But you're going to buy the Model Y or the Model 3, maybe the X or the S as your actual car. Quickly, I want to again clarify that it's a $5,000 deposit. But then within 10 days, you got to cough up another $45,000 for a $50,000.
So it is effectively a $50,000 deposit
for a car
that people have put down.
Yes, and the car when 2017 it was said to be a $200,000 MSRP and $250K for that Founders Edition. Right. Sorry about that. Want to get that clear.
That's okay. We'll see. I mean, it's not even out yet, so there's a lot of confusion, I guess.
Yeah. Well, why do we care, right? It doesn't matter. It's going to change tomorrow. Who knows, right? We'll see.
Maybe
Wait for the tweet. Shares of Tesla down again today. Meanwhile, fueled by negative headlines coming out of China and Germany. Yahoo Finance's Praz Subramanian joins us now for the very latest. Praz.
Yeah, Tesla shares bouncing around here. They were rebounding a little bit, but now still at their lowest low since I think May 2022. 2 days in a row now of sliding here. Latest news is arson attack on the Giga Berlin plant. A left-wing group has sort of accepted or kind of admitted that they had caused a fire at a substation there that knocked out power to the plant. Tesla says that the plant has been evacuated. Power has been shut off. We don't know how many days it'll be shut off for. So this could be a multi-day effect. That plant makes around 6,000 units a day. So could be a significant kind of problem for them from a production point of view. And this follows yesterday's news of the China shipments being lower. So more concern there for Tesla investors and analysts.
Yeah, and that's sort of the point, right? Is that it just sort of keeps piling on when it comes to the pullback that we've seen in Tesla shares. We've been talking about the fracturing of the Magnificent Seven, right? That it's not really seven that are outperforming anymore, but Tesla has been the one that has pulled back the most and sort of the earliest compared with the others.
I mean, so far, down 27% if not more, a little bit more for Q1. So that's a significant drawdown for a company. I mean, we're talking billions upon billions of dollars. In the Mag 7, what are we down to? Mag 5 now? Is that sort of the play now? Because
or Mag 1, if you're just talking about Nvidia, which is down today, but was the only one that was up yesterday.
Yeah, so I think that we saw Goldman also today knocking down their estimates for 2024 and 2025 because of the fact that they see price cuts continuing and margin compression also continuing. It's hard to see a bull case over the next couple of months, if not the next 2 years, given where we are in the EV sort of landscape, both here and also globally.
It's so bad that Musk isn't even the richest man on the planet anymore. You see that?
Bezos.
Jeff Bezos.
Yeah.
That's how tough it is, Julie.
That's how tough it is.
Rough times.
Rough times. Thanks so much, Prash. Appreciate it.
Tesla is a Magnificent Seven's biggest laggard year to date, but it's not the only one. Shares of Apple and Alphabet are also in the red since the start of the year. Now this week, we are focusing on these three laggards and what it's going to take for the companies to turn things around. Today, the focus is Tesla, currently trading just around $179 a share, a loss of nearly 30% this year alone. Our next guest, though, saying that now could be a good buying opportunity. For more on that and what the catalyst will be, we want to bring in George Generikis. He's with Canaccord Genuity's managing director there. George, it's great to see you. So talk to us about why you think Tesla is a buy at these levels.
Well, first, let's address the reason why it's lagged. And it's pretty simple. The numbers have come down. I mean, if you look at the earnings revisions for the last 12 plus months, they've been terrible. I mean, I think we started for 2023 somewhere early in that year on $6, and it came all the way down to $3. And I think we're at a period of time right now where the worries likely exceed the reality. And we had some numbers last week come out of China that weren't very good, but those people didn't take into account that the new year has been pushed into February. Also, some stuff that happened in Germany. Their plant came down for about a week because of arson, a week plus. And in the U.S., people are worried about the production of their new Model 3. And we think that the best way to kind of gauge, for the most part, what's happening with Tesla, particularly in the U.S., is to look at their prices. And they've been pretty stable in the U.S. over the last few months. So, there's a lot of wood to chop still in the quarter, but in the near term, we think that we may have overcorrected here to the downside.
They talked on their most recent earnings call, George, about the spending and some of the record R&D that they had done during 2023, which now places a lot of emphasis on bringing that to fruition in 2024 and years following now. How much of that spending do you anticipate will lean further towards the side of this artificial intelligence narrative that has started to prevail with Tesla, even though we've seen some early slippage this year, at least in the price action?
Look, we're in a little bit of a pause period right now for the stock. In the near term wiggles, we think we've overcorrected, but for the stock to really get its legs, we have to have three things happen. First, the next generation vehicle has to start to ramp, or people have to gain confidence that it's going to ramp and be successful. Second, their margins need to go up. And the most likely lever for that happening is the increase of FSD, full self-driving penetration, which leverages the AI that they've built, in addition to volumes starting to pick back up. And third, it's continuation in growth, really good growth in their energy storage business. So when you talk about leveraging this R&D that they've spent a lot on, it's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now, we think that the FSD offering from the company at $12,000 currently is a little too rich, particularly relative to the cost of the vehicle. We think the company should cut the price of that FSD to really increase penetration and really have the margins start to turn in. If you think about it, that offering is about 100% gross margin, very, very high gross margin because it's a software upgrade.
George, we have seen, though, the price wars play out. Obviously, Tesla, far from the only automaker, one of many, I should say, that has been forced to lower the prices, obviously putting pressures on margins, very similar to what you were just saying. How do you see that, more broadly speaking, beyond Tesla, shaking out just a bit, and that pressure to the downside in terms of boosting demand? How much longer are they going to be forced to slash prices in order to drive the demand that we simply have not seen?
Well, look, there's been a pause, like I said, recently, particularly in the U.S. The price declines that we saw for the most part in 2023 is sort of ebbed right now, which for us is an indication that maybe things aren't that bad. And what the company did strategically by being that aggressive is, first of all, they get to sell more vehicles, right? Because interest rates went up and most people finance the purchase of their vehicles. So that meant that the prices of vehicles went up artificially. But second, it put a lot of their competitors on their back legs. I mean, margins got a lot worse for some of the pure play EV competitors. Sales got a lot worse for them. And even for the traditional OEMs that try to compete against Tesla, their margins got significantly worse because they couldn't compete with Tesla on price. So what we saw is, longer term, what Tesla did is put a lot of its competition on the back foot, particularly in the United States and Europe.
And so let's talk then about China, because that's one of the larger kind of lingering risks right now for Tesla. Is sentiment shifting so much in the region that there would be a longer term implication for how Tesla is able to operate and sell into China as well?
That's a great question. I mean, look, we see the real competition for Tesla long term. Look, we really like Rivian in the United States and in parts of Europe and other parts of North America. But in China specifically, there's some very, very good OEM competitors, some pure play EV companies. The company has one plant in China right now, able to produce about 950,000 vehicles. And they're running, despite this monthly volatility, they're running full tilt there. And we continue to believe they'll run full tilt in that country. So there's really good competition in China, but we think Tesla can operate that factory at relatively full capacity that leaves them in a good place in that country.
So, George, as we wrap this up, we started this segment talking about the share price being under pressure. We're trading around $179 a share today. What more specifically does that upside look like?
Look, our price target is in the 230s, and we base that on 26 times our 2026 estimates. And we think that's going to happen as volumes start to pick up next year and the year after that, based on increased Cybertruck production and the next generation vehicle. And importantly, we think that the margins will start to get better, particularly as we've seen an abatement in price reductions, at least for now, and costs continue to come down for the company. So, in the near term, we have these wiggles, and we think, like we said, we've overcorrected to the downside in the near term. But, for real outperformance, we need to next generation vehicle or some visibility to that, increased margins based on FSD mostly, and continued growth in their energy storage business. Those three things will really get the stock to get its outperformance legs of old back.
Well, Tesla shares falling more than 30% since the start of the year, with a number of factors leading to that decline. The EV giant has received several analyst downgrades, including one from Wells Fargo on Wednesday. There's also concerns about a slowdown in EV demand. Let's talk about where investor sentiment is likely to lead to now. Ross Gerber, Kawasaki Wealth and Investment Management CEO, joining us now. Ross, we always like to talk Tesla with you, but I wonder, where you think about where Tesla has fallen right now, is this just about Tesla coming back down to reality where fair value should be? Or are there fundamental questions about its growth potential now?
Well, unfortunately, I think it's kind of both, in that the original story that I think most investors bought into with Tesla didn't really include Elon and Twitter. And I think for a long time, we all hoped that it really wouldn't affect Tesla and the demand for its products. But we all know that that has now happened, and the demand for Tesla products is obviously lower, and they've had to discount and do many things to hurt margins and returns and ultimately, profits for Tesla. So, you've got that problem, which is where's the bottom when they don't advertise and they don't do anything to create demand, but the CEO of the company every day goes out and hurts demand through his actions, literally every day. Yesterday it was Don Lemon and Mr. Free Speech, but I don't like the guy who interviewed me, so he's fired. That's not free speech. So I think, investors have had enough, and we see the fallacy in this business model now, where the king of advertising the brand is now the devil advertising the brand, basically.
So, Ross, this is tough, and I know you're someone who, this is a company that you like, that you follow.
I love the company.
Exactly. So how hard is it then to try and value this company that started off as a car company, then is considered more of a software company, and then you bring in some of the personality of the CEO as well coming into the mix? How do you end up valuing accurately Tesla?
Well, the way we've always valued Tesla is a tech company. First of all, in its heyday, it traded 100 times forward earnings in the end of 21, when things were, as good as they could be for Tesla. And, you know, so part of it is a valuation coming back down to earth. And when you align it with forward multiples from Microsoft, Nvidia, you know, Google, Apple, the Mag 7, let's say, you know, 35 to 40 times forward earnings makes a lot of sense. So if you're looking at $3 for this year, you know, that's how the Wells Fargo guy gets to 125. And so, you know, 40 times earnings seems like a fair multiple for a company that isn't growing earnings, but has an incredible potential future. But, you know, this could turn around very quickly if either like Tesla gets a real CEO who's actually going to help the company, or Elon changes his tune and actually comes back to working at Tesla and promoting the brand in a positive way. So they've got great products. The Cybertruck is amazing, but it's just literally a business lesson of an amazing company being brought down by its CEO.
Yeah, but Ross, you said you value it as a tech company. I mean, what's the tech catalyst here? You know, for months we heard from so many Tesla bulls who said, look, this is an AI company, but there's not an AI product out there. When you think about autopilot, it's not at the level 5 that was claimed to be.
No, it's not an AI company, and Elon's made it clear he's not going to build AI at Tesla, which is even more upsetting to me, especially because Tesla could have owned OpenAI in hindsight, and boy, that's worth now $100 billion. So, you know, there's a lot of stuff going on here, but Tesla's technologies, battery technology and scaling advanced battery technology, 4 megapacks, for example, for utilities, the technology behind the Tesla manufacturing process, as well as the battery production process, not to mention full self-driving, which is still an impressive piece of technology. But what they've done is they've been able to scale EVs like no other company's been able to do in the world. And so we now see for sure the moat that Tesla's built is pretty deep, being able to make 2 million cars and nobody's even close. So I think, you know, it's not a car company, that's for sure. I mean, can you call a Cybertruck like a regular truck? You know, it's not a truck company. So I think it's a tech company, but it still doesn't change the reality that companies trade based off the perception of its future earnings. And now that perception has changed to a much lower perception of future earnings. And that's why there's so much pressure on the stock. And once again, it could be reversed immediately if Tesla took actions to improve the brand and advertise its products.
Well, Tesla shares are slumping today. This comes after a Bloomberg report reveals the EV maker is reducing production at its plant in China. That's yet another roadblock amid slowing EV sales and competition in the country. To break it all down, let's bring in our very own Praz Subramanian. Praz, the latest hit for Tesla here. What do we know?
Yeah, so Hugo, this morning we heard Bloomberg reporting that Tesla is going to reduce output at Giga Shanghai through the telling workers to work less, right? So basically, according to sources, workers have been told to work 5 days a week instead of 6.5. I know 5 days is interesting, right? But 6.5 is very interesting. That's not what we were used to here. But the production lines will continue to work 2 shifts a day, which they normally do. That'll remain the same, but fewer workers will be working there. So that means output has been, and they're saying that output has already been trimmed starting in the beginning of this month, and that there could be also longer suspensions in battery workshops, for instance, at Giga Shanghai. So what's going on here is that Tesla shipments in China the first 2 months are actually down 6% compared to last year, and only half of those shipments went to the Chinese domestic market. The rest were exported out. So, you know, this happens as meanwhile as overall shipments in China and EV sales are rising. So kind of an opposite situation here for Tesla compared to the rest of the industry there in China.
And we knew that China obviously has its own competitive domestic market when it comes to EVs. How much of that is weighing on Tesla here versus some of the slower growth that we've seen in EV adoption globally?
I mean, today we see the stock down a little bit, and it's no surprise that the business is slowing down in China. You know, we're gonna get Q1 global numbers in another about 8 days. 8-9 days, we'll see what the effect will be. Tesla doesn't break down shipments across their regions, but we can kind of make an assumption as to maybe China's a culprit there for a weakening or slowing sales. So I think it's not. The investment community is aware of this. The stock is down below 170. The question is, I've seen some analysts say this is sort of maybe the nadir, and we're going to see potentially that Gen 2 car. We're going to hear more about software initiatives. You have the Tesla NACS charging here that's expanding, and maybe that might lift the stock higher down the line. But right now, it's more of a demand supply story.
Indeed, and continuing to see those fluctuations in prices for different models there for Tesla as well. I appreciate you breaking that down for us, our very own Pras Supermanian.
The pricing war is heating up. Chinese smartphone company Xiaomi is releasing an electric car that's $4,000 cheaper than Tesla's Model 3. Well, Tesla, a Wall Street darling not so long ago, its fall from grace wall is continuing. RBC's Citi, Bernstein, and Oppenheimer all striking a cautious tone on the stock this week, and with the majority of the street now at a hold rating as one of the worst performers in the S&P 500 for the first quarter. How should you, the investor, be looking at Tesla? Here to break it all down, we want to bring in Colin Rush. He's Oppenheimer Managing Director and Senior Research Analyst here. Colin, it's good to see you. So just your reaction to obviously this downward move that we've seen in Tesla, not exactly a massive surprise given the trends that we had seen over the last several weeks. But how is Tesla set up now, not only in the current quarter, but looking ahead to the remainder of the year?
Yeah, so this first quarter is setting up to be pretty messy. I think everyone understands that there's seasonal weakness here in the first quarter. They've had some supply chain disruptions, in the European supply chain with the Red Sea. They also had this fire in Germany, that shut down the factory for a little bit, and the announcement that they're kind of trimming some of the production in China. And so I don't think anyone has any big expectations for production here. But what is at stake, I think, is where the margins shake out for the quarter and how that sets up for the balance of the year. And so as we're looking at this, we just trimmed numbers on the first quarter, just out of a bit of caution. But we're also seeing them recognize a certain amount of deferred revenue with the release of the version 12.3 on the FSD. We think they're going to recognize a reasonable amount of revenue there to support the margins. And so, net where we're at is we think there's a bit of a better than feared trade setting up here on the quarter, provided that the margins hold up as we get into the balance of the year. I mean, the bigger question really is, where are the normalized margins going forward?
Right. And so with that in mind, it all comes back to some of these pricing dynamics and how that correlates within the mechanisms that Tesla is actually able to demand or generate demand here at this point too. As you think about some of the other adjustments that they're going to need to make, are they going to need to make other production adjustments given the demand environment here too?
I mean, one of the things that this company has been really great at is making ongoing, cost optimization choices, and so they've continued to drive cost out of the vehicles on an ongoing basis over a number of years, and so we think they continue to do that. They've got some benefits from materials on the lithium side that are still yet to fully roll through. We think they're continuing to beat up their suppliers on components, and then they continue to be in the Western world still the largest the EV OEM. The question for me right now around where they're selling is how much they're going to sell into the Chinese market where there is this very aggressive price war, and how much they're going to start shipping a number of those vehicles into other countries in Asia and a number of the underserved countries that they really have not been selling into, but do have a sales footprint.
Tesla taking a hit as Wall Street bulls turn cautious on the EV maker. Sluggish expectations for Tesla's first quarter deliveries and, of course, increasing pricing competition weighing on that stock. Dan Ives, Wedbush Securities Managing Director, joining us now to discuss. Dan, great to see you, my friend.
Great to be here.
Great to have you on set. Let's just dig right into Tesla. Q1 deliveries on deck. What does Dan Ives expect?
I mean, Nightmare on Elm Street, Friday the 13th. It's going to be a bad one,
Yeah.
and that's why
that sounds terrible.
Look, it was a brutal quarter.
Yeah.
Because if you look, China demand softened significantly. We really had to cut numbers, not just in China, but even in the U.S. and Europe. And our whole point is, on the other side of this, the growth story is still there. But look, this is a fork in the road period for Musk to navigate. I mean, and this can be rip the Band-Aid off when they report Tuesday morning.
You said the other side. I think I heard you say 2.5 to 3 million deliveries, what you're looking at on the other side, right? I mean, what's going to be the catalyst, though? Because it doesn't feel like the price cuts, the pressure there is easing at any time. At the same time, when we talk about this next wave of EV adoption, it is about more affordable vehicles, which Tesla doesn't necessarily have.
Yeah, it's a Game of Thrones price war right now in China. And I look, as that plays out, Street understands that, but they have not communicated that well. So in other words, where's the line in the sand in terms of margins? walk through how they're going to reverse the strategy in China, because the opportunity is still there. In other words, like, we're still in the early innings of where this is all playing out, full self-driving AI. But no doubt, I mean, these are some dark days ahead that Musk needs to navigate. And I think it's a defining chapter in the Tesla story. And that's why investors, patience is wearing thin. And this is just one where it's going to be a very, very difficult quarter.
So let me ask you, all right, I could put you in front of Elon Musk right now. What would you tell Musk? What would be the Dan Ives game plan to turn this around?
Have an adult in the room on the conference call, give a communication strategy around guidance, margins, hold an AI day, give some strategic targets. And also a lot of the noise with Musk leaving is, his AI initiatives.
Basically, I'm saying, listen, I could take my AI and my robotics plays, I could take them elsewhere.
That's 70% of the value of Tesla is Musk. Okay, so Musk is Tesla, Tesla is Musk. Investors have a lot of patience, and we've been here before, 2018, 2019. This is nowhere near those, but this is a white knuckle period that they need to navigate. You compare that to what Cook will do on calls, Nadella, some of the other Hall of Famers. I'm not saying Musk is going to do that, but this is a quarter that's really going to shake some confidence. And I think that's the thing. We see it on the other side in terms of being bullish, but no doubt that's why we had to lower the price target.
Time now for the day's trending tickers. Let's start with Tesla here. Shares riding lower as it raises prices on all Model Y vehicles. So in the U.S., prices go higher on its popular Model Y SUV by about $1,000. Did the same in China with the Model Y long-range version. Price hikes not a surprise, Julie. These were telegraphed, so we knew this was coming. Maybe Elon Musk trying to move some vehicles ahead of that Q1 close. Of course, this comes at a time we know when Tesla's competitors, U.S. and China, have been cutting prices, which is interesting.
I mean, and these price hikes are not very large, right? They're just around $1,000. The other thing that really people are watching for Tesla right now is finding out the deliveries for the first quarter. That's what everybody wants to know. What do the numbers look like? Especially at a time when Tesla's already not performing very well. We just talked to Lou Bassinis a few moments ago. He said he would not touch Tesla at these levels because it is in this sort of in-between time, and he doesn't see what the next catalyst is going to be.
Yep, fair enough. Well, let's bring in Yahoo Finance's Praz Subramanian for more on this. Praz, what can you tell us?
Like you said, that those price hikes were not unexpected. They were going to happen. Tesla's U.S. website had these. It'll go up by $1,000 at the start of the month because, as you know, they wanted to push those late quarter sales. But you actually noted it tomorrow as we're going to have those delivery numbers coming out for Q1. That's what everyone's a little bit on edge about. Bloomberg consensus around 453,000, 454,000 for the quarter, which would be down 6% compared to Q4, but then up a decent amount compared to a year ago. The big concern is if it actually is below that 422,000-ish from last year. If that's the case, and some are predicting it, like Deutsche Bank's predicting that could be a big downer for the stock, I think, tomorrow. So that would indicate some reasonable concern there for China and the U.S. and wherever else.
And it was interesting what we heard Lou saying, that, there's what's next for Tesla. He wants to know that. And at this point, with Tesla sort of, the bar maybe is a little bit lower than it was for Tesla because they have set the bar low and tried to manage expectations. But, it's kind of like, where's that next excitement coming from?
Yeah, I mean, it has to be the Gen 2 vehicle.
But that's not for a while, Roz, right?
That's not going to be in production until 2025,
right.
But they're supposed to reveal this vehicle sometime this year. I think that's a big step that people want to see. They want to hear more about, are we going to have another battery day or an AI day to explain what they're up to in that regard, and a bit more information on those types of long-range side bets that are actually kind of propping a big part of the value. So I think that's sort of the things that some of these analysts want to see. But I think from my point of view, from the car business point of view, can we see that Gen 2 vehicle sooner rather than later? We know it's coming out next year, but can we see it? Right. That would be a big, I think, positive for the stock.
Well, and I had a benchmark for myself. I saw the first Cybertruck on the road. I was just on vacation. I saw it on the road in Miami, which makes sense. It looked like it had a special paint job. It was all black, unless that's how some of them come. I don't know.
Yeah, they're offering a vinyl wrap, these wraps you can get from the factory, green, black,
it was
whatever.
Like a matte. It was like a matte black. It was interesting. And I had to do a double take. I saw it on the road, I was like, what? It's
Did it change your mind on the Cybertruck? Were you like, okay, now I'm in the matte black version?
No. I mean, we just kind of looked at what is that? It's just sort of silly.
You know, I haven't seen it actually, but I heard it looks a lot longer than you think, right? Was the kind of appearance you
I actually felt it looked smaller, like it looked more like the size of a regular SUV. It's just this odd shape.
I think a beholder prize. That's all it is.
But I don't know. It was brief. It was a brief glimpse. I don't know. We'll have to.
Miami got a lot going
research.
on. You get a little distracted.
That
there,
is
so.
true. There weren't women in bikinis hanging out the windows, but well, next time. Thanks so much, Frost.
Well, Tesla shares are dropping on news of its first quarter vehicle delivery and production numbers. The company delivered around 387,000 vehicles. The Bloomberg consensus estimates that number was 449,000. Now, the EV maker is saying that the decline in volume was driven by supply side issues, including factory shutdowns stemming from tensions in the Red Sea conflict, as well as an attack on its Berlin Gigafactory. Now, let's bring in our guest to discuss whether the issue here is supply or demand. Larry Goldberg, entrepreneur, Tesla investor, and VC angel. Thank you for joining us here today. Your expectations for this number were to the downside, a disappointment, and then I think, correct me if I'm wrong, the final number was even lower. So what do these numbers mean to you?
Yeah, it was a big downside disappointment for me. The numbers, I'm not a fan of the issue of these delivery numbers being so important, because I'm a long-term investor in Tesla. I have a scenario that shows there are multiple different businesses coming to fruition, particularly the energy business and in addition, the Optimus business. So for me, the quarterly results are not as important as the trends and where they're going. So we're seeing, the introduction of a new model in Fremont, the refreshed Model 3, just beginning to crank up. So we don't have production from there. We see the Cybertruck just beginning to get underway, and that's been a very promising launch, by the way. So I expect that we're going to see 100,000 Cybertrucks delivered this year. And I think that's going to have a huge impact on performance for the year. So we're in we're in transition mode. We were warned that this is, between waves. That was the CFO's phrase in the last earnings call. So I expected a down quarter, not as far down as this, but Suez may have had an impact on it, as well as the startup of the new Model 3 in the factory in Fremont.
I noticed that you talked about the importance of trends, but we are seeing a trend of declines in EV sales, and this is just kind of the latest example of that. So if you are a long-term investor, doesn't a drop in demand that we are seeing through today's numbers start to scare you a little?
No, this talk about the drop in demand for EVs, if you actually look at the real numbers globally, the global numbers are actually quite promising. We are reaching a tipping level in many European countries, and we certainly reached that tipping level in China. Now, China's got its own economic woes, and that has an impact on sales in general of vehicles. And so, EVs will follow that path. But we are seeing globally EVs reaching the tipping point against ICE cars. So I don't agree with the general impression or the knock on EVs at the moment. I think we're going to see continued growth in EV sales, and we are seeing continued growth in EV sales.
Larry, I want to talk about full service driving, something basically in a generic sense it's been promised for a long time, and it seems like we're finally on the cusp of it. How close are we, number one, and how big an opportunity is this for some of the auto players?
Full self-driving is really an important, it is a critical step, and a step that is going to transform Tesla dramatically. And we're close. The problem is nobody is able to tell you how close, because nobody's ever done it before. I have the latest version of full self-driving. I drove it before I left the United States last night. It is an amazing piece of software. It is truly amazing, and it's transformative. It is dramatically different than the previous versions of full self-driving. It really feels like it's thinking. It really feels like it's human. It has human-like tendencies. How far we are away? I guessed last year between 1 and 3 years. I would say that guess remains there. I think we're, within 1 to 2 years of seeing Tesla declare, a level 5 and start taking responsibility. I'm in Europe right now, and I was in New York, passing through New York last night. The number of taxi cabs and Ubers that are Teslas are quite amazing here in Europe and in the United States. So it looks like the Tesla is a really good fit for a taxi cab. And so the robotaxi opportunity for Tesla is just, it transforms the company by several orders of magnitude. That's just one of the opportunities in the Tesla, opportunity book.
Right, and barring a lot of potential headwinds here in the U.S., at least before that can hit kind of a broader market. But having said that, I want to end on a little bit more of a philosophical question. We've got about 60 seconds left for you here on this. Is Tesla a tech company or a car company?
That's an excellent question. It's clearly a tech company, but it's a tech company that differs from all other tech companies in that it has manufacturing smarts that cannot be equaled by any manufacturing company in the United States, and China are copying Tesla. So that's the big differentiator between Tesla and any other tech company in the world.
Larry, this was fun. Thank you so much for joining us. Larry Goldberg, entrepreneur, Tesla investor, and VC angel as well. Really appreciate it.
Tesla shares under pressure after reporting a significant delivery miss for the first quarter, 387,000. That was versus an expectation of 449,000. The EV maker noting production setbacks as a reason for the decline in volumes. Dan Levy, Barclays senior autos analyst, joining us now for more. Dan, it is good to see you. So Q1 deliveries much softer than expected. Dan, what drove this miss?
Hi, Josh and Julie. Thank you so much for having me. Look, I think there's a couple things that you saw playing out in the quarter. I think there's weak demand that's likely playing out across a variety of regions. We're still waiting to get the final data, but some of the China data we saw late in the quarter was quite weak. And we know that in the US, there's been some softness as well. So I think we're going to find out the share by region, but that was quite soft. The other thing that we likely saw was that while production was well ahead of deliveries, and there may have very well been some units that were left in transit, this likely implies that there's going to be some further build of inventory. And this is maybe a bit of a challenge going forward, as this now implies potentially further price downs ahead to clear this excess inventory. They likely built something like 45 to 50,000 units of inventory. It adds on top of the, call it 90 to 100,000 units they already had. So extra inventory likely means that there's going to be some negative pricing ahead.
Dan, does that also presume that maybe what you're talking about is not priced into the stock already, that there could be further cuts, that maybe what we're seeing on the delivery side is only the first of perhaps more quarters like this to come?
Yeah, I think there's a couple of challenges that still need to be addressed from a fundamental standpoint. One is data likely implies that you're potentially going to have flat volume year over year, which tells you that we're looking at really a year of no growth, right? This data point that we got implies that to get any sort of growth, we really need to see a ramp of deliveries in the back half of the year. As it was already a steep ramp with volume well in the range of 500,000 units plus per quarter. So one issue that needs to be addressed is the volume side. The other side is around margins. I think there was a view that actually Tesla had been maintaining for a bit more discipline on price, preferring more recently to trade away some volume for price. But I think what we're seeing is that with this inventory build, it potentially implies further price downs ahead. And this potentially implies that you're going to have some weakness coming on margins, really testing the trough that we saw in the third quarter. So there are going to likely be some negative EPS revisions coming.
Wall Street getting more bearish on Tesla after a rough start to the second quarter. A number of analysts cut their price targets this week after the company reported disappointing first quarter delivery numbers. Guggenheim reiterated its sell rating and lowered the price target on the stock to $122 from the previous $132. Let's bring in Ronald Yevsiko, who is the Guggenheim Securities Director of Automotive Equity Research, to discuss more. Ronald, take us into your thesis here. I mean, you're looking at a few things. The delivery downside in this quarter, saying it's a function of demand and not supply here. What is the demand profile that you're seeing in this environment, as a lot of customers seem to be wavering here on their purchase intent?
Absolutely. I would say mostly a function of demand. There obviously were supply issues, we think, on the Model 3 in the US, but most of the downside this quarter relative to both year over year and the fourth quarter of last year was driven by demand. We think US volumes were down something in the range of 20 to 25%. We don't get that number in the release, but we're able to back into it from other regional data. And I think understandably it was a very messy first quarter. US EV demand slowing. China competition is quite strong, both BYD, Xiaomi, Huawei, which operates through the Ito brand, but and then Europe really hasn't grown for 5 quarters now for Tesla. So I think structurally there are kind of emerging risks in all 3 regions that even as we move beyond what is a very, very messy first quarter, I think, earnings result, there's reason to be concerned kind of for the structural midterm and long term.
Ronald, given the structural risk that you just laid out, specifically what we're seeing play out in China right now, obviously the price war is going on, increased competition. Now we have Xiaomi entering the race as well. What is your outlook for Tesla in China at this point?
Yeah, we struggle to forecast growth this year in terms of units. I would say at a high level, BYD entering the market, let's say 2 years ago in terms of meaningful volumes, that has been an issue for Tesla in terms of trading down. Now what you have is much more competition directly with Tesla's Model 3 and Model Y in China, both from Huawei, who operates under the Ito brand. They sold nearly as many SUVs as Tesla sold Model Ys in China in the first quarter at very similar prices. And now you referenced the Xiaomi car. I think if you compare specs and price point for Xiaomi's SU7 vehicle that just launched in China, I think that's going to be a serious competitive threat to the Model 3. And obviously, as we look beyond this quarter and this year, Xiaomi's not going to stop with just a Model 3 competitor. They will eventually launch an SUV. And they view this market as kind of tangential for them to their broader consumer electronics business. So it is almost a loss leader product on the front end, which is tougher competitively, I think, for Tesla.
Tesla is reportedly canceling its plans for a low-cost car. This is according to Reuters. Tesla CEO Elon Musk took to social media to say in an X post that Reuters is lying again. For more on this, let's bring in Roth MKM senior research analyst Craig Irwin. So, Craig, Reuters citing various internal memos as well as employees that it spoke with in the source of this report. How seriously are you taking it? And we know already that if they are still planning this car, it's not coming out for a while.
Yeah, it is coming out. It's coming out in 25, right? I expect it to come out. I've been talking about this car since 2019 when they punted on the original production decision. They were thinking that, it's going to be margin dilutive, versus where they are now actually would have been accretive. Reuters probably just caught some lower level employees at one of the factories that has been scratched off the list. This is why channel checks are difficult. Sometimes even when you talk to people you think are the right people, they can give you bad information. It's very important to talk to people that operate at the most senior level and have transparency in the industry. The mini car's coming. It's going to be an important part of Tesla's mix going forward. We don't know exactly where it's going to be made, but chatter is maybe India. The last thinking was Germany, but it's a possibility that it's made in Mexico or in Fremont or another facility, right? So, this is in flux. It's in development. They're probably, working through an internal bake-off right now, and that's the the misunderstanding, I think, that made its way off into the market.
And Craig, big picture pricing, does pricing have to come down if we're going to see a kind of reacceleration in EV sales?
So here's the thing. People know me as a bear on Tesla. I'm bearish on the valuation, right? But I'm a bull on EVs for the long term. Why? Because EVs are so compelling, 65% fewer components. They should be cheaper than ICE vehicles, right? So, if price comes down dramatically on these, maybe shorter range, smaller vehicles, something comparable to like a Mini Cooper or something like that, you could have a really compelling, inexpensive vehicle that would be a massive seller in Europe and a great second car here in the US. Yes, price matters. Price is extremely important, both on the existing, units that are offered out there, the different models. But in the longer run, this mini car is essential, and it's essential to the long-term viability. And frankly, it'll be a cost puller. It'll help them get cost out in the other areas of the business. And then this modular manufacturing approach, it's going to be transformational. The former Tesla engineers are all telling me, pay attention. Musk can get it right. They all know how skeptical I am. He's always late, but cost is everything. And when you have a great car that has better integration with technology and it's cheaper than your ICE alternative, it's going to be a compelling future, and that's what Musk's building for.
Let's look at some trending tickers. Investors plugging into Tesla after CEO Elon Musk made an announcement on X, writing that the company will be unveiling a robotaxi on August 8th. So for more on this, we're joined by Tasha Keeney, ARK Invest analyst. Tasha, always great to see you here. Thanks for joining us on a Monday morning. So I think by this time we're thinking, okay, August 8th, he must have it down. But we've been told about this, teased about this before in 2020, going back all the time when Elon Musk was talking about 1 million robotaxis. So what should we expect on August 8th here in the great reveal?
Yeah, I mean, you're absolutely right that, one common criticism of Tesla is that they've been talking about robotaxis for a long time. And the question is, okay, well, where is it? Well, I actually think we've seen a lot of progress over the past few years, notably in their full self-driving software that they released to consumers, and they just took that out of beta mode, right, and allowed a lot more people access to the latest version of the software. And what we're seeing in the videos that many people are posting online is that it's already possible to complete, nearly full drives fully autonomously, right? So there's still someone behind the wheel, they have their hands there just in case. It's not perfect, so that, it's not quite perfect yet, but I think that we're closer than ever. And I think that, we take confidence in all the improvements that we've seen in AI over the past few years as well. I mean, that has to help autonomous driving. We do see early elements of some things, some improvements that we've seen from large language models, for instance, bleeding over into the development work that's happening for autonomous driving. So we're really more excited than ever. I mean, we think this is going to drive the future value of Tesla when we look out 5 years. We think it'll be 2/3 of the enterprise value in 5 years. So we're super excited about it. Can't wait for August.
And Tasha, 2/3 of it is going to be driven by robotaxis, correct?
Correct.
2/3 of the
exactly.
value. Tasha, when using history as a guide here, from when Elon Musk has unveiled prototypes in the past, and then the timeline between that to when Tesla actually starts production, what does that timeline look like? And do you think it's going to be a similar type of timeline this time around?
Yeah, so they've said that they were planning on mass producing this car in 2025. We have heard a few things. There's I think two kind of separate things here, right? There's what they're talking about is the $25,000 car, which I think could actually be the same platform as robotaxi. And it's a question of like whether or not that's a car for the consumer versus just these cars are going in fleets that are then being operated by Tesla and potentially longer term an operating partner that owns and maintains the vehicles for robotaxis. So I think, that it's totally possible that potentially could be delayed from the initial timeline. But the real question is actually when the software will be ready, right? Because the Teslas that are on the road today already have the capability to be turned into fully autonomous vehicles, once those software updates are layered on and sent over the air. So I think, whether or not, the Robotaxi prototype that we see gets unveiled on time is a question of when will they launch the Robotaxi network. So I think that this announcement shows their confidence in that platform, which is really exciting. So that's what we're looking for the next 5 years. When can I take my hands off the wheel in my Tesla? And I think it'll be sooner than you expect.
I've been talking about this for 10 years on these programs, so it's nice to hear that it's finally imminent. Can you talk to us about the importance of IP that Elon Musk has talked about previously, and how IP is key to full-service driving, which is key to your investment thesis here that is 2/3 robotaxis. What is the moat that Elon Musk has established for Tesla in the domain of intellectual property?
I'm so glad you asked that question, because this is really what we're most excited about for Tesla's opportunity in autonomous driving. They have an unparalleled data advantage compared to every other company that's solving for full autonomy. They just released on Twitter a graph showing the number of miles that they've collected, that customers have driven in full self-driving. We think that they get, access to roughly 2.5 million miles a day of customer data that they can potentially use to train their system. I mean, when you look at companies like Waymo, that are passing roughly a little over 10 million miles in the total lifetime of the project versus 2.5 million a day. I mean, that's unprecedented. And data is really key here in a lot of AI applications, proprietary data. And so we think that this is what could allow Tesla to be one of the first companies to scale. And that's really important because we think that the majority of the economics in robotaxis, and this is actually in our latest Big Ideas deck that we published this year, our annual research deck, the majority of the economics will accrue to the players who are able to tackle, the first half of urban miles traveled with autonomous driving platforms. So I think, Tesla's both production scale, the number of cars on the road, as well as that data advantage, really, they're a dangerous competitor here. So I'd be nervous if I was another autonomous driving company.
Hey, I would be nervous too. And regardless of the results, it's just going to be fascinating to see how this plays out. And we enjoy having you at the front lines here. Thank you, Tasha, Keeney.
Well, Tesla shares getting a boost this morning as investors are keeping a close eye on the company's latest announcement. You're looking at gains of just about 4%. Well, Tesla CEO Elon Musk writing on X that the EV maker is going to be unveiling its new Robotaxi on August 8th. Earlier today on Yahoo Finance's The Morning Brief, I asked Tasha Keeney of ARK Invest about the announcement, how bullish this could be for Tesla. Here's what she had to say.
We think this is going to drive the future value of Tesla when we look out 5 years. We think it'll be 2/3 of the enterprise value in 5 years. So we're super excited about it. Can't wait for August.
For more on what this means for Tesla, we want to bring in Craig Irwin, Roth MKM Senior Research Analyst. It's great to have you, Craig. I have a feeling that you might disagree with Tasha just a bit. So she's making the case that she thinks this is going to account for about 2/3 of Tesla's enterprise value within the next several years. What's your response?
Yeah, fundamentally, level 4 ADAS will consume as much electricity as the drivetrain. There is, technically it's conceivable, it's feasible, but not on the vehicles that have been sold, and not in the format that anyone's close to today. So it is a non-starter unless they start doing things like millimeter radar and introducing LiDAR, and go with many more cameras that are much higher resolution than what they have now. So I think what we're going to be shown should really be called the Cybertaxi. It was basically announced 2 years ago they're gonna have a built-for taxi market vehicle. And recent coverage in an interesting biography suggests that the vehicle's going to look a little bit more like the Cybertruck. So let's call this the Cybertaxi. It's going to be a disappointment. There's no way this is going to be as funny as the dancing robot when Tesla announced they were going to crush what Boston Dynamics has done. I am not a believer.
Craig, when you take a look at how Tesla stock has traded over the last several years, and it doesn't always trade in line with the fundamentals, and I think you could potentially, depending on how you view this upcoming announcement here about robo-taxis, but you could potentially make that argument just in terms of the uptick, the 4% gain that we're seeing today, if you're buying into the fact that, hey, maybe this is just part of Musk's playbook and he's trying to distract from some of the fundamentals of Tesla. But when you take a look at the momentum specifically in Tesla's stock, how does that differ from others within your coverage space, just in terms of the fact that so many of these investors are big believers in Elon Musk himself, and just simply getting excited about what could happen in the future is enough to make some investors buy at this point?
Yeah, no, so this is a very interesting one. So I've covered clean tech now for 25 years. And I cover a very wide swath of the EV and charging space, and everything from biofuels to energy efficiency to fuel cells. And many of these executives I've known back 3 or 4 companies as they've progressed through their careers. Tesla is a very, very special stock, right? Number one, for the charismatic leader, the fact that Elon Musk is really a pretty amazing guy and has executed. You know, he's not executed to his dreams, but he's greatly outstripped what he said as well, what was expected of him originally. I remember the early debates of 20,000 cars. What would Tesla look like if they produced 20,000 cars, shortly after the IPO? You know, it's an amazing company. The rest of the space has had challenges. There are some more mature companies. My colleague Phil Shen covers the solar space, where we see many more comparable companies, but nothing, in the hundreds of billions of market value. Overall, sustainability in clean tech has been sort of slow to gain traction, but is seeing really good traction, across the board in different areas now. So retail loves Tesla. Retail does not love sustainability right now. Tesla is a special company for that.
Craig Irwin, always great to get your insight here. Thanks so much for hopping on with us this morning. We really appreciate it.
Thank you.
Time now for the day's trending tickers as we approach the closing bell on Wall Street. And we start with Tesla charging up in today's trade. The move coming after CEO Elon Musk wrote in a post on X announcing the company will be unveiling a robotaxi on August 8th. Joining us here to discuss is Yahoo Finance's Pras Subramanian. Pras, very convenient that this announcement came just after a report from Reuters that Tesla was abandoning its mass market car project.
Yeah, he's declaring this robotaxi coming, but then also not announcing or not confirming whether the Model 2 is going to be canceled or not.
He did say that the Reuters report was not correct.
They're lying again, right? Something like that, but also not also saying that what's happened to Model 2. So anyway, got a mix of voices on Wall Street here. Deutsche Bank saying the good and the bad. The good is they're doubling down on a technology that is favorable economics. A few OEMs can actually imitate this sort of software solution here. But then the bad is the Model 2 is not happening potentially. That's like a driver of long-term growth for the stock. I mean, higher margins, it's a volume play, improved free cash flow. Those are things that are sort of concerned without the Model 2. You want Tasha Keeney's out there with ARK saying this is 2/3 of her $2,000 price target is the autonomy. Then you have Craig Irwin at Roth, right? Miles saying, it's like an eclipse. It's obfuscating the announcement, obfuscating the problems of the company. It's a momentum trade right today, but obfuscating the fundamental problems of Tesla right now.
I mean, I do wonder, the challenge, in a way it's easier, I think, as a member of the media to try to figure out Tesla, because it's like, oh, this person said that, this person said this, put them together, maybe it's this. As an analyst, when you're used to very heavily regulated communications from companies that you believe can be reliable, all these sorts of things, very different when it comes to Tesla. And I'm just curious, will there ever be a point where folks who have made up their mind on the company one way or the other would ever be persuaded that things are actually the opposite direction, right? You have your perma bears on Tesla, you have your perma bulls on Tesla. It does not seem like there is much in the middle. Well, we've now changed our model materially based on some development.
Yeah, it's almost like the Jobs reality distortion field where people get sucked in and they want to believe whatever the good side is of whatever Musk proclamation we see. And this was basically a proclamation at the end of the bell, after the bell on Friday that just turned the tide from a really bad day for the stock after a bad week. We were talking about this to look at us now. Wait till August, we're going to see this robotaxi, no pedals, no wheels. But then on the flip side is, well, where's the Model 2? That's supposed to be a huge growth driver. So you can see both sides.
Well, and the other reminder is, unveiling a new product and actually making the product and bringing it to market are two very different things, especially when it comes to Tesla. Look at the gap between announcing the Cybertruck and coming out with the Cybertruck. Look at the promises of full self-driving and what it actually does. I mean, we've seen this movie before.
Yeah, those regulatory hurdles aside, a lot of analysts are talking about, can we see something? And I think this is, at least in that step, we're going to see.
It's something.
whether it's a Model 2 or a Robotaxi, we're going to see a new product. I think it's a big deal, aside from everything else.
Taking a look at Tesla here, trending ticker, the company reaching a settlement on a wrongful death lawsuit brought upon the EV maker over a crash involving its autopilot features. Now, this dates back to 2018. Yahoo Finance's Pras Subramanian joining us now with the details. And Pras, the timing of the settlement is something to take note of.
Yeah, just before jury selection, this was going to go to trial. We don't have much on the settlement here, but basically, the family alleges that an Apple engineer was at the wheel of an autopilot-enabled Model X. The car crashed. The family says that it was the system did not give a sense of security or a false sense of security to drivers. And Tesla said, well, he was playing video games. He hadn't touched the steering wheel in many minutes. So there's kind of a back and forth there. But obviously, Tesla did not want to go through with this and have this, potentially an actual ruling on the record here and on what the safety kind of qualifications of their system are. So this had to go away, and it did. It's funny because Musk had said before he would never settle a lawsuit if he was in the right, and we'll see they settled this one, so it's kind of interesting there. But NHTSA also before had Tesla do a recall for this and give drivers more of a warning as to the system and when they were, kind of put your hands on the wheel to be active to look forward. They wanted to have more of those sort of precautions in there because at the time being, you could just turn it on and leave it alone.
And this is just one of many crashes that we've seen across the U.S., across the world here involving the autopilot feature, right? So do you think this is indicative just in terms of some of the legal litigation that we could see taken against Tesla because of its autopilot feature? Yeah,
there's two different areas, right? There's are they giving you enough warnings or give you kind of give you the ability to get back and pay attention? On the flip side, we've had a number of these cars crash into emergency vehicles when the driver was alert. So there's a couple different areas here where the software is a bit, in the early stages, and we just saw yesterday or Friday when Musk said that
there's always going to be
come.
outsized attention to any of these early crashes here.
Yeah.
Tesla shares are off just about 1% today, extending what has been a sluggish start to the year for the EV maker. Tesla stock has actually fallen 30% since January 1st. You can see that decline on your screen. The moves have led several analysts to slash their price targets on the stock. Citi is the latest to cut its price target, lowering it to $180 a share. Well, we've got the analyst behind that call. Itai Michaeli, Citi's U.S. autos and auto parts analyst, is here to discuss some more. Itai, it's great to have you here. So you just lowered your price target here for Tesla. The biggest concerns, challenges as to why you're seeing a bit of a more challenging road ahead for the company.
Yeah, absolutely. So we did lower the price target in our earnings estimates to reflect the Q1 delivery miss and even some early data points we're seeing in April. And so the challenges Tesla's faced recently partly are actually the outcome of their success over the years that have created somewhat of a saturated effect on their vehicle sales in certain regions like here in the US. Of course, in China, we're seeing greater competition. And the product age has also become an issue. I think the one lesson we've all learned in the past year or so is that some of the kind of age-old rules of automotive purchasing are still very much alive and well in the EV era. And that is when you do have higher levels of saturation or when your product portfolio does age past a certain point, even price cuts don't do quite so much to stimulate demand. These are solvable issues, but right now they are having a greater effect on Tesla than what we even expected a few months ago, as we did lower our estimates to reflect that, and that of course affected the price target as well.
And Itai, you talk about potential disappointment for the upcoming Robotaxi unveiling, and this is kind of mirroring a cycle that we've started to see with Tesla, at least when we speak with analysts. They talk about how there's a little bit too much hype coming into these unveilings that end up being disappointing. Is this starting to become a pattern for them?
Great question. We'll see it on August 8th. I mean, we do love the focus they have on autonomous vehicles. We do think it is the most powerful mobility megatrend out there. And so we've been very bullish on autonomous. There's really two scenarios that we kind of laid out for the August 8th event. One is kind of what you described, which is a bit of a similar event to what we saw from Tesla back in 2019 at Autonomy Day, where they reveal a Robotaxi, but without much of a follow-through for actual deployment and strategy for how to take that to market in a reasonable amount of time. The second scenario, which we, of course, more positive, is that we do see both the Robotaxi, where we actually think the company will highlight cost advantages and other kind of unique features. But on top of that, we would actually also get a lot of incremental information on the deployment strategy itself, not only on the AV tech itself, but how they're thinking about deploying this from a mobility and rideshare network. And there's actually a lot of opportunities we've written about in the past for them to deploy, maybe not so much in the densest urban centers that other companies are competing in today, but in other domains where very powerful business models can still be built upon. So we'll see what happens on August 8th. But for us, the focus is, of course, on the robotaxi itself, the unit economics, but more importantly, on the path for deployment, the strategy for deployment. And if we can come out of there convinced that there is a path to deploy, maybe a differentiated path to deploy and build a network effect, that could become more of a positive versus what we saw in the past.
What about the broader AV landscape here when it comes to some of the other players within the space? The fact that Tesla is focusing on the robotaxi, is focusing on AV, is that largely viewed potentially as a driver for some of the other names?
We do think that the industry will adopt much higher degrees of autonomy going forward, right? There's a lot of benefits, not only from a revenue stream perspective, new revenue streams, new business models, but even just when you think about the safety benefits of greater levels of autonomy, what that could do to insurance, what that could ultimately, of course, do just to society. So that the list of benefits from adopting higher degrees of autonomy is a very, very long, compelling list. It will take some time, however, to play out. We do like the fact that Tesla is focused on this, and certainly in a market that has become more competitive, of course, the EV market globally, these incremental features not only differentiate a vehicle, but as I mentioned, do add potential for significant revenue streams. They're very profitable revenue streams from a software perspective down the line. But we do think there will be a race for the industry to adopt these incremental technologies going forward.
Who do you see as the winner of the autonomy race?
For us, in the supplier space, we've of course mentioned Mobileye has been a name we've liked a lot there because they do have leading technology and a very strong position itself. Obviously, Tesla's kind of doing their own technology and their own approach with FSD, so we're kind of watching their development pace as well. But it kind of also depends on there's many kind of ways to win in autonomy. Again, there's focusing on urban robotaxi, very complex but lucrative domains, but there's also other paths we see for focusing on kind of easier domains, but one that you can still have pretty compelling business models. Think about a vehicle that you own that can, pick up deliveries for you, or do service overnight, or even peer-to-peer kind of lending networks that one could develop. So, we like some of the automakers within this who seem to be aggressive. Of course, GM and what they're doing on autonomy there as well is something we're watching for potential upside. But the suppliers are some interesting names there as well.
All right, Itai, we got to leave it there, but really helpful. Thank you so much for joining us and sharing with us this update on your price target here for Tesla. That was Itai McKaylee with Citi joining us on all things Tesla there.
Let's turn to Tesla. A big story out this morning. Shares of the EV maker, well, they have certainly struggled so far this year, off more than 30% since January 1st. But the big report out this morning that the company is looking to cut costs, potentially laying off or is laying off more than 10% of its global workforce. Yahoo Finance's Pras Subramanian has been following this story, joins us now with the latest on those details. Pras.
Hey, Shauna, what's up? So yeah, basically Electrek, the tech blog, basically had this, they got an email from, or secured an email from Elon Musk confirming that 10% of staff are going to be cut at Tesla. He's talking about how they want to set themselves up for the next growth cycle of the company and the layoffs. There were some redundancies there, but they were painful but needed to be done. I can't say that we were surprised here to hear that following their Q1 delivery report where such a massive buildup in supply, something needed to happen here, and I think that's what's going on right now with the stock. You're seeing the reaction there to the downside here, not exactly a positive move. I think we're hearing from Wall Street analysts like Dan Ives telling me that it's an ominous sign for the company to be doing this right now, given the fact that they're navigating this quote-unquote Category 5 sort of storm here with their demand story. I also want to add separately that the Electric blog reported that the Cybertruck was actually going to have its production shift length shortened, and that sort of kind of flies in the face of what we've been hearing about demand for that truck, which supposedly is off the hook. So a lot of things happening there in Tesla land right now.
Pras, what should investors keep tabs on as we're waiting for more of the details to really develop around this? And how do they price it into the stock going forward?
I would have expected maybe a move to the upside here whenever you hear about other automakers doing sort of similar moves, not to the extent of 10%, but I guess it's so extreme that investors or maybe Wall Street even a little bit concerned here about the fact that is the demand sort of even worse than what we're hearing. We're going to get earnings from the next week, so we'll have a better idea. Probably going to ask about Cybertruck demand, ask about what the labor sort of story is looking for Tesla right now as it sets up for potentially that Gen 2 vehicle that we heard about, and then it kind of went off the table and now it might be back on. So we'll see what happens next week.
Tesla filing a preliminary proxy statement ahead of its annual meeting, which will be June 13th. The two big requests from the EV maker that shareholders ratify CEO Elon Musk's 2018 pay package and approve the company's reincorporation to Texas, moving it out of Delaware. Joining us now is Charles Elson, the founding director of the Weinberg Center for Corporate Governance at the University of Delaware. Charles, it is good to see you. And I want to start here, Charles, and help me think through this. If Tesla shareholders, Charles, if they vote and approve this pay package for Musk, does that mute or sort of supersede the judge's original decision from a few months ago, Charles, which argued there was a breach of fiduciary duty here?
I don't believe so. I mean, you have to look at the ruling in a couple of ways. She talked about a poor process. She talked about a lack of independence on the part of the directors, which obviously it's the same plan they put out before. There's nothing new here. They haven't done anything differently. Same people, same plan. But the key is at the end of the ruling, and this is, I think, quite important, she said that the compensation was not effectively fair, that you didn't need to give this man so much stock because he already had so much stock, and that she ordered rescission, that the plan had to stop. That's very interesting because effectively it's a fairness analysis, not necessarily on the process, but the result. And look, let's say all the shareholders, let's say they approve it. Frankly, to give money away, make a gift to someone that has no corporate purpose, if you think about it, has to be approved by all the shareholders, not just the majority. And you can have a vote, and you would still have a, quote, unfair package to the corporation, unless everyone votes for it. And obviously you have a plaintiff here, and that person certainly isn't, and I doubt some others as well. That's the real issue here. And that was the key to that ruling. It was basically the judge said poor process, poor independence, but effectively, in result, wasn't fair. And that's, I think, you've got to think about it. That Delaware always has the right, it's a court of equity, to judge the fairness of the equity, if you will, of a particular action. And this was determined to be inequitable. And that it's really hard to get around that unless everyone agrees to it or they reformulate it.
And of course, Charles, one of the other things that Tesla is trying to get shareholders to approve is actually a change of where it's domiciled, that it would change to Texas and so be subject to the courts there. Do you think that will be successful, and could Delaware courts even block that move?
Well, yeah, there are some actions in Delaware now where folks have sought to leave Delaware to avoid Delaware jurisdiction on a particular issue. I think that would be challengeable. But the real question is, why would a shareholder vote for a move that the CEO says a court has decided against me because what I did was inequitable? So I'm going to a jurisdiction where they'll say that's okay. That Delaware protects shareholders, yet I'm going to move to a place where I'm telling you that...
Well, the answer is, Charles, because the shareholders of Tesla have faith in Elon Musk, which is why they approved the pay package in the first place. I mean, couldn't you argue if the shareholders want to do that, why not let them do it?
But I would really be surprised if the large institutional holders would agree to that. It's against their interest, any way you look at it. And frankly, who's to say a Texas court won't do exactly the same thing, won't respect the Delaware ruling? It's a very sound ruling. There's nothing odd about it. He can appeal it to the Supreme Court, which I assume he'll do. But, that's up to the Supreme Court. If they find it was inequitable, they'll strike it down. But the point is, you can't change states because you don't like the court you're in. You don't like the results you've got. That's a very strange idea if you think about it. Oh, I'm not happy with the answer you gave me, so I'll just go to somebody else. That's not the way it's done legally in this country. And I think the shareholders hopefully will agree. If the judge thinks the package was problematic and the Supreme Court agrees, then perhaps it's time to refresh the board and come up with a different package. But to simply leapfrog a court and move somewhere else, I'm moving out of the United States because I don't like their law. That doesn't make sense either. The law protects the shareholders. It protects the investors. Certainly Delaware does. And I'm sure Texas does too, but it's a very odd response. And I'd be very surprised if a majority agreed to it. They may, you never know, but I think it'd be rather foolish on their part to do so. And the question is, would Delaware let them evade a ruling by moving to another state? Would Texas let them do it? That's a problem for Texas. Texas decisions are enforced in Delaware. Should they not be anymore? I mean, that makes no sense. I think it's a grandstanding move that gets a lot of talk and chatter from folks, but I don't know if in the end it's realistic or, frankly, fair to the shareholders. Simply stated.
So Charles, just briefly then, where do you think this all leaves Tesla, Elon Musk's pay package? What do you think the outcome of all this is?
That's a really good question. He, obviously made a lot of money with the equity in the company, but he wants more. Look, at some point, someone says, if you don't give me this, I'm going to blow myself up. You have to say, in the end, okay. Look, the company has to survive Elon Musk. The obligation of the director is to assure that Tesla's value is perpetual, not based on one person. One person dies, leaves. That can't be the end of the company. And at some point, you have to say enough. But that's where I think you need board refreshment. And obviously, this board is unwilling to do it. At some point, no one is that good or that indispensable. And I think that's the problem here. It's more of the hype, if you will, around the personality cult as opposed to what's happening. Look, Tesla has lost value this year. Tesla's got some issues.
Yeah.
And we've been running the company. Okay, are you delighted that the stock has gone down, this year, or that production profits are off? Obviously, something is not right there. Right. And are you going to say, thanks so much? Here's $55 billion. You're terrific, because you want either you get it or you leave. That makes no sense.
Well,
in the end, it's really business.
We'll see what ends up happening. Charles, great to get your perspective. Thanks so much.
Thank you.
Russ, I want to switch gears here to another company. You have strong thoughts on that would be Tesla. Shareholders are going to be able to vote again on Musk's pay package. What do you think is going to happen there?
Well, I think the same thing is going to happen. I don't think the issue was whether shareholders approved this or not. Shareholders had approved it before and probably will approve it again. The issue is the board of directors never negotiated with Elon. And it seems like when you read the proxy that there was no negotiation about this either. Elon said, well, we're going to put this package back up and then we're going to move to Texas so they can't take it away. And, it's this kind of thinking where the board is just basically, the dog getting walked on the leash or whatever. It's just not the way companies are supposed to be run. So I suspect that even if it gets approved, they'll get sued again. So you guys are shareholders. Are you going to vote for this stuff? I've been thinking about it because I did vote for it before, and now I feel like the CEO of the company should be working at that company like pretty much every day, if not every day. And so I think in seeing his performance since he bought Twitter, I would require in this pay package that he come back to work at Tesla full time, but I would vote for it if that was the case. But if he's going to keep working at Twitter every day, I don't see why he's even CEO.
But they're not changing it, are they? Isn't it exactly the same?
Yeah, it's the same thing. And that's why I'm saying it's stupid, because even if people approve it, it'll get sued again. And then they're back in court. And moving to Texas, I don't think necessarily solves that problem, because Texas is trying to run their state as a shareholder-friendly state to attract business. And, just because Elon's a big employer there doesn't mean he's going to get the judge he likes. You know what I mean? So I think the issue is the board of directors of Tesla. It has to have independent directors. It's just required by law. And until they do this, anything the board does can be invalidated.
Do you think they will reincorporate to Texas, though? How do you think that vote goes?
I mean, once again, it really just depends on Vanguard, State Street, and, the major index funds and in Glass Lewis and what they tell these funds to vote. So, 15 to 20% of Tesla is owned by 3 passive index funds. So whatever they choose really is where it will go.
Ross, you were adding to ASML as the stock goes down. Are you adding to Tesla as the stock has gone down?
No, it's the opposite. We've been sellers of Tesla over the last 6 months, and I'm so grateful we did it. if you really chart my fund GK versus Tesla, which was our top holding substantially by a large amount up until, let's say, November with the anti-Semitic tweets, was when we started lowering our position. And thank God we have, because, we've outperformed Tesla this year by something like 50% differential, and if we would have kept Tesla where it was, it would have been a kind of a dismal year for us. So I'm really grateful we took the moves that we've had. We've trimmed Tesla down to a reasonable position. It's about a 2% position in our firm and in my fund. I love the company. I just want to make it clear the products are amazing. It's a great company with great employees, and I just think it's being mismanaged at this point. And it, I think their strategies are not working. So, we've lowered our position. I hope I don't end up selling out of this position, because I do think the long term for Tesla could be amazing if it had the focus of a full-time CEO.
So you're trimming Tesla, Ross. Are you putting more money to work in other EV makers?
No, it's the opposite. I mean, if Tesla keeps lowering prices and it puts so much pressure on everybody else, and even though I love Rivian and I've loved Polestar in the past, it's really hard to compete when Tesla keeps lowering prices, because they're such great vehicles. So they've actually hurt the industry. Ironically, Tesla's goal was to advance sustainable transportation and energy, and now it's actually helping push it back because of the problems that have been created by Elon. And it's really sad to me, so I don't think, and I have my whole Biden administration hasn't done well by clean energy. It hurt our investors. We've had to get out of solar. We've got out of pretty much all our EV makers, and we have a low position in Tesla. And we redeployed all those assets into, AI relating themes and companies that we feel will add tons of value over the next period of time, and that's been a great trade for us, sadly, because I'm a big believer in investing for improving the environment.
Ross, good to catch up with you as always. Thanks a lot.
Yeah, thanks for having me.
One analyst that we're going to talk to next still maintains his buy rating on Tesla, but says that the clock is striking midnight for Elon Musk because of many of those reasons that you just listed. So for more on that, we want to bring in Dan Ives of Wedbush Securities. Dan, it's great to see you here. So I was just going through a recent note that you put out this week. You're saying that the clock has struck midnight for Elon Musk, that Tesla is going through a major, quote, Category 5 storm right now. Where do we go from here?
I think we're going to find out Tuesday, because this is probably the worst period that I've seen, I'd say in about 6 years for Tesla. And patience is wearing thin. And you see from an investor perspective, and obviously, many thrown in the towel, the long-term story is still there. And that's why we remain bullish. But no doubt, this is white knuckle. And there could be darker days ahead if Musk does not handle the call, I think, like an adult in the room, and actually give some sort of vision and navigation with a lot of questions remaining.
Dan, it's great to speak with you. Let's stick on this adult in the room concept, because a lot of the challenge here for Tesla is that the fundamentals don't always match up with what Elon Musk is purporting about deliveries and company fundamentals. I know that you do a lot of traveling to Asia to take a look at what's going on beneath the hood for some of these manufacturers. What can you tell us from your experience on the ground that may not be making headlines or may not be making its way out of Elon Musk's mouth to investors?
Look, right now, I can tell you firsthand, China EV market, it's like the video thriller, Nightmare on Elm Street. Pick your spot. It's been bad. Now, that's obviously been the huge headwind for Tesla, which is really, that's a key part of the growth, right, in terms of the China story. What I think investors need to hear is, what's the strategy to turn this around? Are they going to maintain prices? And the big thing is Model 2. You need Model 2 to have that growth story the next 18, 24, 36 months. This cannot just be about autonomy 5-6 years from now. And I think that's really the crucial point here that they need to get, and he needs to get on that conference call in terms of that point.
Dan, what are you hearing or what are you expecting in terms of the timing of production of the Model 2? And if it doesn't happen according to plan, more specifically, what does that then downside risk look like?
If they don't do Model 2 and went straight to autonomy, that would be like being at a cliff in the Grand Canyon and looking down below. The point is, it's a scary proposition, because when Tesla talks about 2 growth waves, the second wave is Model 2, refresh Model 3, Model Y, and obviously some other, models that they're going to introduce. But that's the issue right now in terms of Model 2. You cannot go straight autonomy. Obviously, some, have reported it. And this is really what I view when I say clock striking midnight. It comes down from us. Navigate the Category 5 storm, just like he has in 18, 2020, and Otherwise, this is not just trust me, because I think that's really the frustration now that essentially is, went from a Cinderella story magic carpet ride to what's been a bit of a horror show, especially the last 4 months.
Well, analysts are, and we're hearing from sources that the future of Tesla does really rely on cracking that driverless autonomy that you did mention. How likely is that?
Look, autonomy is going to be key, but we're not really going to see driverless, no steering wheels, 2030. And think about the regulatory involved here. So that sounds great on a PowerPoint and sci-fi in terms of what autonomy, and we do believe in the autonomous vision. But in the near term, it's about growth. What does free cash flow look like? How do you reverse the growth trend? How do you get to 3, 4, 5 million units? The only way you get there is with a sub 30K car, Model 2. For a product line that really hasn't had a refresh since Model Y. Cybertruck continues to be limited. That's not going to be mass market. And that's the issue here. This should almost be the equivalent of Apple being like, okay, iPhone 14, you're like, iPhone 15, iPhone 16. Hey, just wait till the iPhone 24. Stay tuned.
That probably wouldn't work out too well for Apple side.
No. But that's also the difference between a tactician, a Hall of Famer like Cook, versus what we're seeing with Musk, which has really been like a comedy show, a bad comedy show, the last few conference calls.
All right, it is time now for the call of the day, and we are talking again about Tesla. It is getting another bear, or at least not as strong a bull on Wall Street. A longtime Tesla bull downgrading the stock to hold from buy. Emmanuel Rosner, who is Deutsche Bank lead U.S. auto analyst, is joining us now on what was behind that change in perspective. Emmanuel, thank you so much for being here. And it seems like the change in perspective is relatively straightforward here. It's what looks like a pivot away or a de-emphasizing of the lower cost model Tesla, right?
That is correct. Thanks for having me. So I believe that there is a strategic change going on at Tesla right now, and this is essentially thesis changing. Even though we've been buy rated, we've been at the forefront of warning investors that near-term conditions are really, really challenging for Tesla, but that you shouldn't really care that much if you're longer-term investors, because around the corner, there's this Model 2, the cheaper model coming at a $25,000 price point, which could really inflect things back up. Volumes, margins, earnings, free cash flow. These would be really the game changer. Now, based on multiple media reports, it very much seems like Tesla is no longer working on the Model 2. Instead, it's putting all its eggs in the Robotaxi baskets. If that's the case, you have much stronger challenges for much longer than anticipated. There is no turnaround on earnings or free cash flow anytime soon. That basically means that it is much more difficult to remain patient and positive.
Yeah, and Emmanuel, I'm curious, just is the challenge here in how long you would need to wait, or the amount of uncertainty around this Robotaxi model ever coming through? Because Tesla has long been, a story that investors have had to have a lot of hope in, but I'm wondering, are we testing the limits of that at this point?
Yeah, so in our discussion with investors, I think people usually, especially longer-term investors, they're excited about the concept of Robotaxi. It's a good business. It's something that has the potential to be a meaningfully better business than making cars. It's recurring revenues, it's software revenue, it's great. The issue is, what probability of success can you really attribute to it? What is the timeline for it? And so our sense is, as long as there was a core business, which is essentially dominant EV maker, and Robotaxi was an optionality on top, this was very exciting. This was essentially the crux of the bull thesis. You have a successful EV maker which could really become dominant, and then look at what they're doing on the Robotaxi side. Now, essentially, what seems to be happening in terms of strategy is we're no longer focusing on making EVs. We're no longer focusing on making them affordable. We're betting the entire company on robotaxi. There's no new consumer model coming. As a result, the current business is essentially fading. It's melting. You are putting all your eggs in that robotaxi basket. That is extremely risky. It is extremely risky for investors in terms of profile. It is also probably way past most people's investment horizons in terms of monetizing it. So I guess the short answer is it's both. It's much higher risk, and it's also way too far out.
Tesla slashed prices in China again. Shares now down over 5%, declining for the 7th straight day. Last year, China became the world's largest auto exporter with over 5 million sales overseas. This according to the China Passenger Car Association. With 25% of those exports being new energy vehicles, many analysts are wondering if the United States is beginning to lose the EV war. For more on this, let's bring in Stephen Dyer, who is the managing partner and head of the Asia Automotive and Industrials Unit at Alex Partners Shanghai. Thanks so much for taking the time here with us. First and foremost, you think about the competitive landscape and how that is continuing to move about with some of the pricing moves. Why do you think all of the manufacturers are having to announce some of these price moves, and what is that saying about the consumer right now?
Well, it's great for the consumer. There's been significant overinvestment in the Chinese EV sector over the years as the government has supported the build out of that sector. So now we're seeing some of the chickens begin to come home to roost, so to speak, as firms are trying to gain share and gain market share and credibility with their brand.
Stephen, do you think this is likely going to spark even another round of pricing cuts? And I guess, what is the reaction there on the ground in China and the likelihood that this is really going to spur more demand than going forward?
Well, I do think there will probably be further price cuts. And it's an ironic situation that goes against the normal microeconomic expectations. So in China, when companies cut prices, in this case, many consumers say, let's wait and see. We don't think it's at the bottom yet. And so it, interestingly, hasn't sparked the demand that we would normally expect when you cut prices.
Stephen, as you look out into the kind of consumer sentiment around foreign names that are trying to sell cars in China and some of the investments that they've made to make sure that they're ramping up the production at the same time where demand may be shifting to some of the more kind of nationally produced names there. How does that impact some of the U.S. companies that have ambitions to grow out their own ability to communicate, to continue to have a relationship with the consumer in that region?
Well, certainly the Chinese automotive brands last year and continuing this year have been big winners in both the China auto market and globally, becoming the #1 export country. And the reasons for that are that some of the Chinese EV brands are much better at listening to the consumer and delivering the advanced technology, the infotainment, intelligent cockpit, as well as driver assist technology that at least Chinese consumers want, and not focusing so much on the very difficult to achieve ride and handling and noise and vibration specifications that are traditional automakers' forte. So it does not bode well for global automakers in China, and so there's some catching up to do, I think.
Stephen, when it comes to the future of Chinese automakers here around the world, specifically in the U.S., when you take into account what current President Biden has been saying about potential tariffs here, what former President Trump has been saying about tariffs if he is reelected in November, how big of a challenge is this for Chinese automakers? And what are they doing, or what do you anticipate they will do to navigate what is going to be an uncertain and potentially a hard time here for those companies?
Yeah, indeed, the geopolitical winds are blowing against the Chinese automakers and even suppliers, and they realize that. They have they understand very well, and therefore North America is probably not going to be their short-term target as they grow globally. So Europe and other more emerging markets are the short-term target for exports, and then even establishing assembly bases. I would expect North America to be the last on their list of priorities.
Can pricing alone save some of the waning demand that we're seeing for EVs right now, Stephen?
Well, in China, as I mentioned, it's caused the ironic result that demand is stagnating for EVs until the prices hit the bottom. So when they do hit the bottom, certainly it'll stimulate demand, and especially in the U.S. and North America and Europe as well. These markets, according to a recent EV consumer survey that AlixPartners conducted globally, indicate that consumers there are also hungry for inexpensive EVs that will allow them to save on operating costs as well as initial purchase or lease cost.
Stephen Dyer, we'll leave it there. Thanks so much for hopping on with us here this morning. Head of the Asia Automotive and Industrials Unit at AlixPartners. Thanks, Stephen.
Sticking with Tesla, the company may be facing some new legal issues after asking shareholders to reinstate CEO Elon Musk's multi-billion-dollar pay package. Yahoo Finance's Alexis Keeney is here to help break it all down. So what does this all mean for stakeholders when you think about Tesla? Obviously, a lot of issues at this company right now.
Yeah, I think we've become used to big companies like Tesla being in a ton of litigation. But what I'm hearing from experts in corporate structuring and pay packages like this is that just expect more regardless of how this shareholder vote goes, should it make it to shareholders, right? There's still some steps. The SEC has to review these proxy materials that the company submitted. But once this whopping $56 billion pay package is voted on again, either way, they say shareholders will have a beef with that because the money, that $56 billion, which is now amounts to about $47 billion with the change of the stock price since the court's decision in Delaware, that money is either going to stay within Tesla, maybe good for Tesla, some shareholders think, or it goes to Musk. Some shareholders might think that that's the best thing, that he gets compensated. The company did say in these preliminary filings that Musk hasn't been paid in 6 years and we need to compensate him somehow. And what they want is 100% reinstatement of this pay package. Now, Tesla has tried in this statement to cure what ails the Delaware Chancery Court. They have said that they formed a special committee to evaluate this compensation, that they've had third-party analysis. They've also attached the court ruling to these materials. But look, that special committee is one person. It's coming from one independent board member's recommendation. And so the shareholders could say, no, that's not good enough. That approval is not enough, that these ties that the Delaware court had issues with between Musk and the board and Musk's influence, having too heavy a hand in the negotiations to get that pay package, they might say it's not good enough to come from this one director as a recommendation. They also might say that, look, there's inadequate peer review. That's a standard that happens in corporate America where the compensation committee goes out and tries to benchmark these proposals, what should be the executive pay, against others in the industry. On the other hand, maybe there is no Musk peer. Maybe there's no comparison that is going to be appropriate for him because he is a pioneer in his industry. So a lot to think about, but certainly more litigation and whether or not shareholders want to compensate him. What is something like $9,000 per vehicle sold so far? More to come.
Good work if you can get it. Alexis, thank you. Appreciate it.
Joining us now with more on Tesla's quarter is Craig Irwin-Roth, MKM Senior Research Analyst. Forget about the quarter for a minute, Craig. Obviously, we want to talk about what they're saying about these new vehicles. After that Reuters report, did Elon sort of scramble and say, well, did they abandon the Model 2 project and then they resurrected it after that came out? What happened?
So, I've been talking about the mini car since 2019, the biggest strategic bungle at Tesla the entire time I've known the company, just like more than 15 years, was when they decided to punt on the launch of the mini car. Right. So what happens when you go into production is you do a bake-off. You do a bake-off between different sites to figure out which site's going to give you the best ramp trajectory, have the best economics, be well positioned for the associated markets. And to me, it sounded like Reuters got hold of a group that lost a bake-off. Right. So there's a bunch of people in an echo chamber that's relatively small saying the same thing. They're not going to cancel the mini car. They're committed to the mini car. The engineering's been done for 3-4 years now. The question is whether or not they're going to use this super modular approach, which could save them a lot of money. They think maybe as much as 30-40% reduction in manufacturing costs. I doubt it, but they need to just get them rolling and adopt technology over time. That's what they're going to do. They're doing the right thing. They're better late than never. It's the right thing for the company.
What do you think we can expect from the call today?
Oh man, so they're going to give it a shot to get us excited about robotics and AI on the call, right? Elon's got some explaining to do. FSD, the price was only ever supposed to go up, and we got 12,000 to 8,000 this last week, and I guess subscriptions are no longer 200 a month or 100 a month. They're really pushing hard on FSD. Personally, I'm a bear, but there are people out there that like it. We need to see attach rates go up. And for there to be some elasticity of demand here, I'm kind of skeptical, right? Everybody knows that, but they're gonna do work hard to sell that. Robotics, I don't see how you get this front center in the Tesla story. They're trying, but it's all about cars. It's about the great technology and the market penetration. The most important thing is a discussion around Thailand. I think Thailand is kind of an alternative to India or to 3 million units in Shanghai, which I think was nixed. So if you can get a China-like supply chain where you get really low costs and great manufacturing volumes, Thailand could be a big winner for the company. They may make an effort to sell us on that. Cybertruck, a lot of complaints out there. They're probably going to address them head on, and they're probably going to sell us on this Robotaxi, which may or may not need to be called a cyber taxi.
And also, let's talk about the first quarter just for a second here, because they did miss. They missed on earnings. They missed on revenue. I'm now seeing at least Bloomberg's calculation of automotive gross margin ex regulatory credits at 16.4%, which is another narrowing of that automotive gross margin. Does it matter if they're saying the mini car is coming?
Well, let's talk about the positive point in there, right? 16.4% is what we calculated it at. That actually beat the consensus number I have of 15.8. It actually beat it. And I've seen other consensuses that different groups put around that were lower than that. So you've got a 60 basis point beat with all these issues around price cuts and challenges with manufacturing and an outage in Germany. This is a big deal. 60 basis point beat on gross margins is a very good thing. They absolutely missed this quarter. 8.5% year-over-year drop in units. They need to start growing again. The mini car is what can allow them that path to grow again. And they need to get there as fast as they can.
Tesla shares, they're up over 11% in pre-market trading. The move higher in shares offering investors some relief. The stocks had a rough start to the year, down over 41% year to date, heading into the release here, but moving higher, as we were mentioning, off of this report. To break down the street's reaction, Colin Rush, who is the Oppenheimer managing director here. And Colin, I'm so glad we have you, because for the street hearing now that you have a new affordable vehicle that's going to be fast-tracked or moved up in the roadmap here, is that what the street wants to hear at a time where you've already seen price cuts be initiated or some of the different pricing strategy play out that has a larger impact on the margins that we also have to consider for Tesla?
This has been a growth stock that's stopped growing. And so what the company really needs is an incremental growth driver. The Cybertruck has been incredibly disappointing as an incremental vehicle. And so they're trying to refresh the product suite. And part of the issue here is that they've saturated demand on the Model 3 and the Model Y. They've been huge successes, but the next leg of the story has to be this lower cost vehicle. Now, we have a lot of questions around the specifics here. They gave us a rough time frame on when they would start production, but the actual integration of a new platform with the existing platform is a relatively complicated challenge, and we'll see how the actual cost structure plays out as we begin to see some of the production. And I think it'll probably be early next year rather than later this year.
Yeah, Colin, talk to us just about that realistic timeline, and if we don't see a cheaper vehicle by the end of the year, is that something that you think is going to hit the stock here in later quarters?
Well, this is something we're talking about with investors. This has gone from a stock that had, real numbers, and we went from being a story stock for a lot of years to having real results that were driving the stock higher, and we saw that move a number of years ago, to returning back to the story stock, element of the stock. And it's interesting to have the story be, one, a low cost vehicle that's pretty nebulous at this point, as well as the Robotaxi. Obviously the promise of, Tesla being the leader in AI for the physical world is, I think, very compelling, and one that we think is real over time. How that translates into financials is really a big question mark right now. And with the Model 2 or this low-cost vehicle, we don't know where the price point is going to be, what the cost structure is going to be. And so we think there's maybe another 1 or 2 numbers cuts before we start to see things inflect higher.
So, Colin, then it sounds like the worst for Tesla isn't behind it yet. Is that right?
From an execution perspective, I think they're going into a very challenging period. They've made a bet that the learning cycles on their neural net will accelerate here between now and August, and that they'll continue to improve the functionality on the FSD. And we think that's not a certainty. There's a lot of debugging that has to happen and a lot of work to get that moving in the right direction at the pace that they're talking about. We think they're on the right path, but there's a lot of hard work. And at the same time, merging two vehicle platforms is not a trivial endeavor, and something that we think probably has been put on the drawing board for them and on the plans just here in the last 4 to 6 weeks.
Elon Musk making a lot of promises in Tesla's first quarter earnings call. Those promises, a cheaper EV vehicle and also the highly anticipated Robotaxi. We want to bring in Greg Migliore. He's Autoblog's editor-in-chief, also our very own press Supermanian, who has closely been following this story for us here at Yahoo Finance. But Greg, let me start with you. Just first, your reaction to what seemed to be enough for those, I keep calling them Tesla believers, but Tesla believers out there. They heard what they wanted to hear, and that's enough to send shares higher this morning. How realistic do you think Tesla's plan is for a cheaper EV and then also eventually that Robotaxi?
Hey, good morning, guys. I think Elon Musk and Tesla said exactly what they had to say after weeks of criticism and taking a lot of heat for this pivot, apparently away from a lower cost vehicle that we think was going to be called the Model 2 to robotaxis. We knew earnings were going to be lackluster by Tesla standards, and combined with the layoffs and all these high profile executives departing, Tesla knew it was taking heat. They had to respond. As far as making like a robotaxi, I think this is potentially the graveyard of where automakers go to maybe not die, but waste a lot of money. Volkswagen, General Motors, Ford, Amazon, you name it. They have tried and maybe not totally failed, but they've faced a very uphill battle. That being said, I think, I wouldn't count Tesla and Elon Musk out. I think when you look at Elon's mindset, he always wants to do what's next. So when you try to crawl inside his brain, making a small, cheap car doesn't really seem like a big play for him. He wants to put the world on autonomous wheels. And I think that's what he's trying to do here.
Right, but that promise that investors are buying, there's not a lot of fundamental there, right? So I want to bring it back to the likelihood of that fundamental dream he's selling coming true. How likely is it that we're going to get a $25,000 car within the next 12 months?
Within the next 12 months, I think I would put it more like 18 months to 2 years. I think there's like automaker time, and then there's Tesla time. I think if this were Toyota or General Motors, they could probably get that vehicle out in about, a normal timeline. I think with Tesla, they usually are about 6 months to a year behind what you would expect from a traditional automaker.
Well, Tesla out with first quarter results, clocking its first revenue drop in 4 years. The EV maker reported both a revenue and earnings miss, but the stock is soaring today after the company said it would accelerate the launch of more affordable vehicles. Despite today's pop, the stock right now down over 30% this year. And it's becoming popular in the options market. Tesla's short interest is up 30% from the beginning of the year. Here with more, we've got Kevin Paffrath, who is known as well as the popular YouTuber Meet Kevin, and a long-standing Tesla retail shareholder as well. If my memory serves me correctly, as of this morning, you've also trimmed your position recently. Take us into that decision-making, Kevin.
Yeah, absolutely. Thank you so much for having me, by the way. So what I did before earnings and before we got our Q1 deliveries numbers is I thought this would be a perfect time to tax loss harvest some of those higher acquisitions of Tesla shares. So I sold down in March up to the earnings, which we just had yesterday. And so now the debate is it time to rebuy Tesla? And I think investors should be looking at 3 good things that we heard from Tesla and 5 bad. And I'll keep it short. I'll go through them quickly. Margins up in the face of price cuts. amazing. Even with credits removed, this was a really good positive shocker. They've clearly got efficiency in manufacturing, and that's the reason you want to invest in Tesla. Big fan of that. So we like that good. We got a very hope-filled Elon, which was also very good, and we have the hope of new vehicle models coming. Whether we actually get new models or they're just refreshes, we'll see. But there was some bad, and so we kind of have to weigh the good and the bad here. One, we just added basically 9 lifts to our valuation. The ride-hailing company Lyft, we added 9 of them to our valuation overnight. So I think we might be adding a little too much hope there. We've got the risk of the share comp plan for Elon Musk. Is he going to get paid? If he doesn't get paid, is he going to end up taking the Optimus robot, the humanoid robot, somewhere else? We've got the negative cash flow risk with the AI investments. That's why we're no longer building new gigafactories. Giga Mexico is basically on hold. And we basically just took away the hope that the 4680 battery cells are truly the next greatest innovation, which is the same thing Elon did with Dojo. That, hey, we're doing our own servers, but now we're going to use Nvidia chips. Hey, we're doing our own batteries. We're just going to use cheaper Chinese chips. So there are pros and cons here, and I'm sitting here wondering, is it time to rebuy? And I just haven't figured it out yet.
Is a more affordable, soon-to-be announced or unveiled or uncloaked vehicle that they talked about on the earnings call, is that a pro or con in your perspective?
It's a pro if we can actually get a new model, but they purposefully dodged that answer in the earnings call, leaving the door open to the possibility that more efficient vehicles are just versions of the Model 3 and Y that are manufactured in a different way. So for example, a steer-by-wire on a Model 3 or Y, or using a 48-volt architecture to sort of bring down some of those costs without actually introducing a new model. And so investors sort of have to evaluate, okay, are we going to get new models that are going to get us to vehicle growth, or do we just forget vehicle growth for a moment and just hope that full self-driving is actually going to produce the revenue we think it might? Keep in mind, right now we've got a take rate of about 10%. It'd be nice to see that around 20, 30%. But will the cost of FSD come down to offset some of those gains? Those are some of the other things to value. Now, I just want to be clear. I love full self-driving, and I think in the future, everybody's going to use full self-driving, but we might be a few years away from robotaxi. So pricing that in, also hard. And that's why when I look, I go, oh, wow, up 12%. It's still lower than where I sold my shares. I sold some shares between about 171, 175. So I could still buy in at a discount, but I'm sitting here wondering, are we really that close to full self-driving yet to start pricing this in? In other words, full autonomy? I'm not convinced of that yet.
What's the dial mover that would tell you it's time to get back into the name?
I think we've got all of 2024 to set an EPS floor, and so there's plenty of time to buy, in my opinion. And then the dial mover is vehicle growth again, where we actually get back to going from 1.8 million vehicles to 2.5 to 3 to 3.5 to 4, 5 million vehicles. That's the growth we need, because the more vehicles we get on the road, the more Tesla can make from full self-driving, the more data we have to increase that moat for robotaxis, the more potential robotaxis we can have on the road, the more cash flow, positive cash flow they have with good margins to invest in other initiatives like the Optimus. My concern is with this negative cash flow we're facing now, we're really cutting out other initiatives. And I suspect that a lot of them are going to take the back burner. They're suggesting that they're starting production of the factory to build the semi-truck. But they've said that for 5 years. And they showed us a picture of a graded lot. But as someone from a real estate world, I know that we grade lots just to keep the weeds in the city away. So I have a lot of skepticisms and I have a lot of hope. I'm just not sure how much I could value that hope at right now.
Hey, Kevin, just lastly while we have you, and I would have loved to ask a question about the Cybertruck. I actually need to pivot here because of some breaking news that came out during this hour from the Biden administration that may influence you or many of your colleagues as well in the kind of influencer and content creator category also, where there's going to be more of the perhaps onus on a potential buyer to come forward and buy TikTok, or else it will not be allowed to exist here in the U.S. and a U.S. owner specifically, I should mention as well. What do you think that does for a lot of the content creators like yourselves, and where do you shift to if not on TikTok?
I would be surprised if somebody didn't come around to buy it, because quite frankly, if TikTok was going to get 100% shut down, you could take the value of TikTok in America and just set it to 0. So anything above 0 is going to be a win for ByteDance. And quite frankly, I'm sure they have plenty of friends with American passports who could buy this company and pretend to be different. Do I really think it'll become truly, fully independent? Probably not. Will it get bought up? Very likely. As a creator, it's definitely an uncertain time, because there's always that chance that it's completely gone and removed from the App Store. And even just a period of time, this is the biggest risk. Even if it just disappears for a few months, as soon as people get the routine of using that kind of platform out of their habit of opening their phone every time they go to the bathroom or they're in the kitchen to get a coffee or whatever, as soon as that routine turns into, okay, now they're on YouTube Shorts or they're on Instagram or something else, that definitely hurts creators on TikTok. So the worst case scenario, I don't think, is that they're gone forever. It's just that if they're gone for a window, that unwinds people's habits, and that's the worst thing that could happen.
Kevin, really insightful. Thanks so much for the time. Really appreciate it. Kevin Pathrath, who you can catch on YouTube. Meet Kevin, of course, and Financial Analyst. Appreciate it.
Thanks for having me.
Taking a look at Tesla, Elon Musk's 24-hour trip to China pays off, at least for now. Tesla receiving in-principle approval to roll out its driver assistance service in the country. Now, the deal is seen as a potential catalyst for sales growth following Tesla's slump in China, which is Tesla's second largest market. The stock moving to the upside on the news of this today, rallying up just about 11%. For more, I want to bring in Leland Miller, the CEO of China Beige Book. Leland, it's great to have you here. And Akiko was just laying out some key stats, I think, and just really highlighting Tesla's shrinking market share that we have been seeing now over the last several quarters within China. When you take a look at the news today and given your expertise within the region, is this a game changer for Tesla? What do you think reception is going to be like towards Tesla vehicles within China?
I think it's too early to call it a game changer. What Tesla certainly has to do is stay on the forefront of innovation. They have to be the most technologically advanced car option because they can't compete on price because of the dynamics of the Chinese market. You know, you've had over a decade of mass incubation of a very advanced, very impressive electric vehicle market in China. What you've gotten now is a situation where you've got so many cars and you've got a domestic car market that's mostly saturated that there is a price war going on. And the price war is going to drive exports to other countries. This is why a lot of governments, the United States, EU, are worried about overcapacity, et cetera. But it means that the prices are being driven down, down, down. Tesla needs to make a profit, unlike a lot of these Chinese firms. So it can't compete in an even field. It needs to stay on the top of the technology ladder. This allows it to stay on top for a little while longer.
Leland, was this trip more beneficial for Tesla or for Beijing?
Well, I think, you know, it was advantageous for Beijing in that if they didn't see an upside for China, then they wouldn't give Musk the approval that he's been getting. So Tesla just agreed to a mapping deal with Baidu on navigation. It agreed to get some regulatory approvals in terms of data security and in terms of some other things. So China obviously sees this as important. But again, it's what does Tesla bring that other Chinese car companies don't? As long as it's pushing the envelope for technologically, I think Tesla's in solid shape. But again, they can't compete on price. So there are enormous pressures on Tesla right now in China that weren't there a few years ago.
Tesla has finally received the long-awaited full self-driving approval in China. This coming following Musk's surprise visit to Beijing this weekend. And joining us now for more on what this means for the EV maker, let's welcome in Wedbush Managing Director and Senior Equity Analyst Dan Ives. Dan, it is always great to have you on the show. So I'm looking at this stock, Dan. It is just roaring higher on this headline. Let's start there, Dan. Does that reaction make sense to you?
I think it makes complete sense. Because look, Josh, this is a watershed moment. For Musk to get FSD in China, it's a game changer. This is something years in the making. No investor thought this was going to happen for the next year. He gets back on that plane from Beijing, drinking mimosas. This was a trophy case win.
Dan, why though? Because all of the other electric vehicle makers that are already competing with Tesla in China, they already have autonomous driving capabilities that have already existed. There's been, of course, price wars going on in China and stiff competition from those other electric vehicle makers. If I'm a Chinese consumer and I'm thinking about buying a car, is FSD really the thing that's going to be pushing me over the edge to buy a Tesla versus a BYD or another car?
Yeah, it's a great question, Julie. I'd say there's two reasons why this is so important. One, FSD, the autonomous vision, number one, in our opinion, being Tesla over the coming years, they needed China. In terms of just from a data perspective, when you think from an AI angle what they're doing, they needed China.
But we don't know if they can use,
but
sorry to interrupt him, but we don't know if they can actually, how they can use that data, right?
Well, yet. But ultimately, if you look what Musk's been able to do, remember years ago they said he'd never be able to build a factory in China. Now look at Giga. The point is, they need Tesla as much as Tesla needs China because it's the trophy case. You look at Apple, you look at Tesla, two of the best brands in the world. That's why they allowed this with Baidu as a partner. And the reason it's so important is that Tesla almost had one hand behind its back not having FSD in China. Now they have that. And I believe what's starting to get factored in here is a demand. I'm not saying the next week or two, a demand recovery in China. But betting against Musk, it's like betting against Brunson in the playoffs.
And Dan, ultimately, it seems like, if you're a Tesla bull, are you excited because you ultimately think, listen, this potentially, the impact this has on subscription fees, on maybe even licensing this software to OEMs? Is it a margin story, Dan?
Yeah, John, I think two things. One, when you look at Tesla China, it expands the TAM. What they're going to be able to do there from autonomous, not just about the next 6-12 months, especially with Baidu, where does this go over the next 3-5 years? I mean, when you think about robotaxis and the autonomous vision. Two, this shows you're really starting to see Musk and China, that relationship get tighter and tighter. And that's a great thing for the stock. That's important because, as we all know, that's been the biggest overhang here. And that's why right now, the bears on Tesla, which so far have won this year, they're going back into those hibernation, into the caves.
Dan, it's my understanding, and maybe, I don't even know if you know this, but maybe if you do, we talked a few years ago to one of the other Chinese automakers who had some autonomous driving capability. And it's my understanding that the regulations are a bit different there, that you have to sort of take a course, right, before you can get an autonomous vehicle or a partially autonomous vehicle. Do you know about that? And is Tesla going to be subject to that as well?
Yeah, look, I think these are things that all need to come out in terms of the next steps. But I think the important thing is this is a broader global vision. And I think for China, this is almost a shot across the bow at the U.S. in terms of on FSD. You could see them on the fast track versus what's happening here. And Tesla, that's the golden goose. They're going after China. They needed FSD. It's a key part of the long-term story. And when you see the stock up, I believe it's just the start of the longer-term vision now taking hold.
Well, Tesla reportedly laying off hundreds of employees, including senior executives and the majority of its supercharging team. It's been a rough year for the company, with shares down over 20% so far. But Tesla has seen some near-term relief. Yesterday, shares rallied after China approved a crucial part of its self-driving technology. If we take a look at the past 5 days as well, you'll see a market move higher here. I believe last I checked, it was about 35% in the move higher over the past 5 days. And one of the huge things going forward from here is, and this is the last 1 month view, but going forward from here, one of the massive things that the company is going to have to pull the levers of is ramping up discussion about what new vehicles, there you're seeing the 5-day move, what new vehicles they plan to unveil. This was a button that they had to, almost like the Staples Easy button, roll out the tell them about the new vehicle button. The new vehicle that has yet to be uncloaked or unveiled or given a price range at this juncture. And so it's a larger question of 2025, what does that hold for actually putting that vehicle into market? And at what pricing strategy, when they've already initiated a broader pricing war among many of the EV manufacturers out there, are they also shooting themselves in the foot on margin just to try and make sure that they're bringing on more customer acquisitions at this point to get more of that lifetime value?
Yeah, Brad, I think you're exactly right. And it's also very similar to what we've heard from analysts on our program, right? A lot of them have talked about those short-term issues. When you talk about EV demand, you talk about pricing, lots of questions about what exactly the next couple quarters are going to look like. But I think overall the narrative around Tesla and why we saw such a huge jump following its most recent earnings report was exactly like you were saying, and also very similar to what we've seen just in terms of the pricing action of Tesla in the past. When you dangle some new shiny object in front of investors, in front of the street, you give something to be excited about, and that has oftentimes, when it comes to Tesla at least, been enough to offset some of those short-term concerns. And that was exactly what many analysts had told us was likely going to happen leading up to the call, leading up to the earnings results last week. And that is, in fact, what did happen when we heard from Musk and the rest of the team here over the last week or so. So again, I think the question is going forward, what exactly that roadmap looks like for Musk. Obviously, there has been some turnover, especially on the executive side. This report coming out, we also had some recent turnovers just about a week or 2 weeks ago here in terms of the executive ranks. So there is certainly an adjustment, a readjustment going on inside Tesla. What exactly the next couple of quarters look like, it could be a bit of a tough ride here, at least in the short term.
I'm old enough to remember that Cybertruck being the new shiny object that they were dangling in front of everybody, and that elicited a response, at least in the price action of shares. However, we later found out that from some reports, it rusts. So we'll see what takes place there.
Shares of Tesla amid reports of layoffs hitting its supercharger team, while CEO Elon Musk says in a post on X that while the company plans to grow that supercharger network, it plans to do so at a slower pace for new locations. Yahoo Finance's Praz Subramanian joining us. Praz with the latest.
Yeah, I think the industry is still sort of digesting what's going on here with this move. I think what came as a shock to many automakers and Tesla's partners with the NACS charging network. Some of them telling me that, hey, we're still on track to incorporate that Tesla plug in our cars. We still see I think it's the J134 plug is the way to go in the future. One source told me that he said it was quote unquote crazy that this happened. They were basically blindsided by this move. So we're seeing some analysts talk about how this could slow access, of course, to the network and also kind of slow access to charging in general. But another analyst told me that this actually charging is a non-core business. And for Musk, it may not actually been a bad idea to cut spending in an area that requires high capex and low returns so far. Maybe that business can kind of evolve slowly, grow slowly, be on its own. Maybe you spin it off. Maybe it can actually kind of stand on its own down the line.
I mean, that's an interesting thought because you would think that the infrastructure needs to get built out in order for them to be able to sell the EVs. That's sort of what has stalled or at least slowed the growth rate, right, of EV adoption as well. Another headline, though, coming through from Tesla today, doing away with gigacasting, or potentially. That's the Reuters report.
Right, like the one-piece gigacastings. What Reuters was saying that Tesla, in the fall of last year, actually decided we can't do this. It's too much money to make one car from one, the chassis being one piece. Currently, right now, they have gigapresses for the front and the rear, which are two big parts that most automakers don't do, and they have a middle part that's aluminum and steel, and they kind of join it all together. Apparently, Tesla, in sort of researching this potential move into manufacturing, decided it was just too expensive and complex right now. And that was sort of the basis for that Model 2, right?
I was going to say, it's important to put it in context, right? We're talking about this particular method because that was supposed to bring costs down, enable them to put out the Model 2 at a price point that is competitive with where things are moving in the EV space.
I mean, it makes you think, let's say, for example, there wasn't a slowdown in EV sales, right? Let's say the demand was still strong. Maybe they would have felt more bullish on investing in these gigapresses and making these one-piece, whatever you want to call it, one-piece chassis for these upcoming cars. But given where we are right now with the market, it perhaps is a prudent move, they think at least, to kind of withdraw and cut back on that, at least right now.
Yeah, it also points to just how significant, or at least how aggressively Tesla feels like they need to move on cutting back, doubling down on robotaxis potentially.
Right, but then also cutting back on that big gigapress and also the charging, which is such a huge blindsiding
core
move.
of the business right now. All right, we'll continue to follow that. Thanks so much for that, Praz.
Now, you're also short Tesla, and just hearing how you lay out your investment case for Apple, you must be expecting Tesla's shares to get cut in half. I mean, they're fundamentally wildly different companies, and Tesla no way is Apple.
Yeah, I think there's obviously huge differences in both companies, although they do share the same sort of China risk and loss of market share in China. And yes, I think Tesla, we're short Tesla as well. And again, these are short positions that are small, 1 to 2% positions for us. But yeah, we could easily see Tesla dropping 50%. At that point, it would still be trading at a sales multiple of like 2 or 3 times.
What triggers that? Is it China, or is it just the U.S. EV market never comes to fruition?
With short positions with such a high valuation, I think you never know what can be the trigger. But a loss of market share as competitive car manufacturers come out with more and more EV models, and people realize that some of the promises about full self-driving and robotaxis just always get pushed into the future. I think at any given moment that that can serve to kind of realize the gravitational pull of such a high valuation.
Is Musk's kowtowing to Xi Jinping something that could potentially be a growth area, particularly because 60% of EV sales do come out of China?
I mean, being beholden to what is essentially a dictator, I think, is always a risk for any business. And the higher the valuation of your company and the more dependent you are on China for your growth, I think the more at risk you are there of the political machinations in China.
I want to end really quickly on something you said about Meta, because their AI spend got dinged by the street. Why is it that their AI capex was negative?
Well, I mean, I think anytime a company is making a large capital investment, you have to wonder what the returns are going to be on that investment. But I think what Zuckerberg has proven over the past few years is that he can be trusted to make smart investments when they come along, and they're going to grow more than 20% this year. So we're willing to give him the benefit of the doubt that those are going to bear fruit over the near term.
All right, Seth, and you cover Tesla, so let's talk about the headlines that were out today on Tesla. We're getting some new data, preliminary data, I should mention, from China Passenger Car Association, showing that Tesla sales in China for the month of April actually slid about 18% on a year-over-year basis. How are you looking at this from an analyst perspective exactly? I guess maybe is the worst not behind it then for Tesla when we're talking about demand, and especially what we're seeing out of China, which is an extremely important region here for the company?
Well, I think what we're seeing is new energy vehicles continue to grow in China. And if we assume that the report is correct, the final numbers come in, Tesla saw an April year-over-year sales decline, then it shows that the reason why Elon Musk is making larger transformational, reorganizational changes at the company and why they cut prices in China towards the end of April. That combined with the trade-in subsidy that the Chinese government issued towards the end of April, I think will help Tesla to set themselves up for a better rest of the year. But if they do have another month of declining sales, I think now we're seeing why Elon Musk is taking a lot more what might be seen as drastic steps towards righting Tesla's employee side, trying to reduce costs and trying to reduce prices to spur vehicle growth.
Seth, can Tesla compete in China in the long run? When you take a look at the domestic players, much cheaper offerings than what Tesla is able to compete with. Yes, they have slashed their prices, but what is 3 to 5 years out? What does that look like then for Tesla, do you think, in the Chinese market?
Well, I think for Tesla, the important thing is that they can now sell FSD in the coming months. And that is a differentiator of Tesla's technology versus many other EV producers. So I think for Tesla within China, they're not in the affordable vehicle market. So yes, there are a lot of longer range, cheaper EVs out there. And for consumers who only care about price, Tesla is likely not going to be the go-to choice in China right now. But Tesla can still compete in the high-end luxury market on a technology standpoint with FSD, and I think that can help them to drive sales over the next several years, assuming that for their entry-level luxury space where the Model 3 and the Model Y compete, that they're at a comparable price with their peers.
All right, Seth Goldstein, we have to leave it there. Morningstar equity strategist, thanks so much. Tesla shares sinking after U.S. prosecutors are reportedly investigating whether Tesla committed securities or wire fraud by misleading investors regarding the capabilities of their self-driving technology. Now, this is according to a report here from Reuters. Yahoo Finance's Praj Subramanian has the latest details on that. And Praj, you can see the concern playing out here for Tesla. Shares off just about 2.5%.
Yeah, reports of this probe into whether they committed, wire fraud with the communications to consumers about their abilities with the self-driving software, and also securities fraud. Were any investors induced into buying the stock because of what Musk was saying? There's videos of Musk saying, or videos of Tesla saying that the driver is only sitting here just for demonstration purposes. The car is self-driving. So you have a lot of puffery here. That's the big question: is it salesmanship? Is it we have the best #1 self-driving software? Like you hear that all the time. Is that just sort of like a sales tool, or is it actual? They knew the system was unsafe or was not reliable. They still said it anyway that it was in order to profit. So it's they got to prove a lot there for fraud, but it's still not a good look right now. And the probe is ongoing. You never know what's going to happen with that, but it's not a good look for their software.
Well, that's my question is what is really new about this report? Because we already know that the Justice Department has had questions about the self-driving technology, and Tesla has talked about that in some of their filings. So I'm curious what stands out for you as the newest bad news for them here? Right.
So last year, Reuters reported that the probe was about sort of the software itself, right? Is it just defective? And then did they knowingly put it out there like criminally, right? Now it's like, this is fraud. Is it outright fraud, not only for consumers, but also investors? And there's going to be an investor lawsuit coming out after this, and if not already. So that's the new wrinkle here. Again, it could go away. They could resolve this. It could go away, or they could pay a fine. But at the time right now, it's beyond just, because NHTSA also is pursuing, they want all this data from the crashes to kind of show that did Tesla's remedial efforts when they did the recall, were those effective? And they question whether it is.
All right, Praz, great as always. Thank you so much for joining us. We really appreciate it. Now we are going to go over to our guest, I believe, because Tesla stock is under pressure following the movement that we are seeing this morning. Dan Levy is joining us here. Dan, thank you so much for being with us. I hope that you were able to hear Praz's great commentary on this, and he was talking about the question about whether or not this really is fraud. So I'm curious from your perspective, Dan, to what extent are you concerned that this could be fraud from Tesla?
Yeah, good morning. Thank you for having me. I think that broadly for Tesla, and I won't comment to the report itself. I think Tesla right now is in the process of validating and demonstrating the capabilities of FSD. Obviously, there's one side of this that we're well aware of is consumers and consumer uptake and getting consumers to appreciate it. But on the other side of it is the regulatory front. And, in general, we view the regulatory side as a risk that needs to be monitored. It's one where so far Tesla has been able to keep the functionality that they have out there. But the regulatory side is a risk that certainly does need to be monitored on the FSD front.
Dan, just give me your sense right now of Tesla, how it is positioned following the run-up that we have seen since earnings and the current valuation of the stock right now, given some of those macro concerns that you were just talking about. How big of a risk do you see that potentially being here then to the downside?
There's a lot of uncertainty for Tesla right now. From a fundamental standpoint, things are obviously a bit more challenged. I think people are well aware that EV demand is pressured. Their demand is under pressure. We obviously saw that with a very soft 1Q volume estimate. At this point, people are forecasting volume to be largely flat. We're flat on the year, which was once sort of an unthinkable thought for Tesla to have flat volume on what should have been very robust growth. So the fundamental side is challenged. On the other side of it, you have an investment thesis that's in pivot. And I think that there is uncertainty because the stock or the narrative is pivoting away from what was viewed as some certainty around vehicle sales, leveraging a cost advantage, and instead leveraging bets that people view as possibly binary, right? The push to autonomous, the push to robotaxi, these could be potentially largely disruptive bets, but they're binary. People just don't know what the outcome is. And so that's why I would say there's an air of uncertainty.
Right, and people are maybe buying the story about full self-driving versus the reality of it being here. But I want to get your take on the robotaxi here as well. Does today's news change what we might be anticipating from the robotaxi moving forward?
Well, I think I don't know that this really changes the narrative. I think we're waiting for a couple key things on robotaxi. One is certainly as it relates to today, any updates on the regulatory front. But we're waiting to see, any updates on take rates. And then we have an AGM coming up, which is a key event to watch for. And then certainly August 8th is the Robotaxi launch. And clearly this narrative needs to play out both from the FSD side, which is more of a, what we view to be driver assist functionality, as well as the fully driverless technology that Tesla has alluded to, but really hasn't given us much meat on the bone.
Tesla CEO Elon Musk posting on X saying Tesla will spend over $500 million expanding the supercharger network to create thousands of new chargers this year. This comes after the electric vehicle maker laid off the employees who ran the EV charging team. To break down what's next for Tesla, we have Mike Ramsey, Gartner Automotive Analyst. Mike, thank you so much for joining us this morning. Listen, we got great news to talk to you about, so plenty to dive into. Talk to me about this U-turn from Elon Musk. What do you make of it?
Well, actually, to be honest with you, this announcement makes more sense than the layoffs do. The supercharger network has been one of the most important assets that Tesla's had in terms of differentiating it between the other automakers and why buy a Tesla. And they just spent the last year essentially getting all of the other automakers in the United States to switch over to the type of charging plug that they use. And by doing that, they actually open up that network to become a significant source of new revenue. So the layoffs, maybe that is a cost optimization effort as they try to get their operations in line. But the investment in the network actually makes a lot of sense and might be a real benefit to them in the long term as a new source of revenue.
How long does something like this, do you think, take to build out? What does the timeline look like? Given, obviously, they clearly have experience, but they're almost starting from scratch in a sense?
Yeah, there are a lot of things that go into it. Obviously, you need to work with utilities to make sure that there's enough high power connection to these sites. And you also have to get the real estate that is in the right place. So, to build out $500 million worth of infrastructure is probably a good solid couple years of work, but they do know what they're doing. And I promise you that they've already done the real estate scouting for almost every spot in the United States, at least, to find the best locations for superchargers.
Well, this announcement from Tesla coming after BP was very excited to try and pick up some of the EV charging real estate in the U.S. left behind by Tesla after those layoffs. Does BP stand a chance here?
Yeah, listen. It's not exactly like the liquid fuel refueling market, but especially at the beginning, it was very different. But as we mature, and these superchargers, meaning like really fast chargers, they are a lot closer to that market. I do think that there's going to be more parallels, and just like there's more than one oil company and there's more than one set of retailers, once everybody starts using the same plug, then there's room for everyone to compete in this market.
Let's talk about one of the other big question marks that's hanging over the heads of a lot of investors in Tesla. It has to do with their automated driving, their full self-driving. And Elon Musk was out earlier this week, last night, saying that he's actually saying that the Cybertruck full self-driving is only a few months away. How realistic do you think that timeline is? And just give us your sense just of where Tesla stands within this race in full service driving here and self-driving here, and what exactly that ultimately means here for the space at large.
Yeah, it's really important too. And I think this is very hard for people to get their head around, because Tesla's autopilot and their full self-driving software works pretty well. And to most of us, we think you get behind the wheel and it can do a lot of automated functions. You think this is a self-driving vehicle. It's not, okay? What they are charging for, what they're charging customers for, is a partially automated system that is more like a convenience feature. It is not a self-driving vehicle like something that Waymo is offering in the Southeast United States and in San Francisco. So when Tesla talks about this service improving and rolling out, they are not really playing in the same field as many of the, I would say, fully autonomous RoboCab type providers are playing. That said, their system keeps getting better and better, and they can make money selling it because it's a nice feature and that people like to have. And they've Tesla has promised that in August they're going to unveil their new RoboCab that can, essentially be a full self-driving vehicle. My expectation is that vehicle will not be the same thing that you and I can buy, or even the Cybertruck full self-driving. This will be a vehicle that has a lot more equipment on it, more computers, more sensors, things that are not part of a standard Tesla self-driving vehicle.
Want to shift gears here, though, while we have you, because Elon Musk is changing his tune on a supercharger network halt. I don't know who's going to do the work at Tesla anymore, considering how many people they laid off in superchargers, but tell us what we know.
Yeah, I'm sort of like a backtrack here for Elon Musk, kind of trying to fix a situation or chaos that he created in the first place by basically nearly laying off everyone in that supercharger team. This is a product that many people thought sort of separated Tesla from the rest of the pack. Also, we know many legacy automakers signed up with Tesla to be a part of that network for their EVs. So a big deal here. But basically, Musk saying earlier today, saying, just to reiterate in a tweet, Tesla will spend over $500 million expanding our supercharger network to create thousands of new chargers this year. That's just on new sites and expansions, not counting operations costs, which are much higher. So he's sort of saying, nothing to see here. We're going to keep on investing. Don't look at those reports that's saying that I laid off everyone, including the woman Rebecca Tanucci, who actually negotiated the deals with Honda and GM and Ford and others to kind of join the network. So sort of a backtrack here. I think there's a lot of partners, not just automakers, but also their suppliers who make the superchargers, who develop sites and real estate projects, who are concerned that they were trying to email people at Tesla. Their emails are getting bounced back. They have no idea who to talk to, who to get paid, things like that. So it's a big problem that he's trying to address right now.
Tesla is hiring back some of its recently laid off supercharging team. That's according to reporting from Bloomberg. This comes after the EV maker laid off 10% of its global workforce last month, including some of the EV charging team members. To break down what this means for the company, we've got Craig Irwin, Roth Capital Senior Research Analyst. Craig, thanks for coming in studio. We appreciate it. So I want to just start on the U-turning that we've seen here. What do you make of this pivot back for Elon Musk?
Yeah, he tends to make kind of absolutist decisions and then vacillate around like whoops, right? Whoops. So they have a capital program they need to execute on. Deliveries might not be the trajectory they planned for or hoped for this year, but there's a lot of money that's been invested in expanding the supercharger network, and they're basically going to be giving a big gift away to industry unless they execute on supporting customers like Wawa, et cetera, with their build-out plans.
Do you think they will be able to do that?
Oh, they can definitely. They have the capital, they have the capability, they've spent the money. They need to have the staff there to support the completion of these projects.
Is there any headwind for Tesla, though, on the likes of BP, who had tried to kind of sniff around the real estate that they had potentially given up, and now Tesla's back, or is BP just?
So the headwinds for Tesla haven't really been discussed a whole lot on the charging side. So Tesla was denied from the direct procurement in New York State, and there have been several other instances where they've had zero share in some of the NEVI money. So Mr. Musk has made some political mistakes in the way he's been out there fairly aggressive with rhetoric, and it's come back to bite him on the capital access side or the support side for the growth of his EV charging network. I'm sure that's driving his frustration with the business, but Tesla's a great company. They have the best network out there. It's going to stay the best if they don't invest any more dollars right now for a while, but it makes economic sense for them to bring people back.
Craig, just more broadly speaking, right now, the next couple of months for Tesla, what is that going to look like? Because it seems like it's nothing new when it comes to Musk. Obviously, he's a man of making headlines. I think if you are invested in this stock, you're pretty used to some of the turmoil that has played out over the last several months, several quarters, really several years. But the next couple of months could potentially be critical here when we're talking about the fact that obviously inflation is still a real issue in the middle of a pricing war. You have lots of questions just about sluggish demand. So where does that then position Tesla?
So they got to show they can get growth going again, right? When you decline 7-8%, you've got to actually show that you can get to positive growth again. That's not particularly easy. They're going to have to cut price. They're going to have to be aggressive, and they're going to have to lay out a path to the mini car, this cyber taxi, robotaxi, whatever it's going to be, where's the growth going to come from? They've got a lot of work to do with investors.
How much do you just said that they're going to have to lower prices again?
Oh, yeah.
By how much?
I wouldn't be surprised to see another cumulative 20% price cuts in the next
Wow.
year.
Then what kind of pressure is that going to put on margin?
Margin will keep going down. I mean, I don't think margins are going up anytime soon, right? They're going to need another vehicle platform to actually start driving margins again. They're going to have to innovate their way out of this mess. They have car company problems and tech company aspirations, and they need to focus on being a car company and solving the car company problems.
Well, then what product do they need to come first? What would potentially be a saving day for Tesla right now?
So the one they should have launched literally 4 or 5 years ago is the mini car, right? If they'd have launched it, the supply chain would be in place for them to have, mid to high teens margins, right? They could have been building it in Germany or in India, and they're just late. And this vacillation around where and when. Obviously, Tesla decided that Texas is not the location. That makes sense, right? Texas is not where you want to build a small car that's really best sold in Europe. You want to build it in Europe, or you want to build it into another market like in India that will supply in. There are so many problems they have to fix at Tesla right now. For them to be going through significant 10 to 20% headcount cuts right now is problematic. They need their best people working hard.
You're talking about momentum. You're talking about when the momentum turns against you and there's bleeding and it tends to continue. Looking at a chart of Tesla right now, Kevin. Because when you talk about momentum stock, that's a momentum stock right there. Not usually called a meme stock, right? But it has some meme-ish characteristics. How you feeling about Tesla these days?
Boy, Tesla's been a tough one. I think the way I look at it is my rule of thumb this year is patience for 2024, hopefully hope and bullishness for 2025. The reason I say that is we're right in the midst of an election year, and that shouldn't have anything to do with Tesla. But at the same time as you're in an election year, you've got Elon on X. He's got a very sort of one-sided political point of view. He doesn't hide that. That upsets a lot of folks who are usually your EV supporters and climate change supporters. Elon kind of remarks, why would climate change activists attack Giga Berlin in Germany? Well, because of his politics, right? So I'd like to get past not only the election, because then I think we're going to see politics cool a little bit from the Elon point of view, but we'll also have gotten past the shareholder vote. We'll have gotten past the robotaxi event. We'll see how much adoption we actually get for full self-driving, what the adoption rates are, and most importantly, how much cash are they actually going to have at the end of the year? I'm worried that they're going to have to do a pretty large fundraise, and that's why they're cutting 14 to 15% of the staff, firing the entire supercharger team. It feels rash, but I think it's because they have to, running a little low on cash. So hope for 2025, but patience for 2024 is my take.
Kevin, that's really interesting. The idea that Tesla needs to shore up the balance sheet. What do you think is the most likely way they would do that?
Oh, they just issue shares. Not only do they need the share price to stay up so that Elon doesn't get margin called on his loan secured by Tesla shares over at X, but they would just issue shares is my expectation. And the reason for that is, you look at the balance sheet, they've got payables of that well over $20 billion. They've got maybe $3 to $4 billion of free cash available. And what's remarkable is their free cash flow in the first quarter was negative $2.5 billion. Then Elon suggested they would spend $10 billion this year on AI for their FSD. And I'm thinking to myself, where's the money coming from? It's certainly not coming from increasing deliveries.
Right.
So that's why we're seeing the cuts right now. We're seeing the cuts on employees. We're seeing the cuts on expanding the business. For example, two big things that I really enjoyed about Tesla years ago was the idea that we were going to build custom batteries, the 4680s. Now, those are really just a hedge. That's a word they use. They only use them for the Cybertruck.
Right.
The Dojo software infrastructure they were building out, the server infrastructure, that's a, quote, long shot per Elon Musk. These were things that were really, really great and full of hope a couple of years ago that are now hedges and long shots. And I think, again, it's because they have to. They don't have the money to keep throwing into these. If they did, AI, Elon's AI play, would have hired Tesla to do a server stack build out. Tesla could pay for that if they had the extra cash, and they would get the contract as opposed to Oracle. So I think there's definitely a massive cash problem, and that's why I'm just saying patience this year. But I do love the company, I love the people, I love the cars, and full self-driving is amazing. So it pains me to say that.
Obviously, you spent a lot of time looking into and examining Tesla. Interesting stuff and interesting perspective. Good to talk to you, Kevin. Thanks.
Thanks for having me.
Now, Tesla is reportedly moving ahead with its plans to build a data center in China. It could be used to help develop the self-driving algorithm. That is according to reporting from Reuters. For more, we're going to bring in our very own Praz Subramanian. Praz, this is a really big deal. What do we know so far?
Well, it's actually a bit of a wrinkle here. It's not so much that they're building a data center, it's that they're actually using the data there and they can't bring it to the US. They had to already have a data center in China per their, the local regulations about data collection. So the key is that Musk wanted to bring all that data from China to the US to train the self-driving AI algo, right? Can't do that. So now, according to Reuters, he's reversing course and said, okay, we'll data center stays here, the data stays here, we'll train the algorithm in China. I mean, it's important because that's where the most cars in the world with the FSD type sensors are in China. You also have a lot of mapping technology there, a lot of other partners there that can share data. So he's saying potentially, what if we train the algo there in China and then take that information and spread it elsewhere, right? That's sort of like the pivot here. There's some risk there, with dealing with China. You never know when they can lock you down. You never know when they can say, you know what, we're going to stop you here. So it's kind of a risk, but also I think he sees that as an opportunity. They use the Reuters article notes that China Gigafactory became the leading factory there for them, and that wasn't necessarily going to be the case when people thought about them creating that factory there. So maybe China is the push. Maybe China is the angle for where they're going to attack FSD.
Is this a strategy that you think? Do analysts think that it makes sense in terms of Tesla's longer term goals in trying to increase that widespread adoption?
I think there's two parts, right? I think yes, because it's a big market. It's sort of widely mapped. Other players like Baidu already doing that stuff there, and you can kind of work together with. But the problem is that then they don't necessarily own the data potentially, right? Yeah. Also, there's a mention of how you can't sell these Nvidia chips in China because they're banned. So how do you get around that? They need those chips to build a data center and to train the algo. So. But yeah, I think they're right. There's an opportunity, but also some risk.
Well, let us stick with electric vehicles and talk about Tesla. Shares of that company rising after it provided an update on its long-awaited electric semi-truck project, or I should say semi-truck project. Here are the details as Yahoo Finance Praz Subramanian. Semi for trucks, semi for conductors, I think.
I've heard both.
Okay, well, in any case, we're talking about tractor trailers is what I always called them.
Tractor. This is a weird term, a tractor trailer. I never understood the whole concept. But anyway, yes, update on the long-awaited semi-truck. Yes, a truck that came out, that was debuted in 2017, still is in the pilot testing of that vehicle right now. So basically, the project manager was speaking at the ACT Expo, or the Alternative Clean Transportation Expo, talking about how they're on track to deliver these by early 2026. There's a new facility they're building attached to Giga Nevada. When that gets fully ramped up, they'll be potentially producing 50,000 units a year, which was, I think, kind of more than what people thought they would be kind of produce for this such a big vehicle. But anyway, early kind of specs here: the 500-mile range version, the long-range one, weigh around 23,000 pounds, and the 300-mile kind of intermediate length truck, range truck is 20,000 pounds. Sorry, a lot of numbers here. So yes, I think some bullishness there for that vehicle. Tells us about how they have 3.5 million test miles done, both with PepsiCo, their original test partner, and also they're using the truck to deliver batteries from their battery facility in Nevada to the Fremont factory. So a lot going on there, trying to ramp up this truck. It's working. It seems to be pretty efficient. They're saying they can pull a full 82,000 pound load. They're beginning runs of 250 miles to 500 miles based on how the elevation changes, things like that. So pretty kind of efficient there for this long haul truck.
Real quickly, when are we going to see these on the road?
2026 is when they say, early 2026, first real beyond production or beyond pilot spec models. So we'll see that, yeah.
We'll be looking for them. All right, thanks, Praz. Appreciate it.
Jensen, I want to ask about the cloud providers versus the other industries that you said are getting into the generative AI game or getting NVIDIA chips. You had mentioned that in comments in the actual release. And then we heard from CFO Colette Kress that 40%, mid 40% of data center revenue comes from those cloud providers. As we start to see these other industries open up, what does that mean for NVIDIA? Will the cloud providers kind of shrink, I guess, their share, and then will these other industries pick up where those cloud providers were?
I expect them both to grow. A couple of different areas, of course, the consumer internet service providers. This last quarter, of course, big stories from Meta, the incredible scale that Mark is investing in. Llama 2 was a breakthrough. Llama 3 was even more amazing. They're creating models that are activating large language model and generative AI work all over the world. And so the work that Meta is doing is really, really important. You also saw Elon talking about the incredible infrastructure that he's building. And one of the things that's really revolutionary about the version 12 of Tesla's full self-driving is that it's an end-to-end generative model. And it learns from watching videos, surround video, and it learns about how to drive end-to-end and using generative AI predict the path and the how to steer how to understand and how to steer the car. And so the technology is really revolutionary, and the work that they're doing is incredible. So I gave you two examples. A startup company that we work with called Recursion has built up a supercomputer for generating molecules, understanding proteins and generating molecules for drug discovery. The list goes on. I mean, we can go on all afternoon, and just so many different areas of people who are now recognizing that we now have software and AI model that can understand and learn almost any language. The language of English, of course, but the language of images and video and chemicals and protein and even physics, and to be able to generate almost anything. And so it's basically like machine translation. And that capability is now being deployed at scale in so many different industries.
Jensen, just one more quick last question. I'm glad you talked about the auto business and what you're seeing there. You mentioned that automotive is now the largest enterprise vertical within data center. You talked about the Tesla business, but what is that all about? Is it self-driving among other automakers too? Are there other functions that automakers are using within data center? Help us understand that a little bit better.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive. And in order to do that, it is now very well known, very well understood, that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say, this is a car, this is a car, this is a sign, this is a road, and we would label that manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself. And this technology is very similar to the technology of large language models, but it requires just an enormous training facility. And the reason for that is because the data rate of video, the amount of data of video is so high. Well, the same approach that's used for learning physics, the physical world from videos, that is used for self-driving cars is essentially the same AI technology used for grounding large language models to understand the world of physics. So technologies that are like Sora, which is just incredible, and other technologies, VO from Google, incredible. The ability to generate video that makes sense, that are conditioned by human prompt, that needs to learn from video. And so the next generation of AIs need to be grounded in physical AI, needs to understand the physical world. And the best way to teach these AIs how the physical world behaves is through video, just watching tons and tons and tons of video. And so the combination of this multimodality training capability is going to really require a lot of computing demand in the years to come.
For more, let's bring in Autoblog editor-in-chief Greg Migliore for his reaction. Greg, great to see you. So, I mean, Nvidia is perhaps one of the biggest bellwethers for the market right now, but Jensen also having some high praise for Tesla there.
Hey guys, good morning. Yeah, he is clearly bullish on Tesla's approach to self-driving cars and just their entire business model, which, many people, including many investors, are. I would raise a little bit more skepticism. I think while many cars will have self-driving capability at some point in the future, I think what we've seen is consumers have been slow to adapt to it, even slower than perhaps embracing EVs and hybrids. I think there's some pretty, significant skepticism in the market for autonomous vehicles. I think there's going to be a significant learning curve.
And Greg, talk to us a little bit more about that, just in terms of when we talk about AI in the auto industry, what is a more realistic viewpoint then, I guess, from your perspective? And then ultimately, as we take a longer term approach, what you think that growth and demand is going to look like for some of these chips that obviously are necessary in order to, are critical for these automakers' AI goals?
Yeah, I think that's a great question. I look at it more of like a 5 to 10 year sort of time frame where we'll see these chips and then the technologies that they can power phased into different vehicles. And I think you'll see existing autonomous driving systems like Tesla's full self-driving, as well as other programs like General Motors has a feature called Super Cruise. I think you'll see those systems get increasingly more powerful. And then you'll see some of the features that are a little more basic, things like lane keeping assist, blind spot monitoring, automatic braking. Those features that are a little more like tertiary, but still important, get more powerful and more helpful to the consumer. And I think it'll be a longer runway. I think listening to the comments there, that's a very bullish view. And I don't necessarily think that's going to happen in the near term.
Tesla has perhaps been cementing itself as one of the de facto full self-driving or autopilot, full autopilot plays right now. But the stock has had a rough time this year, to say the least. So how quickly does all of this need to materialize for Tesla, for Elon Musk to be able to reap some of those longer term benefits that they continue to sell to investors out there?
Yeah, I think this needs to come to fruition, at least details of the plan. And he's going to reveal some of it as soon as August, apparently. So I think if he can articulate his vision for this in a more concrete way, by the end of the year, I think investors and consumers will be reasonably patient with him. I think the reason he took so much criticism earlier in the year is there is skepticism around self-driving cars. I've driven many of them, and they are great. I think they just have very specific use cases. And I think Elon is trying to bring this to the masses, which is a much tougher case to make.
Great, let's take a step back and just look at Tesla overall right now. We got the European sales numbers out earlier this week showing a decline in demand, and this comes on the heels of the recent data that we got out from China. Just give me just your sense of what that demand picture looks like and whether or not Tesla is really out of the woods yet when it comes to some of those challenges that they have been up against now for quite some time.
Yeah, so I think Tesla is I think they're at a pivotal moment this year. I think they really need to, again, articulate what they're doing with autonomous vehicles because they've made that a pillar. I think consumers in the market were more willing to accept just details on the Model 2 or a lower cost model, which is, in my mind, kind of a safer play. It's like just a lower cost car, something perhaps below $30,000, $25,000 that people are familiar with. That's what people were expecting. So, I mean, naturally, Elon Musk does something totally different. Let's make the cars drive themselves, right? So I think he needs to kind of bring together all these parts of his plan in the next probably 6 to 8 months and, sort of explain himself. I think right now he has sort of thrown out some crumbs. He revealed earlier this week that they're doing more advancing the semi program, which is significant. He mentioned earlier this year about the Tesla Roadster. It's going to be even quicker than he mentioned. The 0 to 60 time is just a crazy figure. So he's sort of giving us little nuggets, little breadcrumbs. But I think in the next year, he needs to really bring it all together because the results, the sales figures, they've been pretty uneven.
Yes, nuggets, breadcrumbs, and cloaks over top of yet to be announced vehicles. Greg Migliore, we've got a lot for Tesla to ultimately deliver here going forward. Appreciate you hopping on with us, Greg.
Thank you.
On June 13th, Tesla shareholders will have another chance to vote on CEO Elon Musk's pay package that's been worth as much as $56 billion. That compensation was invalidated by a Delaware judge earlier this year. But Musk, not the only company leader pushing compensation packages higher. Yahoo Finance's Alexis Keenan has the details.
Yeah, so there's been a lot of talk about whether this skyrocketing CEO compensation, executive compensation, is due to Musk. Is Musk to blame? Is there some Musk effect because he did nab before the Delaware court invalidated it, that $56 billion compensation package? Now, we wanted to find out how big these pay jumps are and also what's driving them. So we looked at these compensation packages for CEOs both before the Musk deal and after the Musk deal. And what we found is what really matters is about the size of these increases is the index, what we're talking about, which CEOs are we talking about, and also the size of the companies that they're running. So take a look at the number of the CEOs in the S&P who were awarded more than $50 million in annual compensation. That had a fourfold increase. If you look at the 5-year period, that's 2013 to 2017, before Musk's 2018 pay package, jumping all the way to 36 in the 5 years after. So certainly those big awards at the S&P level are significantly quadrupling. Then let's go to just the biggest U.S. companies. And what we're talking about here are companies that have more than $1 billion in annual revenue. The median dollar amount awarded there also saw a jump. You look at 2022, $22.3 million average pay there. That was up 7.7% over 2021. Then if you jump to 2023, you see they're up 11.4% year over year. Now, if we take, though, a much wider look and we take a look at the dollar amounts awarded to CEOs in the Russell 3000, right? So a bigger picture here. If we look at 2018 to 2022, so all after the Musk deal, you see there all CEOs up 6.2%. And then you see, though, a much more moderate increase when you take it to the CEOs that are running companies that have revenues above $20 billion a year. That's just 2.4 increase over that time period. Now, the whopping number there, 19.3% increase from 2018 to 2022, those are for the CEOs at the smaller firms, under $50 million per year in revenue. So the lesson here is really that maybe it's not a Musk effect. Maybe that is just an outlier. And it's really these companies that are under that $50 million per year in revenue mark that are driving these big jumps. So a lot to still watch here as pay either increases, moderates, decreases. But what experts are telling me who put together and analyze these pay packages is that they expect to see a jump for the full year 2023 and as we go into 2024 as well.
Great reporting there, Alexis. Thanks so much for putting that all in perspective for us.
A group of Tesla shareholders are trying to encourage others to vote against CEO Elon Musk's $56 billion pay package. The group that consists of Amalgamated Bank, SOC Investment Group, and 6 other signatories, they say Musk is distracted by all the other companies he is running. Writing in a note to shareholders, quote, Tesla is suffering from a material governance failure which requires our urgent attention and action. Joining us now is one of the letter's signatories, Brad Lander, the New York City comptroller. And Brad, thank you for joining us here today. A big pay package for Elon Musk. You take this away, it's going to make a big difference in the world's richest person's fortunes here. Why did you sign this letter?
Well, first, thank you for that reporting. You just heard that, even amongst the largest companies, 23 million a year, this, even if you average it over a decade, $5.6 billion, stratospheric pay. But really, the bigger problem is lack of independent board governance. That's why the Delaware Chancery Court invalidated the pay package. The board is supposed to be independent. The board is not independent. Shareholders did not have a meaningfully independent say on pay. We have a corporate governance problem at Tesla. It is acting like a family-owned business when it's a publicly traded business.
What do you make of Musk sort of either hinting or outright saying that if this doesn't get approved, he's going to spend less time on Tesla than he does now, and that perhaps some of the AI initiatives he's working on, he'll take to some of his other companies?
Look, I'd like to see a CEO at Tesla that is focused on Tesla, and that's not what we have. We have a CEO that's focused on SpaceX, that's focused on X, that seems to be focused on random politics. What shareholders of Tesla want is for the board to make sure that the CEO of Tesla is focused on Tesla, thinking about how we grow and expand EVs and make money for shareholders by running Tesla. And that's not what we're getting right now. So if Trump, excuse me, Freudian slip, if Musk's threat to Tesla shareholders is pay me $56 billion or I'll stop being a distracted CEO for your company. Let's have the board say what we want is a CEO who is focused on helping Tesla succeed.
Brad, what do you think your odds of success are? Elon Musk has been counted down and out in various situations over the years, over the decades, and he's bounced back pretty strong and pulled some rabbits out of the hat there. What do you think the odds of winning here are?
Well, look, I'll say this is not about, if Elon Musk wants to focus on Tesla, have an appropriate compensation package and a board that provides appropriate shareholder governance, just like shareholder capitalism provides for, that would be fine. What our odds are of winning on the package, look, a lot of the stock is held by non-independent shareholders. So these are hard votes to win, but it is important for shareholders who believe in independent shareholder governance to raise their voice when there is not legitimate independence. And let's be clear, it's very rare for a court to say that a corporate board failed to act with required independence. That should be a wake-up call to Tesla shareholders, and I hope they'll join us in the vote.
So New York and the funds that you oversee, the pension funds that are in your purview, have about 3.4 million shares of Tesla. So we're talking about a stake worth over $600 million. So one would think you would have some clout here. Is there a circumstance in which you would sell? What would it take for you to say, all right, enough is enough? Or, do you have other sort of levers you can pull besides writing a letter?
Well, it's more than writing a letter. We're voting. We're trying to lead a vote of shareholders against this $56 billion executive compensation package that has already been overturned by the court. That's what we're focused on right now. We're trying to get other shareholders to say this is a moment for independent shareholder governance. Here's how we can send a strong message. So that's what I'm focused on for right now. I hope other shareholders will join us in that vote, and we'll see what happens afterwards.
Brad, any other companies you have your eyes set on? You're in the position, you have the ability to be kind of an activist investor here. Anyone besides Tesla?
Well, we've been focusing on some other companies recently. We focused recently at Exxon, where they were also essentially taking legal action against their own shareholders, trying to call attention to that and getting shareholders to vote against the management recommendation. We didn't do that well at BlackRock, but we urged BlackRock shareholders not to vote for the Saudi Aramco CEO to be on the board. That is not consistent with BlackRock's decarbonization commitments or the climate transition that we need. But I will say we had some great partnership wins earlier this year when JP Morgan Chase and Citi and Royal Bank of Canada agreed to move to asset financing ratios for clean energy. So shareholder engagement is a great way to make progress. Sometimes we make it, as we did at Chase, Citi, and RBC. Sometimes we come up short, as we did in the most recent float at BlackRock. Hopefully at Tesla, we can help move in the right direction.
All right, we're going to leave it there, but I really appreciate you stopping by here on a Friday afternoon ahead of the Memorial Day weekend.
Hope you have a great holiday. Thanks for having me on.
Tesla shareholders are set to vote on CEO Elon Musk's $56 billion pay package. That's on June 13th. Well, there's a group of shareholders encouraging others to vote against it. Some new developments within this story. Our very own Pras Subramanian joins us now with the latest details on that. Pras, what are we learning?
Hey, Shauna. So Glass Lewis, the proxy shareholder advisory firm, is saying that shareholders should vote no for Tesla and Musk, in particular, for moving Tesla's state of incorporation to Texas, but also for Musk's $56 billion pay package. The group is concerned that the pay package will sort of dilute existing shareholders' stakes in Tesla, and that it would make Musk the number one largest shareholder by quite a healthy margin. And the board has not provided rationale to sort of combat these concerns of overly sort of dilutive nature of the new pay package. So that's a concern there. We're not surprised here that Glass Lewis would say, hey, shareholders, you should be aware of this. We probably don't want this from us to have that much control over the company. And I think that it sort of makes you think about right now from like a governance point of view, who is the board really working for? I think that's what Glass Lewis is saying. Is it working for the shareholders or for Musk? We'll see what happens later in June when the shareholder vote happens. Currently, Musk has a little less than 13% of the total shareholding of Tesla currently right now.
All right, Pras, thank you so much as always for bringing us that news this morning. Really appreciate it.
Elon Musk may be lending his expertise on EVs to Washington. That is, if Donald Trump wins the presidential race this November. The two have reportedly now discussed a possible advisory role for the Tesla executive. This is all according to the Wall Street Journal. And Rick Newman joins us now with more on what a partnership between the two could mean. Rick.
Hi, guys. It sounds as if this actually has less to do with electric vehicles and any kind of transportation or energy policy than it does with the idea that Elon Musk has just become a huge Biden critic. And he seems to be trying to work to get Biden unreelected. I mean, he's sort of trying to convince other big players in Silicon Valley and elsewhere in the business world not to support Biden in his reelection bid, which on the surface might sound a bit puzzling because, Elon Musk's first or second claim to fame was as co-founder and CEO of Tesla, which benefits from all the green energy policies that went into place first under President Obama and then under President Biden, the subsidies, the tax breaks, for example, for people who buy an electric vehicle, that benefits Tesla. But these guys started feuding fairly early in Biden's presidency because every time Biden wanted to talk about EVs, he would not mention Tesla, and he would mostly mention Ford, General Motors, and Stellantis, the Chrysler parent. And the reason he did that is because those automakers are unionized and Tesla is not unionized. So Musk found that irritating. He started to criticize Biden. At one point, he actually called him a damp sock puppet on Twitter. And he has ramped up his criticism of Biden during the last several months. So he and Trump, I guess, have been talking, and Trump probably senses an opportunity here to get Musk on his side. So a very odd and interesting alliance.
Yeah, and let's not forget, Tesla also has a solar business, right? It's not just even the electric vehicles. But as you lay out in your piece, you talk about the different ways that you think, or the different points perhaps, that Musk will be able to use trying to convince Trump to get on the same page when it comes to electric vehicles.
Well, if he wanted to. I don't know that Trump would listen, but Trump has decided, by the way, Trump used to, before when he was president, Trump kind of supported electric vehicles. That was before this became politicized. Now Trump says things like, if he gets elected, he will try to stop the sale of all electric vehicles. I mean, that's insane. So what's Elon Musk, who runs the most successful electric car company in the world, going to say to Donald Trump about that? Oh, good idea. You should just shut down, this whole sector of the new energy economy. Obviously not. Trump, he has been telling workers in the battleground states, Michigan and Wisconsin, all these cars are going to be made in China. You're all going to lose your jobs. That's what he said when he went to Michigan during the auto workers strike last year. Biden has a different point of view, obviously. He just rolled out that 100% tariff on Chinese electric vehicles to keep them out of the market and bolster companies like Tesla, but it's not winning him a fan in Elon Musk.
Well, we'll see what ends up happening as the different parties try to vie for his attention. Rick, thank you.
Bye, guys.
With 1 week to go until Tesla's shareholder meeting, billionaire investor Ron Barron is throwing his support behind CEO Elon Musk's controversial pay package. Our Pras Subramanian joins us now with more. So here, out of nowhere, well, not out of nowhere. I mean, we know who Ron Barron is, but, a little bit of a surprise entrant into this whole debate.
Yeah, I think he felt he needed to kind of weigh in on here, so he's all in on Elon here. I mean, look, he's made a lot of money with his Tesla investment, and he claims that Elon is the reason why, saying that, quote, in his letter, an open letter, he says, quote, Elon is the ultimate key man of key man risk.
without his relentless drive and uncompromising standards, there would be no Tesla. So not surprising that he is weighing in on here. I mean, look, he said in a note in March on an investment sort of thesis kind of backing up the Tesla investment, saying that they made, what, $5.5 billion on a original $400 million investment back in 2014, 2016. So clearly he's enjoying his gains here. Now things have kind of come off a little bit recently for Tesla, but I think Barron's still on the camp and he's still all in on Elon.
Real quick, do people think that this is going to be some cataclysmic event if the shareholder vote goes the wrong way, in quotes, whatever side you're on? Like, could this end up being something that causes a lot of turmoil?
Yeah, I think there's concern that this vote result's going to have some volatility around the stock. Morgan Stanley did a kind of informal poll of their institutional clients, and Adam Jonas wrote about how many believe that if the pay package is approved, it'll be a positive for the stock. But if it's actually rejected, it could be a huge negative for the stock in the near term. So I think there's some concern next week ahead of this shareholder vote.
All right, thank you for that update, Praz. And Tesla shareholders are voting on CEO Elon Musk's $56 billion pay package next week. And for the details, we're bringing in Yahoo Finance's Praz Subramanian. This is a big one. We're talking tens of billions of dollars for one individual. What should we expect?
Yeah, big drama next week coming up on that shareholder meeting on Thursday. Robin Denholm, the independent chair there at Tesla, posted an open letter yesterday talking about how they need to pass this package to retain, quote, Elon's attention and motivation. Also writing that Elon has, quote unquote, other places to go to take his ideas. I don't know about you guys, I found this to be remarkable. I've never seen an independent chair write an open letter supporting a CEO's pay package. In 15 years of doing this, I've yet to see that. I don't know if you guys feel the same way.
I don't recall that. Yeah.
It's remarkable to me. That being said, we also have a couple bulls like Cathie Wood talking about how Elon's interests are aligned with shareholders most strongly of any CEO. Ron Barron, of course, saying Elon is the key man of key man risk. So, some bulls are on board there. And for the most part, most people expect the pay package to survive and to be overwhelmingly passed, as according to Dan Ives. So I think we might not see that drum, but there's going to be there's a lot of shareholder groups and also ISS and Glass Lewis talking about how this is not a good thing for shareholders. So we'll see what happens next week. But I'm just surprised by the push by the board to get this package passed.
Yeah, I mean, and the other question is, even if they do approve it, what will be the reaction from Musk? Now that he has held he's holding the company hostage in some ways by saying, maybe I'm going to take my AI tech somewhere else, for example. Okay, so does that mean if they do approve it, that's off the table? Or is he still going to sort of needle, I don't know. He's unpredictable, so it's hard to say.
I mean, it sounds like to me that they're saying, hey, if you give him the money, he'll stick around. He'll be the key man, as they say. He'll be around. He'll focus mostly on Tesla, which to me seems a little bit strange to have to kind of financially sort of motivate the CEO to stick around. I mean, usually
Well, even before this whole pay package fight happened, he was splitting his time between his various CEO-doms. So we'll see.
Yeah, I think the expectation is, yes, he better stick around and we're going to approve this massive pay package.
Investors are eagerly awaiting the vote on Elon Musk's CEO pay package set for June 13th. Shareholders will decide if the Tesla chief can keep his record $56 billion compensation package that was awarded to him back in 2018. Yahoo Finance's Alexis Keeney has been looking into the recent trends in so-called say-on-pay votes. Alexis.
Yeah, so there's some mixed support coming out from major shareholders in Tesla. You had last week Barron Capital's Ron Barron saying, vote yes, let him have this money. They have about 0.5% stake in the company. Then on the other hand, you had over this weekend Norway's Sovereign Wealth Fund coming out, a 1% stakeholder approximately, saying, no, we don't support this. But look, at the bottom line is this will come down to asset managers like BlackRock and Vanguard that tend to support management in these initiatives and have a significant stake in the company when you start adding those together. Now, the trend, though, is what I've been looking at in these say-on-pay packages. And increasingly, shareholders are in favor of paying the CEOs what their management is saying they should get. So if you take a look at companies in the S&P over the past 5 years, we're going to show you 3 years here, the percentage of no votes has been falling. Take a look at 2022 to 2024. Note that 2024, of course, isn't fully cooked yet. We don't have all the numbers, all the votes on 2024. But you have in 2022, 4.6% of these votes failing, or 22 is the hard number there. Then you go to 2023, 2.4% failing, 12 there. And then this year, less than 1%. And so 2 companies so far have had their shareholders say no. So a really big change here, and shareholders saying okay to these plans, all while, of course, CEO pay is on the rise. So you have some incongruent kind of initiatives there. But for Tesla shareholders, they have approximately, for their non-insiders, so the shareholders that'll be voting on this pay package for Musk, you have roughly 50% retail, roughly 50% institutional, not quite exactly. And on top of it, when you look at studies of how many retail shareholders, with Tesla having a significant number of retail shareholders here, how many actually come to the table and cast a vote? Well, it's been changing over the years. There's not a ton of data on it, but the thinking is, over the past 5 years, from those who research this area, is that, look, they can be influential and they will show up when they really, really care. And look, this has gotten so much media attention, this pay package. So I wouldn't be surprised if we see those numbers pretty sky high on this round. But that's just a prediction.
It certainly has. We've been talking about it, what feels like for well over months at this point. But Alexis, I think investors out there, our viewers, are trying to figure out what exactly this means for the stock, what this means for the share price here. What did you find out?
So analysts are saying that if it's a yes, they would think that would be supportive of the stock and the number would go up. On the other hand, a no, that it would go down. Now, that is perhaps putting into question, if it's a no, how long does Elon Musk stick around, or how much of his time does he allocate to this company given his other interests? So I'm not exactly sure what the thinking is and all of the permutations of why that is, but that's kind of the consensus out there right now.
Some Tesla shareholders already voicing their stance on Elon Musk's controversial pay package. This comes ahead of the EV giant's announcement on the vote results later this week. And Yahoo Finance's Praz Subramanian joined us now with more on the very latest. Praz.
Yeah, so a number of some of these bigger funds and shareholders weighing in here. One of the biggest over the weekend was the Norway Sovereign Wealth Fund, and they're coming out against Musk's pay package. They have about a 1% stake. 32 million shares, so it's the 7th largest shareholder for Tesla, and they say they're concerned about the size, dilution, key man risk, things like that. So they're going to vote against, and they also voted against in 2018. CalSTRS, also the big California fund, they call it, in an interview with CNBC, the head of it called it the package ridiculous. And they have about 4.7 million shares, so not as big as Norway, but still a sizable holding. And also, on the flip side, Bailey Gifford came out on the positive side saying they are going to vote for it, saying that the package is ambitious, but also kind of tied in with shareholder sort of interests and shareholder concerns. So that's sort of alignment there with shareholders. So that's why they're sort of went.
How's your count looking so far? I mean, I thought the conventional wisdom was that even though there were some prominent voices who were opposed, that it would pass. But there are some analysts who are sort of questioning whether indeed it's going to pass.
Yeah, you know, Dan Ives, Wedbush said it should pass pretty strongly, but maybe not the 73% it passed in 2018. But then Garrett Nelson of CFRA says he's not sure. We'll see what happens. It's kind of up in the air. Elon complaining about this, I think, on Twitter, talking about how 90% of retail investors are with him. But the big question is, retail investors don't always vote, right? It's not as easy for a bigger fund to do so. So I think it's gonna come down to the wire. It's gonna be a pretty exciting day on Thursday when the meeting takes place.
When might we know? Are we around what time on Thursday do we expect to know?
So the meeting starts at 4:30 Eastern on Thursday, and you're probably going to find out shortly thereafter. They'll start going through some of the amendments and give us, I think on the 12th, you can begin voting if you haven't already done so.
Gotcha. So the voting will have closed by 4:30, and then they just have to get the tabulation and
announce. They'll go through all the sort of the non-exciting amendments and get to the exciting amendments.
Very interesting. Thanks, Pras. Appreciate it.
It's a big week for Tesla and CEO Elon Musk. Musk facing a vote from his own shareholders to see just how much money they think he deserves. Here with more is Yahoo Finance's Alexis Keeney. Alexis, take it away. What are we hearing as of recent on this?
Yeah, so there's just one day left basically for Tesla shareholders to cast their votes that will decide if Musk should get a second chance at one of what is the largest CEO pay deal in history. The value of this compensation, it does shift with Tesla's share price, but it's now worth approximately $45 billion if it is given that green light. Now, voters are due by the time of Tesla's shareholder meeting tomorrow afternoon. That's Thursday afternoon. Those votes have to be in by then. Shareholders first approved this deal, though, in 2018, and at the time, 73% of Tesla's independent shareholders gave it a green light. But earlier this year, a Delaware judge voided that pay altogether. The judge said Tesla's board members that recommended the pay deal failed to disclose close ties with Elon Musk's. Now, analysts and major shareholders, they're mixed on support for this renewed deal, if it were renewed. Some argue that the pay is necessary to keep Elon Musk's attention on Tesla. Others say they're worried that the payout will dilute shareholder value, give too much control of Tesla to Musk, and other concerns. Now, Musk is also, of course, the CEO of SpaceX. He's founder of Neuralink, founder of the infrastructure development firm, The Boring Company. Plus, Musk now owns X, formerly known as Twitter. Still having trouble getting that name out there. I want to call it Twitter. He's also founder of the startup XAI, rival to OpenAI, which he also helped fund in its early stage. And Musk is also president of his charitable organization, the Musk Foundation. So it's safe to say he has a lot on his plate. And Musk acknowledged as such on X, saying that he would feel uncomfortable growing Tesla as a leader in AI and robotics. Without owning about 25% of Tesla. That's the number he's been pushing for. And then he went on to say that unless that's the case, that 25%, he'd prefer to build products outside of Tesla. Now, Musk currently owns about 13% of the company. So let's try to break down here how this multi-billion-dollar pay package is put together, and that was back in 2018. Now, Musk gets no compensation under this deal at all. It's entirely performance-based if it were to be ratified again. It's all performance-based, so no guaranteed base salary like we would see with most CEOs. Now, instead, his pay is based on the potential to unlock various stock options in addition to the options that he already owns. Now, to unlock these options, Musk had to hit a combination of 3 different kinds of milestones. There were market cap milestones, revenue and profit milestones. You have to put them all together to figure out how this works. Now, on the market cap front, Musk was first tasked with hitting 12 levels, and those ranged all the way up to $650 billion. Musk, as we know, satisfied all 12 of those. Tesla's highest market cap came in at $1.24 trillion. That was back in November of 21. But market cap achievements alone are not enough to seal the deal here. There are 8 revenue-based milestones that range from $20 billion up to $175 billion. Musk has satisfied 4 of those 8 targets. Then you have Tesla's annual revenue hitting a high of $97 billion in 2023. So that's the satisfaction in those buckets. Now, as for the profit milestones or adjusted EBITDA, the pay deal sets out 8 milestones, all of which Musk has also satisfied. Tesla's profit in 2022 hitting those benchmarks around $18 billion. So when you put it all together, you have Musk achieving all 12 of these additional vesting requirements that are on top of those market cap requirements. And that is revenue plus profit plus market cap. So under the deal as slated in 2018, Musk would have been entitled to roughly $46 billion at today's stock price. But now the question remains whether shareholders want to give him that second chance. So a lot to anticipate in the next 24 hours or so here.
Tesla shareholders voting on CEO Elon Musk's controversial pay package, and we'll get the results tomorrow afternoon. Moments ago, CalPERS, by the way, announcing it voted against it. Yahoo Finance's Alexis Keeney here to discuss some of the pros and cons that shareholders are weighing. Alexis.
Yeah, so kind of a mixed bag we're getting from a variety of influential shareholders. So it's still kind of a wait and see, even though Elon Musk had teased us a little bit in that tweet or X post saying that 90% of the retail shareholders that have voted so far wanted a yes for his pay deal. So let's kind of talk through the things that might be weighing on shareholders' mind for the pay package, against the pay package. One big one, of course, incentivize Musk to stay as CEO of Tesla. There's arguments, of course, for many years that he is essential to the company, that he is synonymous with Tesla, that he needs to be there in order for the company to be successful long term. Also, maybe avoiding a lawsuit from Elon Musk. Now, I don't know what nature that lawsuit might take, but if he's not paid, look,
lawyers will think of something, Alexis.
They're creative. They'll think of something. And he has not been paid since 2018, since this is a all performance-based package. So one could make the argument perhaps he's got to be paid something. We don't know what that would look like in the future if this is turned down. Also, looking back to 2018, the deal did get 73% of independent shareholder support back then. So you could say that's a relatively high number, even if you don't like the way that the board processed the deal and served it up to shareholders. And finally, on the side for the argument for pay, avoiding maybe a stock price decline. There have been plenty of analysts that say if you don't vote for it, that Tesla stock is going to suffer.
Well, and it already has suffered, of course. It's already gone down. Okay, so give us the other side.
Okay, the other side, a no pay vote in favor of that theory, avoiding, let's say, shareholder litigation. You could make the case that either way this vote goes, that some shareholders are not going to be happy. They could say that there's harm to the company's value if it loses the 40 to 50 billion, plus that it might have to pay Elon Musk if this deal is a yes. Also, maybe just punishing the board of directors for their approach to analyzing the pay deal. The revote is recommended by a one-member compensation committee. So, that's not necessarily a ton of detail, though the company holds out that they did put this rigorous analysis to come up with this redo, this copycat version of the 2018 deal. Also, preventing Musk from increasing his control of Tesla. This would give him another approximately 12% of the company. And he has said that he wants that at least 25% control in order to continue as he has been in the past. And finally, just diluting company assets. That's been one argument out there from some proxy advisors saying that they don't want those assets to go toward Elon Musk, or at least maybe not in that volume. Yeah.
All right. Thank you, Alexis. We wait and see.
Our next guest says it is a nightmare lose-lose situation for shareholders. Joining us now, Ross Gerber, the CEO of Gerber Kawasaki Wealth and Investment Management. It is good to see you, Ross. You, like the folks at CalPERS, you plan to vote no, or if you already vote, have you already cast your vote?
I already voted no. Yeah.
Gotcha. So lay out your case for why you're not approving this pay package.
I mean, it's mostly have to do with the board of directors being so negligent in not only, not, doing the compensation committee and the proxy and the way that typically compensation is done at every other public company other than Tesla is by independent committees of the board working with the CEO to come up with a comp package that is two-sided. This was not what happened at Tesla. It was just Elon presenting his comp package and them saying, sure. And, when it gets shot down by the court because of the lack of corporate governance, then the response is, well, let us now explain how we came to this. Let's vote on this again. Then we're going to go back and appeal and say, see, the shareholders still want this. And it doesn't actually address the real issue, which is that still nobody negotiated with Elon on this pay package. And it's possible he would have agreed to maybe half the size of the pay package to, let's say, 25 billion instead of 50. And, that would still be in a massively excessive amount of compensation. So that's why I'm voting against it, because I just think this caused more problems than it solves. And I think the board should craft a real compensation package for Elon with an independent board the way that is required by law.
When you say a real compensation package, Ross, any thoughts on what that would look like to you?
Well, once again, I'm not against the basic structure of stock options and such. And, I don't think Elon needs much incentive in the sense of he owns, 80 or $90 billion worth of Tesla stock. At the time of the comp package, he owned $10 billion of Tesla stock. So he's made about 70 to 90 billion in gains irrelevant. So, we throw around these numbers, but in the real world, the average American makes $65,000 a year. And so when you actually think about that, we're talking about a compensation package for the wealthiest person that's ever lived. It's the stupidest thing I've ever heard. Like, it's literally so dumb that this is the focus of Tesla and not selling cars as we get to the end of a quarter where they're going to miss all their numbers.
Miss all their numbers here, but they did make their numbers during the period in question that we're talking about, Ross. I want to talk about...
They went from zero. I mean, you're making numbers from zero, yes.
So, this is a legitimate car maker now at a time when, you go back in time, there were a lot of people who thought that Tesla wasn't going to make it. But let me leave that aside.
But we've all benefited from that, including Elon.
Let me leave that aside for a moment, because I am curious what you think would happen if indeed the no's like you succeed here. What then is the scenario? Does Elon step back from the company, for example? Does he take his AI tech to, somewhere, to one of his other properties?
Well, there's two sides to this. One is I think he already has stepped back from the company, and that's been going on for 2 years now. And then he just eliminated every meaningful executive at Tesla over the last 6 months. So he put Tesla in a position where if we don't vote for him and he, let's say, threatens to leave the company and leaves the company, there's actually nobody at Tesla to run it. So he's done this while the board is, again, closed their eyes and been fine, as he's just let go a ton of, really talented long-term executives at Tesla for one reason or another. So, Tesla's in a really bad position, because Elon put Tesla in that position to the benefit of XAI and X and his other investments. So right now he's told us that he wants to build AI outside of Tesla. He's moving chips from Tesla to XAI. It seems like there's a disconnect between what's actually happening, which is an absent CEO who's doing what's best for AI, for him to control it, versus what's best for Tesla. And the board of directors isn't willing to step in and say, hey, this isn't what's best for Tesla. So the issue to me is, if the vote fails, how is he going to retaliate against Tesla? This is absurd for somebody who's the majority owner of the company. It's an absurd conversation. He should be doing what's best for Tesla no matter what. And
Ross, besides...
So it doesn't matter what the vote does. He's got 80, 90 billion in the company.
Well, so besides sort of further, enabling the board, in your view, if he succeeds in this vote, what are the other downsides of him getting this vote to go his way?
Well, I kind of think the vote's about 50-50 right now. Like, I would flip a coin. I don't know what it's going to do. If it does pass, the good news is we can just go back to litigating this comp package, as it will be relitigated, I'm sure. And the shareholders will be responsible for $25 billion of taxes on this that, he'll have to liquidate stock to pay, and shareholders will bear that cost. So as long as shareholders are fine with, obviously when that happens, it will be a detriment to the value of the company. So it's really expensive to pay somebody $50 billion. So, that's the shareholders paying him. So, does he deserve it or not deserve it? We could debate this till we're blue in the face. I don't think anybody deserves $50 billion for running a company for 5 years, but that's just me.
Ross, can I ask you, when did you first get into Tesla?
I got into it in it was 2014 when it was a $2.50
So that's
stock.
a nice return under Mr. Musk there.
That's right. It's a wonderful return. And let's not forget, if it weren't for the US government loaning Tesla money, and if it weren't for investors like me and other institutional investors that stood by Elon through this period of time, Tesla would have gone bankrupt like 5 times. And in 2018 in particular, I supported Elon at the most crucial time in Tesla history. It was literally all these people on Twitter who think they're such big fans weren't nowhere to be found in 2018, except for Ross Gerber. And so, I'm out there helping Elon, helping Tesla succeed. Now, it's a small part of the overall story for sure. And Elon built a wonderful company. But as I said, he benefited the most of anybody from Tesla's success, and all of us, rest of us shareholders, rightfully benefit along with it. And that's how companies work. But that said, I think Elon deserves compensation. I'm not saying he doesn't deserve to be compensated. What I'm saying is they need to go out doing these things the right way. And the right way is by having a negotiation that's fair. The typical CEO makes $20 million a year. But he's not the typical CEO. So let's look at a guy like Steve Jobs when he came back to Apple. He got 7.5 million share option. It was the value was substantially less than anything Elon's even looked at. And actually, Steve Jobs didn't have any stake really in Apple when he came back. So it was like they had to give him incentive. So there's precedents for founder CEOs that are incredible innovators with option packages as well. And I think the board should work hard to come up with something fair that will compensate Elon for the past and the future and be defendable in a court of law.
Well, we'll see if that happens, Ross. Thanks a lot for joining us. Great to catch up with you as always.
Thanks for having me.
Tesla shares moving higher this morning after CEO Elon Musk says he's prepared for victory in his pay package battle. Musk taking to X, posting, quote, both Tesla shareholder resolutions are currently passing by wide margins. Alexis Keeney, Yahoo Finance's own, joins us with the latest here. We're taking a look at the X post here. Alexis, what could this all mean here?
Yeah, so Musk putting this out there for the public to see, saying that it looks like he's expecting both of these measures to pass. So
not normal by any standards.
Not by any standards, no. And this was late last night. Both the move to Texas and his pay package. And you had then Dan Ives at Wedbush saying that a yes on pay would remove what he thinks would be a 20 to 25% overhang that's been on the stock ever since this court decision came down invalidating the package. You've got major shareholders putting in their votes. You have some reports out there that BlackRock and Vanguard have expressed their blessings to this package. So that's why you would see a big spike in those tweets that Musk put out there. Is a lot of times these major shareholders, they wait to the last minute to cast their votes, and then boom, we see some action there at the tail end. So you have ARK Investment, you have Barron Capital, FRS, all saying they are for this package, against. You have the pension plans, CalPERS, CalSTRS, and then that report from New York Times' Deal Book saying that Vanguard and BlackRock were voted yes. Vanguard, for its part, 7.32% shareholder. BlackRock at about 6%. Musk, the major shareholder in Tesla, but he doesn't get a chance to vote on his own pay package here at around 13%. So that is out of the mix. Now, you have the stock really, as you saw there, kind of suffering ever since this deal. And the analyst version of this is that if it's a yes, that we'll see a pop in the stock price. So that's why you're seeing and expecting some action here. Question though, what will the Delaware court do regardless of what the vote is? If it's a yes, it doesn't mean this is a done deal. This whole thing could end up at the Delaware Supreme Court if the judge does not think that Tesla and its process and how it put this vote back out to shareholders was insufficient in some way.
As we're waiting for that final result this afternoon from the Tesla shareholder vote, our next guest is feeling bullish ahead of the final vote, raising his price target from $200 to $230 and reiterating his buy rating. Garrett Nelson, CFRA research analyst, joins us now to discuss. All right, Garrett, take us into your thesis here. I mean, we've seen the shares drop precipitously here since the original pay package was voided. So what makes this that much different now that we have this potential shareholder vote? And do the fundamentals for the company change?
Sure. Thanks for having me. Well, this really would remove a major overhang on the stock that's been lingering for weeks and months now, ever since the Delaware court ruling came out. So in our view, it's not surprising that the shares are currently trading about 7% higher in the pre-market. In a worst case scenario, if this was not approved, if his 2018 compensation plan was not reapproved by shareholders, given the diversity of his business interests, especially at this point, now that he owns X and is re-involved with AI, with the XAI again, we could have seen a scenario where he could potentially have walked away from the company. So.
I mean, would he really?
So investors are really sending a message that they want the company to stay the course.
Would he really have walked away from the company?
We think it's a possibility when you consider that he, the 6 businesses that he's involved with, not all at once, but perhaps over time, selling his remaining shares and moving on. But when you look back at his 2018 compensation plan, it was entirely incentive based. There was no salary. And he's really delivered for shareholders over the last 5 to 6 years. And so I think that's why you've seen just this week a number of very large investors come out in favor of this, because Elon's incentives are really aligned with the interest of shareholders. And in fact, he has delivered on those very lofty thresholders from the compensation plan. And so, I think what you're seeing is the overwhelming support of retail investors for this. And really, he just needed a fraction of support from institutional investors, which it appears that he has gotten.
Garrett, there has been, though, concerns out there from shareholders really over the last several months, last couple of years, just about these distractions that we have heard when it comes to Musk, when it comes to his other business interests. Are any of those concerns warranted, do you think?
Of course. You consider someone who owns a half dozen very large businesses, such as Elon. But, in our view, if anyone is capable of that juggling act, it's him. And he's shown that over time. You look at the total returns since the compensation plan was approved, the stock is up more than 1,000%. And so I think there's a recognition, appreciation, especially on behalf of retail investors, that he has helped deliver for them. And so now it's time for them to deliver for him in that compensation plan that was agreed upon 6 years ago.
Okay. And so as we're looking at all of the different undulations for Tesla's share price and the activity, I mean, this environment that Tesla is in is far different than years past and the returns that investor shareholders have seen before, especially with the demand generation cycle that all of the automakers are trying to navigate through right now. So what does this next leg for growth potentially, if Elon Musk sticks around, if this shareholder vote goes his way, what does that look like?
Sure. I think the past 5 or 6 years have been about volume growth. And the next 5 or 6 years are really going to be more about AI. And Elon delivering on this promise of fully autonomous driving. In our view, Tesla is leading the autonomous driving race and is going to get there first in terms of fully autonomous driving. And so, given the heavy investments that they're making in AI, we think that that's going to really show up, with every subsequent update of their autopilot software, full self-driving. You see material improvement in the quality of what it's able to do. And so we think that's really going to set the stage for the next 5 to 6 years. It's be more about delivering on that and them actually bringing a robotaxi to market.
And Garrett, real quick, while we have you, there are headlines crossing this morning just regarding the pricing of Model 3s in Europe. And this, of course, being brought up on the heels of the expected tariffs that are going to be implemented on cars that are manufactured and produced in China and then brought to the EU. What do you think that's ultimately going to do for demand? And how big of a headwind do you potentially see this being here for Tesla, at least for its sales in Europe?
Yeah, certainly a headwind. The good thing about Tesla is they're very much Western market based. Of course, they have the plant in Shanghai, but the bulk of their sales are in North America and in Europe. And so, they're in a different position than they were a few years ago, in that they now have a factory there in Europe, so they can mitigate the impact of those tariffs with their factory in Berlin. So I think they're in a better position to navigate those tariffs than they were previously.
All right, Garrett Nelson, always great to talk to you. CFRA's research analyst. Thanks so much for hopping on with us this morning.
Thank you.
Tesla shares moving higher this morning, up over 4.5% after CEO Elon Musk says he's prepared for victory in his package battle. Musk taking to X, posting, quote, both Tesla shareholder resolutions are currently passing by wide margins. So joining us now to discuss the implications, we have Zohar Goshen. He's professor of transactional law at Columbia. Zohar, thank you so much for coming in studio to discuss this big day in Tesla world with us. We appreciate it. I just want to get your context and legal perspective to start it off here. How kind of unprecedented is this, given the fact that the court sort of already ordered a remedy to Elon Musk's pay package?
Well, it's not a routine It's not a routine decision to do that, but I think it's an appropriate one to take, given that when they approved in 2018, when they approved the compensation package, they approved it through the special committee, which is a group of independent directors, and then shareholders vote. And what the court said, the court basically said that the approval by the special committee was ineffective because they were conflicted and because there was a lot of pressure from Musk. So that killed that process. However, the court also said that because they didn't disclose to the shareholders that the special committee was conflicted, then the vote was also ineffective to approve the package. So both of them dropped. And the court decided that the package is invalid. So what they did a procedure that is known in law as called ratification. We did some error, we want to fix it, and here is how we're going to fix it. We created a new special committee, and we are letting you know about all the flaws that happened in the process, and you can decide whether you want to approve it or not, and we will know today whether they approve or not.
Exactly. And I guess my question is, we're expecting it to be approved, and I say expecting it just given what we've heard from Elon Musk and the statement that he put out on X earlier. But I guess if it is not approved, what are the options then for Tesla? What are the options for Musk? What ultimately then would happen next?
So there are several options. Either it's approved or not approved. And if it's not approved, what it means that they will stay in Delaware court. They will wait for the ruling about the attorney's fee, and they will appeal. They will appeal to the Supreme Court in Delaware. Another option that they have, now they have tried to approve it as a ratification, meaning we want to approve the original decision. But they can have a different decision, a new one, in which they will again form a special committee, and then they might agree. Let's say if it's not 50 billion, it's 46 billion, whatever number that the special committee will arrive. And then they would bring it to the shareholders, and if the shareholders will approve it, then he will get the new compensation package. That's if it's not approved. These are the options that they have.
I guess my question is also just for viewers out there, when we're trying to think of exactly what this means here for shares. We spoke to an analyst last hour saying that if this is approved, that would be good news here for shareholders. We'll likely see some excitement surrounding this vote. But I guess in terms of that catalyst, when you take a look back at maybe other companies that have dealt with not this exact issue, but a similar type of issue, how much has it affected shares? And I guess what is the thing that our viewers, investors need to know at this point when they're trying to gauge whether or not this is going to be a catalyst to the upside or something that's going to place the stock under a tremendous amount of pressure?
So what shareholders need to estimate, and it's the question how a yes or no decision is going to affect the motivation and the willingness of Elon Musk to provide his new ideas and his new projects to Tesla as opposed to other corporations. And if they believe that approving the package, that would get him motivated to do all these transactions within Tesla, then they should view that in that light. But if they think that a no vote will get him to shift his attention to the other corporation, that might affect the stock price of Tesla.
Getting closer to the results from that Tesla shareholder vote. Here to help us break down the latest and what to expect, we're bringing in Nancy Tengler, CEO and CIO of Laffer Tengler Investments, and Lou Bassanese, President and Chief Market Strategist at MDB Capital Holdings. Thanks to you both for being here. And just to be clear where both of you are situated, Nancy is a Tesla shareholder. She has voted yes. Lou, not a fan of Tesla shares, doesn't hold the stock, I believe. In fact, it was the subject of goodbye or goodbye.
It was the. I'm a fan of Nancy though, so no ill will here.
Of course, no, it's not personal. Lou, you're here with us in studio. Get to you first.
Sure.
As you look at this whole drama unfolding, does it make you more convinced that you don't want to hold Tesla shares?
Yeah, I try and avoid drama in all aspects of my life. I think drama is the right word for this because, look, this is the first time in my life I will empathize or sympathize with Musk because he's having to renegotiate a pay package that was already approved. I mean, you shouldn't be tried for a crime twice. You shouldn't have to renegotiate a pay package twice. And at the end of the day, shareholders, it's in their best interest to vote for this because they have their principal at work and at risk. If Musk isn't incentivized, then their capital is at risk. So I think whether you think it's egregious or too generous of an offer, it doesn't matter. It's a pay-for-performance package. He has to deliver on the share price. What's happened in the past doesn't matter. It's what happens in the future for Musk. He's willing to put that on the line.
Well, actually, in this particular case, it's only about what happened in the past. He already hit most of the benchmarks.
Right.
He has to now he can't exercise his options for another 5 years. But even if the stock went nowhere from today, as I understand it, hopefully I'm understanding it correctly, even if it didn't go anywhere today, he still would cash out big in 5 years from now.
Ask any CEO if they feel confident they could hold their stock price stable for 5 years. That's a feat in its own, especially when you think about the market that they're in. You have declining sales, declining demand, declining margins. That's a Herculean task, to say the least, to be able to think you could do that for 5 years. Let them try it. Otherwise, it's nothing lost, nothing gained.
Yeah. Nancy, I want to bring you here as well. You are a Tesla shareholder, Nancy. As I understand it, you voted, for this pay package. How come, Nancy?
Well, I think for the reasons you've been discussing. I mean, Josh, he earned it. These were ludicrous targets at the time they were set, and he achieved them and surpassed them. And so here's a guy who's made a lot of money for shareholders over the years. I think it's interesting that the individual investors are the ones that kind of carried this over the line. And I think they understand that not only, has he changed the value of the company, but he's changing society. So this is somebody who deserves to be taken seriously. We've heard concerns from some who say, well, it gives one shareholder too much control. Well, you tell me who has the voting control at Meta and Google in those two share classes. The only way you can express your opinion is to vote with your feet, which is what investors did when Mark Zuckerberg pivoted to the metaverse. So there's a lot of irony in this for me. And last thing I'll say is, we don't really sit back and critique professional athletes' pay packages. Let's take LeBron James, who's earned almost $500 million in his career. Is that too much? Is it not enough?
Well, but we don't invest alongside LeBron James. We don't share in the profits from LeBron James. This is someone who you're investing in, and so you should have a say in what they make because you're the shareholder. So, Nancy, what I want to ask you, though, as you look at this, even if you think he deserves it, he hits the targets, et cetera, what do you say about the critics who say the board is too close to him, they're rubber stamping what he does? I mean, there's a whole host of various other allegations about his behavior. There was just the Journal article about SpaceX and some of his behavior with women on staff there. How do you reckon with all of that, even if you think that he hit the targets and he deserves the money?
I don't think that comes into the equation, Julie. I'm sorry. I'm not approving of that behavior. I think we've got a long list of folks that can get in line in front and behind Elon on that. The issue is whether or not there was a contract, in my view. Did he deliver on his objectives? He did.
But was the contract entered in good faith if the board is so close to him that they couldn't sort of see it in a clear-headed fashion?
That's a different issue. I think that the courts should take that up with the board. But if we have courts now second guessing, is the dividend payout too high? That the board said, is the share buyback program too big? I think the deal was done. He delivered, and whether or not they were too close or not, they're certainly much less conflicted than they used to be. But that may not be the right benchmark. But I think this is someone who has not only developed technologies that are really changing the world, but has delivered profitability. And for many years, no one cared about profitability at Tesla. And now he's actually delivering. Earnings growth is going to reaccelerate next year, free cash flow. So these other issues to me are kind of straw men. And I think you have to, as an investor, you have to take the financial aspects and the fundamentals of the company at heart. If I had to pass judgment on every CEO, I'd probably own 2 stocks.
Lou, I want to bring you back in here as well. One thing that interests me about this conversation when we talk about Musk is I can think of very few CEOs who are tied so closely to the company. How Just how foundational is he? Because our buddy Dan Ives over at Wedbush, Dan will always say, hey, Musk is Tesla, Tesla is Musk. Is that how you see it?
I totally agree with that. I mean, you used to think that Steve Jobs was Apple, but you had Tim Cook in the shadows that was really learning the business and could implement and execute.
And it turns out Tim Cook kind of Mount Rushmore American business.
Absolutely, but does Musk have that protege underneath?
Who's the bench?
I don't believe so. If he did, he wouldn't be three-timing at three companies as the leader. So I think they're inextricably linked. I agree with Nancy here that we should get over the concentration of voting power or ownership. That's symptomatic of every major tech company with Zuckerberg. But it's really the cure for all ills here is a higher stock price. You won't hear a lot of this noise and chatter if Tesla's performing.
In other words, the fact that it's gotten shelled like this is part of the issue.
I agree. Yeah, I think that's absolutely part of it.
Okay.
Well, so Nancy, let's talk about that then. Are we going to get a higher stock price? I mean, the stock's popping today on this, but fundamentally, the business has some issues.
Yeah. Well, it's trading like an EV company, and EV demand is slowing. The margins are shrinking. We've seen this with every great product. I mean, go back to Coach if you want to with handbags. As soon as the margins became well known, they had a number of competitors. So the thing to me that's attractive about the company is the mega pack business, which is the electric utility grade battery packs. That's growing faster and is more profitable than the car business. Autonomous is also of interest. I live in Phoenix half the year, and I can't go a quarter of a mile without seeing a Waymo. I think this is going to be the wave of the future. And then all of the AI initiatives that he will now stay under, if the court ratifies this, by the way, it still has to be ratified by the Delaware court, but that will stay under the Tesla umbrella. And I think that's where the future value of the firm is. So don't expect this stock to continue to appreciate like it is today. This is a 3 to 5 year time horizon holding, but I think the technology is there. And yeah, I agree with Lou. There are some succession issues. There have always been succession issues, and there have always been board issues. So I think that is stipulated, and I agree with all of you, but there's still money to be made in this stock.
Lou, I'll end with you here. Yeah. Put aside the shareholder meeting. Let's just kind of pull on Nancy's argument. Just talk about the fundamentals. How do you see it near intermediate term?
I mean, I look big picture. Fundamentally, every new technology goes through the same adoption cycle. You get early adopters, the first 20% of market share, and then you got to cross that chasm into mainstream adoption. And what we're seeing, price points an issue, reliability is an issue. I just don't see Tesla leading that charge across the chasm. I think you see bigger competitors in the automotive space that have a proven track record of operating longevity with margins at scale that are going to take over and dominate the next wave of growth in the EV market. But that being said, never count out Elon. He's a bit irrational, he can cast a vision, which I think is what Nancy's alluding to. There's AI, there's autonomous driving. There's a lot of things that could lead to future share price appreciation and business fundamental strength. But right now, I just don't see it. So.
Well, and given picking up on that sort of sometimes irrational behavior, capriciousness, what have you, Nancy, how confident are you that even if the pay package gets approved, even if Delaware lets it stand, that he keeps the AI at Tesla? Or could something else piss him off? And he says, guess what? I'm going to do something, pull something else away from Tesla.
Well, I didn't know we could say that on the air, Julie.
I don't know either, but I just said
it. You can now, Nancy.
Listen, I owned the stock many years ago before there were earnings on a relative price to sales ratio basis. It was trading at $180 a share. I don't know what that is post split, but this was when Elon was sleeping on the floor of the factory. He was smoking whatever with Charles Rogan on the Charles Rogan show and drinking whiskey at the same time. And I looked at this and I said, this is, and by the way, the turnover then was much greater and the board was even less independent. And so I sold my shares and I got a double. And the stock went up sixfold. So I disagree with Lou rarely, but I will disagree on this. This company has the best margins, and he's been reducing the margins voluntarily to take share. Free cash flow is about to accelerate. Earnings growth is about to accelerate. And he has the vision, and he will figure out how to converge all these technologies. I'm not, this isn't a personality contest for me. There's a lot of CEOs and companies that I own the stock and I don't actually like the CEO or how they operate, but they're good at their business. And as an investor, that's my job for my clients.
Tesla shareholders approving Elon Musk's $56 billion pay package moments ago. We want to get some analyst reaction as well from Craig Irwin, senior research analyst at Roth MKM. It's good to see you, Craig. So as you look at this, as a financial analyst, How do you model an event like this and the effect that it might have?
Let's frame this out, right? When Tesla, when the shareholders actually originally approved this pay package in 2018, Tesla was a $50 billion company. Today, it's a $570 billion company. Elon Musk has really been an alchemist. He's really driven the success of the EV industry. And, in many respects, he's a pioneer, and he's, I would say irreplaceable. So I'm not surprised the shareholders approved the package again. It makes sense. The last thing they want to do is chase him away and tell him, go work on something else. We don't want you at Tesla. Everybody likes him. I may be a big bear on the stock, but I think he's a highly charismatic guy. And I can really appreciate what he's done for the world.
Craig, let me ask you this. It's hypothetical, which I know financial analysts always love when I go there. But I'm just interested, if you took out your kind of crystal ball, what if the package hadn't been approved, Craig? What do you think the reaction would have been in the stock?
Oh, man, we could have seen it drop 20, 30%. I've always said, hey, Elon Musk is the most important person at Tesla. If you put him in one of his rockets and send him to Mars, he's still the most important person at Tesla. But, there would have been a reaction. I mean, the headlines would have been a big deal. He's put up his shares for Twitter, for the Twitter purchase. He's highly leveraged across his different companies. But, man, I cannot imagine him having quite the same passion if the shareholders first approve it and then don't approve it when there's a wrinkle in the overall process in Delaware. So, not surprised they're moving to Texas. I can't imagine Delaware being very popular in Musk in Musk's zip code. But the right thing happened today at the shareholder meeting, and they're laying out their vision for the future. I disagree on the vision a little bit. I'm a bear, but he's getting what he wanted at the shareholder meeting.
Well, and Craig, as you say, you're a bear. The company, despite his triumph today, the company has some underlying sort of secular issues, some of which have to do with Tesla, some of which just have to do with the market more broadly. Does the board have even less oversight of Musk after the vote today? And does that mean that he is less likely to address those issues that perhaps need addressing?
Clearly, Musk controls the company, right? The board does not control the company. The board is there for governance, and it's doing its best. But Musk is such a big personality and is such a charismatic and important leader, not just for Tesla, but I would say for the industry, that it's hard to imagine the board controlling him. He will control this company, and he will determine the future of Tesla. Now I think the board, if they were doing their job a little bit better, they would maybe rein in some of these very aggressive statements that are being made about autonomy. And the last earnings call, and he started to tap on this a little bit before I cut over, but the whole idea of a sentient humanoid robot on the market before the end of 2025. That conflicts with what I'm hearing from experts, right? The person that put the first humanoid robot on the space station is actually someone that I know from working with him in another company. He's telling me what Tesla has is state of the art for 2014. So extremely aggressive claims. FSD, great, 2.5. But if we're going to get to 4.0, it's going to consume as much electricity as the drivetrain does today. That's kind of a non-starter. So aggressive claims are not new. Hyperbole is not new to Elon Musk. He's got car company problems he needs to solve, really demand. That's why they're starting to do advertising. And then he needs to take more cost out of his vehicles. He's been a leader there in cutting cost. But that's painful for investors that really want to see earnings, EPS and EBITDA. So it's a tough setup. And the board, they have a role. They have a very important role, but Musk is clearly the leader of the company.
I think it's interesting. They announced that they won the vote, but then they played the please vote hype video again, just to show how great everything has been since they approved that pay package.
Well, you take a victory lap, Julie. Come on.
I guess that's what it is. So we'll see. It looks like maybe Elon Musk is coming out and greeting there he is. He's out there greeting the faithful now after he's won this vote.
Yeah, looking very excited, very pumped. He got his pay, at least for now, right? This still needs to be kind of gone through possibly the court system again. But it sounds like the redomestication happened, which he, of course, pushed for after his pay package was denied. So now the pay vote goes through. He's on the path towards getting that. Tesla shares are obviously higher here. So, I think we kind of saw this was going to happen. The question is, what will the vote totals be? They didn't divulge those yet. So that'll be interesting to see how close it came. I don't think it'll be so close. The question is, will it be less than 2018's totals for his pay package at least? And also I'm curious what the redomestication vote would be as well.
As you were following, Praz, you were following the story so closely. Are you surprised by what you heard today? Or no, this is how you saw it playing out?
I thought that it was going to pass no matter what, but then we started hearing these bigger funds kind of come down and vocally say, we're not going to actually approve this pay package given what we've seen in dilution effects and just the overall size of the award. And then on the other side, you saw people like Ron Barron and people like Cathie Wood talk about, well, it's where he's aligned with our interests. So I guess that was not surprising. But I think when the vote total comes out, maybe it will be significantly less than 73%. We'll see. Maybe over half. I mean, obviously after over half, but the question is how far above half will it be? So that's going to be interesting to watch for me.
Tesla's shareholder meeting is still underway, but listen, the headline is out. Elon Musk has won the Tesla shareholder battle to keep his record-breaking pay. And joining us now with the takeaways thus far, we got Yahoo Finance's Alexis Keeney and Praz Subramanian. Welcome, guys. Alexis, I'll start with you. So, all right, the headline's out. Now what? What happens next, Alexis?
Yeah, he kind of won the battle, but not the war, right? Because.
And what do you mean by that?
Well, so legal experts say that this is not the end. There's more litigation to come, no matter what the result of this vote. Elon Musk had and Tesla had an appeal on the table that presumably moot now. That doesn't seem like it has any legs. But look, you could argue this either way and say that this result, this vote itself, could harm shareholders. So we could see some action from shareholders not liking whatever effect this has on the stock. But also, you have to look at the big question here. And what's going to be litigated in the future is, did the board meet its fiduciary duties in putting this up for a revote? Did they have an arm's length negotiation with Elon Musk? Did they disclose all of the necessary conflicts between Musk and the board member who recommended it? And also, did they benchmark this pay package against other CEOs? And yes, there's the argument out there that there is no other analog for Elon Musk, that he's one of a kind, that you can't really compare what he should be compensated with to other U.S. CEOs of public companies. But that is one of the things that the courts would be looking at. Mostly, this proposal was unchanged from the last version in 2018, but for the fact that you had a board member, a one-member special committee for recommending this proposal on the pay side, who did not propose back in 2018 because she was not yet on the board during that vote.
Elon Musk still talking at this meeting, and he did talk about the possibilities for autonomy and what it's going to do for the company. So let's listen to what he said.
And if you just plot the points on the curve of how well autonomy is progressing and just believe the curve, it's headed towards unsupervised full self-driving very quickly at an exponential pace. So, and it's very clear that that will actually go to the point where it is actually far safer than a person driving the car.
So, I mean, obviously that's part of the longer term thesis on the company, but the matter at hand today was the vote. And he just made a very brief comment when he came on stage about that.
Yeah, I mentioned the Robotaxi fleet, about how it's going to be partially owned by Tesla, and the other cars will be like your car, for instance, and you can rent it out and be like an Airbnb-like experience. It makes money for you while you're gone. So he's kind of hyping up some of these features, but he's been talking about autonomy for years now, and talking about how it's going to be fully fledged by 2020, and then 2021, and then things like that. So now we're hearing this very quickly stat. So he's here. It seems to me like he's coming out, got the pay. How am I going to justify it? We're going to get that robotaxis out. We're going to get that autonomy out. It's going to happen.
Although we talked to Cathie Wood, and she has that target 2,600 now. And when you talk to her, I mean, that was a big part of the thesis. I mean,
but to Praz's point, just as it's been a part of what he has touted, that's been a part of the thesis, and it hasn't materialized. Tesla has achieved a lot, but rarely has it achieved what it set out to achieve on time, certainly. It does not have a good record of timeline. So yes, so her thesis, she may be right eventually. He may.
I'm just saying when you talk
to
to Tesla bulls, I'm just reiterating the point. It's a big part of why they're in the stock, right? It's this bet. They're riding along with Musk. And if you've been a retail investor, if you've ridden along with Musk, you've been, even some of the critics we've had have enjoyed some nice returns. Which
it depends on when you bought.
Absolutely. But even who did we talk to? Ross Gerber this week? I mean, when we pressed him when he got it, since 2014, right? That wasn't his issue.
I forget which analyst said this, but at the moment right now, you have Waymo and you have Cruise, soon actually having the cars, robotaxis being deployed by Uber and other services. That's the next step for Tesla. Are we going to see these sort of like geofenced, pure robotaxi tests happening in places like Austin or San Diego or Phoenix? That's the next big step. We see that, then it's kind of like, okay, this path is in play. But right now, a lot of it is just a lot of talk. Robotaxi is coming. $2,600 price target. $5 trillion valuation. We haven't seen the robotaxis yet. We've seen a nice
August?
FSD.
Is that when it comes?
I don't know. I mean,
Don't we have the big event?
Oh yeah, we had the reveal of the car, but when are we going to see the actual trials? I think that's the next big step that'll actually prove the case it's actually happening.
Not to mention the sentient humanoid robots, which he also talked about today. We'll see. Guys, thank you so much for helping with our coverage today, Pras and Alexis. Well, Cathie Wood has been a vocal champion of Elon Musk for years. She voted to support his pay package in today's shareholder vote and has high expectations for Tesla's stock in the years to come. Her firm, ARK Invest, expects shares of Tesla will hit $2,600 in 5 years. That would be a more than 1,300 percentage point increase from where the stock stands today. Cathie Wood, CEO and CIO of ARK Invest, is joining us now. Cathie, it's great to see you.
Great to see you, Julie. Happy to be here. Thank you for inviting me.
Of course. So you're one of the main people I wanted to talk to today about this vote, because you have been very supportive of Musk. So you voted yes today. Just briefly, give us your rationale for why you think this pay package is justified and it should stand.
Well, I should say from the outset, Elon Musk was willing to commit to working 10 years without any salary, bonus, stock compensation, unless he achieved these goals. And they were tranched. There were 12 tranches. But he accomplished what at the time, 2018, most people were saying was laughably impossible, number one. Now, we thought it was possible with brilliant execution. But most, if you listen to the analysts and other auto manufacturers back then, they more often than not used the word, possible bankruptcy. That's how much he was betting the company. And that he did. And he accomplished something phenomenal. And really, at the beginning, the value of the pay package was $2.3 billion. The reason it got to $56 billion was the performance, which was outstanding.
Cathie, I'm also interested to get your take on how critical you think Musk is to Tesla, because we've had analysts come on the show, Cathie, who cover Tesla, and they'll kind of suggest, in their opinion, he is almost foundational. They'll say things like Musk is Tesla, Tesla is Musk. Do you agree with that, Cathie?
I think Elon Musk has been incredibly important to Tesla and still is. Not so much on the electric vehicle side, that's on automatic pilot. It's on the autonomous side, which is the reason we anticipate the stock will scale to 2,600 in our base case, given our research, in the next 5 years. In fact, the probability of autonomous has gone up dramatically here because of breakthroughs in AI, which Elon and his team are harnessing. And this is a winner-take-most opportunity. The first autonomous taxi network to evolve and get people from point A to point B as safely and quickly as possible is probably going to win the lion's share of a given market. I think this will be country by country. Or maybe continent by continent. So, and we think Tesla is in the pole position, certainly here in the United States. And we were very pleasantly surprised that China has invited Tesla to partner with Baidu on the Apollo autonomous project. I think the signaling there is the Chinese companies are trying to go autonomous and beat us at this game, but they have been unable to do so. And just like on the electric vehicle front, they've invited Tesla in to help them, to help show the way.
I want to dig more into autonomy, but first I want to linger on the vote for a little bit more, Cathie, because what I'm curious about is Musk has been quite vocal of what he wants here. He wants 25% voting control of Tesla. He has said that if the pay package didn't go through, although it seems like indications are it's going to go through, but that if it didn't go through, he was going to take some of his AI technology to one of his other endeavors. If the pay package indeed does get passed, what's your level of confidence that he won't still at some point get angry at something? He is mercurial. And take that AI technology elsewhere?
Well, first of all, and just to finish off on the last question, once autonomy is in place, and we're almost there, anyone who has FSD, full self-driving, today knows that every 2 weeks now we're seeing leaps in performance. And so we do think that autonomous is almost here. And then you can ask me the question after that happens. In terms of taking his AI strategy elsewhere, I think what many people do not understand is Tesla is the largest AI project on Earth. Autonomous mobility is the largest AI project. We see revenues scaling in the entire ecosystem globally to $8 to $10 trillion from essentially nothing now in the next 5 to 10 years. And the taxi platforms will get half of that, again, country by country or region by region. So we think that, I've lost the question, Julie, I'm so sorry. It was about the package. Oh, yes. Would he take his marbles and go somewhere else?
Yes.
Well, I think what many people don't understand is the most important variable, once you've got the domain expertise and the AI expertise, is proprietary data. And Tesla has probably more proprietary data than almost any company in the world. Elon Musk is the CEO of this age that we believe is going to best capitalize on the convergences between and among technologies. Autonomous mobility is 3 of the platforms: robotics, energy storage, and artificial intelligence, converging technologies that are going to create explosive growth. The other companies, we don't think are going to change humanity as much, or the environment, shall we say, as much as Tesla is. And I think Elon is passionate about that topic. The other companies are AI companies. He's going to harness AI and create, in the case of X, the Everything app. We do think that's his plan there. But the biggest project is this one. The most challenging project is this one. And I don't think he's going to leave until he sees autonomous on, I guess you could say, automatic pilot.
And Cathie, as you're kind of suggesting there, you know, Musk is a busy guy. He's always been a busy guy, but he seems busier than ever. I mean, as you're mentioning, Tesla, Neuralink, you know, XAI, X. I mean, are you, as an investor, Cathie, are you ever concerned that he's spread too thin at this point?
I am not, because again, of this convergence idea, we almost need CEOs to become multidisciplinary in order to understand how the world is going to work. And Elon epitomizes that, right? In terms of AI in each of the projects, autonomous mobility here on Earth, in space, and AI projects elsewhere. So this is really, even Neuralink, there's AI, they're harnessing AI there as well. So I think that he is becoming a better executive from a strategic positioning point of view because of his focus on these various AI projects.
Cathie, I know you have a longer time horizon. We've talked about this frequently, as that's evidenced by your firm's now analysis going out to 2029 for Tesla and where it should be. But Tesla's down this year, and your benchmark ARK ETF is down this year, but it's also down over the 3 and 5 year periods. And so I'm just curious how you're thinking about strategy with regard to Tesla and more broadly given that.
Well, given our price target, as you say, Julie, we have a long-term time horizon. The reason Tesla is down is because EV sales are much weaker in this macroeconomic environment, and there's price discounting. Many people ask us about that. We would worry more about the traditional auto manufacturers as electric vehicle prices come down below gas-powered car prices. So we've got our eye on the prize. It's a 5-year investment time horizon. You are right. The 3 and 5 year numbers, we have not met our 15% compound annual rate of return over a 5-year period. And I think, and I know the reason for that in this particular case was the shock that we saw coming out of the Fed, a 24-fold interest rate increase in little more than a year, which absolutely crucified long duration assets. ARK epitomizes in the equity world long duration. We have a 5-year investment time horizon, whereas most have 1, I would say, these days. So we understand why. We think we've paid our dues in terms of rising rates. If anything, the recent inflation data suggests interest rates will fall this year, and the number of dot plots is increasing once again. That should accrue to the benefit of our strategy. This year, the backup or the underperformance has had a lot to do with going from 6 interest rate cuts expected at the end of last year to at one point 0 or just 1. Now we're up to 2. And we think as inflation continues to surprise on the low side of expectations, which we do believe because innovation is deflationary, gasoline prices are coming down now. Rents are coming down in many, many cities. So we do think interest rates will follow. If we were one of the worst disadvantaged or the worst hit among strategies, our long duration strategy, just like long bonds, long duration strategy there too, they were hit harder than they have been since the 1700s. So very unusual experience. If that's the reason we got hit so hard, it stands to reason also that as rates come down, we should benefit. And maybe the market needs to see more from the Fed in terms of rhetoric here, but we have started to outperform very recently. And we think what we've experienced in the last few years is the most amazing concentration of performance into just a few stocks, now the Mag 6. And in fact, Goldman did a study about concentration, which says this is the highest concentration ever, even worse than during the Great Depression, when investors were seeking companies that they knew would not go bankrupt. Big cash cushions, big cash flows, much like now. So there is still fear in the market, which has disadvantaged our strategy. When risk appetites pick up, and investment time horizons extend a little bit, as they do during bull markets, we should enjoy a nice rebound. We think last year we were up 68%, beating all the major benchmarks. And that was simply because of the whiff of lower interest rates. We think that whiff will turn into a reality this year.
Cathie, finally, as you have that outlook, right, for the Fed to start cutting rates, for an improvement in the portfolio, to circle it back around to Tesla. Tesla's the top holding in that ETF at about 11% or so. After today's vote outcome, would you anticipate even adding to that stake?
Well, we cannot add to any stake when a stock is at 10% or higher. We can let it run. We don't have to cut back right away. But if a stock is above 10%, it has outperformed other stocks, because we've usually gone to 10%. It's outperformed other stocks. And so, again, we can let it run. We just can't buy any more if we're at 10% or more.
Gotcha. Cathie, thanks a lot.
Cathie, thank you as always for joining us. We appreciate your time.
Thank you so much. Thank you both. And we're looking forward to a big bull market ahead as interest rates come down.
Thank you, Cathie.
Tesla shares are higher pre-market. Here to break down the results and the details of the vote and what we learned in the shareholder meeting, we've got Yahoo Finance's Pras Subramanian. Pras, my goodness.
It was Muskapalooza over there, right? I mean, just really cheering. It seemed like they actually increased the volume when they announced the results of the vote for his pay. The people cheering was all of a sudden loud and really kind of raucous. So yeah, big win for Musk and Tesla here. Obviously for him personally, he gets his pay packages. He's saying he's very excited. Very happy with the shareholder vote, but also that redomestication of the company in Texas that also passed. Kimball Musk and James Murdoch, they also got approved there. But I think the big picture stuff here is that this overhang of his compensation issue is now is gone for now. It's going to be sold legally, sort of has to be worked through in the appeals process. But it seems like even after all this disclosure, after the lawsuit, the voters were informed of what this package entailed at this point, and it seems like potentially a better case for Tesla and Musk right now.
Yeah, Pras, and this is also, I think, very much of a similar type of playbook that we've seen from Elon before, right? Yes, he does have this victory, but then he's also dangling something out in the distance here. When we were talking about those lofty expectations, now he's talking about the fact that he's confident that Tesla could actually reach 25 trillion here in market cap. I mean, putting that into context, is this something that you think all those people in the audience, they are huge Elon believers, is that something that they actually think is realistic? I mean, put some of his lofty expectations and his dreams and hopes that we've heard over the years and how realistic those have actually come, whether or not they've actually come to fruition.
Yeah, I mean, there's been two big things he talked about were robotaxis, and he sort of spilled a little bit of the beans on it, saying that, well, it's going to be a fleet managed by Tesla, and also your cars, personal people's cars, that you can rent out in an Airbnb-like fashion with the app. So talking about how that's the future, that's happening. But at the same time, we're not seeing them doing these sort of tests that Waymo's doing, that Cruise was doing with sort of geofenced actual robotaxi pickups. We're not seeing that yet. So that's the next step that I think the analysts want to see is, are you guys going to be testing this beyond just FSD on the streets with regular people? Also, Optimus robots, right? That's part of this 25 trillion or whatever plan he's talking about. He said last night, he thinks that there'll be a robot for every person on Earth. So 10 billion robots he's envisioning, which would be trillions of dollars in market cap and business there for them. But again, this robot, we've only seen it in very basic sort of manual descriptions here and what it's been doing. So we haven't seen it actually in work, kind of like in the factory or in someone's house. So that's another big leap of faith that a lot of investors, and from last night, they were very sort of just sort of enthusiastic about Musk and his remaining at Tesla.
Ross, all the best to you as you start saving up for your Supermanium bot. Tesla bulls are charging, a double entendre, betting big on CEO Elon Musk. Our next guest says that he sees Tesla's valuation north of $1 trillion in 2025. Dan Ives, Wedbush Securities Managing Director and Senior Equity Analyst, joins us now. We might have even had a typo in there. I think you think that this could go even higher here. So ultimately, Dan, let's break that down here. What is your vision for how they can get to your market cap that you're anticipating by 2025?
Yeah, I mean, first off, Brett, this puts that Delaware twilight zone in the rearview mirror. I mean, now with the comp package, I think that was a $20, $25 overhang on the stock and now moving to Texas. But when you look at the Tesla story, autonomous FSD, I could argue it's one of the best AI plays in the market when you look out the next 2, 3, 4 years. This is just the start of the next chapter, the next book, as Musk calls it, in the Tesla growth story. I think it's one of the best disruptive names in the world.
Right, Dan. So put some of these lofty expectations then, I think, into a more realistic picture for us. You're very confident that you're going to see, or that we could see, maybe Tesla reach that $1 trillion in value here in 2025. Talk to us about what the catalysts are for that growth, at least in the short term, and then compare that maybe to the longer term picture and some of these longer term believers when it comes to Tesla.
Yeah, so let's walk through the setup. Look, New York City cab driver is expecting a bad June quarter. So no one's expecting great things for June. But I think that's the last tough quarter, tough comp, as then we turn the corner, demand stabilizing in China. And then August 8th, I think, is going to be a historical day. Robotaxis, autonomy, that's kind of the vision. I mean, no different than what we saw from Apple this week in terms of Cupertino and AI. That'll be them unveiling the broader strategy. And then I think you start to then see the execution of the strategy, along with the sub 30K vehicle. We think, I call it a Model 2.5, gets released early next year. In our opinion, the bottom's in Tesla. Bears go into hibernation mode. And I think those thinking that comp package was going to get voted down had a little too much champagne.
Is Elon Musk too optimistic with his $25 trillion target that he thinks the company can get towards? And what type of company are we talking about at that point? Is it an automotive company? Is it a technology company? Is it an energy company?
Well, look, we've always talked about in the show, this is a disruptive technology company. And I think that's where, look, the bears will say it's a car company. They've said it from, 100 million up to $1 trillion. So the point is, this is disruptive tech. And now, when you look at autonomy, software, FSD, that's the vision. But also, this is one that you're going to see 3-4 million vehicles per year when you look out 4 or 5 years from now. And again, betting against Musk, it's been the wrong move. And I think this has clearly been a turbulent period. But I could see that Cinderella story starting again as we go into 2025.
All right, Dan, when we talk about a little bit of a longer term trajectory here for Tesla, we heard lots of talk about Optimus, the robot, and exactly what maybe Elon Musk thinks it's going to do to Tesla's valuation. He was talking about $25 trillion here in valuation. How are you looking at the robot from an analyst perspective and ultimately what that's going to do to Tesla's bottom line?
Yeah, I view it as optionality. Again, in terms of from a valuation perspective, none of that's being valued into the stock. Now, looking out, it's really more about the AI components of it. And we've talked about, I think 3-5 years from now, you will see more and more, we'll call it robotics within consumer households. Well, that's going to be AI driven. And I think that's something that it all goes into this AI revolution. It's not just about Musk and Optimus. It's about the chips from the godfather of AI, Jensen, Nvidia. You're seeing a fourth industrial revolution play out here. Tesla is going to be a main player in that. And I get it. Investors still view it as a car company. But this is just the early stages of broader where Musk is going to be taking Tesla.
How soon do you think Tesla needs to uncloak what a new vehicle model would look like in order to maintain some of the demand generation that we're seeing, or at least in this demand generation cycle, maintain consumer mind share?
I'd say by March or April 2025. I mean, so this is something I see coming out before the Masters next year, where they could ultimately come out with a strategy, lay it out for a second half delivery, sub 30K. And I think that starts the next phase of the Tesla growth story. And I think Tesla, we look what happened with Apple this week, betting against these disruptive technology companies with massive install base. It's just been, I think it's the wrong move in what we view as a 1995 moment.
Dan, just circling back to where we started the conversation, when it comes to this vote, some of the concerns surrounding Elon Musk over the last couple of years has been that he's been distracted. He has too much going on. When it comes to some of his other companies, and Tesla really requires someone at the helm who's putting all of their focus on Tesla. Are at least some of those concerns valid in your view? And which ones?
Look, Musk is Tesla, Tesla is Musk. And obviously, I'd say most followed human on the world in many ways. A lot of balancing act. Now, I do think there was a phase that he went through where wasn't maybe the pilot on the plane. We talk about the adult in the room. But you're seeing old school Musk return now. And I do think this has reinvigorated him in terms of the vote, the confidence. But you're right. I mean, Tesla's the golden child. They need Musk, but Musk needs Tesla. And I think that continues to really be the focus, especially with AI, I believe, being under the hood of Tesla, as the next stage is getting Musk to the 25% voting rate.
All right, Dan Ives, always great to talk to you. Thanks so much for making time to join us here this morning. Wedbush Securities Managing Director. Dan, have a great weekend.
Tesla shares fractionally lower, just flat barely to the downside right now, after shareholders reapproved of Elon Musk's multi-billion-dollar pay package. Now the stock is down nearly 30% compared to last year. You're taking a one-year look here, and we're taking a look at the shares over that 52-week period. Our next guest has been shorting the stock since 2020 and sees more risk to the downside for the EV maker. Per Lakander, who is the Clean Energy Transition CEO and Portfolio Manager, here with more. Per, great to have you on the program with us. First and foremost here, how much slippage do you think we could see?
Yeah, thanks for having me. Well, in my view, Tesla is the biggest stock market bubble in world history. And we have just seen the start of it. You see that the models are aged, and valuation is absolutely insane. Earnings are falling off a cliff. I would say they're falling 50% this year. I have like 140 earnings for this year. I think consensus is 265. It was like 5 at the beginning of the year. So if you think of it, $1.50, how do you value that? I think given that there is no growth there, 10 times earnings is very generous. So my price target is $15. Having said that, I think this in the end is going to be a donut because once it gets into those levels, there's so much going on here in terms of class action lawsuits, boards, which is paying itself enormous money, Elon, which is paying itself enormous money. So I think this is hugely dangerous, and in the end, it's going to prove to be the next Enron.
Lots of questions. I guess first, just starting off with some of the concerns that you listed. Those concerns have certainly not caught up to the stock price. And even taking a look at the reaction that we saw from some of Musk's comments last night, there initially was some excitement surrounding the growth, at least that he sees for Tesla over the next several years. I guess my first question to you is, what's going to change the perception here or the minds of investors? Because up until this point, we haven't seen some of those concerns that you've laid out reflected really at all in the stock price.
I would say yes and no. Let's not forget that the stock is down 60% from all-time high at the same time as the market has gone up 20-25% in the meantime. So, but it's step by step. Where what will need to happen here is, of course, that the retail crowd needs to give up, because that is what's holding up this stock. Valuation makes absolutely no sense. Trades on.
Per, do you think the retail trader, though, will give up on this? And I think that that's so interesting, especially surrounding Tesla and that excitement and exactly what that group of investors has been able to do around the broader story here for Tesla.
but everyone runs for the hills when it goes down. So the stock needs to go down. Once it goes down, it's going to go down more. And I think what drives it down is earnings. And I think we are very, very close to the turning point, because so far it's been a slippery slope. They've sold cars poorly, therefore they lowered the price, therefore earnings went down, and it's circulated. Now they are very, very close to ways end here. This quarter, they have really introduced almost 0% interest rates on the cars. When Q2 results come, if you think Q1 had terrible deliveries, but actually not that bad earnings. In Q2, they have done everything to get cars out of the door, and it's gone relatively well. So deliveries are not going to be great, but they're going to be okay. But earnings, 25th of July, are going to be absolutely terrible. There is a chance that the company will be loss-making. And if it's loss-making one quarter and then it's loss-making in Q3, I can guarantee you this is double digits. And then I think many fanboys will run for the hills, and then we are at my 14.
Earlier in the hour, we spoke to Dan Ives, Wedbush Securities analyst and managing director, actually. Here's what he had to say about the EV maker's future. And I want to get your reaction on the other side.
But also, this is one that you're going to see 3-4 million vehicles per year when you look out 4 or 5 years from now. And again, betting against Musk, it's been the wrong move. And I think this has clearly been a turbulent period, but I could see that Cinderella story starting again as we go into 2025.
Now, you are clearly saying that there is a reason to bet against Musk, but it seems like there are a lot of, at least shareholders right now, regardless of whether or not retail is the single proponent that's holding up the stock, that you believe there's reason that you should bet against Musk. As long as Musk is in the helm, does it seem like this is a company that is eventually going to get towards what you've set forth in your own target?
So what I think he's missing is what's going on in the overall EV space. I have to go a step back a bit. We came out of COVID. The auto industry was constrained. There were early buyers of EVs. You made a killing. And Tesla was almost a monopolist, and they made a killing on this. Then when things are very good, of course, everyone piles in. So all the conventional auto producers are piling in, and these models have started to come in 24. More of them are coming in 25. Tesla has nothing. So I'll tell you, there is a true cycle which is playing out in EVs. No one, being battery producer, auto producer, lithium miner, no one is going to make money over the next couple of years. And then Tesla has gone from being the leader to be the laggard. So, you can't have a stock being at 500 billion market cap if you make no earnings. And that's not been the case in the past. So I'm extremely convinced. And, just listen to what GM, Stellantis, Mercedes, whatever are saying on EVs. They don't make any money, and it's going to get way, way worse before it gets better. There is a long story, but that story is for 27, 28.
Per Lekander, who's the Clean Energy Transition CEO and Portfolio Manager. Per, thanks for sharing some of your thoughts here today. Appreciate it.
Thank you.
All right, let's talk about Tesla, because shares here moving not too far from the flat line. Now they're actually off just about 2%, so a reversal here from earlier action after shareholders approved Elon Musk's pay package yesterday afternoon. At the meeting, Musk also predicted that Tesla's Optimus robots could eventually lift the company's market cap maybe all the way to $25 trillion. For more, I want to bring in George Gianarikas. He is Canaccord Genuity's managing director. George, it's great to have you. So first, just your reaction to not only the approval, but really more so those lofty expectations and goals that we saw laid out from Musk last night.
Yeah, good morning. Thanks for having me. So first, on the shareholder meeting, we were very encouraged that shareholders approved the previously approved pay package. Obviously, Elon Musk is critical to the success of Tesla in the past and in the future. He did make several comments that you alluded to regarding the future of robotics, the future of AI through full self-driving. And we're very bullish on the long-term prospects of full self-driving, and we're bullish on robotics. It's just not something that, at least from a robotics perspective, we see impacting our estimates anytime soon. Now, as it relates to full self-driving, we're very, very bullish on the medium to long-term prospects. And what we need to hear more about, in the near term and on the conference call is what take rates are. If you recall, Tesla recently reduced the price of its full self-driving software. If you buy the annual subscription, it's come down to $99 a month. And we really need to hear how our consumers are reacting to that, because that is really going to drive our earnings estimates over the next several years.
Talk to me, George, about what you'll be looking at to suss out what you just mentioned. I was really interested in your note that you commented on the potential for a Tesla to start looking like an AWS when it comes to full self-driving. If you saw more R&D into something like chips, for example, would that be an indication to you that that is an area of more growth potential for the firm?
Yeah, so Elon Musk talked about leveraging the inference compute on some of the full self-driving ready vehicles long-term to create something that looks like AWS that he can then sell and create a revenue stream around. That's probably going to impact the P&L, 2030 and beyond is our guess. But in the very near term, like I said, leveraging the AI that he's created within Tesla, the real world AI around full self-driving, really will drive the P&L to the extent people adopt it. Do people want to buy the service that enables their vehicles to drive themselves? That's super critical. And we think it's going to be a really important driver over the medium to long term. But in the near term, are people reacting to the price cuts that they got and that 1 month free service that he enacted a couple of months ago? That's very important to the near term of the firm. And with regard to near-term sales, now with something really interesting that he said towards the end of the conversation, it was 2 hours long, was that there's still, it's tough sledding out there for EVs, and that they still expect year-over-year growth. What's interesting about Tesla stock at this moment, it's clearly been an underperformer relative to the other Mag 7 over the last, call it 12 to 18 months. And what's driven that is earnings revisions, right? Ultimately, what drives stocks are earnings revisions. And those earnings revisions have come in place because EV sales have been sort of weak across the world, including for Tesla, and their margins have been dramatically impacted. Now, what could happen from here is that those earnings revisions may at least stop going down and may start inflecting upward. So even though it's tough for EVs, it continues to be tough for EVs, if they can grow year over year, and we have 3% year over year growth in units, that's probably better than most people think. And that earnings inflection will be super important to the near to medium term performance of the stock.
George, I'm curious, how do you view Tesla? Where are they positioned in this AI play story? Because we heard from Musk last night. He by far thinks that Tesla is leading this race. Do you agree?
Look, they are in an incredibly enviable position relative to other companies for real world AI. And what real world AI means for us in the near term is full self-driving, maybe long term, moving robots around. The other companies that we're very excited about in real world AI are companies like Mobileye that are enabling other vehicles to drive themselves, and a company called Aurora, ticker symbol AUR, that's enabling Class 8 vehicles to drive themselves, hopefully starting at the end of this year. So they're clearly in a leadership position. There are other companies that are vying for that leadership position, including Mobileye in passenger, and Aurora in trucking. And we think we're incredibly bullish, like I said, about the medium to long term of full self-driving for Tesla. We just really need to hear about those take rates and how consumers have reacted to that price cut.
How much does Optimus play into the idea of Tesla as an AI play moving forward? And obviously Musk seeing that they could earn $1 trillion a year from bots. You mentioned that is probably a little bit further off, but do you think that is a reality?
Yeah, I mean, look, he said yesterday that for every human on Earth, we're likely to have 2 robots per person, right? So that's, in the tens of billions. I admire him quite a bit. He's accomplished many things, and to his own credit, he said that being optimistic, irrationally optimistic, has led to the construction of a massive factory in Texas and to this, behemoth that we call Tesla and SpaceX. we don't have optimism in our numbers anytime soon. We'll see. I mean, they said on yesterday's event that they'll have 1,000 humanoid robots next year, plus working at the Tesla factory. Clearly amazing, not so impactful on the P&L. It's something that is very important for the story. We'd call it, 5 to 10 years out. We're not so sure that it impacts the P&L anytime soon.
All right, George, thank you so much for joining us. We really appreciate it. That was George Gianarikas, Canaccord Genuity Managing Director. Thank you so much, George, for being here with us.
Thank you. Hey, our top story today, Tesla shareholders reapproving Elon Musk's multi-billion-dollar compensation package, which was struck down by a Delaware judge earlier this year. Now, there's a lot of chatter across Wall Street about what ripple effects this has for the company, shareholders, and the value of the stock, of course. Taking a look at Tesla shares 90 minutes into the trading day, we're seeing a reversal of some of those earlier gains. Here with more reaction, we've got Dave Harden, Summit Global Chief Investment Officer. Dave, let me just get your reaction to what we saw in the voter and the shareholder vote yesterday.
Well, I think that there's a couple things. One, it does align Musk's interests with the company. Let's face it, he's very incentivized now. It encourages him to drive Tesla's growth, and it helps to retain him. He's not going anywhere. And it's a big vote of confidence. That's the pros. The negatives here is very easy to see. This is excessive. This is a very large compensation package. It's significant dilution possibilities for shareholders. And it causes one to want to do things that are risky. Now, that's nothing new for Elon Musk, right? So we know his personality, but it also creates the possibility for income inequality throughout the company. If someone right above you is making 56 billion and you're making 56,000, there's this large, disparity. So what does it do to the workers as well? They just laid off a lot of workers. So these are kind of the issues at stake right now.
And so, Dave, it was perhaps a little bit of a tease for that SOT here. We do have it now. We've had a couple guests on Tesla today, and we've seen a couple different perspectives and opinions about where the company's headed. Let's take a listen, and then I'll get your reaction.
Betting against Musk, it's been the wrong move. And I think this has clearly been a turbulent period. But I could see that Cinderella story starting again as we go into 2025.
Tesla is the biggest stock market bubble in world history. My price target is $15.
So, Dave, what say you? Where do you fall on this debate?
Well, I don't know if it's going to $15, and I don't know if it's going to the moon, per se, but I wouldn't buy Tesla at this time. Elon Musk is an outspoken leader, and I think that there's going to be much more chatter and much more opportunity to get in when you can see clearly that the growth is going to happen. So the major growth is behind us. We know that. That's very clear. But I think you're going to hear more about that in the future. So the other thing I would say is that this is, 1.6 beta stock. This is an 80 plus PE. I know that's not the story here, but there's a lot of unpredictability with Elon Musk. So if you're a managed risk investor, I would probably hold off on this investment. If you're a growth investor, I would also probably hold on. So my thing right now, I would recommend to hold on Tesla and wait. If you're in the shares, I'd probably sell.
Interesting. Okay, so Dave, this comes back to the importance of Elon Musk. And Dan Ives was telling us earlier that Tesla is Elon Musk is Tesla. And there's always going to be the overhang, the thought for investors about how much time he's committing to Tesla versus his other entities. Does this solidify for investors that they're going to get even more of his attention because it's always going to be divided. It's never going to be undivided.
Well, he absolutely. It gives him more attention than he's had before. That is for sure. But he is a serial entrepreneur. He's a producer. He's a doer, right? So I don't think this is going to stop him from wanting to make things happen in other areas of his life and in other companies. That's for sure. But I do think that this does align his interests. And so for those that are worried about Elon, worried about keeping him with the company and worried about his focus, I can see why they approve this to keep him there because it definitely does that.
And so Optimus, a lot of people are trying to also figure out, does robots change the investment thesis on this company?
There's a lot of opportunity here for sure, but no, I don't think that does that at this time. I think that it's more of a wait and see. Let's see what he does. He's done a lot of entrepreneurial things and brought this company to be where it's at today. But what can he do with it from here on out? That's the question.
Even as we look here on out, what kind of company do you believe this is, Dave? Is it an automotive company? Is it a technology company? Is it a energy company?
Well, with this new package, it's not going to be just an automotive company. There's not enough room for growth in just automotive alone. He has to turn to AI. He has to turn to other areas to get the growth that he wants. We know the vehicle sales where they're at. They're not going to move that much for his taste. So this has to be more than an automotive company if you're investing for growth. If you're investing for automotive, then you're probably in the right space. Slow growth ahead.
And you mentioned whether or not investors should be investing in Tesla at this juncture, and you said no. So where else are the opportunities you would be looking at?
Well, there's a lot of other opportunities. For example, if you're really looking to invest in Tesla, you're looking for growth. And I don't think you've missed out on some of these AI momentums that are happening right now. And let's just take a look at Microsoft. Microsoft has high quality earnings. Microsoft has AI opportunities that it's just beginning now to unleash. And I think the next phase of AI is in the software and unlocking the value of AI within. Wouldn't it be nice if AI was right in Microsoft Excel, Microsoft Outlook, Microsoft, et cetera? The software opportunity for AI is just beginning. And so I think there's other opportunities for growth that are much more prevalent and at hand, where Tesla, I think, is in the future if Musk can do it.
All right, Dave Harden, Summit Global Chief Investment Officer. Thanks so much for taking the time here with us today. Appreciate it.
You're welcome. Thank you for having me.
Well, Elon Musk's famous optimism is just one of the reasons that Tesla shareholders voted to approve a pay package for the CEO that could be worth as much as $56 billion.
I think just based on vehicle autonomy, we can 10x, more than 10x the value of the company. I believe that's what will happen.
He believes that's what will happen. Will it? Who knows? Where does Musk and the EV maker, where do they go from here? Joining us now is Gautam Mukunda, Fletcher School of Law and Diplomacy lecturer and author of Picking Presidents. It's good to see you again, Gautam. So you recently wrote about that you did not necessarily think that Musk is the right leader for Tesla right now. Shareholders seem to disagree, and they're willing to pay him for the privilege of having him continue to run Tesla for now. What do you think that he now even has more of sort of carte blanche to run Tesla as he would like?
He won, and it wasn't a close call, right? He won by a lot, and so there's no way he doesn't interpret this as something of a free hand, and he should. I mean, like, shareholders have supported him even after a more than 50% drop in the valuation of the company over the last few years. That's a pretty remarkable statement of confidence on their part. And I'll just start sort of what I said was, it does not take anything away from the enormous scale of his achievements in building Tesla, and not just Tesla, right? Tesla is not his most impressive company. I would say that's SpaceX. So either one of these companies would be remarkable. Both combined is even more so. It doesn't take anything away from the scale of those achievements to say that the challenges that Tesla is facing now are not the same as the challenges that he triumphed over earlier, and it might take a very different skill set for those.
And so, Gautam, are you implying then, that maybe they should somebody on the bench at Tesla should be being groomed here to take his role at some point?
So Tesla is unique, right? Because you cannot imagine Tesla without Elon Musk. I mean, like, you could say you couldn't imagine Ford without Henry Ford, but eventually that problem had to be faced. In Tesla's case, well, I don't know what Tesla's valuation would be without Elon, but it would be a lot lower. My suggestion would actually be a little different from that. It's that the board should take a much more independent and active role in the company. What I would say is that there is no such thing as a genius so brilliant that all of their ideas are good ones, or even their good ideas can't be improved by pressure from other smart, capable people. I think the board has given him sort of total freedom to do whatever he wants in ways that, the last few years of Tesla's performance, just they're not working as well as they used to. And it's time for them to step in for things like, the Cybertruck, for example. Maybe when that was decided to devote a huge fraction of the resources of the company to that, the board should have stepped in and said, does this really make sense? Can you really make a case as to why do this? What's the analysis to why this is a good idea? And it would have turned out, maybe the decisions would have turned out a little bit different.
It doesn't seem like there's any chance of that imminently, certainly, that's going to be happening. And in the meantime, he had made this threat against the company that he was going to take his attentions elsewhere if this pay package didn't pass. And now that seems to have dissipated. But just as a reminder, he runs a lot of companies, right? Tesla's not his only company. He runs X, of course. There's SpaceX. There's XAI. And so going forward, does this sort of draw him back to Tesla to some extent because he did get this victory?
I mean, it's hard to know. Remember that before this whole debate over this current pay package, he had actually said that his expectation would be that there would be another even larger one that would be granted to him after this one came through. So, I mean, he has sort of already said that this is not enough. Now, that being, once he said it, it's easy to say that, well, he mean it was that just a bargaining thing, but it's kind of a striking thing for him to say that that 25% of the company is not enough. I'll also say it's a little hard to see how that threat is plausible. Tesla is by far his largest source of liquid wealth. And, for him to monetize his assets in SpaceX, for example, would be pretty complicated. And so I'm not sure he has the ability to walk away. But he's Elon Musk. He does lots of things that no one else would do. I would never say anything is impossible. I would be concerned if I was the board, and I would look very closely at, again, the SpaceX model, right? So Elon does not run SpaceX on a day-to-day basis. That's Wynne Shotwell, and she's done an extraordinary job. She is, by most measures, I think, has a really good argument to be the greatest aviation executive of the last 50 years, maybe more than that. It might be time for the board to say, hey, if you want to spend your time on other things, let's find a Wynne Shotwell for Tesla who can be your partner, not your replacement.
Tesla shares moving to the upside here, up nearly 1.5% after the EV giant's shareholder meeting. At that meeting, Musk predicted that Tesla's Optimus robots could eventually lift the company's market cap to $25 trillion. But what are the other catalysts that Wall Street is watching? For a deeper dive into Tesla's growth story, we are joined by Itay Michaeli, U.S. Auto Parts and Analyst here. Thank you so much, Itay, for joining us here. I want to start on what you are anticipating based on what we heard from Musk, specifically with regards to new product announcements. Sometimes it's tough to kind of suss out whether or not Musk's approach is necessarily going to prove to come to fruition. What did you make of the teasing out of certain new products to come at that meeting?
Absolutely. Good morning, and thank you for having me. Yeah, there is a lot of anticipation for the next round of new products from Tesla. Last quarter, they did allude to launching more affordable electric vehicles off some of the same platforms they have today and leveraging some of the manufacturing capacity they have today and launching these vehicles next year. There's really two things people are looking for in these vehicles. The first, of course, is the price point, just given that EVs do need to become more affordable and there's certainly opportunity for growth at lower price points. But the second thing that we're particularly looking for is really just the overall design and content of these vehicles, because the ultimate question, I think, for investors is going to be that will these vehicles generate the same type of excitement we've seen for other high volume vehicles in the past, such as, of course, the Model 3 and the Model Y? If the answer to that question is yes, we do see scope for sentiment to improve as the focus would then turn to these new products driving additional growth, versus which is really needed just given some of the demand headwinds that both electric vehicles, of course, are seeing around the world, and that Tesla specifically is facing given some of the aging out of their current portfolio.
So you tied two follow-up questions on that. One, what do you think prices should be at or need to be at to really spark that demand? We've been talking a lot about lower prices, but I guess more specifically, is there a range that you think is critical for Tesla to get to? And then two, when you talk about the Tesla story specifically and what these new products, what these new vehicles need to be equipped with in order to generate that excitement, what do you think needs to be incorporated in order to see that excitement play out in the market?
Yeah, so there's a lot of technologies, but whether it's in the interior of the vehicle or even others that could just create more of a change, right? When you think about large car companies as they grow, there does need to be different design languages, even different sub-brands within those vehicles to really appeal to a wider audience around the world. Because when you look at different regional tastes and regional consumer preferences, they too tend to vary not only by country, but even within regions in certain countries, including here in the US. So So, we want to see a lot of innovation, maybe different design languages, but really whatever it takes. Of course, Tesla's very good at innovation and very good at product to create a lot of incremental excitement. And price points are clearly important, but we've been on the view the price isn't Tesla's number one issue today. We would actually rank just the overall aging of the portfolio as being maybe a bigger issue for the company today than just price alone. So of course, we want to see 30, 40,000 and eventually even lower than that. Of course, Tesla's had aspirations to launch a $25,000 EV, of course. So we're mindful of the price points. And of course, the price points relative to the content you're getting. It's ultimately all about the value for dollars. But we really are focused just overall on the content, on the design, on the innovation, to really undersee whether investors and consumers, of course, can get really excited about new vehicles that could be very high volume vehicles for the company. So it is a very significant focal point here over the next few months.
Well, Tesla shareholders may have voted to give CEO Elon Musk a pay package that could be worth as much as $56 billion. A Delaware court could have other thoughts. Here with the latest, Yahoo Finance's own Alexis Keeney. Of course, this vote was an attempt to circumvent or maybe annul the decision of the Delaware court, but we still don't know if that is going to work.
Right. So what we're seeing today are additional filings from both Tesla's side, Musk's side, and the shareholders that were able to win that case and get the $56 billion pay package rescinded. And we're seeing some light on what the arguments are going to look like. But also, this is a very procedurally complex case because this is really unusual the way this is happening. Because if you ask the shareholders' attorney, they would say, well, this vote that happened last week has no legal impact at all because you can't have shareholders overruling a U.S. court, a U.S. judge. They say no legal impact, that judgment should stand. On the other hand, you have Tesla arguing in its court documents saying that it wants the Delaware court, the Chancery Court that made that call, before it issues a final judgment, before it tells the lawyers how much it's going to get paid, to ask the parties to do expedited briefing, tell the court why the shareholder vote should amend everything that happened in that court order and that why Elon Musk should get his pay package today worth about $48 billion. Now, remember, 72% of the disinterested shareholders last week voted to approve this award. But there's a big accounting issue, too, for Tesla. If Tesla is able to get this approved by the court, and we're not saying that's going to happen, that maybe the judge will say, hey, not my purview, this is going up, and Tesla will have to appeal, or the other party, the shareholders, will have to appeal to the Delaware Supreme Court. But $2.5 billion in accounting for this deal back in 2018, when it was first awarded, versus what Tesla has said in its securities filings would look more like a minimum of $25 billion to do it in today's dollars. So a lot of uncertainty swirling around here. Also, just want to read briefly a part of Tesla's argument here. They say the voting shareholders that supported ratification included some of the most sophisticated institutional investors in the world, including BlackRock and Vanguard. They go on to note that Vanguard, 7% owner in Tesla shares, said no the last time around. And now that the light is shining on this issue, they have had a change of heart. So a lot to follow here, still legally, procedurally, just a very complex case. And the judge has a lot of decisions to make on her own of how she's going to address these issues going forward.
All right, we got to leave it there, but really appreciate that update and a saga that will continue. We know that much.
That's for sure. Auto space as well. Tesla hitting another speed bump with the Cybertruck. The EV giant announcing its fourth recall on the vehicle. But we also got a little bit of numbers info, right?
Yeah, so in a recall, there's two recall notices today. Okay. One for the large wiper blade that everyone knew would kind of be a bit problematic because it's the biggest wiper in any commercial vehicle. It's huge. There's an error, there's an issue with power surge issues with that, could malfunction. Also, a piece of trim could come off the back of the bed. They need to reapply that. But in the announcement, they talk about how 11,688 vehicles were affected. Now, what this means is basically these are the amount of Cybertrucks that are out in the wild that they've been sold or in transit to customers right now. So what we know is that they've created this many vehicles since December of last year, right? So looking at back on the hand math, we're talking about around 1,700 vehicles a month Tesla made on average. Now, Musk said at the shareholder meeting this past 2 weeks ago that Tesla reached a 1,700 weekly production record on the Cybertruck, and on their way to 2,500 a week, which should equate to around 125,000 vehicles a year, which is where they kind of want to be. The big question is, are there enough people to buy these things? Right now, I think that they're kind of like fulfilling orders of people that have pre-orders in, right? So yes, each one's getting sold. That's not a problem. When they get to 125, 200 vehicles a year, 200,000 vehicles a year, do they have that demand for that?
It's a good question, especially if they keep having to take them back to the dealer to get things fixed. No over-air updates for a broken windshield wiper.
Yes.
No, can't do that. All right, Pross, thank you. Appreciate it.
We were watching shares of Tesla this morning, the EV giant delivering 440,000 vehicles, beating expectations of 439,000 for second quarter deliveries. Is the fear of slowing EV demand coming to an end here? Here to weigh in on that, we've got Dan Levy, Barclays Senior Equity Research Analyst. Dan, thanks so much for being here. Is this a sign that the price cuts kind of worked for Tesla?
Hi, Madison. Thank you so much for having me. I think today's result was certainly an upside surprise. We had previewed 415,000 units. I think what's interesting about this result was we certainly saw some impact of price cuts in the quarter. You look in the US, you had the 1% financing in May on Model Y that likely had a key role. There was additional discounting as well. There may have been some other levers that occurred throughout the end of the month that helped drive this. But look, there is still the risk of further price cuts ahead, and there is still further question on fundamentals. We are still facing somewhat of an EV winter on demand. So good result, but I think the fundamental macro backdrop is still the same.
How deep do you think price cuts could be?
Well, I think that Tesla is taking maybe a more, measured approach on price cuts after what happened last year, where they cut very aggressively, but they didn't stimulate the type of demand that they had hoped. I think they've likely shifted strategy to not be as overt with the price cuts. And so this is why you've seen price cuts on things like via, special financing or inventory vehicle sales, other benefits as well, as opposed to outright price cuts. There are levers to be, to unlock pricing without having outright open price cuts that maybe are a bit more damaging to the residual values.
I want to talk about the China of it all because we are seeing continued success for the Chinese EV makers, particularly in that market, of course. How much does Elon Musk need to be worrying about that?
Listen, China is probably the most competitive region for Tesla. That's the region where they are facing the toughest competition. They're facing competitors that have products that are just as good as Tesla, some would argue even better. From a software-defined standpoint, Tesla certainly doesn't have the same advantage in China that they have in the US or Europe. So certainly the competition is going to be tougher in China. But there is still a place for Tesla in China. We've still seen them hold share fairly steady in that high single-digit range as a percent of total BEV sales. So they've actually held steady, but certainly the competition is intense there.
Okay, we kind of got a little bit of a breakout, or at least a murky number for us to think about with regard to how many Cybertrucks they're producing and delivering. And I know it's early in the game right now for Tesla with regard to this, but what do you think the reception and what we're seeing in these delivery numbers for Cybertruck, which is really just kind of looped into those other models that also include the S and the X, but what does this tell us about what type of run rate and growth we should expect for that part of the business?
Cybertruck is still pretty niche for the business. The vast majority of the volume is still being driven by Models 3 and Y. Those are more of the sort of mass market type options for Tesla. They are ramping on Cybertruck, but right now it is still supply constrained. I think we should have a better sense later in the year and into next year, once the supply constraints are eased, once they can ramp more aggressively, to see what the underlying demand is. We think it's a fairly niche model. We think it's going to be, something in the ballpark of 50,000 units a year, which helps, but is still a very small portion of the total volume for Tesla.
All right, Dan Levy, who is the Barclays Senior Equity Research Analyst. Dan, great to have you here with us. Thanks so much for taking the time.
Thank you so much, Brad Madison.
Tesla shares jumping as the EV giant reports upbeat results for deliveries. Wall Street pleasantly surprised with a lower than expected decline of nearly 5% in deliveries compared to just a year ago. Joining us now to discuss, we want to bring in Barron's associate editor, Al Root. Al, it's good to see you. So let's talk about these numbers that we're just getting out here from Tesla, because coming in better than expected. When you take a look at the market's reaction, clearly they were very excited about the print that was published this morning. So what does that tell us just about where Tesla stands? Is the worst over for Tesla?
Yeah, I think that if you look at the reaction today, the message is sort of the worst is over. Several notes from Wall Street basically indicate that. And, you know, one of the interesting questions I got early in the day was, well, how did they do it? I mean, it was a very good quarter, better than the first quarter, where they delivered about 387,000. But like that graphic shows, it's still down year over year. So part of how they did it is basically just meeting lowered expectations or beating lowered expectations. Estimates always tend to fall headed into the print. That certainly happened this time as well. So it was a good quarter. Again, I just think there was so much anxiety over, you know, 2 consecutive year-over-year declines. How bad is it going to be? Is it going to be 420,000 units? You know, it wasn't that bad.
Al, next date on the calendar for Tesla investors, July 23rd, earnings day. What are you expecting to hear there, Al? Are there certain metrics you're going to make a beeline for in that print?
So, you know, the deliveries are connected to that, right? You know, they also did 9.4 gigawatt hours of storage. You know, that goes in their other business category. That was a record for a quarter by, you know, more than 100%. So that's more revenue. And then with the deliveries being a little better than expected, I will go right to that operating profit margin. Right, they did about 5.5% operating profit margins in the first quarter, down from about 11% a year ago. Margins have been steadily marching lower as they've lowered prices and growth has slowed. So I would like to see that turn around. The street's expecting about 8%, so the street expects some improvement. So we'll look at operating margins, and we will look for like the reversal in earnings estimate declines. This delivery result is good enough where earnings estimates shouldn't have to be cut into the quarter, and you can expect sort of, you know, the standard beat, you know, and look forward to the rest of the year, you know, Q1, Q2 being the worst part of the year, and then establishing this idea that Tesla can grow again in the back half and then in 2025.
Yeah, so Al, with that in mind, I guess my question is on pricing then. Do you think the pricing wars that have played out, that Tesla has had to lower its prices on vehicles really across the world, that maybe that isn't going to be as big of a driving factor here when we talk about some of the pressure that has put on margins?
Well, interestingly, to your point, Tesla produced far fewer vehicles than it sold, so Tesla's inventories are lower. So that lowers the pressure for them to cut their prices further to clear out some of that inventory. But they're only one, right? They're about 50% of the U.S. They're about 20% globally of all electric vehicle sales. So, you know, other people have to play along. EV growth in China has been better, but again, that's partially been boosted by pricing. I think the safe thing to say is pricing is probably going to bump along the bottom. So it's not necessarily going to be the pressure it was in 2023 and early in 2024. Some of the delivery results, not only from Tesla, but Rivian, NIO, XPeng, Li, BYD, indicate that vehicles are being sold at these levels. So, you know, the car companies might say to themselves, okay, you know, we're good. We can just sort of operate at these levels. But again, it's not totally up to Tesla. At least from their perspective, there's less pressure to keep cutting prices.
Now, coming up, the latest auto sales reports from Tesla and General Motors showing that demand for electric vehicles might be back on the rise. Tesla's deliveries came in better than Wall Street anticipated. General Motors also seeing its EV deliveries increase by 40% compared to a year earlier. So let's discuss it with Stephanie Valdez-Streety. She's the Director of Industry Insights at Cox Automotive. Stephanie, thanks so much for being here. I want to start on Tesla because there's been this question, as you know, for many years about whether or not this is a stock that is going to move off of a story that the CEO tells or the business fundamentals. We're seeing it move off of these fundamentals. Is that indicative of a new era for Tesla?
Yeah, I think Tesla is navigating the waves, right? They're between these growth waves. And I think in terms of for automotive sales, right, they haven't had any new products except for the Cybertruck, which is pretty low volume. And if we're looking at this Q2, as you reported globally, in the US, we're probably anticipating a 15% decline in sales. They're still a dominant player. And as you know, they're really positioning on AI robotics. They're going to have their unveiling of the robotaxi in August. So it'll be interesting to see how Wall Street reacts to that.
And I'm interested too in the fact that you even bring up the AI and robotics piece. For a name like Tesla, there have been some folks who've come on our show and said they want Tesla to really just dive deeper into owning that they are a car company, and others saying no, they need to hold on to the AI of it all. Which do you think is a more successful route for the company?
Well, I think right now they need to focus on both, right? Because the AI robotics, there's a lot of challenges with it, whether it's like safety concerns, regulations, and they're still a dominant player in the EV marketplace. They just need to have some more product, right? And they had talked about having an affordable EV rollout, I think next year, but I'm not sure the timeline on that. And that's going to be key for them to keep focusing on their product. But I think they're definitely prioritizing AI and robotics as well.
Yeah, you mentioned some more affordable EVs to come down the road. What do you think that could do for the consumer uptake and adoption of EVs?
Yeah, I think that's huge. We've been doing an EV path to adoption study for many years. And as you can imagine, affordability is always the top barrier. And so I think if you think about more options for consumers, if we can have more affordable EVs, that's going to be a game changer. Right now, the average transaction price for an EV is close to $50,000, $54,000. And so that's still, that price premium over an internal combustion engine. And so I think if we can start to get more of these affordable EVs, that's really going to help. One of the things I wanted to mention for, providing more affordable is used EVs. As we start to see more of those enter the marketplace, I think that's going to give consumers some more options at different price points.
And that brings up the point about competition. I'm curious, in 10 years, do you think that the EV space is going to be crowded to a degree that Tesla just feels like maybe a drop in the bucket compared to sort of the market leader in the space?
Yeah, I think that's the challenge with Tesla, right? They've been the dominant player. They still have the market share, right? Potentially could go below 50% this quarter, but you have all the traditional automakers having a lot of product in the pipeline. And so I think there's a lot of competition, and it's all about what consumers like. They like something new, right? Something new, fun, affordable. And so unless Tesla can start to get more product, they're going to start to have other automakers eat into that market share.
Yeah, and in your notes that you sent over to us that consumer uncertainty about the economy and the election could potentially be a headwind, and I was so fascinated by that. Explain to me how the upcoming election could impact EV sales.
I think one of the things that consumers are thinking about, right now we have the Inflation Reduction Act, right? There's incentives for consumers. There's $7,500. Not all vehicles are eligible, but consumers can get that if they lease a vehicle. So I think there's some uncertainty about, should I buy? What if, there's something with the IRA gets eliminated? There's not the incentive anymore. So I think consumers are a little bit kind of like waiting it out to see what I should do depending on the outcome of the election. So I think that's one of it as well.
All right. Well, thank you so much for joining us. We really appreciate it, Stephanie. That was Stephanie Valdez-Streety. She's the Director of Industry Insights at Cox Automotive.
The Street is getting more bullish on Tesla on the back of its better than expected second quarter delivery and numbers. Wedbush is one of the firms raising its price target on Tesla, now seeing the stock could rally to $300 a share. Joining us now, we want to bring in Dan Ives. He's Wedbush Managing Director and Senior Equity Analyst. So Dan, you're very bullish on Tesla, saying now that the worst is behind it. What gives you the confidence?
I think it's the comeback kid. I mean, this is all now starting to play out from Musk and Tesla. Clearly, look, it's been a tough 6 to 9 months. 2Q, I think, is the turning point, not just from a delivery perspective, but now going into historic robotaxi day and autonomous. I believe the AI story alone is worth $1 trillion potentially at Tesla.
And Dan, Robotaxi, it's great to see you. It's Josh. I get the excitement there, Dan, but that is that's a long-term play, right? It would be a while before you would expect to see any kind of, meaningful financial contribution from that, right?
Yeah, look, Josh, I think in the next 18 to 24 months, we'll have some form of supervised robotaxi in certain cities, in my opinion. I think given where China is going on FSD autonomous, I think the technology is getting closer and closer to something that when you look at the longer term Tesla story, I've never viewed as an auto company. Disruptive tech, despite some of the issues they've been through from a demand perspective. But take a step back, you're going to have 6, 7, 8 million cars on the road, Teslas, that are now going to have that autonomous FSD. And I think it's very important to understand forest through the trees. This is essentially an AI robotics disruptive play, but yet the bears in their hibernation caves will continue to say it's a car company.
Well, Dan, one of the big issues, though, for Tesla over the last several quarters has been the cars and demand and what they need to do in order to spur that demand. I guess, has that part of the equation, has that part of the story changed at all? Or are we starting to see, or do you think we're going to see a real pickup in EV demand? And what's driving that?
Yeah, I think the price cuts, 98% of that is in the rearview mirror. So I think we've started to turn the corner there from a price cut perspective. Demand stabilized. China headwind, now that becomes a tailwind. I think numbers go higher in the street. And I think you start to now see, it's not just about the robotaxi day and the start of that vision, but I think now growth returns to the Tesla story. And even though they've been on the outside looking in of that Mag 7 party, I think they start to get back on the dance floor.
And Dan, what about the lower price models on the way? What do you think the price is? How excited do you think investors should be about that?
Yeah, Josh, I think that's going to be key from a volume perspective. I think 28,000 to 30K is sort of where we see that. I think they'll give some hint of that on August 8th, but that's key to the volume game playing out in Tesla. In terms of the broader volume, then it's the software, and then ultimately it's really the autonomous FSD. That's the sum of the parts to how you start to get to that bull case $400.
Well, switching gears here, another story that we're watching for you this morning. Shares of TSLA, they're on the move right now as the EV maker taking a breather after notching its 9th straight day of gains on Monday. The stock's winning streak has erased its year-to-date losses. Shares have risen more than 75% since hitting its most recent low. That was in late April. Here to weigh in is Yahoo Finance's senior autos reporter, Pras Subramanian. Hey, Pras.
Hey, so yeah, Brad, so basically, we've been seeing the stock kind of rise meteorically since Elon Musk's pay package got approved in June, and sort of just been on a roll since then. We talk about they had a pretty good delivery number coming out over the right after the holiday, right before the holiday weekend, better than expected. Still down year over year, but still better than expected. There's some buzz about energy storage business doing well. There's talk about China doing better. They were able to sort of get a contract signed where they can actually sell Teslas to state vehicles as state vehicles to use for the government. So that's kind of a big deal for them. But it's one of these things where we always see the stock kind of have a boom bust cycle, right? And right now we're 2 weeks from today into earnings. And that's going to be a big kind of sort of moment for the company. And usually earnings haven't been good. They haven't been good for the stock, but they were good last quarter because of the fact that they mentioned that they're going to introduce some cheaper vehicles in the future. So that's sort of the bigger game plan here, along with robotaxis, things like that.
Yeah, Bruce, I guess my question to you is, how much do you think investors are focusing? It seems like investors still tend to focus on those more lofty goals and what Musk lays out versus what is happening today. Because when it comes to the fact that profit margins remain under pressure, EV demand simply is not what it was initially expected to be at this point. Of that do you think is going to be reflected in this report that we're going to get in a couple weeks?
Well, interestingly, second quarter sales or deliveries were not that bad. So it kind of hints that maybe there was actually some demand recovery there. I mean, there were a lot of price cuts in the US too, and potentially China's not as bad as people thought. So maybe there's going to be some upside surprise there and we get more color on, is demand returning ever so slightly? We're seeing other brands doing a little bit better too, Ford in particular, some of Porsche and Mercedes also on that luxury kind of high end there. But the big question is, you're right, how much growth are we going to see in the future? I mean, can you hit that sort of 1.4, 1.5 sort of average growth rate, right, for the year? That's kind of under threat. And the question is, are the big bets going to overtake that?
Right. We got to go. But is there a lever that they could pull this quarter? You talked about what they said last quarter and talking about the future of vehicles that they're going to be unveiling or uncloaking. I mean, is there another type of lever that we could see them try to tap into here that would have the same effect and at least buoy some investor confidence for this interim period?
You know, I think one of the things people want to hear with regards to the Robotaxi reveal in August, are they going to be doing actual trials like Cruise and Waymo are doing? Are you going to have like fenced-in, geofenced-in trials of the car actually kind of being worked, like actually used in service? Right. For instance, are we going to have a Model Y with its current system kind of running around somewhere picking people up? I think that's sort of the question. We might get a hint on that. That could be a big, like I said, lever to pull. Like, oh, actually, we're doing these trials now. But in terms of new products, we're not going to see that for a while, and maybe we'll get some updates here and there. But it's not from a new product point of view. I don't see anything happening, at least not for the next year or so.
Interesting. All right, Pras, thanks so much. Tracking all things TSLA plus the mobility space as a whole. Appreciate it.
After a slow start to 2024, Tesla making a comeback. The stock's 9-day winning streak racing the losses that we saw year to date. You're now looking at gains since the start of the year of just over 2%. Now, the extended momentum that we have seen, the extended rally, comes as the car manufacturer really beat on quarterly deliveries just a couple of weeks ago here. So for more on Tesla's run, we want to bring on Seth Goldstein. He's Morningstar's equity strategist. Seth, it's good to see you. So certainly there's no shortage of excitement surrounding Tesla right now. When you take a look at those delivery numbers, it was enough to excite many on the street. You're looking at a rally here of just about 40% since the beginning of June. Do you think these gains that we've seen over the last couple of weeks, are they justified given the numbers that we did see and the fact that it was still a drop from a year ago?
Well, I think what we're seeing is when the delivery numbers came in above consensus, Tesla's a very high growth stock, so the market reacted very positively. And then you have some momentum from Tesla's AI businesses, which the market is giving extra value to. And so you have Tesla, all of a sudden the market is valuing the growth potential for Tesla. Whereas if you look before the deliveries, Q1 deliveries, I think surprised to the downside. And so the market was assuming a lower growth rate. And so that's why we've seen the large rally since the deliveries numbers. Okay,
and so as we have the deliveries, the production numbers, going into the next financial performance print, once that's fully unveiled, when earnings drop, what do you anticipate Elon will need to signal to the investment community about the future construct of how they're thinking about production and the new vehicles that they teased and now the street's going to be expecting at some point?
Yeah, it's a great point. I think we're going to need to see a solid, concrete timeline, and that the timeline has not pushed back for the new, more affordable model. Last quarter, they said it was going to be by the end of 2025, so we need to see that being met or pushed up earlier, so that the street can assume that Tesla will see a second wave of deliveries growth starting in 2026. As long as that narrative remains intact, I think that the stock will be okay. But if that's pushed out, if management sounds more uncertain that that's going to happen, then I think we could see the stock falter as, the market may be assuming that this second wave of deliveries growth either won't happen or will be pushed out into the future.
What type of vehicle, what type of model should customers be hoping that this vehicle is, and perhaps investors too?
I would think it would be maybe a smaller size SUV, so maybe a little smaller than the Model Y, but at a price point that's comparable to more like a Honda CR-V, Toyota RAV4, something in the mid $30,000 range versus the current Model Y, which is the next leg up. And so, if Tesla can offer that, then that gets them into a more affordable vehicle segment that's a much larger market in the US. And so I think that would drive, many consumers who are considering an EV, but one is still a little too expensive for them, that would push them over to buy an EV.
We're going to turn our attention now to Tesla. Short sellers are feeling the brunt of the stock's recent rally. A growing number of hedge funds had piled into short bets back in June. And according to data provider Hazeltree, about 18% of the 500 hedge funds that the company tracks had a net short position on Tesla as of last month. And that is the highest percentage in more than a year. Since the beginning of June, Tesla's share price has now soared around 40%. So bad news for those short sellers. Joining us now to discuss, we've got Ihor Dushanowski, S3 Partners Managing Director. Ihor, thank you so much for joining us. You've spoken about this publicly before here, so I want to get a number from you. How much have Tesla short sellers lost since the stock made its public debut back in 2010?
Right now, it's above $60 billion. I think it hits around $63 billion as of right now.
So $63 billion, is it just too expensive for anyone to be betting against this company regardless of their fundamentals?
Well, short sellers have been up and down in this name over the past couple of years. It was the number one short in the market. Now it's down to number 4 behind Nvidia, Apple, and Microsoft. So there has been a little bit of give and take in the name. But short still, this is like the OG short. Everyone's still in it.
Yeah, Ihor, that's what I wanted to ask you. Just how often do you see traders, investors shorting a name like Tesla? When you take a look at this activity that we see now, comparing that historically, is it anything really out of the ordinary? It doesn't sound like it.
Well, we are seeing some short covering recently. I mean, there's been a little bit of a squeeze, short covering going on, and it's a really important name for a lot of hedge funds because this is the volatility that people are looking for in order to make a good profit, in the name, because you can get big bang for your buck.
So I want to talk a little bit more about this because we have investors who come on and talk about the upcoming announcements that are going to come from Tesla and really continue to be bullish signals for the name moving forward. I'm thinking about the continuous bullish sentiment around the Robotaxi, for example. To what extent are those investors betting on something that is likely to become a reality for this stock versus just kind of a pipe dream that Elon Musk is more than happy to continue to fuel?
Well, Tesla's always had some, manufacturing, possibilities where they're growing their different type of cars, different type of services in their cars. But really, this name is not just a fundamental trade. This is a trade that's a little more technical market driven because you've got a ton of long holders that are just Tesla forever. And really it's what the market is doing rather than exactly what Tesla is doing.
Tesla stock has been on a tear. Its 11 consecutive winning sessions helped the EV maker regain all of its lost ground so far this year until today. Tesla's Robotaxi event, one of the drivers behind that stock's recent run-up, has reportedly now been delayed by 2 months, sinking the stock back into negative territory for the year. Joining me now is Doug Clinton, Deepwater Asset Management Managing Partner. Doug, it is great to have you on the show. So let's dive right into this headline, Doug. So reportedly, maybe Elon Musk thinking of delaying this Robotaxi event, Doug, to October. In your opinion, you know this company so well. Big deal? No deal? How do you see it, Doug?
Well, Josh, the first thing I would say is nothing is official in Tesla land until you hear it from Elon himself, because what sort of led to this event in the first place was a Reuters report several months ago that the Model 2 was going to be canceled. Elon said that that is false, and then he followed up saying that we're going to have a Robotaxi event in August. We haven't seen Elon tweet anything yet. I just checked before we jumped on air here. He hasn't said anything about the event yet, so who knows what could happen. But let's say that the event is delayed, in fact, to October. In my view, what the stock has been doing more recently is it's been reflecting the hype and the excitement that investors are having for Tesla and what might come in terms of this Robotaxi and what that ultimately might mean for the model. And Tesla, more than any other stock, is such a powerful religion. And I think that investors, as they see these new products coming, not just the Robotaxi in October, but probably a few new vehicles as well, I think people are starting to figure out what could this mean to our models. And they were sort of front running potentially some changes in terms of how analysts and investors think about that business.
And Doug, when you talk about Robotaxis, though, I mean, it's such a long-term goal in some sense, Doug. I mean, wouldn't it be a very long time before you would see any, real meaningful financial impact from that?
I do think that's probably realistic. And it's funny, I mean, going into the event, actually, given Tesla's track record, but also just what they do. I mean, they solve really hard physical, real-world problems. And they're maybe one of the best companies in the world at it, but often their timelines are a little bit optimistic. They often miss their timelines. It's just a normal thing with Tesla. Going into this event, I sort of assumed whatever date they put on their launch of the Robotaxi, you might want to add 6 to 12 months to. And then if you think beyond that, to the point of your question, Josh, when does it actually start impacting the model? Tesla has a really large business already in terms of selling cars. They obviously have several 100,000 FSD subscribers as well. And so the Robotaxi business would have to get to a pretty decent scale to really start having some impact meaningful impact on the model. So I think we could still be in a situation where even if the Robotaxi launches, let's say late next year or early in 26, the real impact to the model might still be a few years beyond that. Even investors will start to discount some of that into the model, but we will have to be patient before seeing real numbers in it.
Let's get to some trending tickers that we're watching here. Tesla snapping its winning streak. Shares are actually moving to the upside this morning. It's up over 2.5%, but this comes after Bloomberg did report that the company is delaying the unveiling of its Robotaxi by 2 months. Now, this comes as the stock is coming off an 11-day rally that was sparked by better than expected delivery numbers for the second quarter. That jump initially wiping out the stock's losses for the year, then moving back into negative territory for 2024 after yesterday's losses, and now we are seeing the stock moving back to the upside this morning. So for now, we are going to bring in Jessica, Guggenheim Securities Director. This is Ron. Sorry about that, Ron, my read there. Director of Automotive Equity Research for more. Ron, thanks so much for joining us here. So it's interesting to me, this reaction, given what we know about the robo-taxis here. Is this the latest indication of the facts and fundamentals of Tesla not necessarily being the key driver of the stock?
Yeah, I think that's probably fair. I would point out today specifically that the entire EV space is moving to the upside quite a bit. I think there's probably some either short covering or some squeeze dynamics going on today. But yeah, related to the robotaxi event specifically, I think the issues yesterday and why it was such a pronounced decline for the stock was, I think it's important to think about the genesis of the robotaxi event. It was during Tesla's significant downward move in the first quarter of this year when there was a report that they were delaying or canceling the next generation platform. And that same day was when the robotaxi event was announced. I think by some investors, it has been viewed as a bit of a defensive or a massive pivot, at least for the company, away from affordable EV models in the future to robotaxis. And to the extent that they lack some credibility there, which I think a delay at least leads people to believe, that is an issue for the stock. It was also just very overextended, I think, coming off the rally post deliveries and the energy deployments.
Ron, how confident are you that we actually are going to see robo-taxis from Tesla one day?
One day is a very long timeline. So I would say I'm more confident than not in one day. I would say prior to 2030 at any scale, I think it's very unlikely. I would expect testing to be done before 2030 to the extent they're serious about this as a project, which they certainly seem to be now. So I would say post 2030 is when this is a meaningful contributor to the business, and I would say even probably well into the 2030s before this is really at scale.
All right, let's get to some calls of the day now. UBS downgrading Tesla from neutral to sell. The note saying it's increasingly difficult to justify valuation. For more, we're bringing in Yahoo Finance's Praz Subramanian. And Praz, here was one money line in the note here. While Tesla is investing heavily in AI and the tech is making progress, they say, investment is costly, pace of improvement may slow, and the payoff is long dated. Dramatic.
Pretty much, yeah, that's pretty much it. No, so downgraded to sell here. Though he did raise, Joe Spack at UBS did raise his price target to 197 because they were well low where Tesla's trading at right now. But basically the call is here, you mentioned valuation. The way that they did is kind of some of the parts evaluation here is the auto business was worth X, and then there are other activities like energy and robotics and FSD were worth Y. But in this sense, they're in their analysis, that other activity stuff was kind of overvalued by the market by a lot, by about over 60% or so, according to their analysis. So he thinks that there's some possible room to come down because of the fact that these other activities have high risk, long-term horizons. It's unknown whether they'll actually pay off. So this is the concern for Joseph Spack and UBS right now.
I mean, the funny thing is the stock isn't down today. It actually is. I mean, initially, I think in pre-market trading when this note came out, it took a little bit of a hit. And since then, it's turned higher along with the rest of the market.
Right, all the EV stocks, all sentiment-based sort of trading here today and on Friday.
There is this question out there about what Elon Musk does to potential Tesla consumers. And there's obviously a big difference between Tesla, the stock, and Tesla, the company, and the fundamentals. What can you tell us about the potential impact that Elon Musk's support of former President Trump could do to Tesla sales moving forward?
Well, I think by and large,
Tesla sales for the first decade or so were by people who supported Elon Musk's vision for an all-electric future. Clearly, EV sales have been hit over the course of the past years. We've had kind of a bit of a market saturation from a demand perspective. Whether or not Mr. Musk's support for the president to the tune of $45 million a month, or about $180 million through Election Day, has a real impact by more of his the potential for left-leaning consumers to buy Tesla vehicles. I think it remains to be seen. I think you're really talking about a very marginal buyer that's going to base his or her decision on whether the CEO of Twitter or X is supporting former President Trump.
Brian, what have you seen in the past just in terms of customer behavior when you take a look at what we have seen for past buying power and I guess the ability to spend, or willingness maybe is a better way to say that, to spend from consumers? Have we seen boycotts like that in the past? And I guess how closely are you tracking that as a portfolio manager?
It's a really good question. I think most of the time from a consumer perspective, it's been short-lived. On the other side of the fence, you have Bud Light, where we've clearly seen sales for the past year drop off a cliff, so to speak, for some of the marketing materials that they put out. So it's not necessarily something that I think is too concerning, as typically speaking, major corporations have avoided taking major stances from a social or political perspective. But we're watching it, and it's not a real big concern right now, but something to keep an eye on as we move forward towards the next few months into the election on November 4th or 5th.
I wonder if I can switch gears a little bit away from EVs, because I know you also look at infrastructure, Brian, and former President Trump and Biden have kind of found in different ways a little bit of an aligned thinking on policies that would be bringing manufacturing home to the states, which would really shake up our economy, right? 75% of our non-farm payrolls are in the services space. Bringing that into a more manufacturing-driven sector would be a huge economic change. How is the potential of those policies from either candidate impacting your investing outlook?
Well, I think going back to maybe some of the stimulus that's been passed over the last several years, we have mega trends that aren't going to go away no matter who is elected in November, right? We have infrastructure, we have nearshoring, we have the CHIPS Act that is going to continue to provide opportunities for construction and semi-fab manufacturing. So there's a lot going on that really I think is a positive for non-res construction spending within the U.S. It's going to help companies within the equipment rental space, companies like United Rentals and Herc, HRI. It's going to help some of the machinery manufacturers, such as a small cap company like Aztec, ASTE out of Chattanooga, Tennessee. So there's a lot to be excited about, I think, as it relates to the machinery sector over the course of the next few years, as the money from some of these stimulus measures starts to really work its way into the broader economy. And whether it's former President Trump, President Biden, the focus on American job creation, largely through, I think, manufacturing and largely through construction, I think is going to be similar from a policy perspective.
All right, Brian, we're going to have to leave it there, but really appreciate you joining us this morning. That was Brian. Thank you. That was Brian Sponheimer, Gabelli Funds portfolio manager.
Getting closer to the results from that Tesla shareholder vote. Here to help us break down the latest and what to expect, we're bringing in Nancy Tengler, CEO and CIO of Laffer Tengler Investments, and Lou Bassanese, President and Chief Market Strategist at MDB Capital Holdings. Thanks to you both for being here. And just to be clear where both of you are situated, Nancy is a Tesla shareholder. She has voted yes. Lou, not a fan of Tesla shares, doesn't hold the stock, I believe. In fact, it was the subject of goodbye or goodbye.
It was. I'm a fan of Nancy, though, so no ill will here.
Of course. No, it's not personal. Lou, you're here with us in studio. Get to you first.
Sure.
As you look at this whole drama unfolding, does it make you more convinced that you don't want to hold Tesla shares?
Yeah, I try and avoid drama in all aspects of my life. I think drama is the right word for this because, look, this is the first time in my life I will empathize or sympathize with Musk because he's having to renegotiate a pay package that was already approved. I mean, you shouldn't be tried for a crime twice. You shouldn't have to renegotiate a pay package twice. And at the end of the day, shareholders, it's in their best interest to vote for this because they have their principal at work and at risk. If Musk isn't incentivized, then their capital's at risk. So I think whether you think it's egregious or too generous of an offer, it doesn't matter. It's a pay-for-performance package. He has to deliver on the share price. What's happened in the past doesn't matter. It's what happens in the future for Musk. He's willing to put that on the line.
Well, actually, in this particular case, it's only about what happened in the past. He already hit most of the benchmarks.
Right.
He has to now he can't exercise his options for another 5 years. But even if the stock went nowhere from today, as I understand it, hopefully I'm understanding it correctly, even if it didn't go anywhere today, he still would cash out big in 5 years from now.
Ask any CEO if they feel confident they could hold their stock price stable for 5 years. That's a feat in its own, especially when you think about the market that they're in. You have declining sales, declining demand, declining margins. That's a Herculean task, to say the least, to be able to think you could do that for 5 years. Let them try it. Otherwise, it's nothing lost, nothing gained.
Yeah. Nancy, I want to bring you here as well. You are a Tesla shareholder, Nancy. As I understand it, you voted, for this pay package. How come, Nancy?
Well, I think for the reasons you've been discussing. I mean, Josh, he earned it. These were ludicrous targets at the time they were set, and he achieved them and surpassed them. And so here's a guy who's made a lot of money for shareholders over the years. I think it's interesting that the individual investors are the ones that kind of carried this over the line. And I think they understand that not only, has he changed the value of the company, but he's changing society. So this is somebody who deserves to be taken seriously. We've heard concerns from some who say, well, it gives one shareholder too much control. Well, you tell me who has the voting control at Meta and Google in those two share classes. The only way you can express your opinion is to vote with your feet, which is what investors did when Mark Zuckerberg pivoted to the metaverse. So there's a lot of irony in this for me. And the last thing I'll say is, we don't really sit back and critique professional athletes' pay packages. Let's take LeBron James, who's earned almost $500 million in his career. Is that too much? Is it not enough?
Well, but we don't invest alongside LeBron James. We don't share in the profits from LeBron James. This is someone who you're investing in, and so you should have a say in what they make because you're the shareholder. So, Nancy, what I want to ask you, though, as you look at this, even if you think he deserves it, he hits the targets, et cetera, what do you say about the critics who say the board is too close to him, they're rubber stamping what he does? I mean, there's a whole host of various other allegations about his behavior. There was just the Journal article about SpaceX and some of his behavior with women on staff there. How do you reckon with all of that, even if you think that he hit the targets and he deserves the money?
I don't think that comes into the equation, Julie. I'm sorry. I'm not approving of that behavior. I think we've got a long list of folks that can get in line in front and behind Elon on that. The issue is whether or not there was a contract, in my view. Did he deliver on his objectives? He did.
But was the contract entered in good faith if the board is so close to him that they couldn't sort of see it in a clear-headed fashion?
That's a different issue. I think that the courts should take that up with the board. But if we have courts now second guessing, is the dividend payout too high? That the board said, is the share buyback program too big? I think the deal was done. He delivered, and whether or not they were too close or not, they're certainly much less conflicted than they used to be. But that may not be the right benchmark. But I think this is someone who has not only developed technologies that are really changing the world, but has delivered profitability. And for many years, no one cared about profitability at Tesla. And now he's actually delivering. Earnings growth is going to reaccelerate next year, free cash flow. So these other issues to me are kind of straw men. And I think you have to, as an investor, you have to take the financial aspects and the fundamentals of the company at heart. If I had to pass judgment on every CEO, I'd probably own 2 stocks.
Lou, I want to bring you back in here as well. One thing that interests me about this conversation when we talk about Musk is I can think of very few CEOs who are tied so closely to the company. How Just how foundational is he? Because our buddy Dan Ives over at Wedbush, Dan will always say, hey, Musk is Tesla, Tesla is Musk. Is that how you see it?
I totally agree with that. I mean, you used to think that Steve Jobs was Apple, but you had Tim Cook in the shadows that was really learning the business and could implement and execute.
And it turns out Tim Cook kind of Mount Rushmore of American business.
Absolutely, but does Musk have that protege underneath?
Who's the bench?
I don't believe so. If he did, he wouldn't be three-timing at three companies as the leader. So I think they're inextricably linked. I agree with Nancy here that we should get over the concentration of voting power or ownership. That's symptomatic of every major tech company with Zuckerberg. But it's really the cure for all ills here is a higher stock price. You won't hear a lot of this noise and chatter if Tesla's performing.
In other words, the fact that it's gotten shelved like this is part of the issue.
I agree. Yeah, I think that's absolutely part of it.
Okay.
Well, so Nancy, let's talk about that then. Are we going to get a higher stock price? I mean, the stock's popping today on this, but fundamentally, the business has some issues.
Yeah. Well, it's trading like an EV company, and EV demand is slowing. The margins are shrinking. We've seen this with every great product. I mean, go back to Coach if you want to with handbags. As soon as the margins became well known, they had a number of competitors. So the thing to me that's attractive about the company is the mega pack business, which is the electric utility grade battery packs. That's growing faster and is more profitable than the car business. Autonomous is also of interest. I live in Phoenix half the year, and I can't go a quarter of a mile without seeing a Waymo. I think this is going to be the wave of the future. And then all of the AI initiatives that he will now stay under, if the court ratifies this, by the way, it still has to be ratified by the Delaware court, but that will stay under the Tesla umbrella. And I think that's where the future value of the firm is. So don't expect this stock to continue to appreciate like it is today. This is a 3 to 5 year time horizon holding, but I think the technology is there. And yeah, I agree with Lou. There are some succession issues. There have always been succession issues, and there have always been board issues. So I think that is stipulated, and I agree with all of you, but there's still money to be made in this stock.
Lou, I'll end with you here. Yeah. Put aside the shareholder meeting. Let's just kind of pull on Nancy's argument. Just talk about the fundamentals. How do you see it near intermediate term?
I mean, I look big picture. Fundamentally, every new technology goes through the same adoption cycle. You get early adopters, the first 20% of market share, and then you got to cross that chasm into mainstream adoption. And what we're seeing, price points an issue, reliability is an issue. I just don't see Tesla leading that charge across the chasm. I think you see bigger competitors in the automotive space that have a proven track record of operating longevity with margins at scale that are going to take over and dominate the next wave of growth in the EV market. But that being said, never count out Elon. He's a bit irrational, he can cast a vision, which I think is what Nancy's alluding to. There's AI, there's autonomous driving. There's a lot of things that could lead to future share price appreciation and business fundamental strength. But right now, I just don't see it. So.
Well, and given picking up on that sort of sometimes irrational behavior, capriciousness, what have you, Nancy, how confident are you that even if the pay package gets approved, even if Delaware lets it stand, that he keeps the AI at Tesla? Or could something else piss him off? And he says, guess what? I'm going to do something, pull something else away from Tesla.
Well, I didn't know we could say that on the air, Julie.
I don't know either, but I just said
you can now,
Nancy.
Listen, I owned the stock many years ago before there were earnings on a relative price to sales ratio basis. It was trading at $180 a share. I don't know what that is post split, but this was when Elon was sleeping on the floor of the factory. He was smoking whatever with Charles Rogan on the Charles Rogan show and drinking whiskey at the same time. And I looked at this and I said, this is, and by the way, the turnover then was much greater and the board was even less independent. And so I sold my shares and I got a double. And the stock went up sixfold. So I disagree with Lou rarely, but I will disagree on this. This company has the best margins, and he's been reducing the margins voluntarily to take share. Free cash flow is about to accelerate. Earnings growth is about to accelerate. And he has the vision, and he will figure out how to converge all these technologies. I'm not, this isn't a personality contest for me. There's a lot of CEOs and companies that I own the stock and I don't actually like the CEO or how they operate, but they're good at their business. And as an investor, that's my job for my clients.
Here's why the Cybertruck is the perfect mom and family car. First of all, huge back trunk. Here are 5 things that I hate about my Cybertruck. Number 1, there are fingerprints absolutely everywhere.
Tesla's Cybertruck is an EV tank with ultra-hard stainless steel metal meant to withstand just about anything. But the near $100,000 Cyberbeast is divisive. Under a year out from the truck's release, Tesla's issued 4 recalls for issues with the windshield wiper, truck bed trim, and accelerator pedal. Still, Tesla's producing 1,300 Cybertrucks a week, with the goal of reaching 2,500 weekly vehicles by the end of 2024. So, is the Cybertruck a win or a miss? Here's what investors should consider when evaluating Tesla's latest EV. Number 1, features. This is one source of appeal for consumers. For example, the Cybertruck is the first vehicle in the US to go fully steer-by-wire.
So most cars have a steering rack that connects the wheel to the actual drive-driven wheels, right? So the Cybertruck has actually motors and sensors that are not connected to one another. So basically you turn the steering wheel, the wheels turn. But what makes it special is that actually all 4 wheels can turn simultaneously based on just the input of the wheel.
Another factor, its durability. The Cybertruck's stainless steel skin is designed to prevent dents and long-term corrosion while also being bulletproof. Still, some features are a point of contention, especially when it comes to our next big focus. Number 2, the look.
When it came out in 2019, people their jaws dropped. They expected Elon Musk and Tesla to come out with a Rivian-looking pickup, right? Something a bit more normal, futuristic, but the Cybertruck is way out there, kind of hearkening to this Blade Runner-esque dystopian future-looking kind of hard edges, stainless steel. I think that drew people off because it kind of reminded them of the DeLorean. That kind of design is industrial, not necessarily consumer looking.
That look is part of what's impacting number 3, demand. While the Cybertruck is unlike any other car on the road, the hype has cooled down.
When the Cybertruck first came out, there was a lot of demand for those initial trucks. And we started seeing them pop up on auction sites with huge premiums. If you wanted it now, you got to pay up for it. Now, 6 months later, we're seeing a lot of these Cybertrucks hit auction sites and regular used car sites in mass quantity, and it's bringing down that price almost to the point that it's equalizing the price to pay that you pay to buy one straight from Tesla, which is not a good sign for any kind of vehicle from a demand point of view.
And that demand will play into our final focus. Number 4, costs. While Tesla hasn't revealed how much it really costs to build the Cybertruck, the vehicle was built at the company's new Texas Gigafactory, which Musk called a $10 billion investment. And the process to build it isn't easy. The unique exoskeleton is formed using a technique called air bending, where high air pressure is used to shape the stainless steel. Due to those production challenges, the cost of the most basic Cybertruck, coming in at $60,990, was more than what investors were hoping, which was closer to $50,000.
If you want to hit that $39,000, even $50,000 price tag, they're going to have to keep driving down their industrialization costs, meaning what it costs to make that vehicle. Can they make it cheaper as they scale up? They have more expertise on building it. Can they get materials in there cheaper? Can they start simplifying systems? And I think the biggest issue with EVs these days in general is the fact they're too expensive. And can you make them cheaper for everyday people? That could help a lot to get that Cybertruck sales number higher.
Despite mixed reviews, loyal fans of Tesla may continue to support Musk's product visions. And the Cybertruck's unique polygon design might just be here to stay.
Is the Cybertruck design here to stay? I think if Musk had his way, yes. We've heard reports that when Walter Isaacson wrote the book on Musk, that he saw some initial sketches of the Robotaxi and said it looked like a 2-person Cybertruck. So that industrial design, hard edges, steel, might be a look that we'll see in future Tesla products, including that Robotaxi and possibly cheaper EVs down the line.
You mentioned the Robotaxi event. 1, George, what you think you might see at that event, and 2, George, how long before you might see real meaningful financial impact there?
It's a really good question. So in our model, we haven't built in a Robotaxi line yet because we're still waiting to see when it's coming out, what the economics look like, et cetera. Suffice to say that the timing is incredibly unclear. Look, we have Robotaxis today. They just operate in limited operational domains. I mean, they're offered by Waymo in cities like San Francisco and Phoenix, and I believe in Austin. But the problem with that particular service is that it's really, really expensive to build their vehicle, right? The Tesla vehicles have an advantage because, according to Elon Musk, they only have cameras in the computer room. But the hidden cost, and we recently put a note out about this, is that the difference in approaches is that Elon Musk is building a massive data center infrastructure to support that, right? So, and he's disclosed that it's cost cumulatively well over $10 billion to build that. So we put out a note that really tries to break down what the cost per vehicle is actually, if you include all the back-end spending they have to put together to enable that vehicle. There's a really hot debate right now in autonomous vehicle circles. What's the right approach? Do you have this neural network approach where you use only cameras and you build this data infrastructure that literally dictates the terms of how that vehicle will drive? Or do you put more sensors on the vehicle, you have some AI, but you also have some hard-coded software rules that will sometimes override what the AI tells the vehicle to do? It's a really big debate. Some people think Tesla will win. Other people think that Tesla is a little bit too aggressive in how quickly they're deploying AI.
Tesla reporting second quarter earnings on Tuesday after the closing bell, and investors will be looking for any new information about Tesla's much anticipated Robotaxi event. But how many people are even using full self-driving in Teslas now? For more, we're bringing in George Gianarikas, Managing Director at Canaccord Genuity. George, it's good to see you. Obviously there's been a lot of focus already on Tesla's margins, on the fact that sales have not been fantastic, not just of Teslas, but of EVs more generally. So let's start there and what you expect to hear from the company.
Hi, thanks for having me. Well, we've already gotten a glimpse as to what Tesla's deliveries were for the second quarter. The incremental news that we'll get from the call will be, as you alluded to, the margin trajectory of the firm, how exactly what appears to be a gangbusters quarter in their energy storage business translated into profits. And really importantly for us is the FSD take rate. Yeah, so if you remember during the quarter, they lowered the price of FSD to about $8,000 if you're paying a license, $99 a month if you want to buy the recurring revenue portion, the subscription, and they also give people a month free. Well, how is that translated into consumer appetite for the product? That's really, really important because for us, before Robotaxi even happens, we have to figure out what the consumer appetite is for full self-driving offering that they have available to them today, particularly when that'll help dictate the earnings trajectory of the firm for the next few years before Robotaxi kicks in.
And George, do they disclose the take rate for FSD, or what do you watch to sort of extrapolate that number?
We're just going to ask. I mean, they don't disclose it during the call. They have sort of alluded to the backwards math in a couple of quarters ago. So in the U.S., it appears to be that the take rate has historically been probably in the high teens. So every time someone buys a Tesla vehicle, the high teens percentage actually adopt for the full self-driving. It's not a metric that they traditionally give out. So hopefully if we get our question, we'll ask the management team on the call. But like I said, that's really important, not to mention they have alluded to the fact that they plan on launching a few new vehicles before the $25,000 vehicle comes out. So people have called it the Model 2.5, so to speak. And so we think that could really help volumes like this year, early next year. So we'll see what they have to say about that. The last we heard about it, I think it was at the shareholder meeting, Elon Musk said he's really excited about them.
And another test for the markets, Tesla, Alphabet are going to be the first of the Mag 7 names to report earnings. That's happening tomorrow on Tuesday. This after the NASDAQ slid in its largest weekly loss since April last week. Can the earnings reports maybe meet the street's high expectations and reverse some of this, I guess, turmoil that we have seen play out within a lot of these tech stocks here over the last several trading days? To discuss, we want to bring in Abby Yoder, JP Morgan Private Bank U.S. equity strategist. Abby, it's great to see you. So talk to us just about this rotation that we have seen over these out of these larger cap tech names into the smaller cap names. What do you think how do you see that playing out here this earnings season?
Well, so I think there's a couple of things that are driving that. I would say the biggest move has really been because of the rate outlook, right? Like we got that softer CPI print, and that's exactly what small caps needed. And then on top of that, we did get some good economic data, right? Retail sales came in good. I think to your point on what can get it to continue to work is really going to be around earnings season, right? And I think, and this is really like, I think both the rest of the market, so the 493 and then small caps, I think they'll tend to perform the same. And right now there's some angst going into earnings. Like, okay, the Mag 7 have been driving a lot of the earnings growth and the market generally speaking. Are we going to get the prints from the rest of the market this quarter that's going to get that part of the market to start working? And I think it's really important. This is the first quarter in 5 quarters that we're expecting to see the remaining 493 have a positive earnings growth picture, right? So the Mag 7 has really been driving it. This is that point in time where we're actually expecting a inflection to positive. And I think you get that. That's when you can see things like the 493 and small caps continue to outperform.
What do you think then is the one thing investors should be looking at to suss out the success rate of that 493? I think about something like McDonald's keeping their $5 value meal as maybe a sign that there's consumer weakness. That could be bad for some of the consumer names. What do you look at?
Well, so I think to your point on consumer weakness, I think the consumer is slowing, right? And I think what we saw through retail sales was that it's slowing, but it's still healthy, right? Like we're starting to see 2Q GDP expectations revised higher above that 2%, let's call it trend growth rate. And I think what we need right now is not necessarily from all of these names to beat and raise. We need them to beat and at least maintain, right? Like I think that's really the important thing. And right now, earnings growth expectations for the market are around 9.5%. We would imagine you start to see, we would imagine a beat rate of around 5 to 7% for the market, getting you to around 10 to 11% earnings growth for the quarter.
I mean, when it comes to some of that rotation that we have seen in the market, how much of that is because of the underperformance, the expectations for the Fed? Maybe we are going to see this broadening out here this earnings season versus what we're seeing on the political side of things and some of those expectations there. Factor that out for us.
I mean, that's the thing. Like over the last 3 weeks, it feels like there have been all of these different things that are causing the market to move, and it's really hard to disentangle them, to your point. But like just looking at the performance of small cap, right? So they had that 5-day move where they were up 11%, which was like a 4 standard deviation move for them. That was driven, I would say, primarily by CPI. And then kind of at the same time, coincident with that, you had this increase in what was going to be perceived to be a red wave, right? And that for small caps is taken as, okay, maybe less regulation, maybe more M&A. And so I think that added fuel to the fire in terms of the positive view. And then there's also a technical aspect. There was a lot of shorting of small caps because they had underperformed so much. So getting some of that kind of unwind and positioning, I think, also played a part. But again, I think going forward, it's really going to be around the fundamentals as it relates to the outperformance going forward.
When we talk about Tesla's current valuation and the ability here of Elon Musk to at least communicate to the street and his big believers about what the vision is and the fact that maybe the stock isn't really trading in tandem with fundamentals, what do you think it routinely is about Musk or about the vision here of this company that continues to get investors excited, yet when you take a look underneath the surface, as you are pointing out, there is still a heck of a lot to be a little bit worried about here in the short term?
Yeah, so Musk is a highly charismatic guy, right? And if you just like take a look at the setup on the table, he has forced all the major OEMs automotive OEMs to actually have EV programs. He basically, EV's been around for decades before Musk jumped in the game. He jumps in with Tesla, reshapes the business model of the company that he took control of, and now we have EVs as selling millions of units a year. He's done it. He's done it impeccably. He's someone that doesn't take no for an answer. He's unreasonable and successful. So people like that. And then when you have a story that's worked and a storyteller that's actually told stories that have come true, maybe not on the timeline everybody wanted, but they have come true. People want to believe. And this is a hopes and dreams stock. It's the kind of stocks that the retail tend to love, and he's playing in very interesting areas. So I understand the retail affection for Musk and for Tesla as a stock. I just look at this company and I say, really, they're blazing the way. They're blazing the path for so many other companies to follow them with compelling products produced for a fraction of the cost, with a supply chain that Tesla actually has to go out and develop. So, I don't see this as the compelling long-term investment. I think there'll probably be a lot of other exciting things in the supply chain or other sort of emerging or existing OEMs that have better financial returns in the long run.
Craig, I want to talk about the bread and butter for Tesla because former President Donald Trump mentioned his take on electric vehicles and Tesla specifically at a rally over the weekend. Let's take a listen.
I love Elon Musk, and I'm constantly talking about electric cars, but I don't mean I'm totally for them, but whatever the market says, but you can't have 100% electric cars.
Isn't it bad news for an EV maker to potentially have a president that does not see a world with 100% EVs?
Oh, we don't have to go to 100%. I believe in EVs, right? EVs are inevitable, right? I might be bearish on Tesla and probably one of the more visible bears in the market. But EVs are inevitable. I mean, they should be fundamentally cheaper than ICE vehicles. You have 65% fewer components. And you don't need a 300-mile range, so you can take a smaller battery. So, as this phase that we're working through in the market right now continues to play out, you're going to see more pricing pressure. It's going to be painful, but this is the creation of the market. The EVs are an ideal second car for a young family, or they're ideal delivery vehicles. The post office really screwed up when they didn't go for a bigger, EV commitment. Post office EV program has been a disaster as far as the deliveries in there. That is probably the best last mile application for EVs, period. I'm not surprised Amazon is using them aggressively. I'm not surprised many other, fleets are looking at adoption. EVs are inevitable. It's just, they're not going to be 100% of the fleet. 30, 40, 50%. That's a reasonable mix, and that's huge success.
For more on Tesla's latest earnings miss, let's welcome in Tom Narayan, RBC Capital Markets Global Autos Analyst. Tom, always good to see you. So Tesla shares under some pressure in the after hours. Obviously the stock, Tom, it ramped into this print, but we are down about 4.5%. Let's get your take to start with, Tom. What did you make of the report?
Yeah, I mean, you guys mentioned the gross margin is what everybody looked at. It looks like a beat, but if you look at the data that came out, there was a big piece of this was regulatory credits. So I do think if you X those out, that maybe kind of is a little different. Those presumably come at very high margins, right? So excluding that, I wonder what the margin would be. I'm still kind of going through the math there. Certainly there's a lot of fears that there was discounting happening. That's why they had that bigger delivery number. So this kind of maybe affirms that a little bit. Also energy storage, which was a big story that pushed the stock higher, as you guys mentioned the past month. Not bad. Margins look like was flat quarter to quarter, 25% gross margins, which is better than the auto business, but it's flat despite doubling revenues. So folks may wonder if there was some pricing cutting happening there. And then the last thing I would mention is outlook section. There's really no change there. Maybe some folks might have been hoping for some more color on the no lower price vehicle coming in 25, something more on the Robotaxi news delay. But as always the case with this stock, whenever the release comes out, however it trades right now is almost irrelevant. You have to really look at what happens on the call, right? A lot of information comes out of that 2-hour call that starts at 5:30 Eastern.
Yeah, so there's a good chance that the Robotaxi stuff and maybe more around the timing of the production of the next gen vehicle, maybe that'll come out in the call. I want to come back to something you were talking about with the margins X regulatory credits. Now, I see Bloomberg at least crunched the numbers. They put it at 14.6%. Whether that will end up matching with your estimates, we'll see. But that leads me to ask then, this whole debate, the whole new sort of bromance between Elon Musk and former President Donald Trump, Trump saying he's going to remove many of the incentives for the auto industry. In theory, at least, I mean, we don't know what's going to happen. Would that remove those regulatory credits? And then what effect does that have on Tesla's business?
Yeah, that's one part of it is around regulatory credits. And then Consensus actually had something like a 16.5.
Okay.
So if it was a 14 handle, that's definitely a miss. So that's probably what's behind that. I think the bigger issue is if they go after the IRA and the $7,500 credit, that would be a problem. The number one reason why people aren't buying as many EVs as people had hoped before is pricing. So it's a reason why Tesla and many others are really hoping for those IRA credits to remain, and that's what would cause the deliveries to inflect next year. The only thing I will say is it'll be really difficult for any administration to neuter the IRA. It's a lot of jobs, right? And it's in states like Ohio, Michigan, I think Tennessee for GM, and it's a lot of jobs. And so I think it's also law. It's very difficult to overturn a law like that. But certainly there's things that an administration can do. They can go after Chinese batteries, which Tesla does use. Almost everybody does. There's things you can do to challenge those credits. So I'm not saying it has no effect. It definitely has some effect, but it'll be very difficult to overturn the IRA, which Tesla definitely relies on.
What about that Robotaxi event, Tom? What are your expectations?
Yeah, it's anybody's guess. Definitely, it's a narrative-changing thing. You guys know that's my big thesis for the stock. I think potentially what caused the delay had more to do with them seeking. I know they said it had to do some design issues, but I do wonder, and many investors wonder, if it has to do with them trying to get regulatory approvals to launch a service similar to, let's say, Waymo or Cruise have. Right? That would be what makes sense, but it's difficult. You have to get California, et cetera, to approve that. So I do wonder if that's what's happening here. I mean, we don't know. That's what some investors are saying as to why it got delayed to October. But yeah, it's very important, obviously. We heard from GM this morning. They have abandoned their Origin purpose-built vehicle, a Robotaxi. They're instead going to use the Bolt to do this, which is very interesting. I think Tesla's going ahead with the purpose-built vehicle. I'd love to hear what they have to say about that on the call. So it seems like everything is kind of on track there, but I think investors, they want something real. They don't want just a bunch of PowerPoint slides when they eventually unveil this. I think they'll want details on timing, profitability, and they'll want something within 6 months to a year, not 10 years down the road.
Okay, so just then, Tom, to summarize and bullet point it here, what are the top 3 things you want to hear from that call?
I want to hear about gross margins, what they were ex everything, and what the company thinks that will be going forward if there were some one-timiness that happened in the quarter. I want to hear about the car in 2025 H1. Is this really a different car, or is it kind of a refresh of a Model Y? That's what everybody wants to know. And concrete rationale behind Robotaxi's delay. What exactly is happening? Something of what we could expect from a service like that. And then last, I'd say energy storage. What's going on with the margin? Why was it flat? I think some folks were hoping that it would be higher. Still a great business. But yeah, those would be the 4 things I would say.
Welcome to Asking for a Trend. Tesla's second quarter results have arrived with the EV giant missing on earnings. For more on Tesla earnings, we're joined now by Brett Whitten, ARK Invest Chief Futurist. Brett, it's good to see you. So Tesla reports Q2 adjusted EPS does miss, Brett. Stock's lower here, but we're off the lows, down about 2%. Brett, give me your reaction to the print.
I mean, the real story in Tesla is its ability to leverage artificial intelligence to deliver a robo-taxi service. And if and when they do that, that'll transform the financial prospects of the business. So I know that kind of autos analysts like to focus on kind of gross margin and deliveries, but that's largely a sideshow relative to how the business is going to transform.
Brett, I have to admit, I'm a little surprised to hear you say if and when, because I think you guys have seemed pretty confident in the past that in fact Tesla would come out with this robo-taxi, will come out with some more sort of AI capability. So has that confidence wavered at all?
No, not at all. I mean, I probably have a compliance person watching on TV making sure I don't say anything too definitive. But I think that robotaxi is effectively an inevitability given the pace at which artificial intelligence is accelerating. If you look at the data center that Tesla has installed right now, the number of computers they have deployed, that data center could train Meta's large language model that it just released in 6 weeks. So they have one of the largest data center clusters in the world, using their extreme data advantage with all of the vehicles they have on the road today. We think they're going to be able to deliver, autonomous driving where you really can have a driver sitting in the back seat and riding rather than driving. And right now, I use FSD every day. It's like a magical, marvelous product that really makes me sane on the freeways of Los Angeles. And so I'd encourage everybody to try it. It's amazing. And we think it's going to transform the financial prospects of the company in the future.
And when would that be, Brett? I mean, do you try to ballpark that when you think robo-taxis would actually have a real meaningful financial impact for the business?
Yes. So we think the most likely commercialization pilot is probably either late this year or early next year, and then it'll ramp from there. And so if you look at kind of our publication on what we think is going to be the development pathway of the business, the probability is mostly in this year and next year when they begin to commercialize, and it'll flow through the financials in a really transformative way. They go from selling vehicles one time and getting really poor margin on vehicle sales to getting software revenue off of vehicles annually that is in excess of what they're getting off vehicle sales today. So you go from one-time sales to recurring revenue at software type margins and with less capital intensity. So it's really a business transformation the likes of which the world has never seen.
Let's dive into the report that we're just getting out here from Tesla. It was out after the bell last night. We're seeing the reaction play out here ahead of the opening bell this morning. You've got shares off just about 8%. And Tesla reporting mixed results for the second quarter, posting its fourth straight quarter of disappointing profits. For a deeper dive into those results, let's bring in Jeffrey Osborne. He's TD Cowen's managing director. Jeffrey, it's great to have you here. So first, I'm curious to get your reaction to this report, because clearly the street taking some issue with the results that we got out last night. Do you think the pullback that we're seeing this morning, is that justified?
I do think it's warranted. Thanks for having me on. The biggest disappointment in my mind was really the gross margins on the core auto business. 80% of the call was discussed. Elon was discussing things that really don't exist at this point. But if you just really get back to the nuts and bolts of the company, the auto business is really struggling. It's a tired Model 3 and Y lineup. Really need to see a reinvigoration, as your colleague was talking about, of the portfolio next year. That got pushed to the second half of the year. So I think the pullback is warranted. We're going to be in an information vacuum until October 10th. We have that autonomy day, and then we get more details about the new low-cost vehicle that's certainly needed in this type of economic environment.
So Jeffrey, are investors almost in a holding pattern then at this point, do you think?
I think they are in a holding pattern. You really have to just put yourself in the lens of an institutional investor. You've got the Magnificent Seven. People can allocate the capital between those. And if Tesla's in an information vacuum for the next quarter or two, people play AI in other ways, whether it's Google, Nvidia, et cetera. So certainly other opportunities here. But what typically excites investors is when there's reality around new things for Tesla. And right now, what was expected to be reality next month in August got pushed out.
Well, on that earnings call, we also got some insight into how Elon Musk is thinking about potential policies to come that could impact Tesla. I want to listen to what he had to say about any potential rollback of the IRA.
There would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly.
So basically arguing it would be worse news for our competitors than it would be for Tesla. As a Tesla shareholder, from a financial perspective rather, for shareholders, would a policy like that hurt Tesla less than competitors? And how should those shareholders be reading that?
Yeah, I mean, certainly Tesla's been at the EV case for a longer period than pretty much any other car maker. So other car makers, sort of by definition, certainly are benefiting more from the tax credit than say, Tesla's typical buyer. I would say it's completely contradictory to what Elon's mission was to start. He wanted EVs to proliferate for all, and even talked about sharing the technology, licensing battery and safety technology to other OEMs. And so now he seems to have taken a different tactic as it relates to boxing out the competition. But I do think it'll hurt everybody. So I'm not a believer in just one side of the ledger gets hurt, but certainly any new entrant that is subscale, both in battery manufacturing and car manufacturing, would benefit from these types of credits. Given the income limitations that have been put on that with the IRA, you're essentially forced to lease cars. That's not for everybody. So it is a subsegment of EV buyers that benefit from the credit just due to the income limitations that have been put on the $7,500 tax credit, though.
So from a policy perspective, who is better for Tesla's shareholders, Kamala or Trump?
Yeah, I personally think that the Democrats win would be better for any type of EV and energy transition company. There's just a lot more subsidization and an easier transition path. I think there would be a lot of confusion in the market if the 2027 EPA targets were rolled back under a Trump administration. There certainly wouldn't be a direction of travel or marching orders, so to speak, for the industry. And so some OEMs might take a more leisurely pace in getting there relative to, say, the European market and China with its new energy vehicle policy credits. Those are similar, if not larger sized markets. And so if the U.S. takes a step back as it relates to emission standards under a Republican administration, it's going to hurt the OEMs that have a variety of vehicles that they can sell because it just limits the scale that they have with EVs, and it'll force them to come up with options for both the European market and China, which are still forcing automakers to go down this path.
We get to some trending tickers. Shares of Tesla moving to the downside, the company missing analyst expectations really across the board. And CEO Elon Musk confirming the delay of an event that's meant to showcase robotaxis on that latest earnings call. So here to discuss, let's bring in Itai Migliore, Citi U.S. Auto Parts Analyst. Itai, thank you so much for being here. So I know you kept your neutral rating on the stock, but you lowered your price target. What would it take? What is the single thing that you would be looking at to bump up that price target again on the stock?
Yeah, we're trying to be very tactical with Tesla. And thank you, of course, for having me, where we're looking for a couple of things. First, we'd like to see consensus estimates come down. We have been below consensus really all year. And we want to see an opportunistic entry point potentially with the stock heading into some important events. With Tesla today, it's a lot of push and pull between the core auto business and EV business that has had some struggles and fundamental headwinds. Again, some of the really exciting opportunities are coming up, both the new EV models you mentioned, as well as the Robotaxi Day in October and other AI opportunities. The stock has had a pretty good run here into the quarter, had a gain momentum off the Q2 delivery beat. We did learn last night that the auto gross margin, excluding credits, was below expectations, which is a reminder that the auto business does still have some fundamental challenges. So for us, it's really about kind of setting up the stock price relative to consensus in anticipation of some of these important events, particularly the October Robotaxi Day. But right now, we are still neutral on the stock.
Itai, do you think the Robotaxi Day is going to be a catalyst here for the stock, or is it going to be more of a show me story at this point in the cycle, just given the fact that it has been delayed and now there's lots of questions about whether or not even the timeline that Musk laid out last night, whether or not that's even realistic?
Yeah, it's a great question. I think it's all about the level of credibility in the actual deployment plan for Tesla. If the event is reminiscent of the 2019 Autonomy Day, that could receive some pushback and disappointment. But if the company is able to actually leverage its advantages, which we think are really a low-cost robotaxi platform, the hardware costs, as well as, of course, their end-to-end AI capabilities, which are very strong, into a credible deployment plan for robotaxi and other mobility services, that could actually be perceived well. Now, the question is there a credible deployment plan that we think they could actually undertake? And the answer is yes. In a published report back in June, we did articulate opportunities for Tesla to deploy AV in easier domains. So not like urban robotaxis, but areas where they can leverage their lower cost to deploy in easier domains. So the bottom line is, if we are able to get a more credible deployment plan, and investors can say, I see how in the next couple of years this can lead to incremental high margin revenue and new mobility services for the overall Tesla ecosystem, that actually could be taken as a positive.
I want to switch gears a little bit, Itai, and talk to you about Ford, expected to report their second quarter results after the bell here. What are you going to be watching in those earnings?
Absolutely. Yeah. So we are expecting strong results. We got good numbers from GM yesterday. Ford also did have some good news recently in terms of F-Series Super Duty capacity expansion plans. And so we do expect strong Q2 and a stronger outlook. I think one of the things we talked about in the last several weeks is, for both automakers, the second half outlook as compared to the first half outlook does create some optics where the second half is going to be a bit weaker for seasonality and some other factors. I think that sort of has hurt report GM stock yesterday and this morning as well. And so there are some tricky optics into the setup for the quarter. But overall, we do expect a strong result and a favorable outlook really on our underlying call for U.S. auto demand. The real strong trends we're seeing and have been seeing for a very long time in the pickup truck market, as well as some of Ford's internal execution as well. We'll be watching the Ford Pro segment very closely. That had a very, very strong Q1. We're expecting good results here in Q2 as well. And of course, kind of taking a look at what the second half outlook that they articulate will end up looking like.
All right, Itai, always great to get your insight. Thanks so much for joining us here as Citi's U.S. Autos and Auto Parts Analyst. Thanks so much. And let's start with Tesla. We'll unpack that first. How are you viewing this sell-off that we're seeing in reaction to the stock? And should investors be viewing this as a buy the dip opportunity?
Well, I've often said that you should buy Tesla during periods of chaos, and we were doing just that earlier this year. And I was on your air in April and suggested that it was a good time to add to holdings, and the stock's up 74% through yesterday. So back out today's 8%, 9% decline. I don't think you're buying this stock for EV growth. You're buying it for the other elements of the business. Our focus has been on the mega pack battery, utility grade battery business. Grew 100% in revenues year over year last quarter. It's fastest growing, most profitable business, and Elon Musk announced a China factory that will triple output. And that's been the issue. It hasn't been a demand problem. It's been a supply problem. And so if you add that to the robotaxi business and then full self-driving, I think you're buying a company that's an AI company and less so a car company.
I want to ask you something that our autos reporter flagged to me this morning, Nancy, which is this idea that maybe the energy storage business for Tesla is sort of like Amazon's AWS because of the degree to which it contributes to the company's growth. Would you agree with that characterization, given that you also look at Amazon?
Yeah, I would. And that is really what drove us to add to our holdings. I went on a factory tour with a small group of investors in California at the Mega Pack battery facility. And it's impressive. The growth has been impressive, the profitability. They are the low cost producer in that particular segment. And so we expect to see the growth really drive earnings in the next few years. But right now, the headline readers are focused on EV sales. Yet I would just argue that even in that aspect, no matter which administration takes over, I think Tesla is well poised to gain share relative to the other EV makers in the coming years.
Nancy, since you mentioned the election, I have to ask, Elon Musk saying that he's rolling back his $45 million a month donations to Trump. Not getting into the details there, but to what extent do you see Musk's support of Trump as a potential headwind for EV sales moving forward and therefore for the stock moving forward?
I mean, listen, Elon is the one CEO you don't want to underestimate, yet he is consistently underestimated. He actually takes a page out of Trump's playbook where he says something and then he walks it back and it's provocative and he gets headlines. I just don't, just as the Twitter purchase ultimately did not tank Tesla's sales, but it was a great buying opportunity. That's actually when we reinitiated our position in January of 2023. That was an opportunity, and that's what I mean when I say buy it in periods of chaos, because I made that mistake once when we didn't do that, and I'm not going to make it again.
Shares of Tesla are falling after the company reported mixed earnings for the second quarter. Tesla made less money per share and missed analyst expectations. Tesla CEO Elon Musk was forced to address questions surrounding the slowdown in EV sales and the delay of its robotaxi debut. Shares are off more than 10% since the start of the year, but our next guest still thinks the stock is a buy. Here with more is Simon Hale, a portfolio manager and senior wealth advisor at Wellington Altus Private Wealth. Simon, Tesla is one of your largest holdings, and you are bullish on the long-term outlook of this company, but we are seeing those disappointing earnings drag the stock lower today. Were there any bright spots for you in this report, and did the low energy and more subdued demeanor of Elon Musk on the call concern you at all?
I thought it was a great call. I walked away with no disappointments. Elon Musk and company, they've laid out on this call, they were quite clear, and they laid out a plan to get back to 50% earnings growth by 2025. And sort of, you can do some back of the math calculations, but they're talking about FSD being approved by regulators in Europe and China. That could bring an extra $1 billion to $2 billion next year. We're looking at Cybertruck ramp, possibly 200,000 units next year. There's another $2 to $3 billion in profits. But then you look at energy, and Tesla Energy is going bananas. I don't know if you've looked at the charts or the deck that Tesla put out for this quarter, but there's just this bar line going straight up with Tesla Energy, and they did almost $900 million in profits just this quarter, deploying almost 10 gigawatt hours. And that if you can duplicate that next year, there's another $4 billion. So if you just put this in perspective, trailing 12-month earnings were around $12 billion. And on their existing footprint, they've laid out a plan for over the next 12 months to be able to grow that by $8 billion. That's 50% growth going forward. And I think that Musk and company have laid out the groundwork to move this train back to a 50% growth rate to the end of the decade. And the train's starting to leave the station. So we're quite excited.
But Simon, what would you say to critics who do not trust Elon Musk as a leader? We've already seen the delay of that robotaxi rollout. He's talked about cheaper EV models coming to market, but even that hasn't come to fruition yet.
Yeah, I think Elon's extremely optimistic, but I don't think there's a leader that can push his employees more than Elon does. So, whether it's 8.8 or 10.10 with the robotaxi event, I don't think that's going to matter. All of these short-term headwinds are just nothing burgers when you look to the end of the decade. We're looking at a deca-trillion-dollar opportunity here, and to overlook that this early in their growth stage, I think investors would be disappointed if they didn't own a piece of Tesla in their portfolio. And in terms of the new low-cost vehicle, again, all of these are completely new products that have never been done before. So the Cybertruck was late getting out, but it's a fabulous product. And I think I've seen it in a million rap videos, and every star in Hollywood wants to drive this today. So that thing's doing extremely well. And if we look at their Tesla Energy, it's kind of boring, but the demand for this is quasi-infinite. And Elon talked last night about how Tesla Energy, the Shanghai factory that they're building, could be 2 to 3 times as large as their US production. So that alone, just think about this for a second, Alex. In the last 12 months, Tesla earned roughly $16 billion in profits. And if they're able to ramp up these megapack factories at the rate in which they're currently going, they could do $16 billion in profits just in their energy by 2027. I mean, that's bonkers. So we see a lot of great things for Tesla going forward. And what's really interesting is when we're looking at their battery packs or their Tesla Energy, is they basically built out a model, and they thought about this a long time ago, that whatever excess battery capacity that they can receive from other manufacturers, if they don't need it in their autos, they're going to put it in the mega packs. So right now, as the legacy automakers are pulling back on their demand or their orders for EV batteries, Tesla is picking them up at pennies on the dollar, putting them into these mega packs and selling them at a 30% plus profit margin, which I think is absolutely brilliant. And what it's doing, it's smoothing out the earnings for their auto earnings. It's smoothing out their auto earnings through a period of high interest rates and a slower economy. So it's really brilliant what Elon's been able to do.
So you're clearly bullish on the long-term outlook. If you're not an investor today, should you get into it right now at the levels that we're seeing?
Absolutely. Absolutely. I think that this is a fantastic entry point. I look at it as almost a gift, seeing the stock price being down here around $217 today. We'll probably look back on this similar to if you look back on Apple in 2011 and split adjusted, it was trading around $20. Everyone wishes they had the insight or the foresight to be buying Apple at a time. And people were criticized. We were criticized for buying Apple in 2011. Our clients are not upset today for that decision. So I think this is going to be very similar. What's happening right now is we're having a convergence of multiple technologies that Tesla's involved in, and you're talking AI, you're talking the cost of batteries, the cost of chips coming down, and you have a company that's taking all of these cost savings and driving them into their new technologies, and then implementing AI, where all of these cars will and are effectively robots on wheels. It's pretty exciting. I'm actually thinking about the movie Knight Rider 40 years ago, how we had talking cars, and I thought that was pretty ridiculous. And I think we're not too far off where we'll have cars. I'm predicting robotaxis by 2027 with an AI-generated voice command, which is going to be pretty neat.
All right, we'll see if flying cars are in our future. Tesla shares, though, off about 12% currently. Simon Hale, portfolio manager and senior wealth advisor at Wellington Altus Private Wealth. Thanks for joining us. Tesla's latest lackluster earnings report, which has caused the company's stock to tumble this morning, is bringing a new spotlight on the leadership of CEO Elon Musk, who oversaw the tech and auto company's profit fall 45% in the second quarter. With Musk embracing GOP politics that seemingly do not align with electric vehicle company goals, what does the future hold for the world's richest man? For more, we welcome in Nobel Prize-winning economist and New York Times columnist Paul Krugman, who has written on Musk, the economy, the election, and so much more. Paul, welcome to the show. So much to discuss with you today. But let's start on Musk, because you wrote in 2022, quote, "Given what we've seen of Musk's behavior, I wouldn't trust him to feed my cat, let alone run a major corporation." Two questions for you there. One, has your opinion of Musk changed since that time? And two, just zooming out, what has made him such an alluring figure to begin with?
Okay, no, my opinion has changed in that it's a little bit worse. I mean, he's confirmed all the worst expectations. I mean, he's well along that sort of conveyor belt from, conservatism, I like my taxes low, to full on a QAnon type conspiracy theorist. So it's an amazing thing to watch someone who could, afford to finance a personal intelligence operation comparable to that of a medium-sized country, instead buy into random bots tweeting conspiracy theories on his site. So that's really bad. What can we say? It's pretty amazing to see him going this far off the edge, and fundamentally, the MAGA movement is hostile to what he made his name on. I mean, he was whatever the allocation of credit, Musk pioneered electric vehicles in the United States, which is a big deal. He did some stuff on space technology that is a big deal. So a lot of people really wanted to admire him. The trouble is he's not behaving now like someone you can trust on anything.
Mm-hmm. And outside of just Tesla, he's also made headlines around the election. It's clear from his post on X that he approves of Donald Trump and that he supports Donald Trump as the next president. But it's interesting because Trump already said he would be rolling back some of those EV policies that Biden has put in place. So what do you think the play here is for Elon Musk, and what's behind his support of Trump?
Well, yeah, I mean, what you watch, I've spent quite a while, and other people even more, trying to think about the psychology in general of tech billionaires. It's a very peculiar set of politics. It's not like, if you look at sort of major Fortune 500 companies, their CEOs basically are trying to maximize profits for the shareholders, which is itself that's a question whether that's a great thing or not. But when you talk about people who are individually enormously wealthy and made it to some extent by being contrarian and so on, they aren't all that rational in their political beliefs. Remember, a lot of people, to some extent Musk included, went gaga over RFK Jr., who is clearly a crank. And now I think this really is about Musk's personal hangups. A Trump administration would be really bad for Tesla's core business.
And Musk, it's interesting because he's not the only tech CEO to voice support for Trump. What role do you think Silicon Valley will have on the outcome of this election? And how will crypto factor into that support as well, given the Trump Vance ticket is very pro-crypto, and we've seen entrepreneurs like Mark Cuban, for example, theorize about this?
Well, crypto is certainly, there's a lot of money involved, but at least what I understand from the political scientist types is that there are diminishing returns to money. Money matters. A campaign that doesn't have enough money to put a lot of stuff on the airwaves to run an organization is in trouble. And just before Joe Biden stepped aside, it looked as if the Democrats might have a real cash problem, but with this huge outpouring since Harris became the presumptive nominee, that's not going to be an issue. So we're at the point now where at the margin, billionaires don't matter, which must be intensely frustrating to them, of course. So I don't think that makes a big difference. Crypto, yeah, I mean, it is a funny thing how crypto has become a big player in political donations, which in a way they have to be because they're an industry that hasn't got, still doesn't have a use case except for money laundering. So it's all speculative stuff, and it's so getting sympathetic politicians is pretty much all they got.
Jeffrey, let's talk a little bit more about what could be a catalyst here for the stock going forward. There's lots of focus on the cheaper vehicle. Now the thought is that we're not going to see that till 2025. And then the thought of the Robotaxi. And I bring that up because Musk was saying it's going to start with this prototype. He expects to roll it out by possibly here by the end of the year. How realistic do you think those two timelines are? And I guess if we don't see a cheaper vehicle in the first half of next year, how big of an overhang, how big of a drag could that then ultimately be on Tesla stock?
Yeah, it's a great question. I think the key question in my mind is the cheaper vehicle, likely, hopefully gets shown on October 10th, or there's some details about it. They made reference over the past 6 months that will not be a new platform or a new vehicle, what was referred to as the Model 2 or next-gen vehicle platform, likely to originally be built in Mexico. They backed off the Mexico facility on the call last night. My mind is it's really just an upgrade, if you will, to the Model 3 and the Y. Historically, car makers would do this, throw on spoilers, bigger wheels, fenders, et cetera, turbochargers to invigorate demand. That's a little harder to do in an EV world, especially where competition is accelerating incredibly fast. Against Tesla. And so I'm personally not a believer that if it is just a Model 3 and Y refresh and sort of stripping it down or decontenting it, that'll lead to an invigoration of growth in the second half of 25. They were clear it would be on existing platforms or factories, which are today underutilized and suffering from a margin perspective. But the key question is that could a refresh of the platforms that are existing stimulate better margins or higher price? I'm pretty skeptical on that. As it relates to the autonomy side, which is really what the purpose of the October 10th event, I think the key question is the event around a robotaxi service, which is what we were led to believe, and then will it be a car without a steering wheel and gas pedals and brake pedals? That essentially, everything is done by computers. That's sort of the definition of robotaxis, obviously. But GM just backed off of that yesterday morning. And I'm not sure that the insurance industry, the consumer world, let alone regulatory policy, is ready for that. That last point on that front is, this has been going on for 5 years where Tesla has been leaning into autonomy and robotaxis. They had a whole event on 2019 that they raised a bunch of capital afterwards on that. And, here we are 5 years later with very little disclosure on what progress they're making other than just beta software releases and sort of the incremental progress that's been made, now talking about 12.5 on the call. But what we really need to see is the number of interventions that drivers have per mile or per minute, ideally both, to get a sense of what is the technical progress. There's a very controversial approach, last point I wanted to make, that Tesla has relative to peers, where they're only using a camera and the AI computers to solve this problem. Most other car companies around the world are using a suite of sensors coupled with the software. And so, given they've been promising this for 5 years, it's a bit hard to imagine in my mind that a camera-only solution will truly get the company there with the existing fleet of cars, hence why they probably need a purpose-built vehicle that we'll get more details on October 10th about.
Good reminder that investors should be taking a look at the product announcements as well, Jeffrey. Thank you so much for joining us. We appreciate it. That was Jeffrey Osborne, TD Cowen Managing Director and Senior Research Analyst.
Tesla may be investing $5 billion in XAI, right, as suggested by Elon in that poll on X. You all are invested in XAI. How as an investor you think about that? Would that be good for XAI and Tesla, Doug?
I think it makes some sense. And one of the things I think is really cool about XAI and just Elon's orbit of companies in general is that there are these interesting synergies. I think what sets XAI apart as a large language model competitor is their ability to think about the physical world from all the things that Elon does at SpaceX, at Tesla. So I think there's synergies there that could be interesting. If you kind of do some of the math on that $5 billion investment, though, Tesla has about $30 billion right now on the balance sheet. Their market cap was, let's say, $700 billion. It's getting knocked around a little today. But even if their investment in XAI, from an equity standpoint, let's say 8x, 10x, and XAI was a $250 billion company, it really doesn't move the needle that much for Tesla as a stock. So I think it makes sense from a synergistic standpoint, but you could almost make an argument that Tesla should go even bigger if they think that they can get some value by investing in XAI. Make a real bet that might really impact the value of Tesla as well.
And while we're on Tesla, are you guys in Tesla as well?
We don't currently own Tesla. We do own Google, and we're sticking with it even though it's been volatile today.
And you wouldn't be tempted to step in on Tesla as you see this kind of decline?
We've been watching, and we're really acutely, I think, attuned to what they talk about at this Robotaxi event in November. I mean, I think that's really probably what the stock is going to focus on as we get past earnings here. And the question again goes back to the model, right? What is Elon going to show us in Robotaxi where we should think about a new business model and how that flows through to the bottom line? Can this be a really high margin business that no one's really modeling for Tesla right now? Or is it just they're going to sell some more cars, they're going to license this software, and it's less meaningful? I think that's the outstanding question.
And Doug, you mentioned you all are in Google. Any concerns about the CapEx spending going on there?
No concerns. It's what we think they should do, and it's what we think the rest of the Mag 6 are going to continue to do too. The way we've framed it is they almost can't afford not to spend, because if they miss AI, if these companies, if someone says, hey, we don't think this is the moment, and they stop investing, everyone else continues and they get it right, that AI is real, that's purgatory for these companies, because anybody who misses it, they'll never catch up.
Not good for Sundar and Ruth.
No, they'll never catch up.
Doug, good to see you. Thanks a lot for coming to the studio.
Taking a look now at Tesla as it's in the safety spotlight again. The EV giant recalling nearly 2 million vehicles due to a safety risk relating to the car's hoods. Yahoo Finance's Praz Subramanian joins us now with the details. Praz.
Hey Josh, so about 1.9 million or so vehicles recalled for a safety failure for a hood, unlatched hood. The software was not detecting the hood was unlatched. And with Tesla's, the front hood is actually a trunk or frunk, so people use it a lot. Potentially could come open while you're driving. That's a big safety problem. So they're sending out a software update to fix that. But Tesla fans aren't happy when they call it software update recall, but it really is a recall when you have to be sort of told by the government you have to fix this problem. So that's what's going on with Tesla.
And it's interesting because it sounds like it was more of an issue in other countries,
Yeah.
or at least there have been more reports of incidents related to this in other countries. There have been a handful in the US.
Well, Tesla has stopped taking orders on its website for its cheapest Cybertruck that retails for roughly $60,000. Now, the least expensive model on the site has a price tag of about $100,000, excluding the EV tax credit. Here with more on the change, we've got Yahoo Finance's senior autos reporter Praz Subramanian. So Praz, 60,000 to 100, that's not a small bump up there.
No. I mean, yes, that is a significant, I wouldn't say price hike, because it was always on sale, that $100,000 model. So what's happening now is apparently they're not letting you order that $61,000 cheap model. And the thinking is, I spoke to analysts at Guidehouse Research, and they think that the reason why is because their conversion rate is so low for the current $100,000 model that they think that people are waiting for that cheaper model, and because of that, they have so much supply now. There's reports of supply building up in parking lots of Cybertrucks. So I think Tesla's probably thinking we got to get rid of these first-year models now before we can drop the price again.
Do they have any idea of what the demand is going to look like for $100,000? Because we talk about the fact that the economy could be slowing, that consumers are pulling back on spending. $100,000 for a vehicle is a heck of a lot of money.
Yeah, for a pickup, like a fun adventure type vehicle. We saw that Cox put out some numbers for Q2 EV trucks and EV sort of vehicle sales, and the Cybertruck was the top selling EV pickup, around 8,700 units. The F-150 Lightning was around 4,700, and the Rivian was 3,300. So they are beating their competition, but these are small numbers, right? Compared to Ford selling hundreds of thousands of regular F-150. So these are small numbers. It's still good, but you're right. They can't get that mass scale. And they want to build 200,000 Cybertrucks per year. How are you going to sell all of them at that price level?
How realistic is that?
I don't think it's very realistic to think that you could sell 200,000 $100,000 Cybertrucks. I think we're going to see that price come down. We know Tesla likes to play with pricing, so we just got to wait. But right now, they're thinking to themselves, we got to sell more of these expensive trucks.
Yeah, because there has been a number of stories about the Tesla Cybertrucks piling up in parking lots or sold everywhere. So it'll be interesting to see what this does ultimately.
Our own director, Michael Sterling, saw a big lot full of Cybertrucks in New Jersey.
Michael, get video.
I know. We can throw out the pictures next time. All right, Bros, great stuff. Thanks so much.
And Blair initiating coverage of Tesla with an outperform rating. The bullish call highlighting the EV maker's underappreciated energy storage business, noting an Apple-esque ecosystem for energy. And joining us now is Jed Dorsheimer, Group Head of the Energy and Sustainability Research Sector at William Blair. Jed, interesting note. Why don't you walk us through the initiation, Jed?
Sure. Thanks for having me. You know, the key, it's really about a culmination of 9 months work, looking at our energy systems in the U.S., how the grid operates, and particularly the role of artificial intelligence and what that does to stress the grid. And some of the findings are that, you know, the move to renewables, which are variable assets, are actually increasing the fragility of the grid, which is causing a consequence of one of Tesla's products, the Megapack, to add storage to actually stabilize the grid. So we see, you know, the two benefits from this reduced resiliency is one on natural gas, which benefits one of the names we also launched on, which is GE Vernova with an outperform rating, and also Tesla for the energy storage or the Megapack. And that doesn't get a lot of attention. You know, it's most of the focus on Tesla is on its EV side, but we actually think that the growing energy side could add, you know, close to $3 of earnings to the business.
Jed, it's a fascinating outlook, but I wonder if you need to call Elon Musk and see if he is on board with this future of the business here. He has said previously, if you don't see Tesla as a self-driving car play, you shouldn't be owning the stock. How much does your view require Elon to kind of get on board with the future of the business, relying on something else here?
I mean, I've had several conversations with Elon, not recently, but in the past, and I think Elon has always seen the business as an energy play, and that takes different forms. So I would doubt that he would have pushback on, I mean, I have not had this discussion with him, but I would be surprised if he views the company or views this asset that they have, which is growing. I mean, literally they're sold out and can't build capacity fast enough, if he would view that as a negative. You know, I do think you bring up a great point, though, which is, you know, the EVs, which is, I've covered this in the past, and we look at the company holistically, get all of the attention. And so this is an area that we're bringing focus to that is often overlooked. It does not get a lot of attention. And one is because historically that's been rather small, but we see this as a growing, you know, both growing in demand and value and importance for Tesla.
Tesla planning on releasing their fully self-driving technology in China and Europe in the first quarter of 2025. That's according to a post on the Tesla AI account on X. The rollout, which is still pending regulatory approval, is seen as a move to further stay ahead of Tesla's China-based EV rivals. Tesla shares are trading higher this week after reporting 63,000 sales in China in August. That's a 37% increase from the month of July. For more on this, we welcome in Greg Migliore, Autoblog Editor-in-Chief. Greg, it's great to speak with you. So talk to me about the degree to which this full self-driving release in China is set to be a meaningful positive catalyst for the company. I guess I'm curious to what extent I should be believing in that Q1 2025 outlook. What do you think?
Hey, good morning, guys. Thanks for having me. I would be a little skeptical about that. I think there's sort of normal time in the car business, and then there's Tesla time. They might hit it, but I think it's entirely likely that it could, you know, slip into the second or even the third quarter at least. You know, FSD could be a difference maker for Tesla in China, and they also mentioned the European rollout as well. It is something unique. It's something different. I've tried multiple versions of it. It's gotten better over the years, but there's also a learning curve, not just for customers, but for regulators. So when things don't quite work, as they often don't with FSD, the governments and the regulatory bodies need to figure out how to govern that and, enforce things. So we'll see.
Greg, even as I saw this tweet, it comes with the context that Tesla has put some very lofty timelines out into consumers' minds and into the markets before, but the track record for actually meeting some of those targets hasn't necessarily held up or come to fruition at the time at which they said that they would. What should we expect here for real?
Yeah, I do think it probably won't exactly hit the line as Elon Musk has pitched it to do. I think there's a good chance that as they try to maybe cater FSD to each market, I think there could be some delays there as well. I guess it would be actually a real brain stretcher to figure out the exact last time Tesla truly did exactly what they said they were going to do on their suggested timeline. Things like the Cybertruck come to mind, the semi, the Roadster. Where's the Roadster, right?
It's in space.
So
it's in space, Greg. There's at least one up there floating around. We know that.
That's true. And also the robot Optimus, I think, is on time as well. So sometimes Tesla does, I think, try to arrive, if you will, when Elon Musk says they will. I think in the case of FSD, though, it really is sort of a passion project for Elon Musk. It's like an articulation of his strategy for the company. It brings together AI with the automotive space. Mm-hmm. So, we'll see.
I'm curious, Greg, when you look at the broader auto space this week, there's been a slew of negative headlines. We had a downgrade on GM. We also had Volkswagen considering closing some of its plants. Is Tesla, and I hate to say this because of the bulls on our platform that are going to be thrilled, but is Tesla a defensive auto play in this environment?
It's a really interesting week for Tesla. We saw some pretty big market movement Tuesday and Wednesday, and it seemed like they almost got credit for not doing anything kind of weird, like as we saw with General Motors and then the Volkswagen potential plant closures. I think investors and many consumers remained confident in just the idea of Tesla, the brand of Tesla. I think for many people, they are the default EV maker. They're the first point of consideration when you're considering an EV. So I think they almost just kind of got some brownie points simply by not doing anything wrong.
Yeah.
And sometimes you do see that.
Let's talk Volkswagen specifically. Is it too big to fail? Is it going to have an experience similar to what we saw in the United States in 2009, where some of these automakers were kind of bailed out by the government? What do you think?
So I don't think Volkswagen's in as rough a shape as General Motors and Chrysler were back in 2009, but I think they're stretched out pretty thin. And I think they probably have overcapacity. They have many factories in Germany and around the world. So their CEO this week basically said, hey, we're thinking of trying to close some factories, which for Volkswagen is almost unthinkable. They haven't closed a factory since 1988. So to even float that idea is definitely, surprising. They have a very powerful union, IG Metall, based in Germany, that will push back extremely hard. They have seats on Volkswagen's board, and there's also some state control of Volkswagen. So I think any broad layoffs are probably unlikely, but they do need to find money to invest in EVs to be competitive with Chinese automakers, American automakers, and become, I think, a more well-rounded global player.
Just lastly, while we've got you here with us, Greg, Stellantis announced late yesterday that it's scaling back production of both the Jeep Wrangler and the Grand Cherokee, which was, a beloved one for me when I was in high school and wanted to get my first vehicle here, just used. What are some of the problems that Stellantis, though, has been facing as of late?
Well, specifically with the Jeep brand, sales are down 9% this year, and they let the Cherokee small crossover end production. So that brand, which has been a cash cow and really been, I think, the catalyst of their momentum in the last half decade or more, it needs a little bit of attention. It needs a little bit of TLC. Wrangler sales are down. Gladiator sales are down. These are really fun to drive vehicles, but they're also not the greatest on gas. They can be a little bumpy and jumpy to drive if you're not going off-roading. So the Jeep brand needs to put up some good numbers, I think.
All right. We'll see if they go on Wagoneer. We'll see here. But ultimately, a lot of roadway ahead for this company to try and figure it out here. Greg Migliore, who's the Autoblog editor-in-chief. Greg, great to see you. Thanks for taking the time here with us.
We're watching Tesla. Those shares getting a lift after the EV giant announced its plans to launch full self-driving technology in China and Europe next year. Yahoo Finance's Prasad joining us now to discuss. So what is new in this news today?
Yeah, I think it's really interesting move here in the stock because it seems a bit, I didn't think the reaction should be this high given what the news that we're hearing. So first of all, with China, they're saying in Q1 2025, FSD release pending regulatory approval, which we know is a big deal. That's not some easy thing to obtain. Plus, they were actually reportedly going to be launching this at the end of this year. So there's actually a mini pushback of that sort of milestone for FSD in China. In the EU, the same thing. Q1 2025 is when they expect it to come out. And the EU actually is a lot less behind the US in terms of that sort of having those products out there. They're very controlling about who can put out a self-driving product. Very hard to get those going. I was in Sweden a few months ago. There are no cars that are allowed to have any kind of FSD type of like level 2 or even below that type of system because they're just so adamant about safety there. So I'm a little bit kind of intrigued why this move happened, such a big move in the stock. I'm not sure if this warrants that. But, it's definitely something to keep an eye on. Tesla trades not necessarily on reality, or should I say fundamentals. So that's what's kind of maybe going on here.
Is it also, Praz, like if and when you have this robotaxi fleet in service, ready to go, I mean, your guess is as good as mine when that is. I have 5 years, 10 years. But if you did have it, and if Beijing gave the regulatory approval, I'm saying the word if a lot, then China would, that would be the place to be, I would think.
Yeah. Beyond FSD, like robotaxis is a whole other thing, and definitely that China is way more willing to embrace technologies like robotaxis. There, they love that kind of thing in terms of what's cutting edge, what's the future like for mobility, more so than here where we want to drive our own cars. So yeah, definitely for sure. But also talking about robotaxis, there's no trials yet. Tesla has no trials, no areas, no geofence areas where their cars are operating. So that's sort of I think another pushback there.
Question mark.
Yeah.
Yes. I was just on the West Coast and I had the chance to see Waymos in action in the wild for the first time. It's pretty cool.
And Emmanuel, let's get to some other names here. Tesla. Am I right to say you initiated here, Emmanuel, you're neutral on Tesla? If so, how come, and what do you need to see before moving to a buy?
Yeah, so basically on Tesla, we're reinitiated with a peer performer, which is the equivalent of a neutral here, but also with a positive long trading call into the ramp up into their Robotaxi Day, which is coming up on October 10th. So the real thing that keeps us more peer perform rated now is the current valuation. We feel like at current levels, the stock is essentially already embedding good value for a lot of the existing businesses continuing to grow. We actually do think that the autos business fundamentals are plateauing here and will probably reaccelerate both in terms of deliveries, gross margin, and earnings. We also want to give them credit for all their other businesses, including energy storage, which we're very excited about. But absent adding any new things to it, like robotaxi as a business or AI, we feel like the stock is generally fairly valued, around these levels. So we're eagerly waiting for the Robotaxi Day, which is on October 10th. Want to hear what are Tesla's plans to actually monetize this? What would be the timeline around that? We're not quite comfortable, adding that to our sum of the part currently. But obviously, if they provide the right amount of information, that could provide some upside to here. In the meantime, we have this tactical, shorter-term, long trading call into it because we believe enthusiasm will rise as we get closer to the event. We also believe the event could serve as a forum for Tesla to unveil their next cheaper consumer vehicle, which is something they've promised to come out with in the first half of 2025. And that could continue to give the stock some momentum. So I would say positively inclined, but for now we're looking for a higher price target.
Can I just pause you on that one? What are the odds, do you think, that we would get the announcement of that new car at this particular event?
This is a commitment that they've made. They've spoken about using that event as a way to show where the next cheaper high volume car will be. So I think that the odds are actually pretty high. The question is it possible? What are the odds then of it being ready and rolling out the lines in the first half of 2025? Those are probably pretty low. So I think we will likely see a consumer car there. If you remember back in April, Tesla moved away from the Model 2, like the next gen vehicle, said this is no longer the focus. We're focused on robotaxi. But then they specifically said, we are working on a cheaper model version of the existing models, something that will be much more mass market. So we're looking forward to that.
Tesla shares under pressure here this morning, off nearly 5% after deliveries came in just below the street's estimates, according to Bloomberg. But despite the slight miss, sales were up more than 6% during the quarter, marking the company's first quarter of growth this year. We want to bring in Jed Dorsheimer. He's an analyst covering Tesla with William Blair. And Jed, it's great to have you here. So we're seeing this market reaction with the stock off nearly 5%. When you take a look at the numbers, especially factor in the fact that this is Tesla's first quarter of growth here for deliveries, is this a bit of an overreaction to the downside, or how are you looking at this?
Well, I mean, the setup going into the 10/10 event, which is on the Robotaxi, is you've seen a number of other banks that have taken up expectations on delivery. So you've seen a creep up, over this quarter, which is coincident with the stock rise. And so, not surprising to see a pullback as you have a bit of a disappointment here. Our focus is largely on the energy side, which they came in about a gigawatt hour under our expectations as well. I think Tesla is better looked at through the lens of the patients stabilized. So, we're not seeing the reductions, as you pointed out, that we saw, earlier in the year. And there are some key catalysts that are coming up. One is Robotaxi. Two, the one that we're really focused on is on the energy business, getting Shanghai built where they can double the capacity and really start delivering more of these megapacks.
How far out are you modeling for Robotaxi to be a real contributor for Tesla's bottom line?
We're not. So, that is a point that we're different from others. There's others that are much more bullish. We're not there yet. So, if you kind of go back, my history with Tesla was being able to call the, Model S and X go into the 3 and Y in that Shanghai kind of acceleration circa 2019 timeframe. We see a similar setup with respect to energy. And that's why we're focused on this. One, there's a lot of demand in the market for this product. They're supply constrained right now, and it is lumpy. But as they get this manufacturing facility up, that's kind of what our focus is.
And so with that in mind, as you look across the regions where Tesla has made really specific and profound inroads to make sure that they can appease local governments, whether that be in the Gigafactory in China and in Shanghai, and then additionally in Europe, where they're anticipating to ramp up production there even more so. What is the territory that they need to get right, especially given the consumer backdrop that they're navigating for purchases of these luxury electric vehicles?
Well, I don't think it's I think the whole, on a vehicle side, it's not about luxury anymore. It's really about getting to high volume and lower price. And so I think that was the Model 2. The market clearly wants the Model 2 in a lower price, and we've seen some push outs around that. And I think we'll get some updates around Robotaxi. What I was talking about is actually in the energy side and kind of ramping the manufacturing capacity. Our grids are stressed to the max right now, and that's a global statement. And so, looking at Megapack as a solution for a portion of that demand, in our opinion, could be as much as what we're seeing on the vehicle side. And so really it's about time to market. And that tends to be, as you point out, the geographic location of where your manufacturing facility and your time to market is always going to be sooner over in Asia. And so, that's our focus. And we think that could add $2.35 of additional incremental earnings in our 27. And so, I think that is an area that a lot of people aren't focusing on.
That is so interesting, especially when you talk about the fact that once they do get Shanghai built, they're going to be able to double that capacity, really start delivering more on those megapacks. I guess just in terms of even longer, if you're looking out beyond 2027, you're talking about this massive opportunity here within Tesla. What does that upside look like 5-10 years from now?
Our model doesn't go out, so I'm going to refrain from commenting on, but I think obviously in our analysis, what we found is that the variabilities from renewables are actually creating a lot of the stress within the grid. and that the mega packs were not being used just to augment the time duration on solar and wind, but actually to stabilize the grid, which means that the TAM, or the market opportunity, is actually far larger. Because if you think about taking coal down, or maybe replacing that with some natural gas or nuclear for baseload, having that stabilization to offset the 10+% penetration of variability from wind and solar, that's a much larger market. And so I think the return on invested capital on the energy business could actually be greater than that on the auto business.
Jed Dorsheimer, who is the William Blair Group Head of Energy and Sustainability Research Sector. Thanks so much for taking the time here with us this morning.
No problem. Pleasure to be here. Thank you.
Thank you.
Tesla reporting third quarter deliveries today, just under 463,000 and up about 6% year over year. This coming against the backdrop of an auto industry that has been struggling. We've seen sales reports from Ford, General Motors, and Stellantis all come in weak as well, not to mention a bunch of European automakers cutting their forecasts. For more on the state of autos, we're bringing in Tom Narayan, lead equity analyst of global autos at RBC Capital Markets. He's here in the studio with us, which is exciting. Good to see you, Tom. Let's talk about Tesla first of all here, because these deliveries were kind of meh, right? But does it even matter? Is everybody just waiting for the Robotaxi?
Yeah, I don't actually think it matters. Frankly, I thought they were kind of boring. They came in really in line.
You don't say that about Tesla very often.
Yeah, I mean, this is pretty well telegraphed. We knew the July and August numbers for all the countries. We're missing September. We had the China insurance numbers. We knew Europe would be bad because of tariffs, et cetera. So the US was the missing piece of it. We knew they cut pricing, but didn't expect the quote unquote whisper number to be as high as it was. For the stock to be down 3.5%, what is that, like $30 billion on something like this seems kind of odd. I think most folks are just trading into the Robotaxi event. They already traded up into it. Maybe there's some profit taking. I think that's what's happening.
Do you think, Tom, Musk can hit that full delivery consensus for the year, full year?
Maybe not. I still forecast it coming down year over year, but consensus is also down. But I think that's less kind of important. Car business for me is less, like 5% of my valuation, right? They need to sell cars to sell FSD and everything else. But I think folks are going to start looking at the bottom line more on gross profit. You're going to have regulatory credits, which surprised a lot of people last quarter. It's going to be good this quarter again and next year. And energy storage. People are finally talking about this. We saw the number that they printed today. It wasn't as good as last quarter, but way bigger than the run rate of last year. So I think folks are going to stop looking at the delivery numbers so carefully and start looking at gross profit, and it's going to look pretty good.
And what about this Robotaxi event, right? Because we know the event's happening. We don't really know what they're going to say. We certainly don't know what the timeline is going to be of this thing. And the company has really, and Elon Musk has placed a lot of importance on it.
Yeah, I mean, it's half of my entire valuation, as you know. I'm a big believer in the Robotaxi concept. The difference, though, between this event and what they held in a Power Day a few years ago, where the stock was up quite a bit, is Power Day was more real now, whereas I think Robotaxis are a little bit farther away. That's why I think it might be difficult to get crazy excited, at least a stock to react the way it will be. I think it did into it. But I do think you'll get a lot of people like me writing big reports finally with real numbers and putting it in their models. That might help. But again, this is far into the future, so I just don't know how much it's going to impact.
Here's my question. Why is it so far into the future? We've got Waymo on the streets of cities now that are driving around without anybody in the driver's seat. Why is Tesla taking so long?
Well, I mean, how many Waymos are really on the streets?
No, there aren't that many, but the technology is working.
Yeah, I don't think it's really a technology issue. It's more of a regulatory issue. We all saw what happened with GM Cruise having to pull away and now starting to tip their toe back in. Cities are going to have to completely re-engineer themselves. I mean, try putting a Robotaxi in the Champs-Élysées. I don't know if you've been driven there. It's nuts.
The roundabout,
It's a very human-driven thing. Let's put it that way. You're making decisions all the time. And so it's going to take a while for regulators to be okay with that. I mean, maybe in China they'll be okay with, 1,000 deaths for every 30,000 non-Robotaxi deaths. But in the US, in Europe, it's very difficult to make that argument that Well, less of you died, So I do think that from a regulatory perspective, it's going to take a long, long time.
What about, can I just get a quick take on the Cybertruck and what you're seeing there, Tom? I know it's small compared to Model 3 and Y, but what we're seeing and what you expect to see ahead, just anecdotally, I see them on the road.
Yeah, especially where we are now, right? I think it's more of a halo type car. They were trying to reinvigorate the brand. It is using 4680 cells. There's a lot of innovation in there. Now, as really having an impact on financials and volumes, I don't think it's a real game changer. If anything, they're losing money on it. But it is trying to get excitement back into the brand, which maybe they lost a little, right, compared to where they were. But really, ultimately, it's a halo car, right, that hopefully lifts their brand.
Tesla shares slid in today's trade as third quarter deliveries fell short of expectations. Investors, though, are of course now turning their attention to the company's Robotaxi event next week. CEO Elon Musk has touted the future of vehicle autonomy for years. Any details could potentially provide a lift to a stock that's flat on the year. Yahoo Finance's Kiko Fujita joins us now with more. Among those folks who is optimistic about that autonomous future, Tom Narayan, who we spoke to earlier today, Kiko.
Yeah, interesting for him to talk about, how he expects it to be a significant part of Tesla's valuation. As you said, Elon Musk has long touted vehicle autonomy as the future of Tesla. At the company's investor day earlier this year, he said the technology would increase the company's valuation tenfold. There's been plenty of speculation about what exactly this announcement will be. In the past, we've heard Musk describe his robotaxi vision as part Uber, part Airbnb, fully autonomous cars, allowing Tesla drivers to share their vehicles on an app, tapping into a wider network to cash in. Musk has also talked about the potential for a car specifically designed for autonomous taxi service. The reality is there's already a handful of companies that have beat Tesla to the market on this. You've got Google's Waymo that's been the market leader, offering more than 100,000 paid autonomous rides per week. The company's been offering fully autonomous taxi service in San Francisco, Phoenix, and LA. Today it announced it's expanding to Austin in a limited capacity. Another competitor, GM's Cruise, has had a rougher ride. The company suspended its fleet after a string of high-profile accidents. And just this week, Cruise agreed to pay a $1.5 million fine for failing to report one of those accidents. And then there's Zoox, which is owned by Amazon. The company is planning to enter the ride-hailing market next year in Las Vegas. Their vehicle has no steering wheel, no pedals, no driver's seat, as opposed to its competitors that retrofit cars meant for human drivers. Zoox is offering a ride that's built solely for autonomy. Co-founder and chief technical officer Jesse Levinson says that also makes these rides safer than its competitors.
We're able to have 2, or in some cases 4, of almost every important critical component in the vehicle. So that means we have 2 braking systems, we have 2 steering racks, 2 batteries, 2 motors. We actually have 4 sensor pods, 1 in each corner. And what's really cool about our vehicle is if any one of those components has a hardware or software failure, not only is it still safe, but we can actually keep driving and take the customer to their destination.
In addition to safety, there are questions about the business model for robotaxis, what that means for profitability for these companies. Chris Robinson with Lux Research says autonomous taxi rides today cost roughly half that of traditional ride shares when measured per mile, but it still costs 2 to 3 times more than car ownership. He points to the high overhead costs, all of those factors you see on the screen there, as one reason why he thinks this technology may not be as disruptive as some analysts have suggested, guys.
Kiko, I also want to ask you about regulation, which is something that Tom Narayan of RBC brought up, as well as potentially a limiting factor. That and sort of the way that some cities are constructed that might be tougher to navigate than others.
Yeah, and this is where it's interesting to see what Tesla actually comes up with on specifics, because you look at regulation right now, it is very fragmented from city to city. But the reason why those like Tom and other analysts have brought that up in the context of Tesla is because Elon Musk in the past has talked about not necessarily geofencing the area. When you think about somebody like Waymo today, they actually go out and digitally map these roads and these routes with a human driver behind the wheel, before actually deploying those autonomous vehicles. Tesla doesn't necessarily see that vision. They've talked about sort of learning through driver data, and that would require, some engineers have said, a lot more guardrails in place here in terms of security. The risks are higher, according to some engineers. But of course, we're going to hear what Elon Musk has to say next week about how exactly he plans to deploy these robo-taxis, what the timeline is, and what exactly that technology is going to look like. Because right now, what he said in the past is very different from what Waymo as well as Zoox has offered up so far.
We shall see. Akiko, thank you so much. You alluded to the fact that not all your funds have done very well this year, particularly the one we track most closely, the largest of them, the benchmark ARK Invest Innovation Fund. We've talked about this many times. You look at a 3 to 5 year time horizon here, and your biggest investment's in Tesla, which has had not a good year. So, Cathie, how are you thinking about all of that right now?
I'll tell you, when it comes, Tesla is giving us great comfort, believe it or not, because we've done the research. I don't think a lot of analysts have done the kind of research on autonomous mobility that we have. We have a longer investment time horizon. That's why we've done the research. As we get to Taxi Day, 10/10 this week, next week, I think more and more people, analysts, are going to have to start modeling what this means. And I think as they do, they will conclude that this is a software as a service model with 80% gross margins plus on that side of the model, as opposed to 15 to 30% margins on the EV side. And they're going to have to adjust their expectations up.
Cathie, can I ask you though, because I think in theory, there are some other people who have done that work and who have come to similar conclusions as you. I'm just not sure what we're actually going to learn at that Robotaxi Day and how close, and maybe more from your internal comms with Tesla and from your research into the company. What are we going to hear on October 10th? And what is the timeline for all of this coming to fruition?
Well, I think they're going to fill in some of the blanks that we have about when they're going to launch and how they're going to launch. So that's going to become important. It'll make it more real. And I think that the reason analysts are probably going to take what Elon is saying more seriously this time, because remember, he's been predicting autonomous in the next 2 years for the last 5 years. And I'll say we expected it last year. So, but Waymo is now out there, and more people are trying it. This is not if, it is when for Tesla. And for Tesla, it's also how quickly will they roll out? How quickly will they go national or even global with their aspirations? I think, as you know, Elon thinks in a very big way, and he has positioned Tesla to win the lion's share of this market. And this AI project is a winner-take-most project. The company that gets people from point A to point B the fastest, the safest, with as little wait time as possible, is going to win the lion's share of the market. And I think when people see what Tesla's strategy is, and put that together with the fact that, wait a minute, Waymo's already doing this, so this must be possible. We don't have to worry about that anymore. How big could this be? Well, we publish our model out there, and it's on our website, ark-invest.com. It's on GitHub. And you can play with the variables if you disagree with how optimistic we are, to see how big this market's going to be. It's enormous. From a revenue point of view, the platform opportunity, those hosting these networks, and Tesla will be one of those, that's a $4 to $5 trillion revenue opportunity in the next 5 to 10 years, if our research is correct. And again, it's winner take most. This is a trillion plus revenue opportunity for Tesla in the next 5 years. It's a big idea.
It's a big week for Elon Musk. Tesla is hosting its long-awaited Robotaxi event on Thursday. The build-up to the event has sent shares of the EV maker higher in recent weeks, following a general slowdown in EV demand seen earlier this year. Joining us now with his insights, we've got Ron Yevsikov, who is the Director of Automotive Equity Research at Guggenheim Securities. Ron, great to have you on here with us. So, are you expecting a boom or bust when they make these announcements this week?
Yeah, I don't know if it's that binary, but we do expect it's more likely to be a sell the news event. I think there's been a lot of hype into this event. We've seen the stock move up. Investor expectations are quite high in terms of the promises that are going to be made at this event and the products that are going to be shown. So I think ultimately there are a lot of boxes that have to be checked, and we think that a real credible path to robotaxi commercialization in the next 12 to 24 months is extremely unlikely to come out of this event.
Ron, when you take into account how much has already been built into the price that we're seeing today, you mentioned so much of that hype. You mentioned the fact that investors have really been bidding this name up before the announcement. I'm curious, what do you think will be enough to trigger that sell-off? And you've got a price target of 153. I guess to what degree, or what is it going to be that really shifts investor sentiment to get us lower to that price?
Yeah, it's a good question, and one we're asked quite a bit. I think it's tough to have one catalyst that triggers, I think, our view towards the stock returning closer to what we think is fundamental value. But I would say that a business trading at 100 times earnings, 100 times our next year's earnings, with little to no free cash flow, is really difficult to underwrite without the robotaxi. So I think post this event, you do get a return to focusing on the fundamentals of the business, which remain quite poor. We estimate U.S. sales were down about 5% in the third quarter versus the second quarter. And while China growth was quite material in the third quarter, I guess we will see the quality of that growth once they report 3Q earnings with the gross margin line item. But it's tough to have any single catalyst from this point. But ultimately, even comparing Tesla to the other Mag 7 stocks, the free cash flow disparity is enormous, and the free cash flow yield disparity. So it's a really tough stock, I think, to underwrite fundamentally.
Ron, if we continue to see more consumer pressure right now, and especially as it translates through to auto purchases and the mindset there, what do you think that translates through for Tesla in the margins that investors have come to expect, especially even if they're adding on certain packages to their automotive experience? And what does this company need to do to ultimately generate demand for some of those more premium offerings?
Yeah, I think, for lack of a better term, I think the premium offerings are almost X growth at this point for Tesla. We've seen the Cybertruck grow, but it's largely been a function of cannibalizing Model S and X sales. If we just look at Tesla's sales volumes for premium vehicles, I think to see the gross margin inflection in the next 6 to 12 months is pretty unlikely. And I think it's important to know where we're coming from. Margins were 30% if we rewind the clock 2 years ago, gross margins. Today, we're sitting around 15%. So even if we marginally inflect higher, this is still a stock trading close to 100 times earnings. I think you need a material step function change, and there's nothing in the demand outlook that would support such a step function improvement in demand.
Stock's actually moving lower ahead of this announcement. I'm curious, what do you think investors should be prepared for, and could this potentially be almost a sell the news type of event?
I think that's exactly right. A number of analysts have said that there are, long-term benefits or long-term sort of bull theses because of the robotaxi story, but it might be a sell the news, hold your expectations a bit back. We're going to see potentially this cyber cab type structure thing with no pedals, no steering wheel, can take you around autonomously. But also the big kind of bull case is that all these other cars, the other Teslas of the world, like the Model Ys and Model 3s that have FSD and latest hardware, they might be summoned to become part of a Tesla network where you can actually have it go out and do stuff. I just saw a thing leaked today. I'm not sure if it's true or not, but basically there's a deal potentially with Tesla and DoorDash where Tesla vehicles will be used to do DoorDash deliveries. A video leaked, it was online, I'm not sure if it's verified, but Dash stock bit flat today, but that's potentially what we're talking about, potential deals in place. And also one other thing, it's called We Robot, right? So maybe we see something on the Optimus robot. Maybe we see some other electric type of vehicles, like a boat. Adam Jonas said, are we gonna see electric boat? Stuff like that. So a lot on the table here, potentially for tonight at 10 p.m. Eastern.
Yeah, I know.
I'll be
It's
watching.
late. 7 p.m. Pacific time,
We're
10
in bed.
p.m. Eastern. I'll try to stay up. I don't know. No guarantees. I guess you have to stay up.
I gotta be a robot. I gotta be up. Yeah.
All right, Paz, thanks so much.
Well, Tesla showing off its long-awaited Cybercab at the company's first product unveiling since 2019. Yahoo Finance's Pras Subramania is here now with more, with 3 of the biggest takeaways from the event. 2019, really? Was that how long ago Cybertruck was?
That was the Cybertruck,
wow. Okay.
reveal event. There've been other events in between, but I
Sure,
guess
yeah.
not a major product. But yeah, I mean, a couple of things here. I mean, obviously you mentioned the Cybercab. It's actually here. It's actually real. It's not an AI generated image. Musk got a ride in it to the actual event stage. So we got to look at that kind of diminutive little like Cybertruck-esque looking pod shaped thing. No scissor doors, which is pretty cool, but no pedals, no wheels. Our steering wheel, trying to really go for full forward here with a Robotaxi. The question is, is it fully ready? How long is that going to be? 2026, 2027 is when they might produce the vehicle, so we'll see about that. And also $30,000. That's another thing we'll see about that, right? What else caught my mind was the Robo-Vans. At the end, they pulled out the Robo-Van, which is this monolithic-looking cargo thing that can hold 20 people, no windshield, no visible wheels. Sort of like out of like Blade Runner the movie, right? So there it is right there coming on stage, and 20 people kind of got out of it. So that thing was a little bit of a surprise. Again, no details on how much it's
That
going
looks
to
like
cost.
it's out of Back to the Future.
Yeah, I think Kara Swisher called it a toaster. So we'll see.
too.
So we'll see what the deal is with that. Is it just pure vaporware never going to come out? We'll see. Finally, for me, the big takeaway there was no Model 2. Right, there was talk of that. They might reveal this cheaper Tesla EV, a sub $30,000 EV, that volume vehicle that Tesla needs to sort of really get back on that growth train. We didn't see that. Now it's possible that Cybercab might be the underpinnings for that Model 2. It might share some components and maybe the body. So we'll see if that's actually the case. But Tesla said we'd see that vehicle by the end of this year, and time is running out. So that was a big question mark for me.
Yeah, and I think also the big question is just how realistic these timetables are just overall. And I think that's also reflected in the stock price that we're seeing here this morning.
Yeah. We always knew it was going to be a solid news event, right? Because of just the expectations and things like that. But, they say they're testing unsupervised FSD in California and Texas next year. How far along is that software? Where's the ride summoning app? People were asking, why haven't we gotten to see that or use that to summon the cars at the event? So that's another big question for people.
Making those big promises at Tesla event last night, but can the company actually deliver on those lofty expectations? Joining us now, we want to bring in Garrett Nelson. He's an analyst with CFRA. And Garrett, it's great to talk to you. Our autos reporter Pras was just breaking down the biggest takeaways from the event last night. And when you take a look at the street's reaction this morning, investors clearly are not satisfied with what they heard. What do you think it is that's dragging the stock lower? Is it the lack of details?
Thanks for having me. We think that's exactly it. We were really disappointed by the lack of detail regarding their near-term and intermediate-term product roadmap. Again, as Pras said, no mention of the more affordable EV model. A lot of people calling the Model 2. Nothing about that. Nothing about the Roadster. Both of those vehicles, if you look on the last conference call, Elon Musk said that they would be in first production, sometime next year. So, the event was sort of like watching a movie with a lot of plot twists and special effects. And at the end, you're walking out, kind of scratching your head. You're talking it over with your friend, trying to figure out what you just witnessed. So, and we had to rewatch it at the end of it just to kind of make sense of everything. But it was really short on detail and long on special effects, kind of what we were expecting. Just given the setup with the event being held at the Warner Brothers studio in Burbank.
The robots, well, they may be flashy, but Wall Street doesn't seem to be wowed by Elon Musk's plans for the company, at least right now. Joining us now is Tesla shareholder and Hamilton Capital Partners Chief Investment Officer, Alonso Munoz. Alonso, it's great to have you here. And we say the street doesn't seem to be too wowed because the stock price is off just over 7% today. I know you've been a shareholder for just about a year. What's your quick reaction to what we heard last night?
Yeah, good morning. Great to see you. Incredible dancing by those robots last night. It was fun to watch. It was very futuristic, and we've seen some of the negative headlines today. So we're just going to have to wait and see. I think that Analyst and Elon Musk are going to have an opportunity to really hash this out on the earnings call coming up in the next couple of weeks. And that's something that we're going to be watching out for as the next catalyst.
Alonso, do you think that the selling that we're seeing today, is this a bit of an overreaction?
I would say so. I mean, Elon talked about the implementation of autonomous driving in the Model 3 and the Model Y. So that would be interesting to see if consumers have a higher take rate on that software, and that's something that could certainly drive revenue. But certainly, I think an overreaction, we, in some ways expected this. The bar was set so high, but it was a really cool event. I think everybody would agree with that. Some really futuristic, cool looking things. Robots were serving drinks. I mean, it reminded me of the movie iRobot with Will Smith back in the day. So it was, it was a great event. I think there's a lot to look forward to, but yeah, overreaction.
So it's interesting, though, because some of the, I guess, bears out there on Tesla, or just the skeptics, have noted that there wasn't a lot of detail on the full self-driving vehicles and full self-driving technology, rather. Goldman specifically talking about the lack of details. Are you concerned that they're not addressing it?
I mean, it's something that we're thinking about. I mean, we were more focused on how do they bring this out to their Tesla fleet that they have on the road right now. And I think we got a little bit of indication last night that this could be active in Texas and in California in their Model 3 and Model Y, but also in their other Tesla vehicles. We also saw some product lineup, right? The what they called the RoboVan, the Cybercab. And so, it's something that we're going to keep an eye out for, but we're really focused on Tesla's vehicle business. They have, different lines of business like their solar and energy. And so we're still excited about the long-term prospects.
Alonso, there's lots of questions about that cheaper vehicle and how critical that is in order to boosting demand, and the fact that it might not happen now for some time. I think that could be a worrisome factor here for the street. Is that something that maybe you think is also a bit of an overreaction too, or I guess why aren't you too concerned?
Well, I think so too. I mean, in the macro environment that we're in, we saw consumer confidence this morning came in a little bit lower, and interest rates are still high. And so the affordability is a big question that I think analysts are mulling over. And when we look about vehicles, it's a major purchase for the consumer, whether it's their house or their vehicle. It's one of the highest costs. And so I think it would be smart for Tesla to roll out a lower entry-level vehicle at a lower price point, and as they look to continue to take market share. So it's something that we're looking out for. But again, we were excited to hear that autonomous driving in the form of full self-driving software is coming to their fleet, and that consumers will hopefully be able to access that in the next year.
Alonso, if we can, I want to pull up a chart here, taking a look at the 2-year performance of a company like GM when compared with Tesla. Thanks, guys. You can see Tesla under pressure in comparison with a more traditional name like GM. And we know that GM has been outperforming its competitors more broadly, but still that is kind of a substantial spread between the two. Do you think that's indicative of a broader challenge for Tesla, that some of the more traditional automakers are becoming some of their biggest competitors?
Well, absolutely. And Tesla's in a whole different ballpark. I mean, separate from legacy automakers, they're making electric vehicles specifically. They're not making hybrids, and they're not making gas-powered vehicles. So, it's a challenge. I think that both the macro environment, rates being high, the consumer holding onto their wallet, but also the adoption of electric vehicles across the globe. And again, it's been a challenging couple of years for the auto sector. You've seen some divergence in different companies. But for Tesla, we see it also as an energy company, as a software company, and the bar is set really high. I mean, it's baked into its multiple. And on a day like today, it's an opportunity for investors that want that exposure to that technology, to electric vehicles, to robotics and automation, to potentially get in at maybe not a discount, but at a lower share price.
All right, Alonso, thanks so much for joining us. Appreciate it.
Thank you.
The fact that we're already seeing this type of the significance of this reaction with the stock off nearly 7% ahead of the open, do you think that this is just the start of a much larger pullback here for Tesla?
It could be. You look at the dramatic run up in the stock really ever since April. In July, we moved to a hold, just given this massive multiple expansion that we've seen in the stock. If you look at where it's trading on consensus estimates, the stock, where it closed yesterday, is trading at 75 times consensus estimates for next year. Looking out to 2026, it's trading at 57 times. So these are really pretty lofty multiples. And here we're left with a lot of questions regarding how it's going to achieve that earnings growth that is embedded in expectations over the next few years. Like they said, the RoboCab, you're talking first production by 2027, but that doesn't do anything to really clear up the intermediate term, which was our big issue with the story. And as you know, I've been a longtime bull on Tesla. We're much more cautious here. We have been since July. just given the lack of clarity, the lack of transparency as far as what's going to drive the earnings growth over the next few years. This is a high growth stock whose growth has really hit a wall here recently.
And so with that in mind, I mean, even bulls like yourself have had to acknowledge the history that Elon Musk and Tesla have of not meeting timelines that they communicate to the street, as kind of, luscious and amazing as they might seem, tied to the products that are being unveiled. At what point do you have to say, okay, we need to trim our expectations of what Tesla is actually going to produce that investors can rely on to be directly translated to shareholder value?
That's a good question. And what Musk has been really good at is keeping investors focused on the long term, products that are several years out, maybe even a decade or more out. And so, he's continuously, if you look back, a decade ago, he was promising fully autonomous vehicles only a year or two away. Here we are in 2024, and it's still, that we think Tesla is still a ways away from that. So, but it remains to be seen. Are investors going to be focused, looking out many years, or are they be looking at the intermediate term and at estimates, which I think are probably too high and are going to have to come down, just given the realities of slowing EV sales and a lot of lack of transparency regarding the near-term product pipeline. Is the new mass market EV model still coming next year? Is the Roadster coming? We're left with more questions than answers after the event last night.
And so with the lack of clarity in that product pipeline, as well as timelines around it, who's the biggest winner if Tesla doesn't deliver on some of those items?
That's a good question. I would argue other automakers are winner. If Tesla loses, then other traditional automakers, many of whom are also working on autonomous driving products, perhaps GM with the GM Cruise, Waymo, those Uber, those companies are probably winners, just given the disappointment here following this event.
Garrett, great to have you here this morning. We're tracking shares of those automakers, tracking shares of Uber right now, jumping even as perhaps there's a sigh of relief over in Daraland right now. Garrett Nelson, CFR, analyst. Thanks so much for taking the time here.
Thank you.
Okay, let's talk more about Tesla's Robotaxi now. Joining us now, Kevin Paffrath, financial advisor and YouTuber Meet Kevin. Kevin, I know you were watching that event very closely as well. Now, you still have some Tesla in a retirement account. I know you have it, I believe, in one of your ETFs as well. So as an investor looking at that event last night, do you go out there and buy on this dip that you're seeing today?
Well, it is so tempting. First of all, thank you for having me, but it is so tempting because when you see it down 8% day, logic says buy. But the reality that we have to think about is, look, if we're soft landing and the US economy is going to be great for the next 10 years, this is the perfect vision that you want. This is the 2021 kind of vision that just takes stocks through the roof because everybody's got the Cathie Wood 5-year time horizon. And don't get me wrong, I love Cathie. But I'm really worried because Tesla just gave up its mid-term recession protection. You gotta think that the people who buy Teslas are mostly 25 to 40-year-old guys in finance and tech. And they're the ones that have the biggest risk of losing their job from AI and the biggest risk of having hardship finding a new job should they get laid off. So your clientele is at big risk in a recession. You are already at flat year-over-year growth. You're plummeting in Europe in terms of growth, which happens to be where one of your gigafactories are. The Wall Street, actually, it was the Financial Times just showed Germany in potentially a 2-year recession. And so now you're in a place where you don't have a new product to help you survive the medium term. Why not introduce the Cybercab as for sale with a steering wheel and pedals, and it says fleet eligible in the future with the new hardware 5, and you can drive it with your steering wheel like normal. You know it'll be fleet eligible, and you can remove that hardware in the long term. That way, Tesla could start mass producing these next year and actually generate some EPS growth that's substantial to justify this high valuation.
So were you, we talked about this, Kevin, with some other shareholders. I'm not saying they were expecting that Elon Musk was going to make some news at the event with lower price models, but they were really hoping for that, excited for that. Were you excited about that kind of new product?
I thought it was make or break. I thought if they didn't introduce a lower cost model that could be bought for the midterm, I thought that this essentially would happen and it could potentially start a downtrend. I was really hoping that they would have learned that when the rumors from Reuters circulated that, oh, we're not doing the Model 2 and the stock tanked in the spring, I would have thought logic would have told them, okay, the shareholders want a cheaper car, just give it to them. If you can mass manufacture and you're such an expert in manufacturing, manufacture these cars, even if you're only going to do so for 5 or 6 years before robotaxis take over. Have that bridge to get you through a recession, because now what you've got are existing models and hope, and not much in between. That doesn't help you in a recession. And you were also right on to point out what Adam Jonas said, which is exactly what I thought at the event yesterday as well. The robots that were probably bolted to the ground and dancing in the gazebo that nobody could get close to, those are pre-programmed, likely. The robots that are walking around doing handshakes or playing rock, paper, scissors with folks, those are all very likely teleoperated. In fact, there was someone from Microsoft apparently on Twitter who was suggesting they asked and that they were teleoperated, but let Tesla verify that. And so you don't actually have AI in robots. It's very likely that the robotaxis were not using the FSD that we use on the road. It was some form of pre-programmed circuit on private roads, which means you don't have AI there. And the robo-van was closer to the ground than China's economy, which means one pothole takes that thing out. Honestly, I think that van was mostly clickbait, like it's some form of chassis and a cool frame. It looked cool. I got 7 kids. I would love this van. I wish Tesla had a bigger van
Kevin,
like
you
this.
have 7 kids?
Yeah, we had a little oopsies, and we messed up our fertility timing, and we ended up with twins
that's
that are about
probably
to turn
more than we
1,
need
triplets.
to know. That's probably more than we need to know, Kevin, but that's okay.
Sorry.
That is amazing. That's an amazing fact to know
It's
about you.
stressful.
So, listen, it seems, it seems obvious the way that you're laying out, the way that a lot of these analysts have laid it out, that this would be disappointing. Why do you think that the company didn't realize it needed to deliver more? Or is it just because that's worked for Tesla historically to go by this playbook?
Well, I think it's just sort of typical Elon character. And I don't actually see that as a long-term flaw. I think a visionary is typically going to be very stubborn about what they believe the future is. And I think that Elon is correct. The future is driverless. The future is everything he is doing. He is so right about the future, and I couldn't support him more. Just it's a little bit of a slap in the face in potentially a recession when you've got or near a recession, when the Fed is flying so close to the sun that they cut 50 and yields tighten by 50. And we saw the treasuries all skyrocket. It's nuts. You're really tightening this economy a lot. And Tesla is an interest rate sensitive stock with customers that are going to be most impacted if we go into recession. So I think the business side failed here. The innovation side and the vision, I'm all for it. Do I think some of it was probably more show than real technology? Absolutely. But honestly, it was an exciting event for the vision, and it made me excited about wanting to be part of the stock more and investing in it. But honestly, I'll wait for like a 150 or maybe even a 100 handle on the stock before reinvesting.
This week, investors have continued to see a rotation out of mega caps, with the Russell 2000 hitting its highest level since 2021. The equal weight Round Hill Magnificent 7 ETF down nearly 0.5 percentage point. But our next guest believes we'll see that rotation back into the Mag 7 over the next quarter. And that could kick off with earnings for those 7 names next week. That'll kick off with Tesla first up. So for more, we're going to bring in Ram Aluwalia. He is Lumida Wealth Management's CEO. Ram, it's great to have you on here. I do want to start on Tesla since it's the first of the Mag 7 set to report here. I know you're a bit bearish. Tell me your bear case.
Yes, look, Tesla is the most expensive name in Mag 7, and it's also seeing significant margin compression. It's facing the threat of EV competition from China and other players like Lucid and Rivian, and they've continued to fail to deliver against their roadmap year after year. The stock really hasn't gone anywhere in the past 3 years. It's a bit of a meme stock now. It's not driven by fundamentals.
Ron, what do you think the catalyst then is going to be to trigger that larger pullback? Because it seems like, at least yes, it had been off, but we had seen so much of that euphoria tied to AI really being able to kind of overshadow any of those challenges. And it seems like whatever Elon Musk just dangles in front of the investor, he's able to excitement. So what is it going to take in order to have that meaningful and maybe more long-lasting pullback?
We might not get one just given where we are in the market. You're going to Q4, you've got positive seasonality, you've got Fed rate cuts. Elon has also tied the fortunes of his business to candidate Trump as well. So a lot of dynamics around this, a lot of narrative around this. It's not obvious that you're going to have a catalyst unless they, fail to hit delivery targets and get further margin compression. There's a lot of bad news out there in the stock too, but it's not. I don't think the risk reward here is attractive.
Real quick, Ram, is Musk's political activity part of your bearish sentiment on Tesla?
No, but he is linking Tesla to, the fortunes of candidate Trump, and that'll have some impact on the stock too, because the primary owners of the stock are retail investors. You don't really see institutions owning Tesla.
So it's a big mistake, you think?
That's right. Yes, exactly. I think what he's doing is lobbying for tariffs and protection against China competition. Right? China is producing not just EVs but solar at very low cost, and they're actually building high quality products. So Tesla needs tariffs to compete, and so that's the reason why he's aligned himself with Trump. Although that's also upset another portion of his customer base too. So he's in a very complicated position.
U.S. auto regulators investigating Tesla's full self-driving software in 2.4 million vehicles. Our Prasubramanian is here with more. This is not the first time it's been investigated, but it seems to it seems to be ratcheting up.
Yeah, and this is a very interesting wrinkle here, because what happened is they're investigating 4 different FSD crashes with regards to situations where that reduced roadway visibility. In one case, there was a fatality with a pedestrian. Another case, another injured motorist. So the question is, why is this happening? And this is kind of an important deal for Tesla, as we were discussing, Josh, earlier, about how the fact that their FSD system is vision-based only. It doesn't use sensors like other companies do, the radar and LiDAR, things like that. Purely vision. And if you have some kind of reduced roadway limitations, how can that thing operate in all conditions?
What are the examples of reduced visibility? Like, what are we talking about? Fog or?
They had 3 incidents. So they had sun glare, airborne particles, and then also fog, like you mentioned, fog. So these are things that happen all the time. I mean, I've driven before and had sun glare on me. So if you have a problem with vision-based systems, how do you explain then your robotaxi future? How do you have these cars going around without pedals or steering wheels and being fully autonomous if you can't see everything? So that's the issue. The Tesla stock didn't react that horribly today.
I want to ask you that, Braz. I mean, it's finished flat. So what is that? Is that investors assuming?
I think it's
what?
I think it's maybe they're confident that Tesla can kind of figure this out. Maybe they will add sensors eventually to kind of augment their vision-based system. But if you're Musk, the bet was on vision-based, because you can expand this system without having to map out every road and scan everything. It just sees like we do and drives. So that's sort of the issue. Maybe they think that this solution can be had relatively easily. So we'll see.
We will see, and we'll count on you to keep us updated. Thank you, Pras.
Thank you.
Appreciate it.
Let's talk Tesla as well. Obviously, listen, they had the Robotaxi day. Investors perhaps, underwhelmed by that. Do you think that was because they got a lack of details, hard details they could work with? Was it because I know maybe there was some chatter that hear more about this relatively lower price vehicle? What did you make of the event? What did you make of the reaction?
Yeah, I mean, I came away in 25 years covering tech. I think one of the most eye-popping historical events I've ever attended.
Wait,
right?
Dan, can I back up for a second? Because I was looking at your note in the aftermath of this. I think you were the only one. Like, honestly, and even the other fellow Tesla bulls who love the company were like, everything there, for lack of a better word, was fake. Like, That's not the actual van that's going to be on the road. The robots were remote controlled. Like, Dan, I always appreciate your optimism on these things, but like, were you at the same event that everybody else was at?
Yeah, but I'd say the same thing, like going back to iPhone launch in 2007, going back to other launch. I've been at Microsoft, Nvidia. A lot of analysts, if it's not spoon-fed to you, they're bears. They don't understand. The point is, like, if I look at Cybercab, the autonomous future, and where this is all going, I mean, I think this is going to really be the start of a whole new company at Tesla. And I think that's why it's one. I get the lack of details and why people walk away wanting more. But I just have a different take in terms of my view of where things are heading. And I think the way so many analysts have missed a lot of these stocks going from 1 trillion to 2 trillion to 3 trillion, I think to 4 trillion, is that they can find the technology in their spreadsheets or 10th floor of the New York City office building.
Another Mag 7 name that we are watching this week, and that's Tesla. Tesla is the first of the group set to report earnings this season, with its results out after the bell on Wednesday. Here with what investors should be watching for in this report is Greg Migliore. He's the editorial director of Auto Guide. Greg, it's great to have you. So I think what investors are asking themselves is whether or not earnings are really going to introduce or help reinvigorate some of that lost confidence that we've seen on the heels of the Robotaxi event. What do you think?
Good morning, Maddie. Good morning, Shauna. I think it's a tale of two Teslas. I think there's what Tesla is doing right now, which is its current automotive business, and then what it's going to do in the next year, next 2 years. You look at the Robotaxi event, and it was almost, it was very ambitious in terms of, the mission for a future Tesla, but it was also underwhelming with specifics. So I think investors are going to be very curious as to how Elon Musk manages to sort of marry those two concepts, as well as deliver what will likely be solid, if not spectacular, results.
It's interesting because we know that Elon Musk has said, don't own my stock if you don't believe in our full self-driving capabilities story moving forward. Greg, do you think that do you agree with that? That it's a stock to own only on the basis of its full self-driving technology?
I would disagree with that because I think the core electric vehicle business still is extremely lucrative for Tesla. It has the potential for ambitious growth. I think the disconnect actually is that what Elon Musk wants to do? Remember, it is his company. So that's where it gets kind of, I would say, a little weird, because I think investors and car enthusiasts, electric vehicle enthusiasts might be more interested in the products he's currently making and how he can iterate those. I think his take on things is that the future is going to be all AI and autonomous. I think he's actually going to be long-term less interested in making cars. Of course, Tesla's still going to do that, but I think he has different plans for the kind of company that he wants Tesla to be.
Greg, how important do you think the timing of this rollout of the sub 30,000 vehicle is to Tesla's bull case here going forward?
I think he has to hit the intervals and the timeline that he's suggested. I think investors and shoppers, for that matter, are getting confused and maybe annoyed that this affordable vehicle is not quite on track like it appears to be. I think people want more specifics as to what it will be. We've heard sort of conflicting things, that it could be on an all-new platform. It could also be like a version of some of its existing vehicles. So I think people want details on that. And I think there's a source of frustration around it, because I think investors look at that as something that's very core to Tesla's business.
Something else that investors have to kind of take as core to the business is Elon Musk's politics. And we've certainly seen that at the forefront over the past couple of months, but especially over the last week, where he's been in Pennsylvania handing out $1 million checks to potential voters here. Greg, does anything in Elon Musk's recent activity strike you as a new heightened risk for Tesla shareholders to consider, or is this just more of the same?
Well, I think as the election draws closer, I think he certainly has become even more active than he already was, more outspoken. And I think if you're the CEO or the caretaker of a very large car company, your behavior risks turning off certain voters and thus certain consumers. Generally, it's not good business to alienate, 48 to 52% of your potential customers. And, his recent political actions certainly risk him doing that. And that's not just to say the fact that offering people money for voting isn't exactly legal. I think most people would interpret that. So I think his behavior has already been kind of larger than life. But I think the more political you get in this day and age, the risk you have to your core business, which in his case is selling cars.
Well, as mentioned, Tesla traded lower after 6 of the last 8 reports as it continues to be the lagging stock of the Mag 7 cohort. But technical indicators could be spelling out a slightly bullish bias at this point. Let's break it all down with Jay Woods. He's the Chief Global Strategist for Freedom Capital Markets. Jay, it's great to have you here
It's good to
on
be here.
set. So let's start it off with, is this going to be the quarter where maybe things change a little bit for Tesla?
It's hard to think they are. The stock rallied 35% into that Robotaxi announcement on 10/10. The announcement that was supposed to be on 8/8. Things got delayed. There are some positives technically. The stock has broken from its long-term downtrend from its November 2021 high at 400, but it's still 47% off its all-time high. It's the worst performing stock in the Magnificent Seven, down 11% year to date. As Josh said, I don't even consider it one of the Mag 7. Give me Netflix, give me Eli Lilly, give me Berkshire. Let Warren Buffett get in there. But from a tech perspective, it has been trading on hopes and dreams, and now investors want a show-me stock, and these results have been lacking. The rollouts have been less than spectacular, but let's talk technicals. That's why you had me on. It's a volatile stock during earnings time, up, plus or minus 7.5%. And I expect that volatility to continue. So when the numbers come out and that conference call goes on, because the conference call, as Josh mentioned, Elon Musk is great at pivoting, great at steering the ship. It could subside, but to the upside, I want to see it rally back to that 265 level where it struggled to get above. I don't see it getting back there, but it can neutralize and go sideways for a little while because the downtrend has stopped. Now, these moving averages, these 200-day moving averages, they haven't really held well in the stock historically. But watch the recent low before the run-up into Robotaxi around 182 on a downside. So we have wide ranges. This is great for the day and swing traders in our audience, and you may want to wait this one out until it makes its move and then get in. But to me, it's a coin flip on how it's going to react during earnings. But the recent trend has been up, even though it's still down 11% for the year. So it's one to watch. Bring your popcorn, but I do not have a position in it, nor do I recommend one going into the earnings.
But given that you say bring the popcorn, it tells me this is obviously a very story-based stock. So given that, how much can we rely on the technicals to tell us what's going to happen with Tesla?
Well, to me, it's more like Bitcoin, where you rely on the technicals to trade it, because the fundamentals have been lacking. It rallies on hopes that this next rollout will be big, that these robots will be bringing Josh drinks and my friend to watch TV with me on the couch. That is a hope and a dream. The reality is we don't know when the rollout's going to come. We don't know how big it's going to be to its bottom line. The Cybertruck was delayed. When that was rolled out, the mileage was less, the price point was higher. So we've been disappointed time and time again. So the only way I look at it is technically, and right now it's in no man's land, and you may get a reaction. If it rallies, I would probably short it at its 262, 265 level. Going into it right now, no, I would not buy it. I would not short it, because if it pulls back, watch the 200-day moving average, watch 200. Psychologically, we like these round numbers. But 182, 185, the recent lows before the Robotaxi rollout, you may want to dip your toe in the water if the worst is over and the stock can stabilize. But the fundamental story is very tough to follow because the numbers are never consistent and they keep getting delayed.
Tesla shares moving higher after reporting its third quarter results. The EV maker did post better than expected earnings. Revenue did come in just shy of estimates. Also, another headline that caught our eye here, the company says it is on track to launch affordable models in the first half of 2025. We don't know exactly what that means, but here to take a closer look, we've got RBC Capital Markets Global Autos analyst Tom Narayan. I want to start with that last thing first, if I could. The fact that the company's saying in its statement it's on track to launch these affordable models in the first half of 2025. Really? Do we believe that?
Yeah, if you remember last quarter, what happened was they withdrew the Model 2 on the next-gen platform, which is supposed to be H2 25. And they said instead, at existing facilities, we're going to make a more affordable car with existing facilities. And a lot of folks were worried that might have meant just a refresh. But This just confirms what they've been saying, which is we're going to get affordable cars in the first half of next year. I actually don't think that's a big surprise. I think people will be happy to hear it, right? We all thought we were going to see something at the Robotaxi event about this. But I think folks are just comforted to know that it is coming. Everything is on track on the more affordable cars.
Tom, what did we learn about margins X credit, and what do you see as the trajectory there ahead?
Yeah, this 17% number, definitely way above consensus, was at 14.5. I was at 13.5, to be honest. I was expecting it to be lower because of discounting that we know did happen. But I think it shows you their underlying costs for their car business is better than any EV maker certainly out there. I think it bodes very well. They did do some discounting, and they're going to try to get that growth number for the full year. So Q4, you're going to see some price cutting. But if they can still do a 17% margin X credits, that's a pretty strong signal that they can continue to hold on to margins. And we haven't even talked about the credits, which were huge too. And energy storage, which had strong margins, it looks like. There's a lot to like here. Let's put it that way. It kind of across the board. I was expecting some wins, some losses. I'm not seeing a lot of losses here.
And the company also saying it says it's going to see slight growth in those deliveries for the full year. So it's not what we expected necessarily. What do you think is different than what we expected, Tom? Why do you think things seem to be working a little bit better, whether it's the margin, whether it's the number of deliveries this year? What's changed?
Yeah, I mean, folks were expecting it to be down this year volumes. It was up in 3Q, and then everyone thought that was because of price discounting. But it looks like even though the costs were higher, I think what might be happening here is, they did do an FSD upgrade, right? If you remember correctly. And then even as very recently, it's been potentially boosting numbers. They talked about it right here in this release. The services number was pretty high. So I do wonder if, the services attach rate, especially FSD, might be making an impact here. Folks could be thinking, I'm going to buy this car because of FSD. That may be catalyzing demand and kind of, even though the models are maybe a little long in the tooth, right? FSD is something special here. That might be what's happening. We'll see what he says, what they say on the earnings call. It'll be interesting to hear what they think.
Tom, what's really fascinating about what you just said about FSD, obviously FSD has been under investigation by the authorities, right? That it's been implicated potentially in several crashes. So if what you're saying is right, that doesn't seem to have dissuaded buyers, or at least not dissuaded enough buyers to change these numbers.
I mean, I've talked to enough folks that say that, I'd rather buy this car, but I have to buy a Tesla because it has FSD. It drives me to work or whatever. I have enough people that say things like that. It's the most developed level 2+ product on the road. There's going to be incidences. Guess what has worse record of accidents? Humans, right? So, I mean, there's investigations, things go wrong, but they have a ton of data that they show. Tesla does using traffic data that's readily available, that FSD is far safer than human drivers by a multiple of, I think, 5. So I mean, folks are maybe a little worried here and there. It's the same thing when we all took elevators and worried about elevators decades ago, but now we take them for granted, or airplanes for that matter. So that could be something that's catalyzing demand. They talk about it in this release. And I think the attach rate might finally be increasing here. That what could happen is they drop the price finally on this FSD. Wow, that could be a game changer.
Investors also cheering Elon Musk's optimistic forecast of 20 to 30% growth for Tesla next year. To discuss Tesla's latest quarter, we're joined by longtime Tesla bull Dan Ives, senior equity analyst and managing director at Wedbush Securities. Dan, I know you've got a lot to like within this report. I'm curious, just what was the number one thing that stood out to you that got you the most excited following this print?
Yeah, I think margins. I mean, that's been a huge part of the overhang on this story. They beat by 200 bips, price cuts in the rearview mirror. And when you combine that with that growth forecast, I mean, I did whisper numbers are called 10, 11%. They gave 20 to 30%. It's an Aaron Judge-like quarter.
It's interesting because they teased out more affordable models for the first half of 2025, but then Elon said a $25,000 vehicle would be silly. Is he really prioritizing cheaper EVs? Where do you find the clarity on that?
Yeah, I think you'll have a sub 30K vehicle by first half of next year. And I think that all dovetails into their overall growth forecast, 20 to 30% coming out of the gates for 2025. And now we look at their cost of goods. Their ability to produce cars is down ultimately 30, 40%, and could be down another 20, 30% when you look at the next year. It has been a painful year, no doubt, in terms of EVs and softer demand, what we've seen on margins. The renaissance of growth now is, I think, heading into 2025. And then you have AI, autonomous, and I think a lot of the other growth drivers that, to me, it's key to what I see as $1 trillion plus market cap.
So Dan, I guess 30% growth or up to 30% growth next year. It sounds like you think that's realistic.
Oh, yeah. No, look, the bears that have been bearish since, 100 million market cap, those bears will come out of hibernation mode today. But the reality is that they're going to produce over 2 million vehicles next year. And when you think about the overall growth story, more penetration on the FSD. I think ultimately more details last night in terms of autonomous, FSD, Cybercab. A lot of those details, maybe some left. Robotaxi today, disappointed I was not. And look, now it's just execution. But to poke holes in this story, I believe the most undervalued AI play in the market.
But when is that autonomous AI growth actually going to be here, Dan? I hear you. I hear what you're saying. You call it the most underpriced AI story in the market, but when is that going to be on the balance sheet as opposed to a story I'm hearing about on the call?
I think like me and you, we could be in a Cybercab in the next 2 to 3 years. So we're not talking about something that's 5, 10 years down the road. This is something that will, over the coming years, become a reality. And I don't necessarily view this as a negative for Uber. Lyft obviously has their own issues, but when you look at Tesla, this is going to be the next stage of growth. Autonomous, FSD, AI. But it comes down to you need the deliveries, you need the margins. They're checking every box. I actually thought that was probably the best conference call I've heard from Musk and Tesla in a number of years.
Dan, one of the things that he talked a lot about on that conference call that you're mentioning there is he spent time talking about what he might do in a second Trump term if Trump were to be elected come November. I'm curious just how much of some of this recent momentum or the next several years in terms of their growth prospects hinges upon a Trump victory in November.
Yeah, I wouldn't say that it hinges on the Trump victory. I think Trump or Harris, I don't think the growth story vastly changes. I do believe if Trump gets elected second term, it's bearish for EVs because overall the tax credit would essentially go away. But I do believe that it's bullish for Tesla because that ultimately would give them more scale and scope versus other players, and potentially could fast track FSD and some of the other technologies that ultimately we see under a Trump administration. I do think Tesla is part of that, I'll call it Trump trade.
All right, Dan Ives, thanks so much for joining us as always. Appreciate it.
Thank you.
Tesla, though, is leading a lot of those gains in tech after beating analysts' expectations in its latest earnings results. This coming ahead of reports from Amazon, Apple, Meta, and Microsoft, which will all be out next week. So with the Mag 7 top of mind, how should investors play the tech trade? Joining me here at the desk is Tony Zapparo. He is the CEO of Equity Set. And Tony, let's start there with Tesla. Shares are rallying this morning, but expectations were low heading into this print. So what does it say, if anything, about what we can expect from those other Mag 7 names?
Yeah, absolutely. I think it's a huge surprise to a lot of people with how high it's ripping today. A lot of the good profit numbers being boosted, revenue shrinking a little. I think it's more of a trade though, right? Tesla's been a little bit of range bound. It had a big gap down, right, just a couple weeks ago. And so I think from a numbers perspective, it's good for Tesla. I think in the short to medium term though, it is a trade play. And I think if it approaches and closes high above a 260, 265 level, I think you buy it because I think it's going all the way to 300. However, if it kind of stops, right, pauses, I think it's going all the way down to 200. And so good prospects for Tesla, increasing margins, increasing profits, declining revenue, going into a questionable environment. I wouldn't go all in on it yet.
Okay, not all in on Tesla. We know it's a pretty volatile name. Is there any read-through we can take from Tesla earnings on what we could expect from a name like Meta or even an Nvidia later on in the earnings season?
I think you're going to continue to see strong earnings, right? One thing that's been persistent and really hard to make a bear case for is the largest companies and the largest market cap companies like Meta, like Amazon, like all the technology companies as well, they are really doing a number, right? A good number on earnings. They're growing, and I think they will continue to grow. I think it's how much that price action matches with the growth or growth expectations that is the risk. And so I think, Microsoft, Meta, they will all report very good earnings, right? Especially bottom lines. But I think the thing to watch for is revenue declining, is consumer fundamentals deteriorating a bit, because that's what's going to catch, I think, these stocks off key.
And I want to talk about the market rotation out of big tech into some other areas of the market. It's interesting that you say the rotation has, quote, largely run its course, which is different from other strategists we heard from this week. So why do you think that is, and what does that say or mean for equities down the line, especially since we're seeing stocks hover at all-time highs?
Yeah. I think the rotational trade, and a lot of the trades lately over the last couple months, they've been so fast and so quick to kind of shift, right? Money is going very quickly into certain names, right? Into the China trade, right, weeks ago, into the rotation trade. And I think that fast, that soon, is a little worrisome. So I think it could play out over the next year, 2 years. But I think in the intermediate, it's just too much is propping up these names. And if we see any sort of weakness, right, or people pulling money out, people going to higher yield savings or bonds, right, with the spike in we're seeing there over the last even just week, that's where I think kind of the risk is at. I think there's good names, but I think you have to buy them at 15, 20% off their highs. I think you focused on the S&P, weighted 100, right, and maybe stay away from the top 20 if they're within those ranges. But that's where I think you're not trying to put a lot of new money to work, right? All your life savings right now. I think you have to kind of wait it out and see what happens.
And to that point, you say that value plays that didn't participate in the rally, they may become value traps. So can you define what you mean by a value trap and what names you would avoid at this point?
Absolutely. And I peg myself a bit more of a value investor, right? I like things that seem to be undervalued because they have a lot of price potential going forward, fundamental growth. And so when I'm seeing a lot of the names that haven't participated, right, you're seeing Xerox's, you're seeing even Disney's, right, Nike's, a lot of names that have not participated in the initial rally or the rotational rally. That's where I think it can't go much lower, right? It's near 52-week, it's near all-time lows. Well, it's got to go up 10, 20, 15%. And I think the reality is if the economy stumbles, and again, we hit a little bit of a plateau in terms of growth or even some contraction, those names will continue to go lower and lower and lower. So that's where from a value trap, the Walgreens, right? The names that have just been beaten down and are down 30, 40, 50% year to date, those look attractive when a market with so many stocks hitting new highs doesn't look as good to investors.
That's a potential risk. Another risk that I want to quickly hit on is the election. And the polls show that Trump is slightly edging ahead of Harris. How do you view the outcome of the election in the context of markets? And as an investor, should you be repositioning yourself or protecting yourself in any way from that volatility?
Yeah, it's sneaking up on us for sure. And again, neck and neck. And I think that's a risk in terms of, while other patterns might have played out depending on incumbent party coming in, rally continues, right? All these things that have happened in the past, I don't think you can necessarily rely on that. And so I think what you have to do is be defensive, right? No matter if it's Republican or Democrat that comes into office, just with market at all-time highs, volatility increasing, I think it's defend yourself, take a little bit of money off the table, because whatever happens, I think there's going to be some money moving around out of the market, out of stocks, just because we seem to be at such extremes.
So defensive, look for value, but don't fall into those traps. Okay, Tony Zaparo, Equity CEO, thank you so much for joining us today. Thank you. Appreciate it.
Steve, listen, it's the mover of the day. It's Tesla. It's ripping higher. What do you make of the move, Steve? More broadly, what are the ripple effects, do you think, the lessons learned for the market here?
Hi, Josh. Well, basically, this is a hard story to poke holes in, and you really can't, which is why the stock is up 20%. And yet again, though, it was not as much that they beat on their current EPS, which is of course very important, but it's that the guidance was really terrific, and they beat in the right ways. Margins expanding, talk of higher sales going forward, double-digit higher sales in the next year. We'll see if that's achievable, but the market—that's what the market wants to hear. And as you played in the Dan Ives clip, there definitely was a lot of bearishness, some skepticism that I noted in the options trading going into this. A lot of times when the options market's a little bit nervous and sketchy, that's when the opposite happens.
I think Tesla's a good example, though, that not all Mag 7 stocks are created equal. I mean, not just because Tesla's been the laggard this year, but because more when you get an Alphabet or Microsoft, maybe you see the rest of the market taking more cues, perhaps. How do you think the rest of the market kind of looks at Tesla?
Tesla's a bit of an outlier at this point. For a while it wasn't, because Tesla had the number one share of the market's mentality, the market psychology. That was probably I broke the history of Tesla up a couple of weeks ago into B, T, and AX, before Twitter and after X. In the before Twitter era, it was the company. And that was it. And it deserved to be. It was up like 20-fold in about 2 years or 3 years or something of that nature. It ought to be. It was Nvidia on steroids in terms of performance. But since then, it's really, people have started to value it a little more carefully, whether it's because of the Twitter acquisition or whether it's just because of maturation. But as a result, you know what? When you think about it, there's a lot of overlaps between the other stocks. Nvidia's customers are the other Mag 7 stocks for the most part. Alphabet and Microsoft overlap in many ways. Google and Apple both make phones. So there's a lot more interconnectedness, whether it's more from a competitive basis, but they're sort of all in the same turf there, and Tesla's really not.
Elon Musk has repeatedly said that Tesla Energy will eventually be bigger than the company's automotive business. And with each passing quarter, that prediction seems more and more likely to come true eventually. The division reported a record gross margin of 30.5% for the third quarter, and its Powerwall deployments reached record levels for the second quarter in a row. Joining us now to discuss is Jed Dorsheimer, William Blair Group Head of Energy and Sustainability Research Sector. Jed, thanks for being here.
Thanks for having me.
I said eventually there because if you look at the revenue of the company and measure it by that, the energy business is still only about 10%. I mean, this is still vastly an automotive company. So how do you think about Tesla as an energy company, both now and particularly in the future?
Yeah, I don't think it's an either or type of situation. And, if I go back to we were the bull on Tesla in what I saw before most others in late 2018 is that they were about to go through a transition of going from low volume, high price vehicles to low price, high volume. And that was largely predicated on the Model 3 and building out Shanghai. We see a similar situation developing today with Tesla, just not in autos, but in energy. So the energy problem is much bigger than I think most people understand. I think a lot of people think, hey, this is a battery that's going to attach to my solar panels, or this is the mega pack, which is what makes up most of it, that's going to help a utility. And while those are all true, what we've found is within the grid stability globally is actually getting more and more fragile. And so there's going to be more deployments, particularly as you wind down thermal in terms of coal. You're seeing the use of peaker plants. And so this is an opportunity for Megapack. And as we look at the fact that Tesla sold out in Lathrop, California, and bringing up Shanghai, this is the comparison that I would use to the 3 and Y in terms of the volume. We see an opportunity for this business to really scale. and to add a level of profitability that most analysts aren't, I think, are not focused on, or most clients, I think I should say, don't have in their models.
So, Jed, just to put a fine point on this, to make sure I'm understanding you correctly. So, in this energy transition world where we're going to look more to solar, more to things that aren't active all the time, like you can burn coal anytime, right? The sun doesn't shine all the time, and you need that energy storage piece that, say, power companies, utility companies are going to be, or municipal electric grids, for example, are going to be a bigger client of Tesla?
Yeah, and quite frankly, solar is the problem. Solar and wind are the problem. The variability that is created, just as you said, the sun not shining, and we're trying to find remedies to that. But that variability that's put onto the grid, we have to understand how the grid actually operates and how that's split up. And so if you get out of balance, you're going to start blowing up substations. And so there's a need for that to bring resilience, particularly as we put more variability into the system, because the system is not designed for variability since it optimized around dispatchable power. The benefit of fossil fuels is they're dispatchable. And so that difference between marginal and baseload, which is a very important nuance, that gap is going to be filled by megapacks, in our opinion, that is going to be a way to solve this. And that's going to open up a significant amount of demand that I think is well underestimated.
So, Jed, bottom line for investors who are listening right now, the energy side of Tesla's business could add how much to earnings, Jed, by your math?
Sure. We think by 2028, you could see an incremental 235 to 250 of earnings power that is not being factored in right now. And so, that's about could be a third of the overall earnings for the business. Maybe it's smaller if some of these other businesses actually outperform more, but, it's a significant portion.
And Jed, who are their main competitors in this area specifically? Is it, say, an Enphase? Is that who they're up against?
No, actually, so yes, on the Powerwall, and we cover Enphase actually as well. But the main competitor, so most of the energy business that is driving Tesla's sales right now is the Megapack. So that's more of the utility scale. And so they're going to be competing with Cattle, which is CATL, which is a Chinese company, and then much smaller companies like Affluence Energy. And so this is a pretty open market for Tesla.
Really interesting and important part of the business for people to understand. Jed, thanks for decoding it for us. Appreciate it.
No problem. Happy to.
Moving on, investors, they are watching this election closely, especially when it comes to industries that could benefit based on who moves into the White House. But one person who may benefit no matter what, Elon Musk. Joining us now is Doug Clinton, Intelligent Alpha founder and CEO. Doug, it is great to see you. So let's start right there, Doug. So big election night, maybe a big night for Elon Musk. I know you and your team at Deepwater there. Doug, correct me if I'm wrong. I think you all are invested in Musk companies, Tesla, XAI. I mean, what could this election mean for Musk and his portfolio of companies that you're an investor in?
It will be a very interesting night, I think, for Elon Musk. He's obviously, Josh, made a really big bet on the election going one direction. And I think if it goes against him, if Kamala Harris is elected president, I think it probably is a negative for him. And the way we've kind of thought about it is there's Elon and then there's his companies, and they're a little bit hard to separate. But Tesla obviously is the company that I think most of the world has the most exposure to. And I actually think Tesla, in the event that the presidency doesn't go the way Elon is hoping, may actually be okay. Because with Harris, you might get a better sort of green policy. Obviously, Trump has had different comments he's made about his love for oil and traditional vehicles. So Tesla might be okay. I do think, though, that Elon would probably find himself under more pressure from the SpaceX side and the X side.
How do you think that would play out exactly, Doug?
We've seen a little bit, Julie, already in California, for example, with SpaceX and some of the launch permitting issues that they've dealt with, that I think the officials there sort of overtly said, right, that it was related to some of Elon's political activities. And so I think we could see an environment where, whether it is X, maybe it's XAI, maybe it's SpaceX, officials in different capacities might try to find ways to put up different roadblocks that just make it harder for Elon and his companies.
It's interesting, though, Doug, because you think about the Biden-Harris White House, and it would seem like they weren't big fans of Musk to begin with. You remember, I think it was the summer of 2021, they have the EV summit, and they kind of snubbed Tesla there. I mean, it just seems like if Harris won, how much of a challenge do you think that is for Musk, just trying to perhaps work on a relationship?
You would think that if that were the outcome tonight, Elon and his people would find some way to try to, mend fences and say, look, obviously it didn't go the way that we were campaigning. But we have this agenda that actually, it does very much align with some of the principles of the Democratic Party. I mean, Elon probably has done more for bringing sustainable energy into the markets, kind of into the mass markets, really, in the US and globally, than maybe anybody else in the world. And so I think his perspective on trying to make the world a more sustainable place is certainly that's well aligned, a message that's well aligned with that party. And you would have to hope that they could find a way to work together, because it hasn't really seemed to be much the case the last 3 years, to your point.
So I guess, do you, as an investor in his companies, do you consider his political activities a risk or no?
We try to separate it. And so I'll approach it from two angles. At Deepwater, we are investors in XAI, and we're big believers that there's basically 4 companies on Earth that have a chance to build the foundation models that power sort of everything. It's Meta with Llama, it's Google with Gemini, OpenAI with GPT, and then XAI with Grok. So that investment is really built, I think, more on just what can they do from a technical perspective. And I don't think there's much regulation that we would expect that would be specific to Elon that the other players in that space wouldn't face. On the Tesla side, so Tesla's a holding, and it's been a top 15 holding in our Intelligent Livermore ETF, LIVR. And that is an ETF that is powered by AI. We use AI to make the stock picks in that fund. And the perspective from AI has been that, Tesla is an underappreciated autonomy story. It's an underappreciated AI story. And again, in that case, I think AI is just separating all of these political issues and just saying Tesla as a company has a product that people seem to love. They have optionality with autonomy. They have optionality with the robotaxi. And if Elon can get some of those things right, it should be a good catalyst for the stock.
All right, finally, let's take a look at Tesla. Shares of that stock are surging today on the back of Donald Trump's victory. Trump mentioning CEO Elon Musk in his speech following the election results.
We have a new star. A star is born, Elon. He's a character, he's a special guy, he's a super genius. We have to protect our geniuses. We don't have that many of them.
For more on how Trump's win will impact Tesla, Ross Gerber, Kawasaki Wealth and Investment Management CEO. It's great to have you back on the program, Ross. So here we are. Looks like at least initial reaction that maybe Musk's big bet here on Trump pays off, at least for him. I'm curious, as a Tesla shareholder, how are you looking at this?
Well, certainly it puts Elon in the driver's seat as far as access to the White House. I think there's this difference between what's great for Elon and what's sort of great for Tesla. To the Tesla's advantage, I would assume that this would help them getting, at least on a federal regulatory basis, get some of the heat off of them because they have so many investigations. On a state level, it doesn't help them at all as far as getting approvals for robotaxis and such. What I really think is it's too early to determine if Trump's going to roll back the subsidies to EVs, and this will hopefully prevent that from happening and hurting Tesla, and hence the rally, although Trump has threatened to do this. So I think it's too early to be seeing how much this really is going to affect Tesla in the short term or the long term. But obviously having Musk as of now in Trump's favor, can't hurt Tesla, and that's why the stock's rallying.
So what are you doing with your Tesla shares? Are you buying any more?
Well, no, I'm not buying any more. We've been lowering our stake in Tesla because it was our top position several years ago. We made a lot of money. We still think the challenges Tesla faces to get full self-driving to work is not going to be solved by Donald Trump coming in the White House. So if anything, I would argue the opposite. It's more things that Elon's going to be distracted from working at Tesla. But that said, Tesla has its own problems to solve, and we're investors in Tesla, and we have a position in Tesla at my firm. It's still fairly substantial, and we're not planning on getting rid of Tesla, so that's where we're at.
So Ross, I guess my question is for you. Here we are today with market cap at just over 900 billion. Dan Ives of Wedbush was out calling for $1 trillion in market cap, not too far away. What do you think? I know there's some apprehensions just in terms of the distraction piece of this and maybe what else is at play here for Tesla specifically, but how realistic is that? We're not too far.
Well, I think that there's a lot of people who get on television shows by saying really big numbers, and Dan is certainly one of them, and I love him and I respect his analysis. That said, you have to back into these numbers. If you're going to be worth all this money, you sort of have to say, like, well, where does the earnings come from? And that's really what we're waiting to see with Tesla, because the bottom line is full self-driving doesn't work at this point. Robots are not a viable market at this point. So a lot of what we're talking about is many, many years into the future, and Tesla has to get through the now and the short and the medium term before they get to the long term. So as I said, I think Tesla has a lot of challenges in front of it. It's got probably one of the highest valued tech stocks in the market, if not from a large cap perspective. And so the stock certainly reflects this, optimism. And as I said, I think I'm not a buyer of Tesla for sure at these prices, and I've been a seller around these prices as well. So, I think if you want to own Tesla, you should. It's kind of what I said about Bitcoin. If you want to own Bitcoin, own Bitcoin. I can't tell you what it's going to do. If you want to own Tesla, own Tesla. It kind of goes in the same risk bucket in your portfolio, and it's part of our risk bucket in our portfolio. And it's just not the biggest risk that we're taking today, which is more in things like computer chips like Nvidia, because Tesla and Elon are sending all their money to Nvidia. And that's my preferred play right now in the market over the next several years.
So it sounds like you think it's also bullish for the broader tech rally, but I want to stick with Tesla for one more minute. We have a photo of Trump and Elon Musk together last night. Musk posted this just after midnight. Given the relationship that the two clearly have, let's say that full self-driving technology is fast-tracked for approval, despite what you mentioned that there are still questions about the efficacy of that technology. If it's approved too quickly and it doesn't actually work, could that end up being bearish for Tesla, given what that would mean in terms of company news moving forward?
Yes and no. I think you need to look at it this way, okay? For robotaxis to work, it's a combination of hardware and software that has to work. We see this now every day in Santa Monica with Waymo. So Waymo has an operating robotaxi service where I live, and it's working very, very well. And if you look at the amount of hardware that's on a Waymo car compared to a Tesla, it's vastly different, where the software that Tesla's been developing is really doing the heavy lifting. And right now the software just doesn't work. So, you cannot get across LA in a Tesla on full self-driving. It just doesn't work. And most of the critical interventions would be to avoid an accident. So until that happens, it doesn't really matter whether the regulators approve it or disapprove it. If it's running people over, people are going to take them off the roads. And so it has to work. I can tell you, I can use it. I use it every day. It doesn't work yet. I'm super frustrated about it. It's been like 4 or 5 years I've been testing self-driving software, or we've been told it's going to be done. I just sold my third Tesla with full self-driving that I've paid for 3 times, and it's never fully worked. So I think that's the issue, right? Like if you turn on your computer, it doesn't work. So that's what Tesla needs to solve, and that's the only thing that's important in my mind that Tesla is focused on right now, because they don't care about selling cars anymore.
So Ross, what do you think the degree of that downside risk looks like for Tesla?
It's really a valuation risk, because you've got earnings estimates going into next year in the mid $3 range, $3.20. And then you say, well, does it deserve 100 times earnings? It's like Nvidia trades at 40 or 35 times earnings. And that is up to the market to decide. It's not really up to me to decide. I tend to buy stocks based off a valuation that is based off actual numbers, not like just hope. So there's a hope premium in Tesla that might be like worth several $100 billion. And not to say it's not worth that. That's what I'm saying. It's like people's perception of the future of Tesla might be better than the future perception of what Nvidia is, maybe. But when I value it based off the way I value stocks, I still think the stock is wildly expensive, and that's where I'm at,
All right, Ross, thank you so much for joining us. As always, we appreciate it.
Shares of Tesla are soaring today as many investors bet a Donald Trump presidency will benefit Tesla CEO Elon Musk, who has been a big backer of the former president. Here to react, we've got Carl Brower, executive analyst at iSeeCars.com. Carl, good to have you back here with us, and thanks for taking the time here. You know, as we're thinking about the people that have annexed themselves to a campaign, perhaps none more so than Tesla co-founder and CEO Elon Musk, what does this ultimately net out for Tesla?
Well, it's interesting because we know that there's a lot of government help or incentive or regulation all pushing the electric vehicle transition. And Tesla's absolutely benefited from that. But we also know that Donald Trump doesn't necessarily support that thinking. You know, he's not big, he backed out of the Paris Accords. He's not necessarily a big supporter of the concept of a government-led transition to EVs. And if you look at some of the other electric vehicle stocks like Rivian and Lucid, they're not doing so well. So it's interesting to see that people feel like Elon's relationship with Donald Trump will overcome a potential shift in policy, because I do think the EPA regulations and expectations for electric vehicle sales and market share are not realistic. There's a disconnect between what the government wants to have happen, the current policy wants to have happen in the next 10 years, and what seems to be happening in the actual marketplace. And I expect we're going to see a reassessment and likely rollback of those requirements, which should be somewhat negative for all the electric vehicle companies to not have that kind of government support, including Tesla.
You know, as I'm taking a look at a note from Wedbush and analyst Dan Ives over there, who a good friend of the show, you know, one of the things that he mentioned is a Trump win being good for Tesla and Musk here. But then you ultimately think about what this means for some of the major investments that Tesla has made as well. Full self-driving, AI, you know, how does this all pass through in the relationship between Trump and what he's prioritized versus what Tesla has prioritized and communicated to their investors and analysts that they're going to be spending billions of dollars on?
Well, that's the interesting thing, again, is that I think Elon has realized that he's not going to long-term make his fortune or grow his fortune in electric vehicle sales. He really needs to find the next big thing. And whether it's robotaxi or personal robots, he's put a lot of time and energy and resources and investment into those technologies. And how long it's going to take to get there remains a big question. You know, Mercedes is further along. They've got consumer available self-driving at level 3 capabilities, and they're the only ones out there. And, you know, companies like Google are much further along with their self-driving efforts in terms of regulations. So Tesla's behind the 8 ball on this. He's talks a big game, but he's still got to get through all the regulation once the technology is ready, and it doesn't seem to be quite ready yet either. Same thing with personal robots. Now, will Trump be supportive of those technologies more so than the previous administration? Probably. I don't think the previous administration was a growing fan of Elon. So he may be able to get some help and have an ally in the White House to help him get to that next level beyond electric vehicle sales. And maybe that's among the things that investors are hoping for.
What about the audio industry as a whole? What does the Trump presidency mean for automotives?
Well, I think, again, the traditional automakers have been trying to navigate this nearly impossible task between keeping government regulations happy and meeting those and keeping their customers happy and selling them the cars they want. And, you know, you look at someone like Volkswagen, who's made some pretty astounding comments in the past week about potentially closing home plants in Germany, which they've never done in the history of the company, simply because they're having financial challenges. And a lot of these traditional automakers, they're investing in EVs because they feel like they have to, but they're not seeing financial returns, and they're not sure how long it's going to take to get profitable in this area. So a Trump presidency and a reduction in those requirements overall is a good thing for the automakers, the traditional automakers. It's going to free up their ability to have a wider path between keeping government happy and keeping their customers happy. Right now, they don't really have a realistic path, in my opinion.
Carl Brower of iSeeCars.com, executive analyst over there. Carl, always a pleasure to get some of your insights, and thanks so much for taking the time.
Thank you.
Welcome to Asking for a Trend. Tesla enjoying a healthy run over the last couple days as the markets brace for a second term from Donald Trump. Earlier, we spoke to Cathie Wood about what else is on the horizon for Tesla.
It's a completely different model. And what's been interesting is Waymo, Alphabet's Waymo, has it has proof of concept. Autonomous is not about tomorrow; it's here, and we're very excited to see how Tesla is going to go to market.
Joining us now is Wedbush Securities Managing Director and Senior Analyst Dan Ives. Dan, always good to see you, have you on the show. Let's start there. Dan, with Tesla, Cathie Wood, she is a believer. She invests in Elon Musk companies. You look at the move Tesla has made, Dan, 30% over the past month. What is driving that, in your opinion?
It's a new era with Trump, because ultimately, if you look now, autonomous is going to get fast-tracked, in our opinion, and that is significant because of Tesla and the AI future. I believe that's worth $1 trillion alone in terms of that AI piece to Tesla. And that's why, for Musk, the bet on Trump, it's a poker move for the ages.
It was a big bet, and listen, it was the right bet for Musk. I get the autonomy piece, but next year, Dan, would it be your bullishness based on you see accelerating delivery growth?
Well, I think three things. One, the first thing Trump's going to do is he's going to basically take away EV, tax credit. So that's negative for the industry, for the Detroit 3, of course, GM, Ford. Bullish for Tesla because they have a price and a scale and a scope advantage significant. Okay. Two, I believe the autonomous AI vision, Cybercab, this could get accelerated by years. By the end of next year, we could be talking Cybercab. As we actually start to see. And I think this accelerates that strategy. And I think the third thing is a lot of the broader regulatory issues that have been an overhang on Tesla. I think that essentially now goes away. I mean, they'll still be there, but Musk is going to be a whisperer in the White House, and that is something the market's factoring in, a Trump win, a red sweep.
Let me ask you, Dan, I'll ask you the same question we had for Cathie Wood, which is perhaps Musk's role in this new Trump administration, with maybe a government efficiency group, Dan, and Cathie Wood sounded very bullish on that. She liked the idea of Musk playing an active role there. As a financial analyst, though, Dan, do you like that idea, or would you be concerned that would be distracting for Musk? A guy who already has a lot on his plate.
Yeah, I think, look, Josh, is there a distraction? Of course, but I think there's a comfort for tech investors, I think just in terms of the overall industry on Wall Street, that you have someone like Musk being a sort of whisper for Trump around China tariffs, around AI. I think there's going to be significant AI investments within the U.S., and that's bullish just for overall tech. And I think that's playing an important role here. It's also why Nvidia is up despite some of the worries about tariffs and everything else. And I think there'll be carve-outs for tariffs when it comes to Tesla, when it comes to Apple. This is a Goldilocks scenario for any tech investor going into the weekend.
Let's take a look at Tesla. CEO Elon Musk tapped for a role in the Trump administration to lead a non-government Department of Government Efficiency, quote unquote, along with former presidential candidate Vivek Ramaswamy. Yahoo Finance's Alexis Keenan is here with us now. You're actually looking at the legality of this proposed agency. What do we know?
Yeah, so this so-called department, it's not going to be a federal government agency, right? Because to do that, you need Congress to say, we want to create an agency. Same goes for repealing one. So there will be some limitations as to how far this department can go to cut federal spending, because a federal agency, if it were to be said goodbye to at the federal government, that would need all of Congress to say yes. So neither Musk nor Ramaswamy are said to be federal employees under this regime. In this announcement on Tuesday, Trump said that the focus would be on smaller government. He said its mission is to dismantle government bureaucracy / excess regulations, cut wasteful expenditures, and also restructure federal agencies along with a partnership with the White House's Office of Management and Budget. But where this department will get its authority, its funding, its structure, that's really murky right now still. There is a federal law, though, that might likely come into play, and it's called the Federal Advisory Committee Act. And what it does is it sets some ground rules for outside advisors when they're advising federal government officials. It requires advisors to do some things like have public meetings. Those have to be open to the public. Also, it has to have actually diverse membership with members that have different viewpoints expressed at the meetings. Also, any reports that these departments issue, these advisors issue, those have to be accessible to the public. Also, transcripts, white papers, and finally, there is a 2-year cap on the length of time that these pursuits can be made. Now, in the announcement from President-elect Trump, I should have said, that says that the efforts will wrap for this so-called department on July 4th of 2026. So that would comport with the requirements under this federal act. But a lot of questions remain, including how do you define government waste? We don't know.
Yeah, Alexis, and you're probably going to say that this is way too early to tell, but just in terms of what the workforce looks like, do they have a team? Do we know anything about that just in terms of the employees, how big this division could potentially be?
No, we don't know yet. We know there are 2, and whether they're even called employees, I don't know yet. But certainly a lot to watch, and it should all be public, so we should be able to track it quite closely.
If it goes through the formal process, it should be public. Right?
Yeah.
All right, well, we will wait and see. All right, Alexis, thanks so much.
Yeah.
Let's go to Tesla. TSLA shares. Elon Musk's $56 billion CEO pay package rejected for a second time by a Delaware judge. Yahoo Finance's Alexis Keeney joins us now with more on what's next in this legal battle. Hey, Alexis.
Yeah, so let's just remember what it's all about first. So this was the deal reached in 2018 for Musk's CEO pay at Tesla. It reached its maximum all-performance-based value of $56 and change billion, struck down a second time by Delaware's head chancellor in their chancery court there. In Chancellor McCormick, Kathleen McCormick, she said, despite Tesla holding a second shareholder vote in June, where Tesla shareholders, a supermajority of shareholders said they wanted to go ahead and give this pay package. She said that wasn't going to be possible to reapprove it. She wrote in her order, a stockholder vote alone cannot ratify a conflicted controlling transaction. The decision, it hangs on a procedural issue, a legal procedure, where McCormick is saying that ratifying, that revoting and trying to, quote, ratify, that had to be done before her first decision, that Tesla and Musk, they can't go back in time and try to re-up this as if it were in the past. At the heart of the problem, if you remember, was Musk's conflict of interest with board members who voted on that first pay package, combined with Musk's sort of de facto control of Tesla. So that was the heart of the problem. He was subjected to a very high standard to get this vote approved. In a post on X, Tesla responded. Musk retweeted this post, saying, promising they will appeal to, it goes to the Delaware Supreme Court now. They said the judge overruled a supermajority of shareholders who voted twice to pay Musk what he's worth. The decision is wrong. If it's not overturned, they said that means judges and plaintiffs' lawyers run Delaware companies rather than shareholders. So going forward here, in terms of what's next, that appeal, right, would go to the Delaware Supreme Court first. Maybe someday it'll reach the Supreme Court if parties don't get what they want. But also watching Musk's focus on Tesla, because at issue in this case was Tesla saying, well, he needs to be given the pay package he was promised in order to keep his attention there. Otherwise, why would he continue to be motivated to run this company and perform as he has in the past as CEO?
Talk to us just about how much this pay package was worth and is worth today, because there's a pretty dramatic difference between those two totals.
There's a difference between those two totals. So at the time of this litigation, $56 billion, it's fluctuated since that time, depending on the market price, but there is a strike price. And what's important is to Tesla, the value that Tesla has to account for on its books in order to give this pay package. In 2018, when it was given, it had accounting charge of $2.3 billion. But in the court filings, Tesla has said and estimated that it would cost it something to the tune of $25+ billion to give an equivalent pay package today. So that's something that Tesla's really going to have to think about as it goes forward. Shareholders are going to have to think about. We're watching the stock here, of course, today to see if there's any major reaction, worried about those figures there.
I would think that the fiduciary duty to shareholders would be enough to keep his attention at Tesla, but maybe I'm wrong.
You never know.
Who knows? $56 billion goes a long way.
It does go a long way. A couple $1 billion.
Gets your attention.
Goes a long way. All right, Alexis, great stuff. Thanks so much.
Tesla's polarizing Cybertruck may be hitting a demand rut. Joining us now with more, Yahoo Finance's Pras Subramanian. This has to do with what? A little bit of pause in manufacturing, Pras?
Yeah, possibly some issues here with that polarizing Cybertruck. Yes, Business Insider reporting that Tesla emailed Cybertruck line workers at Giga Austin, telling them to take the next 3 days off this week. And this isn't the first time this has happened. Apparently in October, 4 workers told BI that several times after arriving for work, they've either been sent home or given additional duties like training exercises or actually cleaning. So anytime you cut shifts at a factory, you're cutting supply. It's likely that Cybertruck supplies are building up. Even on Tesla's website, I checked today, if you order a Cybertruck in the New York City area, you can have immediate delivery. That means there are trucks here right now. That wasn't the case just a few months ago. And on top of all that, the Cybertruck qualifies for that EV tax credit, both for purchase and lease. And if this goes away, as some surmise, they'll likely hit sales too, even further.
And Pras, how important is the Cybertruck to Tesla's bottom line?
It's at the margin, one of these vehicles that I think they've sold. Cox says they sold around 26,000 Cybertrucks through the first 9 months of the year, which is nothing compared to the Model Y and Model 3, which are in the hundreds of thousands of vehicles sold. But it's not nothing. It is the top-selling EV pickup, if you believe it or not, in America. It's better than the Rivian, better than the Ford F-150 Lightning, and those are very, very comparable competitors there. So it's not nothing there. These are they're selling more than these other guys are, but compared to the other vehicles, it is sort of, I don't want to say drop in the bucket, but it's less than 10% of their sales are Cybertrucks.
All right, Pras. Thank you, buddy. Appreciate it.
Garrett, let's talk about another name that's obviously garners a lot of the attention within the industry, and that is Tesla. We've gotten more bullish calls out this week. Dan Ives over at Wedbush being one of those, just talking about the new market cap milestone that we could see here from Tesla in the new year. I'm not sure you're totally on board with this. What are some of your biggest concerns when it comes to Tesla in 2025?
No, so we are on board. We have a buy rating on the stock. We had been at a hold. We went to a buy the day after the election, and since then, the stock is up almost 90% in just a little over a month. It's been, about 6 weeks. It's been an incredible run for the stock. I think the stock is pricing in a much easier regulatory environment for autonomous driving, and we think Tesla has the best technology out there, and they're really going to be the biggest winner from that. We've heard the President-elect Trump transition team talk about how that's one of the number one priorities of the U.S. Department of Transportation is easing the regulatory framework to make autonomous vehicles a reality. And so that's really the future of Tesla. And if they succeed in doing that, that unleashes a enormous market opportunity for Tesla. And in the meantime, they continue to improve the full self-driving product. Version 13 just recently launched with significant improvements over the prior version. You're really seeing their efforts incorporating AI into their development has really improved the product over the last year or two. So we continue to like the stock.
Garrett, the reason why I said that you weren't really on board was when it comes to the first thing that you have in your prediction list is that it's going to fall short of his 2025 vehicle sales growth guidance. And not just fall short. You see volumes growing only 10 to 15%, which is about half as strong as the guidance. Why then are you not more concerned about that?
Yeah, so that's one of our predictions. The report we put out a couple weeks ago is that Tesla will fall short of this 2025 vehicle sales growth guidance of 20 to 30%. However, I think important caveat in that prediction is that if they continue to make progress towards getting approval for fully autonomous vehicles, that's really what's going to matter more, and we think investors will be forgiving if they do fall short of that guidance. We have seen in the past many times where Elon Musk, makes a prediction or is too aggressive on his timeline as far as when things will come to fruition for the company. But eventually he gets there. It's just not necessarily in the time frame that he originally said.
Wedbush out with a new note on Tesla, raising its price target and tying a street high of $515. Joining us now, the analyst behind that note, Dan Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. Very festive shot there for our friend Dan. Dan, it's good to see you here. We know that you've been a long-time bull on Tesla, and you just keep getting sort of incrementally more bullish. What's the catalyst for this latest tick up in your price target?
Yeah, Julie, I mean, if you look at Trump in the White House, it's a total game changer for Musk and Tesla. The autonomous future is now ahead. And I believe autonomous is worth $1 trillion alone. And I think how the bears have missed this, the bears don't see AI in their spreadsheets. This is a name that's going to continue to move higher. I believe autonomous, robotics, disruptive tech, we could be looking at a $2 trillion market cap or higher as we go into 2025.
Now, another thing, though, sticking with all things Trump, Dan, Trump is a big believer, as we know, in tariffs as well. I mean, what happens? He hits, he does hit China with new tariffs. It's not crazy to think that Beijing then responds, reacts, retaliates. What could that mean for Tesla?
I think the bromance between Musk and Trump, I mean, Musk is going to be heavily involved in the tariffs discussion. I believe there's going to be a carve out for Tesla, a carve out for Apple, and a carve out for Nvidia and some more of the chips. And our view is Tesla ultimately wins because of their presence in China with what we see with the Gigafactory. And I think when you look across the board, Musk made a bet for the ages on Trump, and that continues to pay dividends. And that's why the stock obviously being meteoric, you're starting to see some bears, get on to the bull train. I just think it's a get out the popcorn moment. This continues to move higher.
Dan, what are the risks, though, with Musk's closeness with Trump? I mean, we have seen in the past that there have been folks who have been close to Trump in the first term, for example, who have been attention seekers, like an Elon Musk, and it hasn't necessarily turned out well for them in the longer term. Are you worried about that at all?
Look, I think this is going to be different. In other words, in some ways, they both need each other. I mean, Trump needs Musk, Musk needs Trump. I think this alliance actually gets stronger. From the AI innovation, the China tariff discussions. I mean, this is going to be for Karate Kid fans a sweep the leg moment when it comes to some of the stuff in the Beltway from NHTSA and obviously FTC and others. It's a bullish environment for big tech, right? And I think when you look at this AI party, it continues to be 10 p.m. It was 9 p.m. It's 10 p.m. It goes to 4 a.m. And now Musk is on the dance floor along with Jensen, Par from Palantir, Nadella, and others.
Dan, what about Tesla's core EV business, more near term, over the next 12 months? The trajectory of that business looks like what to you, Dan?
Look, I think, Josh, I mean, we're going to see deliveries 15, 20% into next year. So deliveries are going to continue to increase from a delivery perspective. I think China starts to rebound. We're starting to see that this quarter. And then a lot of their price cuts have already happened in the rearview mirror. And that's why I'm not saying that there could be some things that still happen. Okay, we're going to have some bumps in the road. But this now is much more of a champagne moment for Musk and Tesla shareholders. And that's why a lot of the bears, they're going into hibernation mode, with their spreadsheets.
On the car business itself, Dan, I mean, there was a report today from Nikkei that Honda and Nissan were in talks to potentially have some kind of a merger, in part to provide a more formidable competitor in electric vehicles. How do you think about that competitive landscape?
Look, Julie, I think, especially with EV tax credits getting cut once Trump comes in, we're going to see consolidation from an EV perspective. You're also going to see a lot of the big three start to go more hybrid and maybe tone down that strategy. We're going to see international consolidation from Europe, I think, to parts of Asia. And this is going to play out. I mean, and ultimately, at the top of that mountain is Tesla. It continues to be Tesla's world, and everyone else is paying rent when it comes to the EV market.
Dan, always great to see you and to have you on the show. Happy holidays, my friend.
You too.
Another trending ticker we are watching today, Tesla's Shanghai plant manager, Gong, has left the company. That's according to a letter sent to staff. Now, Song had overseen the construction and then became the manager of the company's Shanghai factory back in 2018. And this is Tesla's largest plant in terms of output and exports to both Europe and Southeast Asia. And this is really interesting because not only did this individual have a strong impact on that Shanghai plant, but he also helped troubleshoot issues in car maker locations outside of APAC. He was sent to California and Texas back in 2022 when there were some challenges with those factories. But the Shanghai mega factory, it's Tesla's first energy storage facility outside of the U.S. It's the company's second major investment in China in the decade since entering the region. So certainly a massive part of the business and perhaps one of the reasons that we're seeing Tesla take a little bit off the top in the trade today.
Yeah, Shanghai Gigafactory is essentially the Eastern Hemisphere mitochondria for Tesla and their operations and being able to service parts of the world that they're trying to take on even more of market share from. The problem that they've run into is especially two-pronged here. One, the consumer. The consumer in China that's been looking towards vehicles has even more of a nationalistic mindset now. And then the other prong here is that even with that consumer mindset, the mind share shift also even more direly moves in the direction of some of their competitors because you have incentives that are also put forward by the government in that region to make sure that there are boosted sales of some of those homegrown entities as well. So two-pronged hit. However, for Shanghai, Giga Shanghai, they've really been able to make waves in just being able to have some of their mass market vehicles be received by the region, be produced there as well. And that's really kind of set up the tent pole for them in that operation in that part of the world. But more broadly here, it'll be interesting to see if there's any more reasons provided as to why this person Song decided to depart Tesla. It's a little scarce on details right now.
Yeah, and he'd been there since 2018, so
Yeah.
long time to last at a company.
I mean,
like Tesla.
essentially the entire time that Giga Shanghai has been in operation.
Right.
From robo-taxis to rehauling the government, it's been an eventful year for Tesla and its CEO, Elon Musk. Joining us now to talk about the three biggest moments for Tesla in 2024, Yahoo Finance senior autos reporter Pras Rahmanian. Not all of them were singular moments in time. It's sort of the three things or the three themes that really characterize Tesla's year. Let's start with number one. What do we got?
Yeah, you know, I thought for me, one of the biggest things for shareholders, people owning the stock for the long term was the future of the cheap EV, something that Tesla's been talking about for a while now. And initially they were downplaying it, saying that, you know, we're going to actually see less than ideal growth because we're focusing on future vehicles. They didn't say what that was. People were sort of concerned, what is that? And then eventually the stock got hit after a bad Q1 delivery report. Musk said, hey, actually the robotaxi is coming. He kind of wanted to show, hey, we're doing this, it's happening, we're going to see it in August. Of course, that got delayed for a few months, but that was something that was a dangling carrot out there. But that wasn't enough. The stock got hit again. And it was only until out at Q1 earnings when the company said a cheap EV is coming, and they kept reiterating that earnings after earnings after earnings. We haven't seen it yet, but the latest indications that we will see it early next year, and it's potentially maybe called the Model Q, according to Deutsche Bank. They had a meeting with Tesla management. So we'll see. That's sort of one of the big drama points this year that was occurring.
On that relatively less expensive EV, Pras, do we have any more sense of price point on that?
Probably sub 30,000 is sort of the goal. And talking about the Cybercab, that robotaxi that they say will come below that as well, they're going to use a lot of the same manufacturing techniques to get that on the road at that price. We'll see. As you know, that's not an easy thing to do.
Okay, so number one, product, right? Robotaxi, cheap EVs, even though the products haven't been announced, they've been talked about. Thing number two, Elon Musk's pay and the drama over it.
Yeah, that continued throughout the whole year, right? Yeah. When the judge in Delaware rejected his pay package, Musk said, "I am not comfortable owning or not comfortable growing Tesla without 25% of the ownership of the company." And he thought that was kind of interesting because he sold so much stock to buy Twitter, but that's another thing. So we had this whole drama with this thing. The board said, hey, we will have a vote, and you can vote on the pay package as well as changing our state of incorporation. They voted in the affirmative. Musk was happy that overhang was gone, the stock went up. But then, of course, just a few weeks ago, the Delaware judge said, you know what, it doesn't matter. I'm still invalidating the pay package. So we're going to see that play out next year.
Final point, Pras. The final Tesla point, I believe, dovetailed with what we heard from Dan Ives over at Wedbush. But walk us through it.
Yeah, I mean, basically it's Trump's big bet, that big gamut, embracing Musk embracing Trump. These two guys sort of now are two strange bedfellows. But for Musk, it really paid off in Tesla. After the election win, Tesla stock's up almost 90% since that election win. It's just an astounding number. It's the combination of his closest to the government, but also changes in robotaxi and autonomous driving policy and legal requirements that will help Tesla. And I think that's what we're seeing that in the shares as of the end of the year.
Yeah. Well, we had Dan Ives, I mentioned on Wedbush on the show, Praz, bullish as ever, and that was part of the thesis, right? That Trump now is going to accelerate, fast-track self-driving technology.
Yeah, and also maybe tariffs and tax policy too. So we'll see.
We shall. Praz, thank you.